but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Morning.
Hola, you okay?
Yeah, just allergies.
I know
everything.
my wife, who's happy birthday,
Happy
honey.
birthday.
Happy
there you
birthday,
go.
Chris.
Yeah, happy
You are
birthday.
a real one. God only gives his toughest battles to his strongest soldiers.
Yes.
And you, I salute you, Chris.
That was well said. I don't think I could top that. So happy birthday, baby.
Yeah.
Very good, very good. So how are you guys today on this birthday edition of tastylive?
So wait, did you get your wife a present?
Yeah,
because she takes you out to dinner. Like you get like 3, 4, 5 dinners, like your week of your birthday and all your favorite places. And I'm sure she brings you coffee in the morning and makes you breakfast.
I'm glad you noticed that, by the way.
Yeah.
'Cause, you know, it's always, no, don't get me anything. You know, save money. I got everything I want. You know, no problem. And then day of, it's like, oh, you didn't get me anything. What do you mean? What do you mean? And it's a week-long, thing.
It's not about me. This is my wife's birthday.
I know. So I'm saying about that reciprocity.
Yeah. Yes, I went overboard. She had multiple presents.
Oh, good.
Yeah.
Good.
We're all good. I've been.
Do the presents have at least a crotch? Are they like good presents? Because
they're good presents.
Okay, good.
They're useful presents.
It was
Good.
Lovers Lane's biggest sale of the month.
That's for every day of the year. On her birthday, she actually gets the day off. That's what it is. The other 3.
It is 2025. Women deserve crotches.
There's nothing like an Omaha in the first 2 minutes of the show.
I'm speechless.
I was expecting something from you, Beth.
She's been waiting.
2 minutes. Yeah.
All right.
Great.
Well, then
Yeah.
that's good. That's what. No, she's a wonderful lady. I've had the pleasure of
Thank
meeting
you.
her.
Yes.
She's super nice. And
Yeah.
For some strange reason, she loves you. And
Yes. Feel me. You know, it wasn't easy going away on her birthday week. You know, coming back from Mexico 48 hours.
Yeah, I don't know how you finesse.
Oh, yeah.
that.
You had a real rough time with that one.
That was really rough.
Really tough to,
really
hobnob
There
with
you
a
go.
bunch of billionaires, play some golf. Yeah, tough.
On her birthday week. That was a tough one. That was a tough one to pull off. But we pulled it off, so it was good. It was good.
Oh,
All right,
that's
enough about her. Let's get to the golden child. Not you, Nick, of course.
Yeah.
I'm talking about my son, Vinny, who's 15. He's getting his braces off in 2 weeks. He went to the dentist.
Wow.
Big. This is big. So he asked if he could drive the Porsche. So.
Wait, I'm sorry. I'm missing that correlation there.
Yeah, I know.
Oh, it was like a prize. It was like a prize for him, for getting his braces off. So he wanted.
Oh, there's prizes for that now? I mean,
You didn't get one.
what the?
He didn't align his
Are you-
own teeth, though. It's not
Yeah,
like
he just put them on. I mean, like, he didn't
Right.
even put them
He
on.
didn't put them on. The
Yeah,
dentist
they
put
just
them
were
on. He
there.
sat there, right?
I'm sure they're gonna find a whole bunch of crap in there.
Oh, my God. Okay, so he got his prize for getting.
Yes.
Okay, got
Is
it.
the porch a stick shift though?
No, it's a
it's a-
paddle.
oh,
Paddles.
okay,
You could
okay.
use paddles, or you just do it, automatic. That kind of thing. But
Okay.
So he gets in the car, and it's a little tricky putting reverse and drive. It's kind of different than the other cars he's driven. In fairness, he's only driven the other 3 cars.
Drove my car.
Drove your car, a truck.
Terrifying. Absolutely terrifying.
He's better now. He's better now.
Okay.
But
All right.
yes, he's
Maybe
better.
listen to what I was telling
I'm
him.
surprised you let him drive your truck.
What, was that like his second time?
It's probably second or third
Yeah.
time out on the road when you.
But did you have him in like a street where there were like other cars and like
Probably
trees and
not
stuff?
when you took them. Probably
Yeah,
not.
I had him, and it was. I mean, there's nothing. I understand it now.
Okay.
I understand.
Break. Come.
Yeah, you get the.
Oh, your heart and your throat.
You understand
Yeah.
what I went through with all of you.
Well, I think I was probably a little better.
Sure, you
'cause I
were
was-
amazing. You were so much better driver than all the other 15-year-old drivers, for sure.
But you get to that moment where it's, you're kind of cutting corners a little bit, and we're not using the brake a little bit, and you got to do the you kind of put your hand on the wheel because you have no controls, obviously. You kind of touch the wheel a little bit, and you give them the
He was leaning too far to the right, right?
Yeah, it's like, okay, brake, brake, and then you kind of pull on the wheel a little bit is very, very scary. Okay, so you took him.
So I took him. So he's only driven a few vehicles before.
Sure.
Like my GMC truck, my Tundra, my wife's car, and
Sure.
different. So he gets.
I love how he just has access to a fleet of vehicles. But go on.
He gets in and he goes, "Can I rev the engine?" I'm like, "Sure." I mean, he's 15. I mean, he revs it. Oh, feels good. Puts it in drive, starts going, and all of a sudden he goes, "Dad," he goes, "I know what you mean about a sports car. I feel so strong."
Oh, no.
Yeah, he goes, "I feel so strong." He goes,
It's called overcompensation, Vinny.
even the brakes. He goes, and then, "Oh, Dad, it's so smooth. It feels so good. He kept saying, "I feel so strong." I go, "Look down at your penis. It's growing."
That's 2 Omahas. That's two Omahas in 6 minutes.
Pretty sure if we continue this conversation, we could all just end up in jail. I don't
Probably.
know. I don't want that for me. I am too cute to be locked up, honey.
Oh my God.
But there were no incidents. He didn't scrape a curb.
No. He was good. He was great. It was perfect. Like butter is what he likes to say. Like butter. That term was butter. That thing was butter. Everything was
good.
butter. Yeah. So
Well,
he's good.
I'm glad that he got to drive a Porsche, not for academic prowess, not for winning a state championship, not for his volunteer efforts.
Getting his braces off.
For getting his braces off. Congratulations,
It's
Vinny.
usually a given. Like if you get them on, you have to get them off.
Right, yeah.
It just is part of the
Right.
whole process. It's not like a special thing, but
Not for-
Right. It's not like...
It's a charity.
Right, not
quite
for-
an accomplishment.
Right, yeah.
I'm so proud that he
Right,
got them off.
I'm just bursting with pride for America's
So am I,
youth.
but
Yeah.
so am I. You're right. You're right.
But how is school going? Is school going at least good, or...
He reminded me to. It's been 5 full days, 2 half days of school, and he has a 4.0. He told me last night I have a 4.0, Dad.
But have there been any tests or
There's been
quizzes?
no homework assignments, no tests.
Yeah, I know.
He's
Yeah.
probably had 2 or 3 homework assignments. Yeah.
Oh, that's good.
Okay.
It's a good start.
That is a good start.
4.0, son. 4.0.
That's amazing.
That's my man.
That's strong. How are you, Nikolai? You drove yourself here today, so congratulations.
I did. I'm good. I have no amazing updates.
Is it pickleball tonight?
No, not tonight. Tomorrow night.
Oh, tomorrow night.
Tomorrow night,
Pickleball.
and I've got a fantasy football draft with Mikey
Oh, tonight?
tomorrow.
Oh, tomorrow. Okay. Oh, that's a lot.
Yeah.
Wait a minute. Oh, not tasty.
No, I've
Football, 'cause
retired
You gave
from
up on
Right,
that.
that's
You let
right.
somebody
You're
else
hanging
win
your
yours,
jersey
right?
from the rafters.
Yes.
Yes.
We had the rafter hanging the other day. Like the jersey is up there, but yeah, nothing.
Beautiful.
Nothing crazy. Nothing crazy. I wish I had a big update. I gotta get my balcony like fixed and painted, which is a big to do.
You can't do that, right? As a condo
No.
association? Or
Can't do that. Everything's HOA.
yeah.
I've been dealing with that.
Yeah.
Oh, you have to go through them because it's part of your
Yeah, it's a whole-
upkeep on the
the whole
building or
thing.
whatever.
Yeah.
I get that.
It's just adulting is not as glamorous as they
Yeah.
painted it out to be. I think when we were kids, Nikki, like it's just like HOA meetings, and I'm like,
Yeah.
Again, it's like taking your child driving. Now that you did it, you start to realize what we went through. Now you're starting to realize what we go through as adults.
yeah.
Yes. Yes.
Yes, little bit of that. Well, my best friend from high school, she still lives in Indiana. She's got 2 girls, and they. Yeah, she's an actual adult, but her kid is in high school now, and so her daughters are going to the same high school that we all went to, and so she's texting me last night, and she's like, my daughter Maeve, she's like, she's doing powder puff football, and I was like, that's awesome. She's like, you did it, right? I'm like, yeah, I played powder puff football, set the rushing record for the team, for the girls.
Yeah,
for the
well, you
girls
didn't
team.
play against Gina Batista. Gina Batista
Was large and in
she would
charge.
have been all state.
She would have been. I should have
all
put my eggs in
state.
her basket. I
She
so
was already
screwed up.
angry, mean.
Yeah, but it was so much fun, and I'm glad that her daughters are doing it, because it was like the only reason that I did it is because the boys' football team were our coaches.
Oh.
And
you get
so,
to hang out.
right. And so I was like, I think we need to work on tackles. And they're like, sweetie, it's flag. And I'm like, I know, but I want to work on tackles. I was boy crazy. It was fine. But her daughter is like taller than I will ever hope to be. So she's playing wide out and corner.
Nice.
And also kicker. So, yeah, she's
I was
a triple
actually-
threat.
I was talking with Joey about Winnetka football back in the day because he whipped out his
He still had his jacket.
Letterman. Yeah.
Yeah, that's so cool.
Joey was one of my friends. We used to play this game called Sharks and Minnows. That was basically like you'd have one shark that was like the tackler, and then everybody else's minnows. You try to run to
Oh,
the
you
other
just run
side, and then
yeah.
as people get tackled, they become sharks.
Okay.
And so Joey, I think this was probably the first week of practice for like maybe our second year. I think it was. Mm-hmm. Blows out his knee on the first practice of Sharks and Minnows. I think he was like in the middle, like he wasn't.
It was
even
the best thing that happened to
It
Joe.
was.
Yeah, but was he an athlete? Like, was he a varsity athlete?
like sixth grade.
Sixth
This is
grade.
Oh, okay.
middle
This is
Okay.
when they had.
I don't know these
Yeah,
people.
They had too much testosterone.
and you had to just hit each other.
Gotcha. Okay.
So he blows out his knee the first practice. He's out for the season. That was the end of his football career. He came to all the games though and watched all the games. He was always there.
Yeah,
but
100%.
it was a good throwback memory of the football season, and that's why Vinny doesn't get to play football anymore.
Dad
Probably.
was coach too.
Probably for the best.
Bad thing.
But I told Jamie, I was like, well, tell my niece to look up Cooper DeJean. It's clutch.
that?
Yeah. We're bringing white corners back. I
Yeah.
like it.
Too good.
He's not even that much older. He's only 22. He's like a baby. So
For you?
No, for my friend's daughter.
Is he too old for you?
He's too young for me. I need a man. Anyway, have you heard
Aren't we
from?
all? I need a man to put
Have you-
my sauna together.
Have you? Oh yeah. How?
A sauna?
You didn't know
Yeah.
he bought a
Oh, you didn't
sauna
hear?
in the
Oh, no.
mail? It's from Minnesota.
Yeah.
Ah,
I got like a 6 to 8 person Swedish sauna I'm putting in the backyard.
you're gonna run out of room back there. You got like little toys in every corner.
I think I'm done now. I think it's the
That's
last
it.
thing I need. I think.
We'll put out the cold plunge.
You know what? I thought about it. I can't keep it clean, back there, you know what I mean? Like the water and everything else like that. And I figure, it's so cold in Chicago anyway, so you'll just stand outside for a minute and you'll go back in, you get the shrinkage, you'll go back in, and then you can warm up again.
Omaha, that's
Yeah.
3 and 12 minutes.
It'll be good. It'll be good. Yeah.
What?
Put it together. No, I'm going to put it
You
together.
missed the shrinkage.
What is happening?
Yeah.
Have you heard from Tom?
I did. He called me. He called me last night. He was in Guadalajara.
Yes, I retweeted the video. There
Yeah.
was tons of students. I tweeted that he was the Lady Gaga of finance.
Well, everybody wanted to shake his hand and take a picture with him because I wasn't there.
Okay.
Of course.
Okay.
Why everybody wanted to do that?
He's
Yeah.
international.
Yeah. He said it was a great class. There's a bunch of college kids and stuff. He loved it. He said it was awesome.
Yeah.
Had another Q&A or something today, and then he comes home tomorrow. And he'll be on the show tomorrow. I think he's actually going to be working pretty early in the morning too. So we'll see.
You guys are going to be reunited. Are you coming in tomorrow?
I think so.
Wow.
3 days.
3 days in a row.
Bring out the red carpet,
I
guys.
know. To be fair, you will be gone by 10 a.m., but that's nice.
9:59.
Okay. All right. Well, that's great. We will welcome back our overlord, Tom Sosnoff, tomorrow. But he is wrapping up his speaking engagement at the University of Guadalajara. So shout out to everyone down there for helping him, get everything together. But we have a great show for you today on this terrific Tuesday here at Tasty Live at the top of the 8 o'clock hour. Widening wings versus extra contracts. When do you just go wider, or when do you just double up the contracts, I guess?
Hopefully going to answer that question.
Yeah, that'll be good. Some good insight there at 8 o'clock. Then at 8:40, a little options jive, double options jive today. Gold versus stocks and bonds, the correlation. Ooh. All right, and those are all moving today, so
Yeah.
we will see what happens. And then 9 o'clock for market measures, when daily ranges drop 15 to 30%, how to adapt.
So we're looking at
we
like
do it?
those tail events versus, the more normal times.
Okay, gotcha.
Quantifying
that's super helpful.
Yes.
And then live from the trade desk, bringing back FX and crypto guests, G Money, Glenn from the FX side, and Crypto Dan, going to be talking about like what's trending in the FX and crypto sector. So that's been a nice addition to the
I think
program.
we're going to also have Quentin from trade desk.
Yes.
Okay.
We're going to do all three, right?
I like
Beth?
how everyone just has like a James
right.
Bond letter to their name. G, Q, D.
Yeah.
Perfect, isn't it?
Yeah.
It's a good thing.
But that's good. Yeah, bring all those young guns over. Let's see what's going on.
Yes.
And then programming note: Liz and Jenny reunited and live from the floor of the SIBO this morning. Always electric when the ladies are live from the floor of the SIBO. Make sure you tune in for that. I think one of the few functionally operating trading pits that are still around, and we broadcast.
Open outcry, you mean?
Open outcry, yes. Sorry,
Yeah.
but yeah,
Not
we
the same.
broadcast from there. Sorry.
No, I mean, it's not the same as it used to be.
Yeah.
Quiet.
So I went to
Yeah, you went down there
first time in
we
decades.
took the interns here down
Yes.
there.
Yeah.
Yeah.
Yeah, a surreal experience. I mean, there was
Because about how clean it was.
how quiet it actually
Yeah.
was. Like because there was always that roar of the pits that you would go like kind of gravitate to. That's what
Sure.
the action was. So just the calmness of the whole thing. And this was a day when the market was moving big too, about 70 handles or so
Yeah.
on the spoofs. Guys were calm and cool, but even more than that, there were like 6 dinosaurs that I saw down there. Like
Yeah.
guys that I knew came up to me. Some of them were clerks when they first started.
Yeah.
Some of them were, older than me.
Wow.
Down there. So it was great to see those guys still making it happen in a different environment. That's how many really adapted out of 500 or 600 guys at the SPX
Sure.
or OEX pit combined.
The bat returns.
No, not about me, about them. I give them props. I mean, only
Right,
about
yeah.
6, about, less than, 0.01% or something like
What
that.
year did you leave the floor?
I left the floor in 05. So
Oh, in
20
05. Oh,
years
it was
ago.
okay, because it was later
05,
than
6,
Tom.
Something like that.
Then,
Yeah, Tom
yeah.
left in like 99. I
Right,
think
yeah.
Tom left in 01
Okay.
or something like that.
That's interesting.
Yeah.
But there's a new museum at the Board of Trade, so if you want to check it out, it's free. So if you're coming to Chicago,
Yeah.
I want to go check it out myself. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah.
Yeah, hit me with my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news.
Breaking news.
Across the wire. Our leading story. Top story. Just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's August the 26th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Bats, any earnings
Nope.
tonight? Nope. Okay.
We're gonna wait. This is the calm before the.
We are on the
storm
precipice of Nvidia,
coming out
yeah.
Tomorrow after the close.
Yes, Nvidia, CrowdStrike, and a bunch of other stuff.
Yeah,
But basically, Nvidia is propping up the global economy. So,
You have Okta and MongoDB after the close today.
oh, okay.
Tomorrow you have Abercrombie and Fitch in the morning. Williams Sonoma. Nothing.
Yeah. No.
Okay. Hey, the dollar and bonds were moving around last night after President Trump tweeted out on Truth Social that he had fired Fed Governor Cook. The U.S. dollar surrendered gains early in Asia, again after Trump said he was removing Fed Reserve Governor Lisa Cook from her position for allegedly committing mortgage fraud. That sent ripples in the market. It does bring into question the independence of the Fed Board of Governors, whatever, be that as may. Treasury yield soared on the 10-year Treasury note. Let's look at the dollar. Let's look at bonds. What's going on?
What is going on?
Yeah, I know.
Well, bonds are down this morning. They were down a little bit more. They're down about 10 ticks. We're at
They trade down on
114.
113.17.
Yeah.
But that's because the whole firing kind of flip-flop.
Sure.
We had a taco of sorts. Not really a taco, but
Yeah.
it was just
Did he
kind of
fire
like,
Cook or did he not fire Cook?
He
it's in
did,
question
but,
whether
I don't think he
she
has
like
the power to. Actually.
Mm-hmm.
yeah, the whole thing is in flux.
Right, yeah. It's just influx. That's a good way to say it. But
So everything is kind of back to where it was prior. I mean, even the dollar is back a little bit higher. I mean,
Okay.
the euro's been strong this
I
morning.
was gonna say the yen was stronger too.
Yen, I mean, yes, they've kind of reversed that whole move.
Yes.
Subject to change.
Yes, subject
Yes.
to change. Bitcoin was stronger, now it's not.
bunch of things. Hey,
Yes.
also coming out last night, I love how Robinhood, always a bridesmaid, never a bride, missing out again during another S&P 500 rebalance. Interactive Brokers is getting the nod. They're getting called up to the big leagues. Robinhood still, I just at this point, I think someone just hates Robinhood. Because I don't understand why. But bad news for Robinhood is good news for Interactive Brokers. IKBR rose more than 4% in extended trading on the news.
Were there any others that got? They usually do more than one.
Yeah, this was the biggest one. Walgreens is getting the boot. So
Rightfully so.
yeah.
Yeah, I mean, Robinhood's been flying around.
Yeah, Robinhood's
It's
down a
not-
little bit this morning.
But the last time it had this sort of event, it was down like $8-10.
Yeah, it was down a lot.
Because the last
right.
time they did the rebalancing, they were one of the big
Yeah.
names on the
Yeah.
top of the list.
Hood's only down $1, just off of its highs, by the way. And IBKR, the Evil Empire, is up around $2.
Oh, okay.
IBKR, $27 billion stock.
It was the only addition.
Yeah, market cap, and Hood is $18 billion. So they took the bigger of the two, I guess.
Okay. Stock exchanges are urging regulators to crack down on tokenized stocks. A group representing the world's biggest stock exchanges has called on security regulators to clamp down on so-called tokenized stocks, arguing that the blockchain-based tokens create new risks for investors that could harm market integrity. What are your feelings on tokenization of stocks?
I mean, Tom loves it. I don't know if I really understand it.
It just seems like it's another derivative because we work in the derivative space, right?
Yeah,
And so that
yeah.
to me makes sense, but I don't fully understand
Right.
it.
So I think the way I've always thought, and I've said it a few times on the show, but Tom does most of the talking on this matter, just like they are now, you've got the CBOE, I believe, and the CME kind of looking at event-based.
CME.
Yeah.
CME looking at event-based products to put them on an exchange is the same way this tokenization will happen. It never is going to happen if it's not regulated by one of the exchanges. So that's the way I look at it. It's not going to be, in my opinion, it may start out that way, the same way crypto started out
Right.
that way, but for it to be mainstream, it has to be.
I think the main difference is that tokenized security or tokenized stockholders, they don't become shareholders. Whereas with options, you could become a shareholder. Like if you
No,
wanted
but nobody
to.
gives a crap about being a shareholder.
Yeah,
I mean,
that's not. Yeah.
Well,
I
right.
shouldn't say it that way. The goal when somebody, even in your 401k or something else like that, yes, you are a shareholder. You want the stock to go higher.
Right.
You're not actually voting the shares typically for some sort of cause or.
But it's the same reason why stable coins are, exist and will get bigger.
Yes.
It's not like you have $1 in your hand.
No.
It's digital, but
Yes.
it's $1, and so you can transfer it and settle it anytime you want. And
Right.
so, the same thing's going to be with shares and any other.
But it has to be centralized on an exchange with integrity, just like you would have a bond or anything else like that.
Coinbase is one of the big firms looking to make this happen. Not sure what Coinbase is doing.
306 and change, up small, maybe 50, 60 cents. But Coinbase is taking a little bit of a
Yeah, I got whacked yesterday.
Yeah. Well, Bitcoin Insider said that crypto prices dipped yesterday because there was a so-called flash crash on Sunday. They blame a single whale who sold 24,000 Bitcoin, according to crypto watchers on Twitter. Okay, then that's accurate. Do you believe in this singular whale hypothesis?
I mean, I don't think it's a belief. I think it's like
That's what happened?
See it.
There was a Bitcoin flash crash?
I mean, I don't think it's a flash crash. I think that's just like
liquidity or lack of liquidity going into the market, or a big order coming into the market, moving it. Yeah.
So doesn't this sort of disprove then the future utility of Bitcoin if a single person can move the market still at this point?
it only went down a couple percent. That's,
Yeah.
I mean, it's
No.
Yeah, but it was still just one person though. Like
It would happen in a stock.
Yeah, but what do you think would happen if
It
Warren
wouldn't happen
Buffett,
in this-
if
not
Warren
just a-
Buffett liquidated Apple? What do you think would happen to Apple?
Sure.
Maybe.
Yeah. Anything.
Apple would go down. But he.
I don't know though, Nikki.
The same thing that happens when they say we bought Apple. I mean, it goes.
Yeah,
Yeah.
is. I think it's even more interesting that it was pretty much all absorbed in 24 hours. I mean, Bitcoin.
Are you guys not doing anything interesting now in Bitcoin or ETH?
Upside.
Upside?
Yeah,
Just IBIT or what?
IBIT.
IBIT? Yeah, I forget.
Diagonal spreads, crab trades.
Oh, that's right. There you go. Some put diagonals.
No,
Yep.
no put diagonal.
Call diagonals.
Call
Okay,
diagonal.
sorry. My bad.
Yeah, come
My
on.
bad. Sorry.
Yeah.
Hey, the U.S. Department of the Interior is proposing adding copper to the critical minerals list. This would allow the government, the inclusion is typically updated every 3 years, and it can make projects eligible for federal funding. So they want to add copper and potash to the critical minerals list for 2025, citing their importance to the economy and national security. I'm just mentioning this because you can trade copper. So,
Did we just tariff copper?
sure, probably.
Yeah.
Yeah, from time to time.
It's neither here nor there. It's neither here nor there.
4.5 down 2.5 cents or so, a 0.0235, about half a percentage point. Copper's on its butt after making that big run up to 5.8. It's 4.5, so it's a big move. Copper's not a liquid product,
Sure.
No.
and not for the faint of heart, and
But
not
like
the best
you
retail.
you could say like Freeport, right? You could
Yes.
say like FCX. You could still
yes.
do that.
And it is a very good
Substitute,
correlation
yeah.
to copper. But you'll look at Freeport. It was trading around $47. It's $43.50 right
Right,
now.
gotcha.
So it didn't have that big move.
But speaking of metals, are you guys doing anything in gold and silver?
I'm neutral both. I sold an iron condor in the gold futures. I have like a poor man's cover call type position in silver.
Okay.
And I think
both
it's
had a little bit
small
of.
silver products. So it's better to get into the small silver products.
Yeah, they
It's just the
stink though
future,
too.
Is all I'm saying.
They're just it's too small.
I gotcha.
SLV. It's hard to. You gotta size up.
Oh, no, future. I was talking about like.
Oh, in the futures.
Yeah.
Yes.
Yeah, like the micro futures instead
Sure.
of the minis. I mean, /SY is just too big, I think, for retail.
Yes.
I was keeping this in my pocket like a Uno reverse card, waiting to use it at the opportune time. But we just mentioned Warren Buffett. He yesterday shut down speculation of a blockbuster railroad merger, saying his company Berkshire Hathaway was not looking to buy another train company. Shares of CSX fell 5% on the news. So I know you guys aren't trading.
Yep.
Railroad stocks. Sorry, I put the wrong headline up here. But the picture is for Warren Buffett. So that's all you need to know. CSX and UNP is like Union Pacific. And yeah, there you go. I know.
Yeah.
I know no one talks about the railroads, but I had to do what I had to do.
CSX is down $3, $4, $5 from the highs.
Yeah,
Down 10-15%.
it's fine.
Yeah.
I think that's a Buffett stock too, doesn't he have?
Yeah, CSX.
Yeah.
I don't know. No, he has Union Pacific. UN.
Oh, is it the other one? I don't know. Anyway,
Right.
You're right. Yeah.
Yeah, I mean these are
Yeah, no,
like
BNSF is Berkshire's rail unit.
okay.
So then they were
That was gonna
asking if it was
merge
merged
with-
with CSX.
When was the last time you got railed in a unit or something?
Okay.
Like that? Or-
All right then. Nope.
Woo, baby.
Okay.
It's birthday.
Consumers.
Yeah.
U.S. consumers.
Excited for the birthday.
U.S. consumers with the highest credit scores are starting to fall behind in debt repayments. That's according to credit scoring company VantageScore. That's not good. In relative terms, the sharpest increase in delinquencies was in the super prime and prime customers, who are typically considered the most financially secure.
Oh.
You know what? I would love to know how much of the study, like how many people were on it and like who did it. I mean, these headlines sometimes are.
Well, these are just defaults. Like it's a black and white thing. Like it's a default and a late payment's a late payment. Like, and a default is a default. Like those are quantifiable and measurable.
Oh no, I had my previous apartment building put me in collections for like holes in the wall and some other things that got expunged, but that like it was like $120.
Sure.
That
is what I'm trying to
nuked me for the last like 2 months. I've been disputing it the whole time. Paid it, disputed it. Like you go from mid
that's
800s, I'm like
frustrating.
mid 600s now.
And
overnight.
true,
I'll
yeah.
haven't
give you
missed a
another
payment
one.
in
I
20
double paid a
years.
$1,400 payment to somebody. I used Venmo. They don't have Venmo, so then I used Zelle. I gave them to Zelle. The $1,400 payment sat in limbo for a while, so I canceled it. Gave them the documentation that they needed. Now they froze my Venmo and my credit score. Once
Damn.
Chase will give it to you or something like that. It went down.
How are you
40
going to send money to Vinny for his next toy that he wants to buy?
It's
Venmo.
cold.
Wait, you're saying a Venmo dispute dropped your credit
Well,
score?
because it went through my Chase account.
Right.
So it went through my Chase. So
Yeah.
coincidentally, I don't know if it's because of that or not, but my score went from 800 and something to 750 something.
Probably because Vinny's been opening up credit cards in your name.
That is very possible.
I was like,
actually.
I would check.
I would see if
I would check. I would run a credit check on yourself just
Yeah.
to see if there's been any like new inquiries.
Yeah.
That's a hard inquiry, and that will lower your score. No, I'm serious.
Possible.
You open a credit card, you have a hard inquiry,
Yeah,
and your
sure.
score does normally drop between like 20
possible.
points or so.
Yeah.
So I think that maybe the call is coming from inside the house.
Yeah.
It's inside the house.
Yeah.
This
yeah.
is.
Hey, Elon Musk's XAI is suing Apple and OpenAI, accusing the pair of an anti-competitive scheme to thwart AI rivals. He's just big mad. The lawsuit alleges Apple favors OpenAI in its App Store rankings and deprioritizes competitors like XAI's social media app X and Grok. Apple has responded saying that App Store rankings are based on actual downloads and installs, and to get bent. No, I'm just kidding.
Apple basically unchanged this morning, down small. I mean, Tesla had a big day yesterday.
Back to 350.
Yeah, and now it's 345 and change, down about a buck and a half this morning. So it's inside that channel as not Glenn.
The wedge.
The wedge. Sorry.
Wedge.
Sorry.
Wedge.
Hey,
Don't know if it's bullish or bearish, but it's a wedge.
It's a wedge.
the company that has every market person waiting with bated breath, NVIDIA, announced yesterday that their latest robotics chip module, the Jetson AGX Thor, is on sale for $34.99. That's $3,499 as a developer kit. The company calls the chip a robot brain. I'm a little terrified, but also excited.
What do you mean you're terrified? This is your nirvana. You're ready.
Yeah, I know. Give it to me, robot brain.
Yeah. Are you gonna have a team of robots? Like, are you gonna have multiple robots or just one? Like,
I haven't decided yet. I haven't decided, but they will, do my bidding and seek out justice for me, retribution. No, I don't know. What do you think you guys are gonna do in NVIDIA?
Downside.
Downside?
Inside down.
We're gonna do whatever the hell Tom says he wants to do. Tom will
Okay.
be back by then, baby. But Nvidia's trading.
Can you tell me how he trades it just so I can reposition?
Oh, you have to fade it for first 48 hours at least.
Please. He's gonna be short this though.
It's gonna be.
But he's gonna do it so junky. He's gonna do it so junky. This is what he's gonna do.
He's gonna sell some.
I'm gonna look at that.
Expected move is $10. I'm gonna go.
I'm gonna go. No, I'm
$67.
gonna go twice the
Outside.
expected.
How much is this
So
gonna
$10.
cost
He'll
him?
go.
I'm gonna make 18 cents.
He'll do. If we're at 180, he'll do the 160. 200. They're both about 70 cents. He'll do it at $1.27. So about $1.15.
If he's lucky, about
Yeah.
a $10 expected move, maybe $11 expected move with
Okay.
a $38 stock. Let's just call it a 5% move, probably less than that. Relatively low implied volatility in Nvidia.
Sure.
So I think
Just be careful.
Yeah. So I mean, always should
Define
be careful.
risk.
Yeah.
You're not getting elevated implied volatility here, even in the front month, relative to an expected move for earnings. 10% would be a huge move.
Right.
5% would be a relatively small move. I think the way to play it is the way Nick said yesterday, some sort of diagonal using directional bias. Up or
There's
down,
your
whatever it
put
may be.
diagonal now.
Yeah.
There you go.
Yep.
Hey, Perplexity AI. This is so convoluted. They've cooked up a way to pay publishers for their content. So basically, Perplexity and all these other LLM, large language models, are scraping publishers like even Tasty Trade, our own blogs and stuff, and they're scooping them up. But now instead of stealing directly from you, they're still going to steal from you, but then they're going to charge consumers $5 a month for a news service, and then they will regurgitate the stuff that they sold and then take that revenue and then use it to pay the people that they stole from. Does that make sense?
Yes, yes, yes.
It's going to be called Comet Plus. I hate that name. But they are launching the plan called Comet Plus it's a subscription plan that will give subscribers access to premium content from a group of trusted publishers and journalists. It costs $5 per month, and it's based on just subscribing to Perplexity. So, good job.
Huzzah.
Huzzah, huzzah all around. Intel CEO has warned of adverse reactions from investors, employees, and others to the Trump administration taking a 10% stake in the company. A key concern that the Intel CEO raised is with the international sales, which is 76% of Intel's revenue. President Trump has called the deal a great deal for America. Intel issued the warning yesterday. What are you doing in Intel?
INTC tried to catch a bid yesterday before falling off of that, trading down to 24.5, which is just a skosh off of the highs of around 26 and change or so. So Intel has been in this tight wedge or channel from 26 to about.
We're going to use that all day today?
Yes, all day.
Yeah.
To about 20. I loved it when he said it yesterday because nothing we've ever said on the show before. Around 24.5. So it's been up to around 26.5, been down to around 20, and it's 24.5.
Hey, Palantir continues to tumble. The 17% tumble off of its highs in recent weeks. Palantir stock was flying high, but it's gone through a recent rough patch. Since reaching a record high on August 12th, shares have been mired in a steep sell-off, falling 17%. I know your last trade on your podcast was Palantir. How you doing, girl?
which I got a little bit long too. I'm about unchanged on it, maybe down a nickel or something, with the stock really moving a lot lower than when I placed it.
That's not bad.
So no, right. So I'm glad you put it on. So I'm glad you mentioned it. So directionally wrong. Use the right strategy at least to mitigate some of that movement down. It was a ratio spread, so you're synthetically long a put vertical in there. Big one, $10 wide on 150 some odd dollar stock has been the saving grace here while you wait for your direction move, which I think is to the upside. Now it is down. You said 17%. It is up. I mean, if we look back a little bit, around 300% in the
Zoom
last
out.
year or so.
147% year to date ascent.
There you go. So 17.
Nikki, are you doing anything in Palantir? You want to?
I've been playing broken wing butterflies on the upside around the 200 mark. So I have since bought in the risk. So I have like some risk-free butterflies on the upside here.
Nice.
But nothing huge. I was just when the stock was at 190, the call skew was off the charts. You could do 10 by 20, 5 by 10 butterflies, broken wing butterflies on the upside for 50 cents to $1.50. And that's what I was doing.
Okay.
Buying in the risk,
Nice.
leave myself a little shot on the upside.
It works until it doesn't.
Yeah.
Hey, new reports are coming out that Apple is looking for its next cash cow, and it could be a folding iPhone. Apple's big event for the iPhone 17 is coming in just a couple of weeks, and the long-rumored iPhone 17 will reportedly be Apple's thinnest phone ever. But in 2026, Apple could hit the market with a foldable iPhone, though a phone in this picture is a Samsung phone that's being depicted. But Tom really wants this. I don't see the utility. What are your thoughts?
I don't get it. I don't get it.
Yeah.
I mean, is it for the bigger screen?
Yeah, it's more like a phablet, like a phone tablet, But I just see points of failure and rising costs.
I don't know if
But again, Apple's big event is next week, and this new phone is supposed to be revolutionary upgrades to the camera, to the operating system, everything all around. Sometimes it acts as a little mini binary event in Apple.
Yes.
What are you?
And most importantly, your battery on your old phone will stop working.
Yes.
So,
planned obsolescence.
Yeah.
What are you doing in Apple?
I have in my Johnny Trader account, I did a little iron condor there, but it's been tough because volatility is not that high. We've rode it on this rally higher, so I'm kind of neutral here.
September 9th is the date of the Apple event. So sorry,
Soon.
That's what I was looking up. Yeah, it's very soon.
Yes.
Nikki, you pay for YouTube TV,
I
right?
do.
You do? Okay, that's
Yes.
what I've thought that I had talked to you about that. Well, Google says that Fox channels are going to go dark on YouTube TV if an agreement is not reached. The Alphabet company said Fox is asking for payments that are far higher than what is comparable. The Fox standoff represents the latest contract dispute between content companies and delivery networks as viewers increasingly ditch cable. But now cable starts to look really good again because things are getting expensive.
Yeah. I don't know if cable looks good.
Well, but if I talked to you about this, like someone was like, hey, to watch the Denver Nuggets every single game, I need to spend $2,300 for all of these piecemeal, sites or whatever. Like, it's just, it's stuff like that.
Yeah, but it's the same thing with cable. Like cable.
I know, but back in the day, I'm saying in the you used to just be able to have cable and you could still watch all of your team's activities for the season.
No.
Yes.
No. You couldn't watch other market teams.
Not other
Yeah, you
market
get
teams.
everything, like, you can
your
watch-
in-market team.
Yeah, the in-market teams, some places, like we have like the Marquee Network for
Right.
Cubs and all that stuff, but that has nothing to do with cable versus streaming. Those are
Okay, you
those
can
are the
pay-
teams themselves capitalizing on their
How
their
much
own
do you
right.
think you spend a month for all of like your content? Netflix, Hulu.
I'm probably
YouTube?
getting close to what my Comcast bill was 5 or 6
See-
5 or 6 years
ago. Okay.
Okay, because Comcast, as a single guy in an apartment,
As
you
a
have
single
one
guy.
box.
Right.
Was $250.
Sure.
With the basic package and internet.
Right.
And we're getting close to that now with all the streaming services, but I've 50 times what I had with Comcast.
Sure. Okay.
So
if that's what
Comcast
you have
still-
to tell yourself to sleep at night.
I don't know.
I'm
But
just teasing you, Nikki.
but you know what? I watch TV. I watch sports.
Yeah.
I watch documentaries. I watch a lot of things. So it's a cost that
Sure.
makes sense for me. Some
Especially
people
when
don't,
we're
and
like
that's fine.
locked inside here in the winter.
Yeah.
Like, we need something to do.
Yeah.
What are you doing in Google?
But this will get resolved every year it goes.
Well, I hope so.
Get this email.
I hope so.
They have to. Fox can't. If Fox says, okay, take us off, they're screwed. Google's.
What are you doing in
gatekeeper.
Google?
I don't I do have a position.
Aha.
Iron Condor.
Okay.
220, 230, 190, 180.
Hey, I literally forgot about this because my minds don't work so good. But Figma had a record-breaking IPO that sent shares popping 250%. FIG is the ticker. Yesterday, banks initiated coverage of Figma, including JP Morgan, Morgan Stanley, Goldman Sachs, with a mix of buy equivalent and hold equivalent ratings. So I just thought I would check back in on this because I literally forgot that they were publicly traded.
Best job ever. Some have buy, some have hold.
Yeah.
Some, it's mix. You get to change
It's
it.
mixy.
Yeah. It's beautiful.
How are the options markets in Fig?
In Fig, let's take a look. You ask a good question.
Yeah.
Yeah.
Again, a new stock. I would imagine it's going to be quite wide.
Sure.
You know what? Better
82
than expected. 30, 40 cents is a lot better than I expected. It is only a $70 stock, but I would wait until the market's open.
Sure.
Yeah.
Yep.
Okay.
Yep.
Just be careful. Hey, Kraft and other companies have defeated a lawsuit over ultra-processed foods. Kraft, Oreo maker Mondelez, and Coca-Cola and several other major food companies succeeded in winning the dismissal of a lawsuit that accused them of designing harmful ultra-processed foods that are addictive to children. Lawsuit got thrown out. But they could have been on the hook for a lot of money. So.
I'm wondering how these companies are really feeling about like some of the stuff that they've done in the past.
I think they feel just fine on their yachts and their private jets.
You know what? I really feel like most people, especially people in that position, have a good conscience, and I know they're going to put the company first. But I mean, this is more than a trading platform working and not working, which is money on the line and
Yeah.
horrible when it doesn't work. But I mean, this is people's lives. I mean, there's nothing great.
No, I get it. Look, I told you, I made
Maybe I'm-
fundamental changes to my own diet after going to Europe, and I was like, okay, yeah, I get it now.
Yeah.
But it's like, again, you can't tell people what they can and can't eat. I mean, you could
I hear
try,
you. I
but
hear you.
like,
I hear you.
just
Yeah.
It's a moral dilemma.
do what you want to do. Just
Yeah.
whatever.
Yeah. That being said, I love a great Oreo.
Yeah, there's an Oreo with
I
some
mean,
milk.
now I'm into Oreo thins.
Yeah.
But man.
Yeah.
Have you
Oreo?
tried the Reese's peanut butter Oreos now? The new
No.
collab?
I'm
You're a
traditional.
purist.
Don't-
Okay,
yeah, I'm a
okay,
purist.
okay, okay.
And you have to put the Oreo half in the milk so it absorbs the milk, and then let it go. And when it drops, you have to quickly get it with a spoon and pick it up. That's the perfect amount of milk with the cookie.
Too much. Because I have both bats here, I thought I would do an Italian story. Olive Garden is bringing back the never-ending pasta bowl. Are you offended? Sorry.
This is
It's the only thing that beats inflation. Now through November 16th, customers will be able to order all of the apps, breadsticks, and pasta they can eat for $13.99.
Wow.
A price that hasn't changed since 2022. Pretty good. Olive Garden's E-Club members got early access to all the possibilities last week. Sorry.
I mean, that's a great deal. $13.99. That's
Have you been to an Olive Garden?
no, I haven't been
That's my
in many
son.
years.
Yeah. It was like,
College was probably the
yeah.
last time.
I mean, we have very, very good Italian restaurants here in the city. So, but where I am from, this is pretty much your only choice.
That's yeah.
Like where your brother-in-law is from, he's like, this is his only
Sticks.
choice. Yeah. Congrats. I don't hate
This
Olive
is-
Garden.
yeah.
Hey, Netflix is expanding their live sports reach. They've won the rights, the Japanese rights to the 2026 World Baseball Classic. Netflix yesterday said they were going to stream both live and on demand all 47 games in the 2026 tournament for their subscribers in Japan. Netflix up around 1%. So
What do you think there?
So Netflix has been stuck in the mud for the better part of the last month or two. Had its first kind of move higher yesterday.
because of K-pop Demon Hunters.
Probably. I mean, there's a lot you can do with the merging of these two things of the baseball and the
The K-pop Demon Hunters.
K-pop Demon Hunter. Whatever.
Yes.
Netflix up another $2 or $3.
Yeah.
Starting
See?
October 16th. There's no stopping the Netflix in Chile.
Maybe for your podcast.
Maybe for my podcast every Tuesday and Thursday.
Hey, finally today for my viral video of the day, Nikki pointed it out earlier. I do love robots. I love all things robotics. But this next video, I think I might have finally found a robot that I am scared of. Watch what this lady captured at her local grocery store.
Oh, not the bananas.
Oh, that's good. The bananas are following you.
You, yes, you. Grab a fresh Del Monte banana before I eat. Just kidding. I'm a robot. I can't eat.
Wow.
Oh, it sounds like my grandma who had a voice box. Like what is what?
Oh my God.
She had a stove. She had sadly,
You don't
she had
see
kids.
those anymore.
No, yeah, but she was like, give grandma a kiss. I was like, no.
Those were petrifying.
Yeah, it was a real.
That and the hook.
Yeah, it was a real
the
traumatizing.
metal hook. You don't remember those. Like,
Yeah.
You know, when I was growing up, kids who lost a hand or part of them would have like a metal.
Sure.
Hey,
Yeah,
how many
metal hook.
kids lost a hand that you knew?
Yeah, well, sometimes they said things they weren't supposed to. You know? Chop off a hand.
Street
You know?
justice?
Those were
Walking around
scary
with hooks?
things.
Yeah. But anyway, yeah, that robot
I had a
terrified
buddy
me.
named Kurt with a hook. He was scary.
How'd he
That's
lose
funny.
his?
I don't remember, to be quite honest with you.
I feel like that's something you remember.
I don't remember. Just always had a hook. That hook and the
Yeah.
That was
Always-
horrible.
Yeah.
That was scary stuff.
Yeah,
Like,
that's-
ooh, you bring. I'm gonna take a quick 90-second break and come back with hair on my arm and stand up. We'll be back in 90 seconds. We got more Tasty Live after this. Confirm and send.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability product.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Son, you know what that means. Time for a little bit more Tasty Live with Confirm and Send, where we go to viewer questions that they submitted. But you know what? Before we do that, let's take a quick look at the market. E-mini S&Ps down $4.50, a $33 range last night, top to bottom. I only mentioned that because the E-mini S&Ps have about a $33 range expected for a full day, $18 for the rest of today. So you had pretty much that expected move last night. NASDAQ down 26, Russell up 2 and change, and the Dow down 43. Russell and the Dow were the weakest of the group yesterday, with the E-mini S&Ps and the NASDAQ relatively stronger, not that much stronger. E-mini S&Ps sold off by about 20-ish handles or so, right there near the close, about 15 minutes or so before the close. They continue that weakness, down 5 right now. Volatility up 13 cents. Volatility really didn't move yesterday. You can see here on the chart, volatility was higher last night than it was all day yesterday, trading up to 1745, now back down to 1715. We'll see what happens for the rest of the day. Volatility goes higher usually if the market goes lower. I think volatility precedes any move in the market itself. So key on /VX for daily moves in the market. Bonds down 11. Bonds didn't have too much impact on the market yesterday, being soft-ish for most of the day. They're soft again today. We'll see how that moves the rest of the market. The notes, which is the shorter dated, are actually up a tick or two. Bitcoin's been a little bit sicky last couple of days, and going from after its high that it made just about a week and a half ago or so up to around 125 and change. It's 111. Now it's under 111, 110.6 and change, down just about 1,000. Ethereum, on the other hand, catching a little bit of a bid. You can see here Ethereum going a little bit higher relative or sideways action as Bitcoin gets weaker action. Oil, after catching a rally for the last 3 or 4 days, is now down around $1. That's a 1.5+% move to the downside of oil. Gold up $5 and change, and the gold miners, which I have a position in, with a little bit of short delta. Gold miners up around another 20 cents. You see here, GDX making itself a little bit of a move to the upside. Nat gas, since you mentioned it earlier this morning, finally catching a small bid here, just off of its lows. That's all I've got, son.
Yeah, we'll have to get an SPX trade on the open, or near the open.
Yep.
I think we got another little inside day today. I actually put on a iron condor in oil in the futures while we were on daily dose. I did the October 16th, so you got 51 days, 58, 56, 70, 72, playing for more of this kind of sideways move. It's back to, mid. We got to 65, which is kind of the higher end of where it's been trading, back to kind of the mid-low 60s. Figure kind of play this neutral for the next 30 days or so.
Awesome.
Cool?
Yep. Beautiful. All right, let's go. Let's see what.
Yeah, we got confirm and send.
Confirm and send.
Questions. Beautiful. All right, so do you pay attention to things like the advanced decline line when forming your market opinion? Wedges.
Yeah.
Things like that.
Wedgies and stuff like that.
You got a wedgie?
Wedgies and stuff like that we would be looking at. I would listen. I would be. It would be a disservice if I didn't say I look briefly, like I just looked at nat gas, and it's not something I really trade, but we just looked at it. It's at the low end of its range, lowest end of its range. It just made a small little blip up. Okay, is that an advanced decline line? Am I looking at a channel or that? Not really, but yeah, I'm looking at past price to figure out, where the stock is inside of a range from my contrarian point of view that I'm going to typically have, like a nat gas. I'd rather be a buyer than a seller. IV rank is now high in nat gas. So you know what? Maybe a put or a put spread in some product in nat gas, a short put spread, a long delta in a commodity would be the right thing to do for my style of trading. So no, I don't look and draw a line, everything else like that. But sure, I take it under advisement like I would anything.
I have some moving averages on my charts. I go back to Ryan Grace when we first had him on in our for our Crypto Monday segments on Option Trading Concepts Live, and I keep them just as like context and things to look at, and they're like data points for me, so I can see, we're at the, we just hit the 200-day moving average for the first time in 6 months. So it's a data point. It just tells you, that we're
another way of looking at it is we're weaker than we typically are, right?
Yeah.
So you would.
It's just a
It gives you some confidence to do something, whether you want to go with the same move or play a contrarian role. It gives you confidence to do something. That's all you're looking for is confidence.
Yes.
Yep. Don't you wish you had that confidence in school, son? I like the 0-day SPX trade. I typically sell the at-the-money straddle and then buy my wings $20 wide. That's typical tasty live research there. I believe the research presented suggests there's a high probability way of doing these trades. Well, the probability is whatever it is when you put it on, but yes, that's the way that we would look at selling premium. My question is, I'm never quite sure how much money I should be looking at to take in as a credit. Since it's a 0-day and my trade parameters don't change, I would expect it to have a relatively consistent range. I'm just struggling on how to determine that range. Any ideas?
So anytime you sell somewhere around the 30 to 25 delta short option and you go, 5, 10 points wide, you're going to collect around 1/3 the width of strikes. It doesn't matter what expiration you're using. The difference is going to be where you are relative to the stock price. So the 30 if you're doing the 30 delta for the shorts and going $10 wide and you're 50 days out in time, you're going to be way further out of the money. It's going to trade at $3. If you do it in those 0 day,
approximately,
somewhere around $3, $2.50 to $3.50 if volatility's higher. If volatility's higher. So when you're doing a 0 day, your 30 deltas are going to be much closer to at the money. If you go 10 points wide, it's going to trade for roughly $3. It's the same $3 credit. So if you're doing 20-point wide spreads, it's going to trade somewhere. If you're doing the 25 or 30 delta, it's going to trade somewhere around $5.
So let me get to my answer by asking you a question. So you just said $3 to $2.50. Let's just say for argument's sake. So if it's $2.50, should I not do it because $3 is close to what I'm looking for, or $2.70?
Well, they're asking for a range.
Right.
Range.
But unfortunately, in a 0 day, the implied volatility is going to mirror what that credit is going to be. And you are right. It should be around that $3-ish range. But you can't, the more you do it, the more you'll feel comfortable knowing when implied volatility is high or low relative to what's going on in the market. There'll be some times when you're doing this $20 wide, you'll collect $6 or more. There'll be other times when you collect $4 or more, like in that range.
It depends on what volatility is.
So it is what it is. There's nothing you can do about it. So then you have to say to yourself, do I think the market's going to stay in this range or not? Now, if you're getting more credit, that means the market has higher implied volatility. If you're getting less credit, that means the market's telling you that you have less volatility in the market, and then it's up to you to decide. There's really no way to determine if it's a good or bad trade because
that's hindsight. But right now, the 64.15, 63.95, 20 points wide with a short at 24 deltas. On the upside, 64.50, 64.70. 64.50 is a 26 delta, so you're right around 25-ish deltas. 20 points wide, it trades at, or it's marked at 540 right now, so it's right there.
That's why
it's gonna be. They're always going to be $5 around.
Yep. Good job. Next one, please.
So I understand you believe that the market ultimately controls interest rates and the Fed follows. However, if that is the case, why did the market react so positively when Powell spoke on Friday about cutting rates?
It's kind of, now look what's happening. It's all reversing. We talked about the 24, 48-hour period in the market. I mean, I'm talking about the bonds right now, not the market itself. The market hasn't really moved that much off of its highs. It cut back by about 25% of its move. Listen, it's buy the rumor, sell the news. It's usually a knee-jerk reaction. There's no way of telling what's going to hold and what's not going to hold. So then it comes down to one thing: what strategy do you want to use for your own assumptions? So you can look back and say, this is why this happened and this is why this didn't happen. And 48 hours later, you could say, well, I don't know. Everybody got more aggressive and didn't like it, and the big boys took their profits. It's all BS. Trade what's in front of you. And don't worry about what the reason why is.
Yeah, short term is random, noisy, all sorts of stuff. So
Yep.
Agreed.
Next one, please. The CME and FanDuel, we talked a little bit about this just a moment ago, just announced they are going to team up to offer event contracts on sporting events. If that's the case and the CME begins offering their contracts, does that mean Tasty will support them too? I'm sure they. What's that?
Yeah,
I'm
sure. If they're CME products, we will.
It might mean Kaushi's going to have a little bit of a hard time here.
Yeah.
Yes. That's how I look at this now. I'm not a publicly traded company or anything like that. But that was the first thing I read. 100%. I mean, you know what? We have a lot of great ideas that sometimes we can't get it from A to X, Y, and Z into.
We do have a lot of idea people.
We do.
A lot of idea.
Yeah, dude. But Tom has wanted to do something like this for quite some time. So I got to give him kudos for that. We just couldn't get it done in time. But now the CME is going to do it.
It makes it easier to.
Yeah, you got to plug in now.
Yeah, and it'll be regulated.
Yep.
It'll be everything.
Yeah, I think it should be fine.
Cool. Next one, please. All right. So you guys often talk about follow through in the market and how it reacts the day after a big directional move. As of late, Monday, the market has done a whole lot of nothing despite the big move up Friday. What is your takeaway from that, if anything?
Yeah, I think I talked a little bit about this yesterday. I was a little bit surprised by the strength in the market going after that big move, just as like you discussed here. Now we are a little bit lower, but not nearly as volatility is not nearly as high as I thought it would go. So what did I do? So I was less aggressive with my long delta and a little bit more aggressive neutralizing any long delta that I had in my portfolio. Now, has it worked? Slightly, not no great shakes. So for me, I say to myself now, you know what? I got to be a little bit more careful here with my directional bias and go to my bread and butter, which is really just looking for selling high implied volatility, which is very hard to find in the overall market here today. So for me, how do I deal with it? That's basically it. I tried to make my bed. It didn't work, worked small, and now I move on. I don't even think about it again.
Yeah, I agree with you. I mean, you typically see like the little bit of a pullback that we had. I don't think that's you know much of anything.
I agree. Yeah.
Next one, please. Me? Okay, sure.
Yeah, go ahead.
I read that the Magnificent Seven stocks. No, it's okay. You get to answer an email. So busy.
I got it for you.
No. Yeah, hey, you relax, big man. I read that the Magnificent Seven stocks make up about 1/3 of the S&P 500. Does that seem high? I'm not sure if the history of the index has always been that just a few stocks comprise the majority of the gains, but this feels like a lot of concentration. What do you think?
Okay, so I'm going to challenge. I'm going to answer this question with the question, which is not the way to answer a question. So I'll get to an answer in a moment. So I'm going to say, so what do you want to do about it?
Yeah.
Like, you know this, I know this, the world knows this. So what do you want to do about it? That's my question to you. So I'm going to answer your question here by saying, yeah, it does seem to be more concentrated than in years past. Does that have any bearing on the market? I mean, I guess a little, but it's been the same thing that brought us to these heights. So what do you want to do about it? You know, like I gotta go back to that. So, like, what do you want to do about it? Sometime in the future, whether it's today or a year from now or 10 years from now, somebody's gonna look back and say, look how obvious this was. You know, we were so concentrated in these stocks, and when these stocks sold off, it took the whole market down. Okay, yeah, I'll agree with that. But what are you going to do about it now? You could have had this same conversation a month ago or 3 months ago or a year ago, and you would be not benefiting from any of this move.
I also think these businesses are not just like one-dimensional businesses. There's a lot of, there is a case to be made that, a Google is 10 different companies, that if you cut them all up, they'd be 10, 200 to $300 billion companies. Same thing with an Amazon or an Apple. Like, NVIDIA is kind of a one-dimensional in the chip space, but they will probably have other products across other medians. And so, I don't really put any weight to this sort of stuff.
Awesome. Hey, listen, let's take a quick 90-second break. See, I can do this.
Beautiful.
It's my job.
You've
We'll
done
be
this
back with
before,
more
right?
Tasty Live with an option jive. Even the S&P down 4, NASDAQ down 32, Russell up 5, and the Dow down 29. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
It's options. Jive.
Nicky, we are back, my son, and you know what that means? Sorry, I didn't swallow well. Option jive.
I thought you were holding in a sneeze. Mikey is very obsessed with not holding in sneezes.
Really?
Yeah.
Because your
Katie
heart
does
stops or something like that? Is that what or is that an urban myth?
I think that's an urban myth, but selling that? No, Katie holds in her sneezes, and Mike's like.
I think it's true. I'm gonna give you 100.
I don't think so. I think you just got it, but you got to get it out. I don't know if you hold it in. It's like, don't you feel like unfulfilled? You got to just.
Son, I felt unfulfilled my total life. You kidding me?
Oh, I'm so sad. That's horrible.
Does your heart stop when you...
Option jive. Should we do the option jive? We got 10 minutes. We got to get to the opening bell. Come on.
No, the heart does not stop when you sneeze.
No.
Son of a...
No.
Option jive. Go ahead.
So
the things you learned here. You learn a lot of things.
I know. Mm-hmm. Increasing exposure, widening wings versus extra contracts. You know the story. What do you think?
I mean, come on. We all know that extra contracts, bad.
Yes.
Yeah.
Yes.
Widen wings, good.
Yes.
But let's go through it.
Cool.
Oof.
No, lots of words. Option trading offers powerful and flexible tools for precisely managing risk. So selling narrow iron condors involves no directional assumptions and offers limited downside risk per trade, making this an appealing starting point on an option selling journey. What a story we're building on that slide. As traders gain confidence in capital, the natural progression is to seek increased exposure to enhance potential returns. There are several ways to increase exposure, including increasing the contract volume or widening the wings. How have these compared? So we're going to be taking a look at a study looking at iron condors in SPY, and we're going to just answer the question of should you up the contracts or widen the wings? It's a question that we get asked multiple times a day, every single day. A very common
beginner questions. So on the next slide here, we're going to look at the study. So we're looking at using 12 years of volatility data in the SPY options, looking to sell iron condors 45 days before each monthly expiration with shorts at the 20 delta. Let's jump to the next slide here, guys. Sorry about that. So we're looking at pretty typical entry points here. So we're looking at the 20 delta, 45 days out. For every sold contract, we're going to look at the 10 delta and the 15 delta for the wings. So this is kind of going to what we talked about with our SPX trade from Confirm and Send this morning. But this is a pretty typical setup. 2010, 2015 for the deltas on each side. All the positions were closed at 21 days till expiration, and all the trades were assumed to exercise at the mid price. So we examined the results from the course of the study, as well as some of the most extreme years. So we looked at some of the outlier risk as well. What do you think you're going to see here?
Well, I mean, I think you're gonna find that the optimal, and I guess that's the key word to do it, is optimal is going to be going a lot wider with your wings than adding contracts. If that's not the case, then I'm gonna have to get up off this chair and leave, and everything.
We'll have to relearn everything that you've been taught
That's
over
correct.
the last 15 years.
That's correct. That's correct. Not only the last 15 years, probably the last 40 years, son. I mean, I'm 63. I started trading when I was 21. Yeah, so 42 years. Contracts kills. Now, I did make my bones going big or going home. I mean, that was the way that we always thought, but we didn't realize that the way that we were trading, even with the large size and being so leveraged that we were looking for smaller profits than bigger profits.
Now look at you. One lot Johnny.
One lot Johnny. It's a schnook.
Yeah,
I could have been somebody.
You used to be able to work one day a
now
month.
look at me, I'm eating egg noodles and ketchup.
Yeah.
I feel like Keenan.
Oh, God. Oh, man.
Bad.
Ooh, all right. Well,
next one, please.
Let's get to it. So overall, wider trades made more money while enjoying a higher percentage of winners. So you're looking at the SPY Iron Condors, 20 delta and 10 delta, one contract, 20 delta and 15 delta. We're doing two contracts here. You can see the win percentage is going to be higher for the wider wings. You have a higher probability anytime you widen out the spreads. You can see the mean P&L obviously higher, but the one that you have to keep in mind is your CVAR, which is your covariance of risk, is actually lesser than the two contract tighter spread. So the wider spread is going to have a lesser tail risk than your tighter spread. And it's all relative. And we talked about this a little bit yesterday too. It all goes to the fact that where your max risk is going to be much closer at the money with the tighter spreads, multiple contracts, versus the wider spread one time.
Yeah, 100%. I mean, look at the win rate. I mean, I know 4% is significantly different, but let's just make them the same and just go to the P&L. I mean, that's how I judge everything. I mean, you can only be judged by your P&L because when you lose money, nobody helps you pay that bill. And when you make money, everybody's in your pocket looking to spend it. So, $9 versus $8, rounding down and rounding
Didn't
up.
hold it in.
Don't hold it. I got a lot of people saying
Let it
it's
go.
really bad for you.
Yeah, you got to get it out.
That's the difference there.
Yes.
And the conditional value risk, obviously.
Yes.
Next slide, please.
So, yes. So the most painful years, this is looking at like your kind of outlier risk. The most painful years for these positions was in 2022, where the narrow iron condors were able to do
less badly. We don't
less badly.
English is not our first language.
Yes.
When we do here.
I don't know if that's correct. So we're looking at the SPY Iron Condors again. You can see obviously, this was a tough period of time. But you had bigger tail risk, so you realized a lot of those bigger losses.
Yes, and look at the win rate here. Now you're under 50%. I mean, it's okay when you're managing winners in that 60 some odd percent time of win percentage, but when you're under 50% and the majority of the times, although it might be 60-40 against you, the majority of times you're always behind. It's just a horrible way to trade.
The reason your CVAR is higher on this one versus the other is because the premium is not linear. So when you have a $5 wide for
let's say $2, a $10 wide doesn't trade for exactly $4. You have a distribution of premium that gets lesser as you get further out of the money. So the $1 wide, the one contract 10 delta is going to be wider and have more risk, total risk, than the 2015. So when you're having in the 2015 with 2 contracts. So when you're seeing, tail risk realized, you'll end up having more risk, total risk on the wider spread, but the probability of realizing that risk is going to be much lesser. So we're looking at kind of the worst period of time. When you take it as a whole, you have less risk on the trade as a whole for a longer period of time.
Very good. Next one, please.
So, and then similarly, in the best years, more contracts made more money. Again, this is if we're isolating the worst and the best, which is obviously very hard to do in real trading. You kind of have to take the whole batch together. You can't. We knew when the best and worst times were coming. It would be a lot easier to trade around those markets. Sure. But when you look at the best time, for the same reason as we outlined with the wider spreads having a higher max loss in the worst times because there was more max loss possible. Here, you have more potential max profit because, again, you're collecting more premium for those 2 contract at the money spreads. It's not, or closer at the money spreads. It's not a huge amount, but it is a small amount here, which you could see. But you can see, even in the best times, you have more risk on these tighter spreads, more contracts.
Right, you're looking at the CVAR, the win rate. But now let's go to the P&L, which is what I went to when it worked for us, and now it's not working for you here. So I would give you this food for thought. When you know it's going to be the best year, do more contracts. So I mean, I don't mind managing 75% winners. I can do that and come out positive. I'm going to be okay. Yeah. When you know it's going to be the best year, that's when you do more contracts. Yeah. If you can't tell when it's going to be the best year, go back to the default and go a little bit wider with your strikes. And that is my takeaway. Sorry.
As Dr. Jim would say, there's always a gimme and a gotcha.
Yes, there is. So, there is. Unfortunately, there always is.
Yeah. So
I didn't always think that was true in life, but there is. And one more thing, and I think I've said this to you many times when you were a kid. I don't know if you remember or not, but it's the same people on the way up. It's the same people on the way down. So be nice to everybody on the way up because you're going to meet those same SOBs on the way down. So be nice to everybody on the way up. Be nice to everybody on the way down because you're going to see them again.
Very nice. That is a takeaway, but we'll get to the takeaways from this segment. When looking to increase exposure, the flexibility of the option market gives us a wide range of choices. In general, widening the wings will increase the percentage of winning trades, and over the past 12 years, using wider trades has been more profitable than simply increasing the quantity of narrow trades, is something that we've always known. In both the best and worst years, however, sticking to narrow iron condors performed better despite the lower win rate. Of course, the caveat there is that you have to know the best and worst years, which we can only do when we start back testing.
That's
right?
correct. That's correct. You can only see it when you look back or the left
you
side.
You say that one was good, this one was bad. We're going to isolate those two. So in an efficient market, there's no such thing as the best trade. As you look to expand your exposure, pick the approach that has performed consistently well with your trading style and aligns with your risk tolerance and strategic goals. Generally speaking, widening out the wings instead of upping the number of contracts, especially when you're dealing with relatively high delta options, 15, 10 delta options. When you're looking at 2 delta options or 5 delta options, then you up the contracts because those are tail options.
They're tail options to reduce buying power.
You're synthetically naked, so now you can up the contract. You're looking at 15 delta wings, you'll probably widen them to 10.
Exactly. I think you said everything perfect. There's nothing for me to add. You did really well there. Good job out of the team, too, on a study that, looking at a subject we've done before. But you know what? I remember when I first started trading that I couldn't get put call parity for when I first started trading the box, if a call spread.
But you're simple.
I am simple. So using the same strike, if a call spread $5 wide is trading for $2, the put is going to be same strike is going to be called $3, put call parity, the box has to equal $5. I didn't understand why that was for the longest time, and it took one gentleman to explain it to me in a different way, and then I ended up making my living trading the box for the next 25 years of my trading. So sometimes you have to hear things a little bit differently before you get it. You hear the same thing different ways. It finally clicks. Let's take a quick 90-second break and come back. I hope that clicked for you. Widen those wings. We'll be back in 90 seconds. The opening bell is next. This is Tasty Live. You mean the S&P is down 475.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
If you missed the live show, here's our cherry on top weekly recap.
I got my Ted Lasso.
You actually have pants on.
Yeah, of course. I'm in school.
Huh, got it.
You're flexible.
It's cool. Yeah.
Oh, nice. You are pretty flexible. Let's see you get that leg up again.
Oh yeah, he's really. Right now, my other leg is cramping.
I believe that to be true.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nicky, we are back, son, and we got less than a minute and a half or so before the market opens. It looks a lot like yesterday. Yeah. I mean, just the stillness in the market. Even the S&Ps only trade around under 800,000 cars yesterday. We've got 160,000 so far right now. Down $5, NASDAQ down 30, Russell a bucker up $6, Dow down 42, Volatility up 16 cents to 17.20. Bonds back under 114. They are about 15 ticks or so off of their lows. They are about 15 ticks or so off of their highs. Definitely mid for the day. Bitcoin a little weak, 110.6, down another $300 from the last time I quoted. Trade down to 109.5, up to 111.5. Tighter range than yesterday, $2,000 range so far today. Ethereum doing the opposite, up about $52. Oil down $1 and change. That's where it was last time I quoted. Gold down, gold up $2, basically unchanged. Silver down 25 cents. Decent sized move in silver. Nat gas, after catching a little bit of a bid, is back lower. Ivy rank in there, 42, is pretty good. Looking at the euro here, it's up slightly, which means the dollar down slightly. Really kind of a small move here. We'll wait until the market opens here in about 10 seconds or so to figure out what's really going on in the market itself. What do you think, son, for your day? Up, down, sideways, doesn't matter.
There we go. I got my ding back, too.
Oh, you got your ding.
Did you hear it? Yeah.
I did.
That was a good ding.
It was a good ding. Yeah. Good ding. Strong ding.
It's good ding here.
Good. You got high D. Big D.
Functioning ding
Functioning
here,
ding.
in the
Functioning
office
ding.
today. Yeah.
Take a look quickly what's going on with the market. On the downside, you got Meta down around $3 and change. Coin down $2 and change, almost $3. Palantir down around $2 and change. Google down about just under $2 or so. Let's go to the upside here. On the upside, you got Lilly up 18. Man, Lilly I wish Lilly had better markets. I mean, here, you're going to go to October, 40-ish, 50-ish cents. I wish they were a lot better than I guess on a $700 stock, you can't expect too much more. But man, it's always one of those top leaders, biggest mover for the day, biggest mover on just a net change basis. Netflix up $9. I should say another $9 after a big day yesterday. Intuit up $6 and change. AMD up around $6. Looks like the upside, at least here on a lot of these NASDAQ stocks, even though the NASDAQ's down 9, is a lot stronger than what the market would reflect here. That's the way I'm looking at it so far. Boeing up $2 and change.
I think we're due for an SPX Iron Condor here.
Yep.
I think we're due for a little bit of a chop fest today. Maybe we do the 20-point wide.
So you're looking at 0 days here, right?
Yeah.
So what strikes are you looking at? I'll put it up on the board here for you. You're going to the 0 day. That would be with an Ivy with an implied volatility of 9. It's going to be low. If you go into the 30ish delta, you're going to 60.
I'm going to go to I'm thinking 10 points wide, 64.15, 64.05, 64.55, 64.65. I mean, I guess you can move this to 64.10, 6400 if you want to go really neutral here.
Delta neutral, you'd be saying.
Yeah, because the puts
again, you're getting around that $3 price tag that we talked about when we were doing the confirm and send questions just a quick moment ago.
Yeah.
Again, if you wanted to make it a little bit less long delta or short delta, you can get a little bit more delta neutral by moving either the call side up 1 or the put side up 1, depending on what your bias is on the overall trade.
Yeah, I did it slightly higher on the put side. So I did the 64.15, 64.05. It puts a 21 delta. Well, it's now changing now with the market rallying a little.
Sure.
And then I did the 64.55, 64.65. I did it at 3.05.
That's the mid price of it, yeah.
Yeah, so I mean, it's... Well, I did it just a minute ago.
10%, you'd be looking to get
270,
275, you know what I mean, as a closing. If you were looking for 10%, you want more. Listen, that's your decision to make when you're trading is all I'm trying to put out there.
Yeah.
S&P down around $1, NASDAQ down around $3. The Dow just turned bullish, up 11. Russell has been bullish all day, up 6 and change. I don't know. What do you see moving here, son?
Yeah, Lilly up 25 now. That's helping me a little bit. I had some long delta there.
In Lilly, you traded. I try to put on trades in there.
I did a Johnny trade in there for Tom. He poo-pooed it, but we're looking pretty good now. So I have a put spread there. In this account, I've got an Iron Condor, so I'm kind of flat delta, but I might be taking off this little Johnny trade here. We're about a scratch. I'm at the 700, 690, so I needed this move. I mean, we were right at the money yesterday.
Let the market kind of settle in a little bit here. I think you'll start to see
spreads aren't great.
Better market. I'm looking across the board here. just in my own account, I mean, you got shop down 50 cents, and then I don't see anything else really that's, it looks like a sea of green for an unchanged day.
Yeah, but it's all inside. Like you got some of the semiconductor stocks moving. Maybe this is kind of like a little buy the rumor type thing of NVIDIA earnings. You got AMD up. You look at SMH. SMH is up $1 and change here. AVGO kind of bouncing back. TSM as well. So you're seeing a little bit of a rally in those kind of names. The big names, you know, your Amazon is a 30-cent move. It's a nothing burger. Apple, Tesla, everything seems
muted.
It seems like just another chop fest here.
Yep, it does seem that way indeed.
Nothing crazy here.
Much like yesterday, thinking for the rest of
That's
the day?
what I'm thinking. That's why I did the SPX trade. I think we kind of just chop around. I mean, I don't think anything's, you know, vol basically unchanged. I mean, this is kind of exactly what we had yesterday. You had a little bit of a bid in vol into the open. It seems to be, you know, kind of the same story here. Maybe you get just kind of a chop fest and then vol contraction into the close and
Very good.
NVIDIA,
I have one more public service announcement
Sure.
that I forgot. It's Gad's birthday too.
Oh, happy birthday, Gad.
Yeah, Gad from the research team does a lot of our research here. Happy birthday to you too, son. Very, very nice.
Yes.
Reminded by the powers that be, we should say something
Wow.
to him while Tom is gone, because we're not allowed to do this.
Yes, yeah. No high fives, no happies, no happy birthdays, no happy anythings, you know.
I mean, you're supposed to have a birthday.
Yes,
What happens when you
exactly.
don't have a birthday?
Exactly.
And you don't have birthdays. I mean, you know, that's just the way it is. Even the S&P is down $1, NASDAQ down about $2, Russell up around $4, and the Dow down 21. Let's take a quick 90-second break. You want to? We got another option jive coming up next. You want to do that?
Yeah, sure.
Let's do that. We'll be back with an option jive next. Markets flat, unchanged. Place your bets.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You'd look good in either, you know what would good, like a nice Panama hat in the summer.
A Panama hat and a skirt? Oh my God. You look so sexy. I mean, you look like you just got out of bed, like you just
Don't say it. No.
through your hair.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's options. Jai.
Nikki, we are back, son. You know what I'm seeing a little bit today? I mean, I think is kind of the obvious. You got volatility up slightly. Usually you have volatility a lot lower right after the opening because that's just the way we've been going with the market a little bit higher. You got volatility staying bid. You got even the S&P is really doing nothing. Obviously, the whole market really doing nothing across the board here. Could we have one of those inside days where we have volatility expand a little bit? I'm looking at my own SPY position. And I have pretty much maybe a flat, maybe even a little bit of short delta in the overall portfolio. And SPY is basically unchanged, and I'm actually down a couple of dollars, meaning that volatility is getting a little bit bid, at least in the indexes from yesterday. So I don't know. Let's see what's going on.
The question is, what quantify vol bid? Are we talking 1%? We talking like 25 ticks, 30? Yeah, like no, I know half a percent. Now I'm saying, what does getting bid mean?
Right.
To us? Not like you're getting have high volatility.
No.
But maybe it stays where it is.
Maybe it stopped going down for a little bit. No matter what the market does, if the market goes a little bit higher, maybe volatility doesn't go down. If the market goes lower, obviously volatility is going to go a little bit higher. That's what I mean by volatility kind of being bid. We'll see what happens. All right, son. Option jive. Let's see what the next research piece looks like.
2 option jives.
Ooh,
is this normal?
Ooh,
we usually have 2 a day.
Only when I was younger. Now I have to take a nap. Gold versus stocks and bonds. The correlation. You'll get that.
Had a lot of Omahas today. This is why they don't let us do this all that.
NASDAQ up 17, catching a little bit of a bid.
All right, so for months now, gold has maintained its position near record highs. Meanwhile, the broader market continues its own upward path, reaching new peaks along the way. So we've seen quite the move in gold. It's been chopping around recently. We're going to look at kind of correlations here of all these products. Everything goes up and to the right over that period of time. You're looking at 20 years here. This is, come on.
Except volatility.
Volatility goes the exact opposite way. You flip this one over, and that's the way volatility.
But you are right. Looking at this from a 20-year bias is a little misleading. But you could see in 2012, I guess, if you wanted to, in that time frame from 08 to 16, where there was a big gap in the market. So there are some times when it gets uncorrelated. And I guess, if you have a longer term view, the way to look at that is there's probably nothing to do now with this correlation and maybe something to do when it widens out, unless you want to play for that widen out now.
Yep. Let's get to the next slide here. So this raises the question for portfolio management. Is gold still serving its traditional role as a hedge against market downturns, or should we now view it as an equity-like asset with growth potential? Rates coming down, money printer go burr. Is gold
continues to go burr? I mean,
continues to go.
Not be a new thing.
I mean, this is America's pastime, printing those dollars. Come on.
Yes.
To answer these questions, we analyze the relationship between gold and the S&P 500, tracking how their correlation changes through different market conditions. What do you think correlation is going to look like?
I think it's going to be completely random, and fortunately, through my years of trading, I've looked at bonds versus the market, and we used to look at bonds having an inverse relationship. Now they have basically no relationship to the market, and I think you're going to see the same thing with gold and SPY. Now you will get your gold bugs, that just love it as an asset, and it's worked obviously.
Shout out Slimmy.
Yeah, and Frankie.
Frankie in the chat, he's got something buried in his backyard.
I've sold gold to Frankie.
Have you?
Yes, like coins and stuff like that through the years.
You shaved the side of it.
Teeth, like gold.
Gold teeth. You took those from somebody.
Anything. He's a gold bug. So yes. I think you're going to see it being an asset like anything else. The correlation is going to be indifferent, but we'll see.
All right, so let's take a look then. So next slide here. Since the pandemic, we've noticed a new pattern. Gold and the S&P 500 show positive correlation more often than they did before. Not a shock because we've had such high volatility since the pandemic that everything, you kind of get the correlations go to one sort of fact here that everything kind of moves in correlated when you have volatility. So yet the actual numbers tell a different story. Currently at a negative 0.25, which is basically uncorrelated for the most part. We talk about high correlations being somewhere above 0.4. This kind of like, a hard story to tell in terms of correlation. With a 5-year average of 0.13, which is basically no correlation, and a trailing 12-month average of 0.12. Again, there's not much correlation here. You can even see it from the correlation chart. Sometimes it's positive, sometimes it's negative. If you took this all in a basket, 0.12 basically tells you that there isn't much of a correlation here, which does tell you something, right? Correlation of not having a correlation tells you that you can't rely on gold going up when markets go down or vice versa. This figure points to minimal correlation between the two assets, which, as we talked about, is fairly self-explanatory when you look at this.
Well said, and it does tell you something that there is no correlation. That is a point to take back. What's the biggest kind of phenomenon that I'm seeing on this slide is that the team was able to make 5 more slides after this non-correlation to come up with some more information on this option jive. Because if I was the researcher looking at this, I would quit right here.
The boys are good. They
go for another one.
They got good spin.
So let's see how they look at this. Yes.
So the 20-year perspective reveals something interesting, a correlation of exactly 0. And when you go back 20 years, there's going to be so much.
No, I think when you go back 20 years, you'll either see a high correlation or it'll be inversely correlated. Or
it's going to be 0.
Or it's going to be 0. So like I think when you look back, you really get what the correlation is in this product. Like here, you go to volatility. You're going to see times, in a short period of time when volatility is, correlated with the market, meaning it doesn't go down as much as the market when the market goes higher because it reaches a point of no return where, you're going to pay for risk. There's a time when you're going to pay for risk. I mean, I remember when volatility was 9 or 10, it stayed there forever, no matter what the market really did. But when you look at 20 years of volatility always goes lower when the market goes higher. And I think that's what you're finding here in gold and the market. There really is no correlation. Go ahead, I'm sorry.
So we isolated the two, biggest kind of crises here in the last, 20 years or so. We're looking at the 2008 financial crisis, 2020 pandemic. We even saw very low correlations during those times. So it's kind of, short term, maybe you see that sort of flight to quality, but on longer time horizons, the correlation of gold being a safe haven isn't really, there isn't much correlation to that on a long period of time.
Yep, you're definitely right.
So getting on to the next slide here. So these findings challenge common beliefs about gold's hedging capabilities. While it won't reliably move in opposite directions during drawdowns, its independence makes it an excellent diversification tool. So let's jump to the next slide here. So we've identified that there's basically not much of a correlation in gold. Next one we're going to be looking at is bonds. So we're going to look at gold and bonds and see if there's a stronger relationship there than versus the S&P 500 down 9.
Yeah, you mean the S&P down 9, NASDAQ down 62. Russell's still hanging in there, up 8, and the Dow down 30. But yep.
So jumping over to the next slide here. So in the past 10 years, gold and bonds began moving together more often. This makes sense as investors often group these assets as safe havens during uncertain times. So still with correlations rarely above 0.5, we're looking at weak to moderate relationship at best. Again, in the short term, you might be able to build the story more that, on a big move over a 5 or 10 day time frame, you might have a much higher correlation. But when you widen out this data set, it becomes much more, random.
Yes.
The correlation isn't as
it certainly does. But if you're going to have to pick one of the two, you probably would go to bonds to look for that diversification in your portfolio.
Sure.
I mean, you have a lot more green here than you do in last.
But this is correlation of bonds and gold.
Bond and gold, yes.
Bond and gold
yes.
usually go in have a stronger correlation than you would think would be a higher negative. You would think that the negative correlation in gold and the S&P 500 would be much higher than it is.
Right.
This correlation is relatively high, but you would also think this would be much higher than what it is. You would think that bonds and gold would have a high, that those are the safe side. S&P 500, NASDAQ, IWM would be the risky side.
Now, you're 100% right. You're right. You're looking at bond and gold here, not bonds in the market.
Yeah.
So I take it back. Yeah, you're 100% correct. So you've got no correlation either one. So where do you hide?
Where do you get diversification? The whole point is that
size is your only diversification, and then strategy, because you could put on positive and negative delta trades with your strategies to diversify your portfolio, which is what we've always talked about since the beginning of Tasty Live, has always been you diversify through strategy. It's so hard to diversify any other way because everything typically moves in the same directions. When they sell assets, and when they buy assets, whatever those are.
Yes, exactly.
Right. Yep. Next slide.
Yes. So across multiple timelines.
And who is the they, by the way?
The shadow hand of the Fed.
That's correct.
The insiders, the Illuminati,
That's right.
Bigfoot. That is they.
That is the they.
That is the they.
And they are powerful.
Yeah.
Go ahead.
Across multiple times. That's a joke.
Yes.
They is just the market. All of us, everybody.
We're all the
things.
thing.
All the things. Yes, we're all taking in the same sort of information and figuring out how to deal with the unknown information that everybody
else knows, that they know.
That they know. They don't know that either.
Right.
Okay? It's always unknown. There's always an unknown. Right. So across multiple timeframes, the story remains consistent. Minimal positive correlation. So there's been like no huge correlation in either direction. Even the 20-year average sits around sits below 0.20, which is still relatively uncorrelated for the most part. What this shows is clear. Gold moves independently, largely disconnected from major market movements, despite occasional periods of strong alignment. Again, it goes to volatility. Volatility is when you have high volatility, everything tends to go in the same direction. It's going to be in both directions, down, up. You have upside tail volatility as well. You see that in April when you have the VIX at 30 and the market's ripping, 2, 3, 4%. That's upside volatility, but everything moves in that direction. And same way to the downside. Everything moves to the downside when you have downside volatility. When you have realized volatility that comes inside implied, so like today where nothing's happening, it's all random. Today, markets are down, gold is slightly up, silver's down.
What market you're looking at, right? The Russell and the Dow are up small.
Yeah, one's up, one's down.
Again, it's uncorrelated.
Gold's up, silver's down, bonds are down, Bitcoin's down. It's a mixed bag. This is an example of 90% of the time when implied volatility is way higher than realized volatility, which is what we trade for. Some is up, some is down, some is sideways, some is up more than others, some is down more than others.
They start calling it a stock picker's market, son. And then when volatility is low, they say it's a stock picker's market.
Of course.
That's just the way it works.
Yes.
Right?
So, when things are going crazy, it's all kind of one way in both directions. when nothing's really happening, it's all random.
Right.
That's why we do what we do here.
Well said. Well said.
Couple takeaways other than that one. So gold operates independently, with virtually zero correlation to equities. It won't protect against market drops reliably, but that independence creates true portfolio diversification. It is something that, has very little correlation, so it has a use, as we talked about.
Yep.
Its correlation with bonds is surprisingly weak during 2008's turmoil. Gold and bonds showed just 0.07 correlation, undermining the idea that gold provides bond-like protection in crisis periods. I think, again, when you zoom out, like in the short term, things you can kind of play into that sort of correlation. In the longer term, it's it's all kind of random.
Absolutely.
When you look at day-to-day stuff.
Good job out of you. Let's take a quick look at the market before we take a break to get to our market measure. Even the S&Ps are down 50 cents. It really has been a nothing burger all day. How is your SPX trade? What is it looking at?
It's come in about 30 cents, marked at like 270, 275.
So
Sosnoff would take this off right now.
So you've got your
himself on the bat, but
so you've got your 10% and you're electing not to take it.
Yeah. Well, like we said, we got a little
bad boy. Yeah. NASDAQ down 25 cents, Russell up 11, Dow up 14, volatility up a nickel, and the bonds are down 15. Bitcoin still continues to be weak, 110.5, down a little over 1,000. Some of the market movers to the upside is still Lilly to the upside. APP up 8 and change, Intuit up 8 and change. Boeing, which was only up around 2 or 3 on the opening, is up closer to 4 now. You mentioned AVGO a moment ago. It is up $3 and change. Tesla's up around $1.50 or so. Lulu up $1 and change. On the downside, you're looking at Costco down about $6 and Coin down 4 and change. Robinhood with IBKR going into the S&P 500. Hood is down $2. Let's see what IBKR is doing. Interactive Brokers down 25 cents after being higher this morning pre-market. Let's take a quick choppy market. Even S&P's down 3.5. We'll be back in 90 seconds. We got more Tasty Live with a market measure next. Back in 90 seconds. Tasty Live. Volatility up 10 cents.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
We are back, my son, and E-mini S&Ps are up $1, Nasdaq's up 3, Russell's up 14, Dow's down 2. Much to do about nothing with volatility, almost unchanged, 17.05 here. So far, holding pattern. I mean, after yesterday's kind of complacent move in the market, although there was a little bit of downside movement to the market, we've really witnessed nothing here today. A lot more action overnight than anything that we've had so far today. What are you thinking?
More chop.
More chop. More chop. Okay.
I think it's gonna be like that all day.
$2. Apple's trying to save the market yesterday. That's your lagger. I don't know. I would key on Apple and volatility today and see if we can get a little bit of a run here in the market, one direction or the other. A ding. I heard a ding. What'd you do?
I just closed out some cheapy calls and IBIT.
I thought you were going to take your profit in SPX.
No, I routed an order to take $100 out of it. So
you left something.
I put a GTC in.
Yep. You left a resting order.
Yeah. So I put a resting order in at 205. It'd be $100.
Gotcha. So, all right.
It's marked at 235, 240-ish.
Okay.
It's come in about 65 cents.
Okay.
If you want your 10, 15, 20%, you take it right now.
Perfect. That becomes a personal decision, right?
Yes.
All we can do is lead you to water, can't make you drink.
Hey, as long as you stay small, you can take some risk. It's okay.
That's 100% correct. As long as you stay small, you can take some risk, you can take some profits. You're 100% correct. Very good. Let's go to the market measure. Not too much to talk about in this market so far. Not giving us a lot of content.
We've had including the overnight
range in the E-mini S&Ps?
Yeah, for the E-minis, we opened, around 60. We're at 64.55 close. We opened at 64.60 is what we got here. So up a couple points. I mean, we've been between 64.55 and 64.45. It's been 10-point range. Nothing to talk about.
Yep. You're right.
Wish there was.
Tradable 4 or 5 point range, right? I mean, you're not going to catch the top. You're not going to catch the bottom. I mean, that's really what we've just been chopping around.
I don't know. I talk about it with the team out there. I'm like, nothing it was worse than when vol was at 12, 2017-ish time frame, 2016, 2017. Like, I don't want that coming back here. Give us a little.
I don't want it coming back here either.
Ever. So, give me a little pullback, pop some vol, and that's what I want for the market. But
Hey, can we talk about just one up-and-coming event, please?
Sure.
We've got a nice. Well, I think it's probably one of the best shows. I know you might be partial to something else, your own, but At Work by 11, everybody. We're hitting San Francisco, California. That is correct. Friday, September 5th. The doors open at 8 a.m. We'll go from 8 to 9, where Tom and I will just meet and greet you and love to hear from you and talk trading and talk strategies and talk whatever's on your mind. Love that. The show starts at 9. We trade for about an hour and a half or so, and then we go to a break again where we come right into the audience and take more questions and everything else like that from you. And we'd love to see you. It's great to, press the flesh and meet people and see how they take to some of the strategies that we'll trade about 40-ish different strategies with different products, which is great. So come out. tastylive.com is where you can sign up. /events is where you can get your tickets. Still room for you. I'd love to see you. Sound
Very
good?
nice. Is it retro Tom trading? Like, is Tom like slinging them? Or is it like current Tom where he's like...
No. It's not about the size of a trade. It's not even really about the P&L of the trade.
The risk. That's what I'm talking about. Is he on the tails? Is he like 10 delta this? Like,
No. He's doing them. He's doing them right. He's doing them right. We usually make a couple $100 throughout the show. It's not about the monetary gain. It's really just showing how you can put on a full portfolio in about an hour and a half while you're talking to people with your back to the screen, and maybe make yourself a couple of $1,000 in theta decay per day. It's an interesting show. So come out and see us. We'd love to see you. Anyway, market's unchanged, son.
Yes.
Now volatility down 4 cents, sitting right at 17.
Can you get my SPX here? We're at 225. Do I take it? Do I take the money?
I do. Yep.
I'll try 220 here.
Good luck to you. Good luck to everybody out there.
I got it in at 225. We'll see if we hear a ding throughout this.
I'll be on the lookout.
Cool.
When daily ranges drop.
Market measure. Sponsored by the CBOE.
This is true. By the CBOE.
Yes.
When daily ranges drop 15-30%, how to adapt. And what they're talking about is volatility contracting here, right? Is that what they mean?
Yeah, I mean, we're looking at ranges in markets as a whole. So when we talk about like getting these big outlier moves, that volatility contracts and things start to not move as much.
Mm-hmm.
So that's what we're going to be looking at.
How to adapt. This is probably one of the hardest pieces or one of the hardest things to teach somebody is to adapt to market conditions.
I know there's nothing. That's what I'm talking about with volatility. It's like you don't know how great having high implied volatility is until it's gone.
That's right.
And you get those emails. I can't find any trades. Like what are you looking at? There's nothing, out there, and that's because volatility contracts and things don't look as juicy. It doesn't look as interesting to trade them.
Correct. Kind of like when I left you as a football coach and you went on to your high school coach, you didn't realize how great I was until I wasn't there.
Totally. Exactly what I thought. Exactly.
Bada bing, bada bing, bada bing. Put it on the board. Good job out of you.
Yeah, it took a couple bucks.
Very nice.
Nice little lunch money.
Lunch money.
Yeah.
There you go. You're supposed to say, Bat, you can eat today. Now you don't know who you're talking about, though.
No, I can't afford. Hey, $75-$80. That's barely enough for one now. Come on.
You're not kidding.
Yeah. That's like the per diem when you go to these live events, $80.
That's right.
You watch. You keep tally.
So I'm told.
Let's get to it. So daily ranges, what to do when they drop. So with current market volatility conditions, we're noticing the daily ranges in nearly all assets are declining, as seen in today's market with absolutely no movement in the market as a whole. So let's compare the current average intraday ranges for a variety of products and compare them to the averages earlier this year when markets were much more volatile. So, you have this kind of period of high volatility is what we're going to be looking at versus periods of low volatility, and just see how big that changes is really, kind of the story that we're going to tell here. Obviously, you're going to see a lot tighter ranges currently than we did in the past. So
very good.
So the study, getting to the next slide here, we're looking at the S&P 500, the NASDAQ, the Russell, crude oil, 10-year notes, and the euro. So we recorded the daily intraday ranges since January 1st of 2025. So we were looking at just this year's data. I like these kind of studies because they're looking at what we're currently trading in, right? When you look at these longer duration studies, there's a lot that's baked into that. I like to see what we're looking at right now. So this is one that will be pretty interesting. So we're comparing the average intraday ranges from January 1st to August 1st to the average ranges since August 1st. So we're looking at, the last month or so, a little bit less than that versus the rest of the year and just kind of what those average ranges have been. So looking at the S&P 500 first, and we're going to be using the E-mini S&P 500 as the benchmark here. So that the range for the S&P 500 in totality has been just under 650 points. So average intraday ranges from January to August, 96 points. That's a lot. That's about a little under 1% in either direction for pretty much day to day. That's kind of what your average has been. When we started the year, just below 6,000, I think we were. What were we at?
Yeah, I mean, you're looking at SPX.
No, E-minis.
/ES, which are obviously going to be around the same with cost to carry.
Yeah, we were at 62-ish, and then we sold off through the beginning of the year.
Correct.
Yeah, we were 6,000 started around there.
6,050, whatever. Sure.
96-point range. 50 in either direction. It's roughly 1% either direction. That's some volatility. Since then, that's come in about 33%. It's only a 64-point intraday range, which is, today we've got a 33-point intraday range. That includes
not over, but yes.
That includes the overnight session. So
that's right.
You are seeing that that's a lot. You're talking about a lot of a lot tighter of a range. In the market, there's a lot less opportunity.
Sure, the way I look at it.
Volatility is opportunity. So, you can see it in the chart. Much less movement.
Now, remember, you're looking at the S&P 500 in its totality as opposed to individual stocks. I think the last year you've had a lot more opportunity in individual stocks than you have had. I just mean magnitude of the move than you had in the S&P 500. Go ahead.
Very nice. Next one. NASDAQ. Obviously going to be a much wider range here. 2,600 points has been our range. January to August, 434 points is our average intraday range. This includes the high and low. So this is, if you go 200 points to the downside and then finish 200 points to the upside, that would be 400-point range. So you're looking at high to low. It's not necessarily in one direction.
Yeah, if you were looking at a daily chart of the NASDAQ or the S&P,
it's the whole candle.
Yeah, you would see big candles, the first couple of months.
Yeah.
And then the last 3 or 4 months, those candles become a lot tighter. And that's what you've seen really all to the upside. I mean, since April, we've just, stair-stepped our way, higher in the market.
Yes. So that has contracted significantly as well. So 27% is our change in terms of the range that we've had in the NASDAQ, which we use the NASDAQ futures here for this as well. So again, the last month has been a grind. Is really what the story tells you.
Yep.
It's been a grind to the upside. It vol's contracting. It continues to contract. It's been a grind. So that's what we've seen here.
100%.
So getting on to the next one. So we are looking at the Russell. The Russell with a little bit more volatility at periods of time. You can see kind of the spikes here are a lot wider than in the NASDAQ and the E-minis. But you can see the average intraday range. January to August, 48 points. Since the start of August, it's only been 41. So that's come in about 15%. So you can see where the bigger volatility has been is in the NASDAQ and the Russell, which is no surprise. We've watched it, over that last month.
Yeah, no surprise here.
Yep.
No surprise at all. But again, they all kind of mirror each other, right?
Sure.
I mean,
they're all contracting.
They're
Again,
all contracting.
correlations go to 1. So when volatility contracts, everything contracts. All the products, they have less volatility. It's across the board.
Well said.
So getting into crude, so it was a 12-point move in crude. That was our range, and that was in June. That was the biggest, widest range that we had there. So January to August, we had a 2-point move, average intraday range, which is a lot in oil futures. Since then, it's been 1.62 or $1.62. It's come in about 24%. So again, volatility even in crude oil. We've had some craziness recently in crude, has still been, and by craziness, I mean geopolitically, you know, there's been events. And so it's certainly had some volatility, but even so, it's been far less volatile than earlier this year.
So far, my takeaways on all of this is, you know, now's not the time to ramp up. You know what I mean? When volatility is low, now's the time to keep your trading even tighter or smaller than you would have in times of high implied volatility. Again, another study just piggybacking a lot of what we talk about on Tasty Live for the last decade plus.
Yes. Getting on to the next one here. So we've got, or the last one, I should say, the euro. Oh, no, I'm sorry. We're on notes. Oops, my bad. So notes, $2.80 move, 2.8 points here on the 10-year note. Again, even note volatility. Bonds, notes, contracting.
This is going to be a recurring event.
You think the euro is also contracting?
I would say so, son. I would say, son. I mean, you know, fool me once, you know, shame on me. Fool me once, shame on you. Fool me twice, shame on me. So, I mean, yeah, and I think it's going to be the same. I don't think you're going to find anything that's going to be a little bit different here. I think there's been a kind of a theme throughout today's option.
You get some high volatility, and then you get
This is why we talk about selling implied volatility. I mean, that's another takeaway. You're making a great point here. This is why another reason why we talk about, you know, ramping up and selling implied volatility when it gets higher. You know, when it's the scariest as well.
And those opportunities are typically much lesser.
Yeah, you're more. We talk about this, Tom, a lot. I mean, you're more in the
just
doldrum.
call me Tom.
We talk about this a lot when Tom's been on the
Oh,
show.
I thought you said we talk about. Okay.
No.
You do that to me again.
Never. I would never. Volatility is usually in this range bound more than it is. You know, 67% of the time it's in that range bound doing nothing kind of thing. So when you see the opportunity, you know, it's hardest to act, and that's when you have to act. And that's what we've been trying to drill into people's minds for a long time.
Yes. Last one, please.
All four indices are green for I think the second time today. So we'll see what's
going on. E-mini's up 2.
Yes, ever so slightly, yes. I mean, the Russell, again, going to this, the Russell being a lot more volatile, up 19, which is almost a 1% move in the market.
It's kind of surprising with bonds so weak.
Yeah, bonds 113.25 continue to sell off. Yep.
Last one, the euro, of course, contracted as well. So we're looking at the biggest ranges in the euro, 34 ticks here, which was in April. We've seen some volatility in the currency space recently. So, you know, that range is a lot closer to what our extremes have been. So not as much vol contraction there, but certainly have seen some of that, you know, throughout.
That's why you hit on currencies yesterday by saying, you know what, they have some of the better implied volatilities on the board. And you've seen it right here. Yes, lower, but not as low relative to the rest of the overall market. So, you know, if you are a commodity trader, you can go that way. I mean, this is your time to shine, I think.
Yes.
That's why the FX guys have been so popular lately, too, which we're going to see on the show again today.
I've been trading the Tasty FX products nicely.
Nice.
What I love about it is you can get super, super small. The leverage, you get tons of leverage.
Right.
But as long as you stay small, you can hold them. And I just kind of let them go. And
give yourself time to be right.
Yes.
Because the amount of money that you're investing is minimal. I think that's the way you trade currencies.
Yes. And you're taking, you know, like I'm controlling.
It's a boring trade.
It's a boring trade, but you can, if you stay small enough because of the leverage you get, you know, you
could be like a little ATM machine, give you a couple of bucks to get
$20, $25, $50. Like I'm not trading my FX positions to make, you know, hundreds, thousands. We're talking about like 50, 20, you know, $25, $50
True
wins.
lunch money.
Lunch money. And then you put them on, you trade them when, you know, currencies get to an extreme, whether it's high or low. Currencies, you know, have that sort of chop to them. There's not like, you don't have a there's no like, obviously you have risks of currencies, but when you're trading the euro,
I don't think the euro's going away. It's going to be there. So
You bring up a great point, and I think it's been my problem with commodity trading. I think you could say this about FX. You could say this about oil. You could say this about gold. You can say this about just about even bonds. You can say just about any product. Position sizing has to be extremely small and give yourself time to be right in these basically 50-50 shots under.
Yes.
Good point. I think it's been my problem.
You got lots of problems. You just add it to the list. It's all right. So wait, can we go back to the last slide? I forgot about that one. Sorry.
Sure.
So daily ranges are down 15 to 33% across the board. Your position sizing should drop by that same percentage. Is exactly what my dad was saying in terms of right now you're being a little bit more selective with your trades, sizing down. We talked about yesterday buying the wings. That's a way to kind of mitigate that long vol potential, realize vol potential. So, it's exactly what we were just talking about here too, of sizing up or at least allocating more towards trades when volatility is high, reducing size when volatility is low. So the example of position sizing math, keeping it simple. So the old range divided by the new range equals your multiplier. Then try to use the inverse. So we're actually we're quantifying this. So, in terms of the current range, and this is obviously if you're a one lot Johnny, you can only get so small. But if you're trading a little bit in size, trade 2/3 your normal size now versus what we were looking at. And that's just looking at the difference in the range that we've seen. So there's less volatility now. We're going to do 2/3 of our size in the S&P 500. In NASDAQ, again, 3/4 of your size. In the Russell, 85% of the normal size. So, 0.8%. 3/4 of the size in crude oil, and so on and so forth. And you can kind of look at this as a way to quantify how much smaller you're getting when volatility contracts. And when it contracts, you reduce position sizing proportionally to the risk that you're taking. So just reduce size. Whether it's, and when you guys are talking about reducing size, we don't do this, we're not trying to stick to this as like a hard and fast rule. But, things are less opportunities right now. Maybe you cut contracts by 10, 20, 30%. Take less risk on certain positions that you normally have more risk on. You don't have to, have a perfect exact number.
No.
Do something and change what you're doing.
You're 100%. You have to look at it and do something different. Yes. Otherwise, you're destined to have aggravation.
Yes.
Nobody wants aggravation. Yep. Good job.
Takeaways, last slide here. So smaller moves require smaller trades, tighter management, and smarter product selection. The percentage still work. The absolute dollars just get smaller. So, you're still and this goes to kind of our SPX discussion, higher volatility, you're wider, you're further away from the stock price, lower volatility, you're closer at the money. The spreads and the trades are relatively the same. It's just relative to where you are on the distribution. With volatility compressed, far out of the money strikes lose value quickly, move strikes closer to capture meaningful premiums, but expect smaller credits overall. Smaller ranges equals hidden leverage. You don't scale down, so prioritize percentage returns, not absolute dollars. And then this kind of goes to what we talked about sizing down some of your positions by some percentage relative to your normal sizing. So not all assets compress equally. As you can see, everything does tend to contract together, not in the same amount, but volatility is low, so volatility in everything is low. When volatility is high, volatility in everything is high. Just kind of the way it goes.
Very correlated, yes. We had a lot of uncorrelation. We'll show you correlation. Even the S&P is finally catching a little bit of a bid here, and Vanetta PLTR is actually up $1 and change. Now my spread's making money, so.
Oh, wow.
To you. Even the S&P is up $5.50. NASDAQ up 44. Russell up 19, and the Dow up 15. Volatility in by 9 cents, and bonds down 18. Bonds, they're the canary in the coal mine right now, down 17 17 ticks, not really catching a bid here, actually getting a little bit soft.
Down to kind of the lows that we had on Friday.
They've
basically taken out, or at least taken out the rate cut speculation here.
Yep.
And have kind of gone back to where they were trading at. That's pretty interesting.
Again, that whole 48-hour move. Now, the market hasn't done it yet, but the bonds really have.
Pull back. I mean, you don't have to have a full reversal, but you got your little.
Understood. I'm with you. Bitcoin 111.1 also catching a little bit of a bid here after trading under 110,000, 111 and change back over where they kind of closed yesterday on the cash. Let's take a quick 90-second break and come back. What do we got coming up next?
I don't know what to call it. It's kind of a special. You know, it's a special. We're gonna have Quinn from the trade desk.
He's very special.
He's a good one. He's a good one. Former research. He was our research intern. Do you remember that?
He was of course. I know his dad too. Sure. His dad was just a customer. Became very into supporting Tasty Trade and Tasty Live, and
gave us his firstborn son. I don't know if Quinn's the firstborn, but gave us
one of his sons.
One of the sons.
Doesn't matter where he was.
So we got that. So we're gonna have Quinn come on for the trade desk. So live from the trade desk. We're also gonna have Glenn, aka G Money, come in from Tasty FX, the money man. We're gonna have Dan from Tasty Crypto, or maybe Ryan. Ryan, is it Ryan?
It's Ryan.
It's Ryan. We're gonna have Ryan again from Tasty Crypto to give us some news in the crypto space. So we are covering everything you can trade on the platform. We're gonna have a little bit of a little sprinkle of that just coming up here in our Tasty Extra.
I love it. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the boys.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Yeah, that's gonna go. There's a spider on my desk. No, kill it. Oh my god.
Where is it?
It's on my microphone.
I don't see it.
Not from there, you won't.
Oh god.
Spiders don't bother me at all. Just the big ones.
No, it didn't bother you at all. From where you were sitting, you had no problem with it. Man, let me tell you something.
Thank you,
I don't want you to throw me a life preserver. That's never going to happen.
Thank you, Bat, for coming to my aid.
You're welcome.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Do you have a sleeper pick for the second half of 2025? Is there any company you're watching that's not being talked about you think could have a good second half?
Well, the one stock I think that's cheap relative to a lot of other stocks right now is probably Apple. Now, not that I love Apple, but relative to its brothers and sisters, it's cheap.
I've been saying this for a while now, but I am not turning my eyes away from gold. I think there's always a lot of interesting opportunity in there, both on the long side and on the short side, particularly in the gold futures options.
I'll say CoreWeave, CRWV. That stock has been on the move. I feel like it kind of reminds me just of, from iPhone standpoint, of when it came IPO and the way that's trading, of Snowflake, SNOW. It reminds me similar to that. That's one that could be moving higher in the months to come.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Nicky, we are back, son. Even the S&P's meandering around, although they are up 4. I think the whole market's meandering around. NASDAQ is up 41, and the Dow is down 2. Let's just call those three markets basically unchanged. The real strength of the market here is the Russell again, which we just talked about. It's been more volatile than the other three markets, even the S&P's, NASDAQ, and Russell. With volatility down 9 cents. Some of the movers for today to the downside. I mean, Costco, Home Depot, Coin, Google down $1 and change. PDD after earnings is down $1 today after being up and down yesterday. I think closing the day up. Lily's still up $20. App Lovin' is your up $16 stock. Apple is still down by 76 cents, so where it was down almost $2 earlier today. I mean, much to do about nothing throughout the overall market.
Yeah, I got really nothing popping off my screen here. I sold a put spread in CrowdStrike. They have earnings after the close tomorrow. Stocks, I mean, it's up $4, but it's been, it's been whacked pretty much over the last month or so.
Nvidia is the one that everybody's looking at.
Yeah.
About $1 and change.
Well, I went to CrowdStrike because it's got a 36 IV rank. I'm like looking for things to do. I'm a little, I'm kind of bored. With this,
Right.
And you're only providing some entertainment, so it's like,
right. You gotta be careful when
I
you
got to
get
do
bored.
something. I got to put some risk on or something. Call Diagonal and iBit too.
Some of the big, a lot of people trade iBit. iBit's been
I love trading.
Yeah,
great.
iBit's been a good trader. Where on the other hand, like BITO is not a great trading vehicle for options. I mean, if you want to trade the stock, obviously it's liquid, pretty much a penny or two wide, easy to do there.
Yeah.
Take a look at your zero trade. Just create another opposite order.
It's probably come in another.
I was just wondering to see what it's
210, 205. See, I should have waited. It was you. No.
You would have made another 20.
But that's the thing. We get that. I should have waited. If I waited.
No, you can't do that. I just want to show people how it moves. Intraday. Because you've had it on for about an hour now, right? I mean, since you put it on. So with the market not moving that much, it gets a point where. It becomes diminishing returns. Your probability of success goes up, but it doesn't move quite as quickly. So it would be interesting to see over the next couple of hours, where that spread goes to. Maybe some content.
$2 now.
What's that?
$2 now. While you were talking, I lost $5.
Because the market came back down a little bit, and you have a little bit of short delta on
into
that.
This move.
Yeah.
Okay.
You know what? Who has no short delta?
Who?
This next person who we're going to bring in. Now, I know, it's not often that people, you can't get a one-letter license plate in Chicago anymore. They're all taken.
Oh, yeah, they're all taken. Yeah.
They're all taken.
Ones. Yeah.
And I thought the one-letter monikers were taken here at TC Trade, but he must have killed off somebody to get this one. Q?
You got to give him the did-it-deet. Come on. Can we get that going? There we go.
There you go.
Come on.
Live from the tape. Q?
Fellas, how's it going? Thank you for having me. Still live from the Scott Sheridan Studios.
Yes, we're gonna
Still
keep that
live
going.
for
Yes,
sure.
Yes.
But yeah, how's it going? Pretty quiet on the Western Front today.
This is actually our third or fourth time where we've actually had the opportunity to actually formally name the studio because Tom has been gone.
This is
should probably. We have a couple more hours left, so we can make that happen.
Sadly, it might become in the Bat Studio soon. So.
Yeah, I mean, we could do that
We
too.
could do that too. There's
Do
two
that.
of us now.
The Bat Cave. That's what,
Nobody
that's
wants
what
that.
right.
Nobody wants that.
Yeah.
Nobody wants that. Nobody wants that.
It's okay.
Ugh, be careful what you ask for.
Yeah.
Be careful what you ask for. Q, how are you, my friend? I've
Good,
known you
good.
since you were a little tyke.
Yeah, I mean, for about 15 years, I'm not very old.
Yeah.
I've known you for, probably about
Just about half your life, right? Maybe more.
more than that.
Yeah.
More than
Half
that.
your
Yeah,
life.
since I was about 10, I went to
Yeah.
my first Tasty Trade Now Tasty Live show,
Mhm.
and then been a viewer alongside my dad ever since. And then I was an intern on the research team, and then now I work here on the trade desk.
You've worked your way through the ranks.
Yeah, I love it. I love
Like gum on a shoe. We couldn't get rid of you.
No.
And I'm glad you're stuck. I mean, I'm
Yeah.
glad you're still here.
Yeah,
And you've been a great asset, man. I mean, honestly, I met your dad. It's touch and go there for a while, whether, you were going to be a lot like your dad, which would have been a problem for us. But you turned out to be quite normal, which is good.
Thankfully, you guys don't hold it against me.
We never hold
of
anything
course
against you.
not.
Everybody's an
I appreciate
individual here.
Yeah.
I mean, if people held things, your father's a very nice man. I didn't say it that way. My father was a very nice man too, but unless you borrowed money from him or something like that, then he became a very angry man. So if people would have judged me by my father's sins, nobody would have ever hired me. So.
I mean, if we had an HR department, you would have been gone a long
time ago.
You wouldn't have lasted it this long.
I mean, true story. I mean, Christy Ross, who was really the one. Remember, this was my first ever paycheck. I mean, I didn't have a paycheck from the time I was, 21 till the time till 15 years ago. I never had a paycheck. This was my first paycheck job. I mean, yes, I had equity in the company, but my first paycheck job that I ever had. And Christy Ross didn't think I was right for the position. And even though we were friends, I mean,
Still
she known me
questionable.
through Thinkorswim for years. Yes, it is still questionable.
It's still a question. It's still
Yeah,
a question.
she's happy now. She even takes my text messages from time to time.
Oh,
it's good.
You made friends.
So everybody's an individual. So good job out of
We already got some love coming your way in the chat. Brandon saying that you're his favorite on the trade desk.
Yeah, you call in. It's random, just like some of the
Oh,
research
yeah.
that we've done here.
Give us a call anytime. I mean, we're answering the phones really quick.
Yeah.
Especially, last few weeks of summer, it's been a little slower. So if you got any trades you want to talk over, please always feel free to give us a call. You could get me. I mean, I'm one of the people who just works on the trade desk.
One of the smarter ones. We got some that are a little questionable.
I know you.
This is top.
Be
this
careful.
Is top
the walls
tier.
have ears. The walls have ears.
I'll say this now.
Who trained you?
Joe.
Okay, so we'll probably see Joe on the show too. Hopefully we'll be able to go
Joe's
through the
great. Yeah,
whole research team.
You know who we
Whole,
don't need on the show, and if you call and you get him, you might want to ask for someone else. If you get Marty, you want to stay away from that guy.
Come on, Marty. That's old time.
I'm glad you said
No,
that.
that's like my work dad, Marty.
Okay.
I love Marty.
Yes.
I'm glad you said this because Marty on the QT pulled me aside this morning knowing that you were going to come on.
Yeah,
So,
yeah.
Make sure you give Q, some of that attitude you've had for the last 40 plus years. Because Marty knows me for a long time since we were kids. But I can't do that to you. You're too nice of a guy.
Oh, thank you. Thank you. And then you guys want to go through top 20 symbols?
Sure.
All right, top 20 symbols going through the system today. We've got Tesla, IV rank of 9. We've got AMD, NVIDIA, Palantir coming in at 4. Then we've got iBit, Open, Apple, LLY, Eli Lilly. Then starting at 9, we've got SoFi, Oklo, Google, that is, UNH. And then we've got 13, Robinhood, Microsoft, Rocket Labs rather, TQQQ, Amazon, Ethereum, ETF, ETHA, TLT, and GLD. Wait, do you guys ever think that, so TLT, I see it's on the list here. Do you ever think there's a need for a better bond product?
100%.
For trading? I think that all the time.
I think they were on the right track with the spot rate products with the 10-year and the 2-year futures, but they were too small.
Yeah.
And then ZB is too big.
It's too big.
I would love to trade ZB.
Yeah.
But too big of a product.
They need a 10K notional, one that'll move, a 25 basis point move is $250. That sort of product, I think, is what would be the perfect, because with doing 10 contracts of a futures, it's a lot of commissions, a lot of in and out. Like it's too small.
Yeah, some of these legacy products like bonds, which have been around since the dawn of time, really geared towards the bigger financial and institutions and not the retail investor. And sometimes I think the exchanges don't understand the retail investors' mindset when they come up with new products. I mean, we always try to talk to them, but you only can go so far. But to answer your question, we need a better.
Yeah, because I think that as the bonds have been rising, I've been wanting to sell puts in ZB, but then it's it's too big of a product. I mean,
so you have to be
you can't sell
spread in
naked.
there.
Yeah, you could spread it off. Yeah. But it's a tough product to trade. And then TLT also great, but it's like really small, the markets. I mean, you're just not getting as much premium. Got to do a bunch of contracts. Yeah. So if you're listening, anyone out there, retail traders are looking for it, and nice uncorrelated product as well.
Yep. Yep. Well said. Well said. Good job. Good job out of you. And that list is the most actively traded.
Yeah, you get it in the platform.
Yeah. It's one of the drop downs.
Yeah.
Platform.
Hey, can we talk about new account opening and funding, and also what you're going to do today at 3:30? Go ahead.
Yes, we've got a Tasty Trade demo. We'll be going through new account opening, funding, and navigation. So any account application questions, deposit questions, stuff like that. Or if you have any questions about how to set up the platform as well, we've got one of our wonderful representatives, Luke, hosting the demo. And then I host a lot of the demos as well, but I will be on chats for this one. And so recently I've done the futures demo, which went well. The active trader, love the active trader.
Yeah.
I mean, that's beautiful
really?
Product. So we do demos on stuff like that. Any questions are welcome. I'll be answering all the chats in that question or in that demo. So any questions, please always feel free to reach out. And we've got that at 3:30 today. Sign up on tastytrade.com.
Awesome.
tastytrade.com/demos.
tastytrade.com/demos.
Yep.
Yes. And then always feel free to give us a call as well. Any trade questions, anything you got, we're here for help.
Awesome.
Thank you very much, Quinn. We appreciate you.
And no charge for that. Some brokerage firms went.
No charge. You place a trade with us, no charge or anything like that. Not every broker does that. Yeah. So you place a trade with us, you're not away. You need to be walked through a trade as well, new to the platform. No charge for anything. I think, that's despicable, but whatever. No charge to give us a call or place a trade either.
Cool. Thank you, Quentin. We're going to bring on our next special guest for this Tasty Extra. We're going to bring on Glenn, a.k.a. G Money, from the Tasty FX realm here. Glenn, good morning, sir. How are you?
Good morning, fellas. I'm doing
good morning, Glenn. You again, huh?
Yeah, I know. They've
2 days,
tried really hard.
What are you
to
on,
find
overtime?
Yeah.
No, wait.
Again.
You're irreplaceable.
Oh, thank you, guys. Taco Tuesday.
Yeah, just kidding. In the words of Tom Sosnoff, everyone is replaceable.
Everyone's replaceable. You have an inherent do not resuscitate when you come
no high fives.
No high fives. Don't make eye contact, head down.
Yes. Yeah.
Yep.
God, he's ruined everyone.
I know, really. His crumbs are everywhere.
He's ruined us all. He's ruined us all.
No, I'm good. I'm excited for next week.
Why?
Next week, San Francisco.
Yes.
San Francisco, where's your disco?
Are you coming?
Yeah.
Oh no.
You are?
Really?
As long as you get a checked bag. Right
oh, is that it? Well, you'll be his dependent, or you could be Tom's dependent. You could board the plane early. Tom, doesn't wait for us commoners.
Or the military, even, right?
Or the military, the sick, the crippled. Tom is first.
It is true. It's so bad.
It's really
embarrassing.
I have a friend that does it, and it drives me bananas because it's like if you're in the first, second, third boarding group, you're on the plane. The bag's on the plane. There's no problem.
Nobody's taking your seat. It's
you don't have to run to the boarding line to be in front of the person in a wheelchair.
Yeah.
So it's all. That's where I draw the line.
I do too.
Anyway, okay, cool. So are you going to be?
Although I will say the lounge is quite nice.
The lounge is nice, but that's different.
I agree.
There's no, you're not fighting for the lounge access.
Yep. You're right.
So you'll be in San Francisco?
Yeah, I'm excited.
You're going to be demoing the FX platform at the event?
I have to buy you dinner?
I don't know.
I promised your mom I'd buy you dinner.
Okay, awesome. It will be my birthday as well. So
it's your birthday weekend?
Yeah, on Thursday. So
wow,
I'm excited. What a weekend to remember.
Yeah.
The weekend in San Francisco. Be careful.
How old are you?
I'll be 24.
24. When I was
No judging here. No judging. I'm just telling you, be careful.
It's a little sad that at 24, his birthday is going to be spent with a bunch of old fakaktas like that.
That's all right. We've got this holiday weekend to go cuckoo banana land in Chicago.
There you go.
I'm gonna take you out.
All right.
Yeah.
I'm gonna take you. I'm gonna drop you off, but I'm gonna take you out.
Amazing.
I'm excited.
Cool. So if you haven't signed up, you can still sign up for this event.
Mm-hmm.
An added bonus is you get to see Glenn and hang out with Glenn.
That's right.
Or I'll hide too if you're not going to come because I'm coming.
Well, you're going to be at the event. You'll do demos and stuff
Yeah.
like that on the sidelines
Absolutely.
for those who have any
Yeah.
questions on how to
Yeah.
set things up on the Tasty Trade platform. So
Ton of
you
fun.
are an asset.
Thank you.
Very nice.
But yeah, Tuesday, interesting dollar story, an inside day.
Whippiness.
But yeah, some dollar weakness early this morning.
Yes.
Starting last night after Trump truthed that he's going to fire
But then it taco.
one of the Fed. Yeah, there's some taco action going around, but a relatively
Coincidentally,
inside day.
it's Taco Tuesday, too.
Yeah, the stars are aligning.
Everything, it all moves together.
Yeah, we've got some dollar softness, so an actually pretty strong day yesterday for the dollar. So a slight pullback today if you have any long dollar speculation. A better entry point today. We've got euro dollar oscillating between 116 and 117. Not too much going on as we gear up for some events later this week, but thought it'd be a good idea. You guys don't look at dollar markets as often as I do, so I wanted to bring up some correlations just to get everybody's gears turning on what to look for when they see something going on in a different asset class. Got some cross-asset correlations for you. This is the past 3 months, so what dollar pair to look for. What jumps off the page to me right away is the bond correlation, looking at the 10-year notes. Strongest correlation in that dollar Japanese yen, the most rate sensitive of the major dollar pairs, but also some pretty strong correlation in that Swiss franc, as well as even the euro dollar at a positive just about 0.5. So that's been the story recently, with all of this Fed speculation on rate cuts. So no surprise there over the past 3 months. But we've also got similarly some strong gold correlations in those safe haven pairs as well, Swiss franc and dollar yen. But it's NVIDIA week as well, so I wanted to tie in some of this, some possible VIX and S&P 500. If you're looking at those markets, the corresponding dollar markets that are most correlated will be your Australian dollar and your New Zealand dollar, US dollar. So those, as I talked about yesterday, some risk appetite there. If you're looking for, if anything crazy comes of those NVIDIA earnings, get a VIX spike or what have you, I would check out those dollar pairs. And then crude oil, nothing too crazy. New Zealand dollar as well. New Zealand dollar, Canadian dollar, and Australian dollar, we call those commodity currencies. But Canadian dollar not moving as much with crude oil over the past 3 months. But yeah, no real surprises, given, very risk-centric recently.
But nice. I've never known these correlations or recent correlations or being uncorrelated to the different products. This is a really nice little slide here. Something that
of color.
Subject to change, right? Of course. But this is the way it's moving as of late. Pretty interesting.
Yeah,
good job.
I think so. Thank you.
Yeah, it came some good stuff.
All right.
Nice.
All right.
I know Nikki's in there slinging it. You got anything on right now?
I put on yesterday the British pound, New Zealand dollar, so I short the British pound over the New Zealand dollar. That one hasn't really.
So it
moved.
would be a dollar versus pound, right? Because the first one is always the buy.
So this one is no U.S. dollar.
No U.S. dollar.
Oh, no
which is
US dollar.
The glory of the FX products. You take the denominator out of the equation.
Right, but you did.
I'm short British pound, long New Zealand dollar.
Right, so you would put the New
short
Zealand
the
dollar
pair.
first, right? When you were doing that trade, wouldn't you?
So the listed pair that he got in was British pound, New Zealand dollar. So selling that pair
Is long New Zealand dollar, British
correct.
pound.
So selling that pair is selling the first currency.
Yes.
So selling British pound. bullish on the New Zealand dollar because of major price extreme, right?
Yes, and I got long just now the Aussie dollar versus the U.S. dollar. Small.
Look at you. You're becoming the commodity trader your father never was.
Well, it's not commodities; it's currencies.
Currencies, commodities, same thing.
What kind of trader were you? Never a commodity trader, never a currency trader, never what?
Successful one. How about that?
That's
exactly
true.
That's exactly what I was going to say, Glenn.
Hey,
just a
the
success.
peanut gallery over here.
Just a
You
successful.
know what?
That's just a successful one.
You know, Katie's already the favorite child. Okay, you can't take that from her.
Good job, Glenn. Good
All right.
job,
Thank you.
G. Good
All
job.
right. G Money.
G Money.
Thank you for
Good
joining
job.
us, Glenn.
Good job. Who's next?
We got one more special guest, Mr. Ryan Grace, my man.
Mr. Ryan Grace. People usually clap.
Thank you. Thank you.
Thank you.
Obviously, best for last. Those two guys warmed it up for me, but it's okay. Currencies, commodities. You're a crypto trader, though. I know for sure, Tony.
Yeah, you get in there.
We're getting you there.
I mean, we're slinging. We were slinging IBIT, or I was a little bit. We got people in the chat shouting out the ETH trade that we had from the other day. So,
Yes.
So yeah, I mean, we're getting into it. What's going down in the Bitcoin space? I mean, we talked a little bit about in the crypto space. We talked a little bit about the move that we had over the last 48 hours or so. Bottomed out kind of around 110, exactly right at the expected moves that we were looking at yesterday.
Yeah, certainly trading within those one standard deviation ranges that we calculate. That can change. Haven't seen much of a change in implied vol when we look at Bitcoin, though Ethereum's implied volatility has picked up a little bit.
Yeah.
I've got some tokens for you guys, though.
Okay.
Top 5 highest volatility tokens of those that we offer here at Tasty Trade. So we talk about Bitcoin and Ethereum all the time. Let's look outside of those for just
Look
a
at
second
some of the volatilities on these. Extremely high relative to Ethereum.
When we have options on these, which is coming at some point in the future,
Yeah.
I imagine.
It'd be awesome.
They're going to be.
There is the knock at times, right, that there's not a ton of leverage products or ways to get exposure in crypto. You can do that through some of the futures. I think that's going to change in due time.
It's baked in leverage,
but
though.
You have 100 vol assets here.
Yeah, if you're trading something that's got 30% implied volatility and you get 50% leverage, it's the same as having 70, 80, 90% implied volatility and having no leverage. You know what I mean? Like when you volatility adjust the potential move, you've got leverage.
Yeah,
it moves.
You can have some fun here.
Yeah.
I mean, these trade in a way where they're going to zero if you annualize this, or they're going to double, right? These are not implied volatilities. These are 30-day realized. They've picked up quite a bit here over the last couple of weeks. But just to put things in perspective, and I can kind of give you my view on how I use some of this information for trading, but outside of Bitcoin, which maybe has a 40% implied volatility and has been a lot less volatile in realized terms, Chainlink is moving at 117% annualized. Aave, Doge, Pepe, a meme on Ethereum, and Algorand all right up there near 100%.
Yeah.
So in these market environments where it's bullish, what I tend to look for is that performance, because I just want to try to ride that trend. This is an asset where, for the most part, you can really only go long.
Yeah.
So I want to stay on or be on the right side of that. And so the way that I look at this is I want that volatility. Quite often, price and vol in crypto is positively correlated, opposite of what we see in equities, for example. So that vol spike is almost your signal to maybe look at this. It should be on your radar at least. Then I look at performance. So Link and Aave stand out to me because, of course, you're going to get 10% dips. But those are the areas that I look for as opportunities. That volatility equals opportunity in some of these things if you're looking to buy and it's going up.
Yeah.
A lot more difficult, and you've seen that with relative performance here. Even though Doge has been very volatile, well, it's going down.
Yeah.
I'll wait until it's going up.
And I like that you mentioned, because there's no implied volatility here because there's no derivatives market. So you're looking at realized volatility. And so if you were just to back of the hand, put in implied volatility, these are products that would be a 200 or 300% implied volatility if they had derivatives. I would imagine we would be looking at.
I think depending on the strike you were looking at. And
it would probably be just about double what the volatility is of the old product. Yeah.
So these are things, and to Ryan's point, like they're priced to either go to zero or double, triple, quadruple in a year's time frame. And so they're trades like these are things that you look at as opportunities, short-term opportunities, as a trade.
Well, and some perspective on the market too, in an environment which yesterday we described, they're all positively correlated for the most part, and it's just your flavor of volatility. In these bull markets, which I think we're clearly in, you want to identify where the relative outperformers are. And if you have the volatility signal on top of that, that at least kind of stands out to me.
Yeah.
So wanted to surface this for you guys because I know we always spend a ton of time on Bitcoin and Ethereum.
Yeah.
But I've also got some cross-asset correlations for you. I'm
Yeah,
not sure
beautiful.
if Glenn's learning from me,
Yeah,
I'm learning from Glenn.
Yeah, come on.
But want to just call this out. It's not causation, obviously, but in the market environment that we're in, Glenn pointed out the dollar weakness. Short term, over the last 3 weeks, we've really seen a strong inverse correlation between Bitcoin and a dollar. It's not always the case, but keep that on your radar short term for trades. I would argue day to day, week to week, you'd want a little bit of dollar weakness. You might see that in terms of some Bitcoin upside at times, seeing that earlier this morning. But you're also in an environment where wouldn't be surprised that equities and risk generally just trade the same way here. When we look at Bitcoin, you look at gold, you look at bonds, lower rates, it's all kind of short-term post the Fed for whatever it's worth. It's kind of all trading in the same way you might expect or the same direction short-term.
I will address aptly named Grumpy Mike in our chat asking about, why are any of these worth anything? And I think the thing that you should keep in mind is that when you're looking at Pepe, it's not what it's worth, it's the volatility that it has. You're trading an asset that has 1x downside that has been realized to 2x upside. When you're looking for something to trade, an opportunity, that's what it is.
Yeah, I mean, today there's a marketplace, they're priced in dollars. I'm not an advocate for a long-term investment in Pepe, but
if you're looking to trade,
trying to trade some Pepe for some dollars and get more dollars out of it, this is a market for that.
Yeah. And that's, it's
speculative market, but a market for
and we
what?
love Grumpy Mike, by the way. Grumpy Mike is there every day. We love him. Good.
I like Grumpy Mike. That's just the name. I don't know him.
We love the YouTube chat. The bats do.
We do. Tom
we have Grumpy Tom is not here to be grumpy about the YouTube chat.
Hey, if you're looking for this list of crypto, you can go right here to the crypto list on top here and just click on crypto. Here's the link /USD that Ryan was talking about just a moment ago. Here's the AVE, which is up 1.5% today. So if you're looking for volatility and movement in the market, there's your volatility and movement in the market right now. So nothing going on in the equity market. If you make money with the left hand or the right hand, the pocket doesn't matter, right? That they don't care where it comes from. They just want to make sure that
as long as you can reach into the pocket.
As long as you can reach it. If you don't have those arms, like somebody else will remain nameless, will be back tomorrow.
Yeah, when you can get in there, then you can access that.
It is 100% correct. Yes. Then you can access it. Yeah. All right, guys. Thank you so much for your time. Great job by the whole team. Really do appreciate it. Even the S&Ps back up $2 and change. Nasdaq up 31. Russell up 13. Russell was a little bit stronger a moment ago. It's up 13. Still the strongest of the group, taking a little bit back. And the Dow down 24. Much to do about nothing, but you know what? We got Liz and Jenny live from the SIBO. So
perfect.
You want to stay tuned for that? You can see the old SPX pit itself in live in color right after this with Liz and Jenny. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks. Thank you, man. Thank you. I really appreciate it. Very kind word.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Welcome to the Tuesday edition of the Liz and Jenny Show. My name is Jenny Andrews. The beautiful blonde next to me is Liz Dierking, and we are live from the SPX pit at the SIBO.
Yes, we are live from the SPX pit. We took a 1-week hiatus, but we are back, baby.
We are back. Yes, we walked in, and people were saying, where have we been? Forgot last week you were dropping JD off, and we were not here.
We're not talking about it. I'm just kidding.
You're doing much better now. You're doing much better.
I actually just ran in. We had some guests that were coming in, and I was over there. Very nice people were talking to us, and he's dropping his son off for the first time at Southeastern. He's like, how'd it go? I was like, it's brutal. I was like, I'll circle back with you in a week. So I got to go over there and see my new friend next
I know.
week.
It's tough. It's tough, and it doesn't get easier. I was sad with my senior leaving.
Yeah.
I mean, it's not quite this as hard, but it's still sad.
Yeah, it's a sad day in Mudville. But you know what? All's right in the world. He's having fun. Day 2 of classes. I go, did you try to ditch any classes? He goes, I'm not going to ditch anything on day 2. I go, fine. Well, better be day 20, and you better still be there.
Okay, I'm going to let you know, because this is your first one going to college. First week is syllabus week, where they basically go to class, get their syllabus. Like the bars are advertising, it's syllabus week, meaning come on out to the bars every night, kids, because all you're doing is getting your syllabus.
So no, he's like for 2 nights, they've stayed in, they've played cards, and gone to bed at a reasonable hour.
Well, my son was at karaoke night last night, and tonight he'll be at...
He's also 21, mine's 18.
Oh, geez. Yeah, it's kind of crazy, because I was just looking at his... you can see all the classes required for the degree, and they turn green as they're checked off.
Oh.
And now he has like everything checked off, except he only needs 11 credits next semester
To graduate?
To graduate.
Mine's I don't know what color are they before they're checked off?
Like grayed out, or I don't.
Mine are all grayed out.
So I have until May, and then I will be hopefully not paying for one child. What am I going to do? What am I going to do with all my extra cash?
So you have a 1-year hiatus where, buckle up, you're going to be spending a lot for number 2.
We'll see. We'll see.
A lot for number 2. Hopefully. I mean, actually hope for a lot, a number 2, because that means she's going somewhere
I don't know.
crazy.
Yeah, we'll see what happens. Yeah. But anyway, it is Tuesday, the 26th of August, and there's not a lot going on. Schools are up 1.
And this is what I was going to say. We just had some visitors down here. Actually, it was Alex the Kid Trader. He's a friend of the show,
Alex
so we can
the
talk
Kid.
about that. Alex the Kid Trader, who is not a kid anymore. He's still a trader.
You should have posted on Twitter the picture of them.
I should have asked him if I can. I will. Maybe I will post. I took a picture with him.
Yeah, so it was great. He came down to visit the floor, him and his crew. He's got his own business going now, which is amazing.
Alex and Ethan, they started their own business. It was fun. I felt like it was a very proud moment when I was introducing him to some people over there, and I was like, oh, he owns his own company. He's on 20.
You know, so it's interesting to me all the kids that have started on Tasty. Like Tano's kids were so young starting on Tasty. And Quentin.
Who was live from the trade desk this morning.
I'll never forget. I'll never forget when Quentin came in. And Quentin, he's amazing. He's awesome. We love Quentin. The first time his dad brought him in, he was like 8 years old.
We have a picture of us with Quentin. He was 8.
He was 8, and his dad had like brought all these bagels. He had bags of bagels for us that he brought from New York.
His dad is Mark the Trainer. We love Mark the Trainer too.
And I'm pretty sure that poor little Quentin, 8 years old, dragged to this tasty trade and learning to trade. And I think Liz was like, blink twice if you need some help.
Well, this is when we were at 62 West Huron, which we thought was Tom's house. Can you imagine what an 8-year-old would think of? You walk in, it's an old music studio, so there's like drums in the corner. And two old women at the time, because we were old to an 8-year-old, filming, sitting on like little perches.
I know.
It was it was an odd time. But Quentin survived, and he's doing great. He's thriving.
But I will say, like, we have done so many road shows and stage shows all over the country, and we have seen there have been so many viewers who have brought their kids to the shows, and now these kids are doing really amazing things.
Yeah, well, I might work for Alex Kid Trader one day. So.
Yeah, me too.
But yes. So while I was touring him over there, and shame on me for this, but there's like these small pits that are over there. So we have some of the Bitcoin ETFs over there.
Which I knew there was some kind of. I didn't think it was IBIT. I knew there was another product over there.
There's a ton of them over there, they said. So IBIT's the one that I remembered because they were showing me. They're like, IBIT's right here.
Well, let's pop in the platform because cryptos were moving. Yesterday, they took. This is an Ethereum position. Oh, we had it on 11 days. No. Did we really have this 11 days? Oh, that's old. That's the Zebra.
Yeah, that's the one we did with
I
Fauzi,
guess I'm thinking
Zebra.
of IBIT.
IBIT we put on yesterday.
All right, but let's take a look at. I'm going to take a look at some of these cryptos. So ETH is up today 4,600. So it's moving back towards hopefully going to break again. And did it ever break 5,000?
No, I don't think it did yet. It never broke the 5,000 level.
So hopefully we'll be breaking the 5,000
So Dan, the crypto man, spot on accurate, because look at this. ETH is catching a little bit of a bid, and Bitcoin's down a little bit.
Yeah.
And that's why you can see the ETH and the Bitcoin.
Now, do you think there's going to be a whole generation of young people that are like crypto millionaires because they got in when it was so low and they were young?
Yes.
Yeah.
It's kind of like the baby boom, in my opinion.
Like the Microsoft millionaires.
Like the Microsoft millionaires. Yeah.
Right. Mm-hmm. Right. So, there were a couple of young families buying homes in our neighborhood, and someone said, "How are these young kids affording
crypto?"
These, and that's what I go crypto. I go crypto. That's my guess.
Well, I'm gonna bet crypto too, or their parents. Yes. It's one of the two.
Yeah.
But there's a lot of kids that did get into crypto very, very young.
Yeah.
And I have a friend of mine, and this is why, I was telling Dan this yesterday, that's why I kind of aspired to be him. But he bought crypto young, and he bought one for each of his kids very, very, very early. So the kids are like, woo, now I've got a Bitcoin.
Yeah.
But can you imagine being like, here's your Bitcoin, I bought this when you were like 2.
Yeah, but what's
and
Bitcoin? 100 and something thousand, it's not going to buy you a house.
Yeah, but can you imagine being a college graduate being like, here's your 110,000?
Yeah.
Yeah, it's pretty good.
But these kids.
It'll put a down payment. I don't know what kind of house you have, but that's a good down payment.
No, but you have. It's like, I think it's different than these Microsoft millionaires who became. Let's talk about your uncle. How did he become a Microsoft millionaire?
But he was a teacher. He was a math teacher, and just started buying Microsoft.
Yeah.
And then when you buy it, like, can you imagine buying Amazon before it split and doubled and split and doubled and split and doubled?
That's why. Okay, this is so hard for me.
Oh, good. They're active.
Well, there's some action. It's so hard for me to hold stocks, which is why I always say I want an account where I don't look at it, I put things in, and I don't look at it, I just leave them. I'm just like Reddit. When Reddit IPO'd, I said, "Oh, I'm buying this. I'm never going to sell it." Well, I sold it.
You know how many times I've heard Jenny say, "I'm buying this and I'm never going to sell it." 2 days later.
Coinbase, buying this, never going to sell it.
Sold.
And so that's what's hard for me, and I think that's always going to be hard for me.
Overtrading?
Not overtrading. It's just selling things that I plan to hold on to.
I get it, because you see that, because we always see what goes up must come down, and you always think there's going to be a pullback that you can buy it.
That's why I've become a recent fan of the collar. So now that's my solution. That is my solution to the problem of, like, when I buy something that I want to hold and then I end up selling it. My collar is my new solution. If I want to sell it, I just collar it.
No, it's so funny.
Instead of selling it.
Okay, Now, our viewers are very intelligent, so we can have this type of discussion. This is not a basic show. We are at the SIBO. None of these guys are basic, right? Like, this is a very high-level show. A collar is nothing but a call spread. Do you remember my friend Cutter? He kept being like, so you have these stocks. It's stock you don't want to get rid of, you don't want to pay taxes on, but it is just a call spread. So people kept being like, oh, where's my stock? Where's my stock? He's like, okay, fine, I'll buy your stock back.
Okay, so let's go back into the platform because I'm going to pull this up, and we were talking about this yesterday.
IBIT.
And I just pulled up IBIT because you were talking about it.
Great.
So if you buy 100 shares of IBIT and it goes up, great, you make money. If it goes down, you lose money. And the thought process of the collar is, I want to make money if it keeps going up, but I don't want to lose if it falls back down because I already made money of it going up.
Correct.
Right?
All of that is true.
So I buy this 59 put for $2, and I need to cover the cost of it, so I sell the 67 put for $2. So you have this position, and if I go to the analysis page and show you, I'm going to show you what Liz is talking about, the curve view, analysis. So here it is. Here's my stock. I make money if it goes up, but it's capped. If it goes down,
you're capped.
Your losses are capped. And so very, very similar to a call spread. But
no, I will tell you, 9 times out of 10, and we were playing with this yesterday, it will hold up the exact same amount of capital. I don't know why it's not doing it in IBIT. I think you have to have the 100 shares first, and then when you collar it, it'll release all the capital, so it'll be the same thing as a call spread.
Yeah, I think, and it might be product dependent, but the difference, this is the difference for me, because if I put on a call spread and the stock goes down,
you leave it. You're done.
You just kind of leave it. Whereas my collar, I'm always adjusting it. So if I put on the collar and the stock goes down,
you sell your put.
I'm buying back my call. I'm selling out my put.
And removing it.
Maybe moving further out in time. Like I'm always making adjustments to it.
Yeah.
Or what I'll do is buy back my call and then create a downside ratio spread. So that if it keeps going down, it'll create like a short-term downside ratio spread. So there's so many things.
But that's a mental game, though. They are the same. It's kind of like we were talking about yesterday with Dan about you can keep buying it and buying it in and not worry about the price because you can adjust your call spread too.
I think it's just way easier for me. It's
for
way easier for me. And I don't know about a mental game. Like if I have a call spread, then what am I doing? Then the downside ratio spread on top of the call spread?
If you're adjusting a collar, you can adjust a call spread. It's the same concept.
Yeah, I just like to just have it and then keep working that around it.
I get
it. It's way easier for me.
That makes sense.
Than just saying.
But synthetic 101, a collar with stock is a call spread or a put spread, however you want to put it.
If I was selling this 59 and I buy this 59 call and I was selling the 67 sell that, this position is
identical.
But I have a hard time managing this as the stock moves around compared to like moving my options around my stock.
I get it.
Right?
I 100% get it. I mean, I'm guilty as charged too, but it is what it is. It is a collar.
So if the stock goes down, right?
Yeah, then you sell
and
out
I
your
would
long.
sell out my put.
If you'd be moving your collar, you could move your call spread.
So here's the thing: if the stock goes down and I sell out my put, that put's making money.
Yep.
So what do I sell out here?
If the stock goes down, then you're at your long becomes at the money.
And that's lost money. That call has lost money. So I'm selling out a call for a loss. I'm selling out that call for the loss.
But it's conceptually exactly the same, and then you're just going to keep moving it.
I don't know, because when the stock goes down and I sell out that put, I'm selling out options that made money, that are in the green. So I'm like selling out that put that's in the green versus if I sell out that, if the stock goes down and I sell out this call spread, it's lost money. I'm locking in a loss.
It's lost money. But you also have a loss on yours because you've lost from 60 to 64, wherever the stock is right now. But you've lost in that. You've lost from 62, 64 down to wherever your put strike is.
But I'm not like selling out the stock and locking in the loss. I'm only selling out the winning part. It's just I struggle with if you're just having a call spread on how you are managing that, just selling out your winning parts.
Well, you don't. Well, because they're together as a package now when you do that. Because if you're moving your collar, your stock has lost money.
Your stock's lost money.
That's what I'm saying. If you're moving your collar, your stock has lost money. So you're just moving one portion of it, not both portions of it.
And all I do is take off the winning portion.
So it's almost like if you were going to widen out this call spread then if you're taking off a winning portion.
Yeah, I think it's just easier for me to.
Hey, listen, I think it's easier too. You almost broke my brain just now. You almost broke my brain, but it is synthetically the same.
Because it's really easy for me if I have a collar around stock and the stock goes down, that puts a winner, sold. That calls a winner, buy it back.
But then you've lost on your stock.
Then I've lost on my stock. But
Yes.
then I'm throwing in downside ratio spread against my stock. Then if the stock keeps going down, then that picks up.
That's different than I'm going to keep adjusting my collar, because keep adjusting my collar is you can move the call spread. If you're going to add different things on there, that's a different discussion.
So so anyway, that is how I'm solving. Like back to the beginning of this discussion, that's how I'm solving my issue of if I have stock and I would sell it because it's gone up so much, instead of selling it, I'm collaring it, and that is my new MO.
Oh, when it goes up so much?
When it goes up so much, and when I would normally have sold it, instead of selling it, I'm collaring it.
So that's a high class problem if it goes up so much that you're going to collar it.
That's
Super
a whole
good.
discussion. How do you buy
So
a
if you-
stock and hold it forever? Yeah.
And if you start with a call spread and it goes up, you're a winner on that too. Like I said, if you got the collar on and it goes up.
I get it. I have heard for a long time this discussion of a long call spread is a collar. I get it.
Why can't I get into YouTube?
They've banned you. They banned you.
They have. I think they did. Frank the Great, I'm out. Help.
What we do have on, you might not be on YouTube, but we do have Twitter. We are taking live tweets. Here's our Twitter. All you need to do, we're not in our personal Twitter account. We're just taking tweets and looking at tweets with this hashtag LAZJNY.
I think they put the hashtag tastylive on there too. That's kind of fun.
Yeah.
Today's options drive was widening wings versus extra contracts. But I want to know if it's better to close at 50% or profit, or double your contract and close at 25. That's a great question.
Trade blindly, I think this is a great question, and I actually like that. Now, we can ask Jacob to do a study on that, or our research team to do a study on that, but I like that because you get out so much faster.
Oh, I love it.
You get out so much faster, and that kind of brings up, bringing in your, if you don't want to do one contract, bring it in and look for a lesser percent.
Yes.
Yeah.
And it's kind of what we talk about. Good segue. Our iron flies, when you bring them in and when you start with the straddle and you bring it narrower, you take a lesser percentage.
Yeah. We used to, oh, the big lizard, right? That's like the big lizard.
Yeah. Okay,
so if we put on a jade lizard and we're collecting $100 and we're looking for $50 out of that 100, we would put on that big lizard and collect $10. Then we're looking for $100 out of that $10. So we're looking
10%.
for 10% instead of 50%. And when you're collecting more or bringing your strikes in and looking for a smaller percent, you get out quicker.
You get out a lot quicker.
Right.
Yeah, I agree. And that's we've kind of done that naturally, because the more aggressive you are with your premium selling, the lower your percentage should be on the way out.
Right. You're not looking for what people would say, oh, we saw your video on the big lizard, we're going to put that on, and do we look for 50%?
No.
Not when you're collecting so much. We lower our percentage.
Yeah.
I like the idea of getting out quicker. You know what trading's taught me? I have very little patience.
Yeah. You used to have a lot of patience. Now you have none.
You think so?
Yeah. You lost all your patience.
I don't know how. I don't know what happened. But now it's the weeklies. The weeklies did it to me, Liz. The weeklies did it to me.
It was these guys.
These zero DTEs. They took away all my patience.
It's pretty funny. But speaking of zero DTEs, we're bringing it back, a study.
Yes, last week we had a discussion. We had a viewer who was selling SPX zero DTEs, but they were the 1 DTEs. So
weren't they selling the futures?
Well, he was doing the next day.
Okay, so you can do that in SPX.
Whether he was doing ES or SPX, he was doing the next day. So, like on Tuesday, he was selling Wednesdays. Instead of at 9 a.m. on Tuesday morning selling the zero DTEs, at some point in the day on Tuesday, he was selling Wednesdays. And I said
it was 7 p.m. if I remember correctly. He would do it at night.
Oh, yeah. Well, and
that's why it's even the S&P futures.
Okay. And I just remember saying, I know there was a study that Jacob did long ago on selling the day before.
Yeah.
The day before. So
yeah.
I went through the archives and found it.
I know. I love it. And I'm actually excited you brought it back.
Yeah.
Now, this isn't talking about the iron fly. This is talking about iron condor. So it's a little bit older, I think.
It's a little bit older. Maybe we could ask him to do it on the iron fly. Yeah. But I think when you're going...
They're heating up. Spool's down, too.
Spool's down, too. It turned red. Marcus, it's like mayhem down here now.
They're heating up back there.
So, let's take a look. Let's jump in. Do you want to jump into
Let's do it. I'd love to.
All right. Now, he titled this, Avoiding PDT with 1 DTE. So this is a way people can avoid that. Why are you laughing at me?
Because pattern day trading rule is, we're getting rid of it. But it's not going to be gone until, I think, like January.
Okay, yeah, I know we're all super excited, but I have to just say, like, it's not 100% sure. So we can't act like they're getting rid of it on this day, because I think it's not 100%.
Oh, I thought they said it was. I did. I have JD pausing his trading for his first 2 weeks of school because I was like, just wait till January. Your life's going to change.
I think that it's not, and I'm going to get in trouble for, I probably got out of my camera frame. Sorry, Matthew. But I think that it's not, I think it's 90%, 99%, but I don't think it's 100%.
So you're saying there's a chance.
Yeah. Anyway, how do you trade these SPX? For now, we still have it, right? They're hoping that it gets lowered to a smaller amount account, like a $2,000 account.
I hope so.
Yeah, and that's the hope, and that's the plan. But I think, but it hasn't come yet. So I just don't want to tell everyone, yeah, it's coming this day, because I'm not 100%.
I know. I really hope it does, though, because it will be life-changing. But until then, we've got to work around.
But no, but I wanted to take that title and crumple it up and throw it away, because this isn't about that. This study wasn't about that. This study was about how does it work out if I'm selling the tomorrows today. I'm selling tomorrow's options today. So that's what it was about. It was, because even without the PDT, people might want to do this. Even with, like, people who have more than $25,000 who don't have to worry about PDT might want to do this straight.
It's not a bad way to look at it.
So
and I kind of liked, and like I said, I'm glad you brought it up. And the PDT would be for SPX, but the viewer who was doing it at 7 p.m. in E-mini S&Ps. And that's why he was emailing and texting us, because I said my son does that.
Right. But he didn't do it at 7 p.m. Little did JD know he could do it at 7 p.m. the night before.
Not waking him up at 9 a.m.
The trade closes while he's sleeping. All right, let's see. That's what this was about, but we're not talking about avoiding PDT. We're just talking about using the 1D DE in SPX.
Which is smart.
All right, so 0DT option markets in the most popular underlyings are extremely liquid and give investors access to rapid results, whichever side of the trade they choose.
This is awesome. So far, our research has found success in selling 0DTE premium at market open, which has also changed.
Yeah, this is old. This is
also changed, provided winners were managed aggressively. So let's talk about what has changed throughout here. Jacob has proven that 9 a.m. is better.
9 a.m.
9 a.m., 30 minutes in after things shake out.
The last time we sat here was the day of Jackson Hole.
Yes.
And at 8, what time did our show start?
Our show started.
No, we were on the morning show.
No, when we were sitting here,
it was it's all a blur, but it was when we were on the morning show and we sold the SPX Wide Iron Condor, and we got like $9.50 for it or something.
Yeah.
Do you remember that? And that was at 8:30. That was at market open. That was at market open, and I didn't follow the new rules of wait till 9 a.m. If I would have waited till 9 a.m., all those people.
Hey, TP
were winners.
waited till 9 a.m.
Yeah,
he got out.
He was a winner.
Yeah.
All right. This can run afoul of pattern day trader rules, which place additional restrictions on accounts which buy and sell the same instrument on the same day.
Okay, so what do we gain or lose if we instead sell 1 DTE options at the previous close rather than 0 DTE options at market open? That's not a bad idea. At the previous close.
Yeah, so at the end of the day.
Okay.
So, I mean,
I'm always there at the end of the day. I'm awake with a cup of coffee.
9 a.m. is not my time. I'm going to tell you.
Wait, it's hard. Like, I have to sit on my hands to wait till 9 a.m. to trade.
I get it.
Because at 8:30, I'm like, I got to get in there.
8:30, I'm watching the market open, and then I hop in the shower. So, like, 9 a.m., I'm always in the shower. You call me every time she calls me. I'm answering. I'm like,
she answers in the shower.
I was like, yes, Liz, I'm in the shower. It's 9 a.m.
I was like, I can tell. It's very, very echoey in there.
She's putting on her SPX 0DT, and I'm just getting in the shower. I need a different time.
You know what I do like? You get a gold star for always answering, even no matter where you are at 9 a.m.
I keep the phone right outside the door because I know you're going to call.
So we,
all right, let's see. What's
But
next?
it is hard. Like, on the train on the way in, it's very hard for me at 8:40. And every time we're on the train, you try to do it early, and I'm always like, it's not time yet.
Because at 9 a.m. the train's pulling in.
Yeah.
At 9 a.m. we're packed up. If I'm sitting on the train with my laptop on my lap, Liz is like, you better pack your bag.
And then I kick her in the shins.
She likes to run. She likes to be the first one out the door.
It's true. All of it.
She does. All right, using 2 years of data and 0 DT SPX options.
Considered selling either strangles at market close the day before their expiration at a variety of initial deltas.
I've got a question for you. So our buddy over there, Frank's nephew, Jeff, he walks around with a headset. What do you think is going on in the headset?
Oh. mayhem is my guess, because they're like floor official to post 1 station 3. The IBIT market maker is getting a little out of control.
Listen, Jenny, show is off the rails. You better go stare them down.
Can we get fined because we're not on a badge?
What do you mean? For
Like
doing
if we
what?
did something, if Jenny went crazy and
If I flipped this
if
desk?
she flipped her desk, could you get fined?
Do you know someone said that to me the other day? They're like, I almost flipped a table. Was that you?
You flipped a cooler once.
Well, I know. And they didn't even know.
Oh,
I said, you know what?
said that. I said I almost flipped a table. Somebody said something to me, and I almost flipped the table.
Yes, it was you. So you see how it could happen.
Yeah.
I did flip a table once.
My question is, you were outside, everybody's fine, no people were harmed in the flipping of the table. But my question is, would we get fined? Would Jeff fine us?
Because we're not on a badge, I don't think we are. I don't know if we would be fined.
I bet we'd be banned for life.
I never signed a contract here saying that I wouldn't flip a desk. So I
You
don't
are
know.
fingerprinted, though.
And I will say, I'm not crazy. It was someone who drove me to
flip a desk.
It wasn't a desk, it was a cooler. It was a cooler. It's a cooler off a table.
True story.
And I wasn't even drinking.
Yet.
No, the story is she came, she wanted her cooler. I was throwing the block party. I put hours and hours and hours of work into the said block party. I borrowed coolers from people for the block party. And this lady came, crazy lady, came demanding her cooler back when the block party was minutes away from starting. So I said, you want your cooler back? Picked it up, turned it around, dumped everything out of it. I was like, here's your cooler.
Calmly. No aggression at all in that cooler flipping.
The neighborhood loved it. The block party went wild. It's still a story.
There is a real possibility this person is a viewer.
She's not watching.
You don't think so?
She knows it happened. She still talks about it.
I know.
Remember when you flipped my cooler, dumped everything out of it? Right on top of her feet.
All right, let's jump back into our study.
Okay, here we go. Can examine the P&L just from holding these positions until the next market opens. So here they're getting in at the close and getting out at the open, after which they could be viewed as fresh zero DTE trades. Okay?
So they're looking at it, they're viewing it at it, but they're not closing it, right? So
Wait.
just examining the P&L, they're not closing it.
Well, I don't know.
Because after which they could be viewed as fresh zero DTE trades. See? So
Then he's looking at them as a new trade.
Yes. And the difference between single overnight and Friday close to Monday was ignored. Okay, got it. So they're
So
not over
doing
the
it on
weekend.
Friday.
Not over the
and
weekend.
that's Liz's rule. If
me.
you're going to do these, not on a Friday.
Not on a Friday. Not on a Friday.
Not on a Friday. All trades were assumed exercise at mid-price.
Buying power controlling long strikes are still needed, but the same ones can be used for both 1 DTE and 0 DTE. Okay, great.
Okay, all right.
Great.
Here we go. Now we're looking at straddles, 40 delta strangles, 30 delta strangles, and 20 delta strangles. And many of these old studies did not buy wings. So here, these are not buying wings.
Yes, they are. They're strangles.
Yes. So honestly, when I look at this, at first I looked and I thought, oh, the P&L looks pretty good. But then when you add in buying the wings, not as appealing.
Not as appealing. Not as appealing.
And that's why the C-VAR is so high. They're not buying wings.
Yeah, that is not as appealing.
No,
Let's go to the takeaways, though.
Let's get a new study. Let's ask Jacob for a new study.
Yeah.
With iron flies or 40 deltas or 30 deltas and having just narrower spreads, $15 wide.
Yeah. I mean, your Jack Tucker is going to be your 30 deltas, $25 wide.
Yeah.
That's the Jack Tucker style. I mean, he's like a verb now.
I'm usually only $15 wide, $15 to $20
And
wide.
I'm a small fry. I'm an iron fly. So when I saw those iron fly results, I'm an iron fly, multiple contracts of it instead of.
Look, Matthew's bringing a table. It's almost like a cocktail. It's where someone's going to bring us cocktails pretty soon.
I have 6 of those in my house. I think that's too many.
I know. Someone just walked over one of those cocktail tables with the fancy covering. And
he's going on
Liz,
a date. He's going on a date later today.
Anytime you go over to Liz's house, if more than 5 people show up, she busts out all of her cocktail tables.
They're always ready to roll, and I have different coverings for them.
I know, every color.
Yeah.
I've seen the blue. I've seen the white.
I've never had. It's so funny because my husband always tells me, he's like, you don't know how to have just like 4 people over, do you? I was like, nope. It's got to be 20 or nothing.
No.
Yeah.
I used to be like you and have parties. Now I can't because my dogs are too bad.
You know, Will Ferrell just goes in the crate.
Yeah, he's all right. So anyway, looking at this net P&L, does it make you think like maybe it's not worth it because when you factor in buying wings, which everyone has to do, it might not be that good?
So I know I think this is an older study, and the study used to be very, very cheap wings. I think they would look for. So it's going to make your C-VAR pretty expensive.
Well, the CVAR is the CVAR. That's kind of the
So,
risk.
but even if you're buying wings, so say you're buying $10 wings and $10 wings, so and that's what they say, take $10 to $15 off to buy the wings. Because if you're in the very, very low DTEs, the wings are cheaper. If you go to SPX, like normal expiration cycle, you can't buy wings. Let's go into the platform.
I'm going to go in the platform, and let's look at this. SPX, I'm going to go the 1 DTE. So I'm just going to pick 30 Delta. So 30 Delta, and I'm going to make it...
Well, no, just make it 30 Delta, and then just go down and see how much the wings are for very, very cheap.
Yeah, but
so
people
you see
might not want that risk.
No, I know that, but that's how he used to do his studies, where you can go and get like the 50, like that's going to be $3,000 of risk if you do both sides.
But you're using $30 here, and
but you're using $3,000 in both of them.
Well, and what you're giving up here, if you're giving up $40 and $30, those are going to be worthless the next day. So there's your P&L. Like there goes your P&L.
Yeah.
That's why I think this has to be done differently. Where we almost need a study where it's those wings might still have value the next day. Those far out wings are not going to have value the next day, but we need wings that are going to have value the next day.
What if you bought the wings the next day, very, very cheap, and then kept moving your long wings out, and then kept selling strangles?
Run that by me again.
So. You keep moving your long wings out very cheaply, and then every day you sell strangles.
So your long wings are further out in time.
Yeah.
And
no, closer in time, but you just keep moving, like farther out in time. Like this would be 2 days, and then you're selling the 1 day.
So your wings are a couple days out.
Yeah.
Yeah, and I know this has come up before because decay is so great at the money. This has come up before, like go further out in time, buy your wings further out in time, and then short term.
I mean, that's like a short term double diagonal, but yes.
Right. Yeah, you can do that. Sure.
Yeah.
Sure. But I kind of want. Let's say we go at the end of the day. You just go the expected move, and make them $10 wide. I kind of would like to see the results on this, like expected move at the end of the day, $10 wide. And see what happens. We don't have that.
No. We don't have a lot of things, but put this on the docket.
Yeah.
I like these 0 DTE options. I really, truly do. I think this is the biggest game changer I've seen in the last 3 or 4 years.
It's really helped with my lack of patience. These results, I can wait a day.
Yeah.
I could wait. I could do the 3 o'clock. I might start doing these. End of the day, expected move, $10 wide.
Well, it'll give you a better footing if it did at the end of the day. I don't know that I would do it now for tomorrow.
No, but here, this is not bad risk. You're getting 400 and risking 600.
It's not bad.
It's not bad. And then let's say the day gets wild today. Who's to say it couldn't come back by tomorrow?
Who's to say? Who's to say?
Oh, well. All right, let's see what else we have here. But as far as the best result of this was the straddle. Does that surprise you?
Yeah.
Yeah.
I couldn't press that button in my life.
No.
One time we were talking about collars versus the call spread. You want to talk about a mental game? I could not. I mean, is it good results? Probably. I can't sell a straddle on SPX. Yeah. And then if you put it in XSP, you're down to $7.
Oh, yeah.
Yeah.
No, these numbers aren't. You want to see some great numbers?
I do.
Come to Germany. Because wait till you see the results of our Germany study. We'll bring it after.
Oh, after the fact. We're for sure
we'll
using that on air.
Yeah.
And because we're going to be sponsored by the SIVO, we'll have to do it here. We'll do it live on the floor.
Oh, yeah, we'll do it live from the floor here. We will. All right.
It's also a 45-minute presentation, so we might need to bust it into 2.
2 shows. So I think this was worth taking a look at again.
Oh, I think it's definitely worth. And I like the concept. So what I love about trading, and I love our research team, because nothing we do is like, okay, from this, I'm only going to be doing 40 delta strangles. I love the conceptualness of this thing. Hey, take a look at this. Or even taking a look at the E-mini S&P futures at 7 p.m. because you can do it the night before and get out of it the next day.
There's so much to do. And I know... and here, I'm going to go to Twitter, and I'm going to go to...
So, maybe I can sell it. So, Jenny, from that perspective, maybe I can sell an MES. If you go to MES and do it the 1 day, you can totally bring it down. So, /MES, then you can sell the 40 delta, 30 delta strangles overnight and see what you get the next day.
See what you get.
Yeah.
Because that's half of SPX.
MES is, I think, a 10th, isn't it?
Oh, you're in the MES. I just thought you were in ES.
No, MES. So that's very,
really
very small. And you can do that at 7 p.m. because those are open.
But everyone can find their own style. And here, here's Blue Wackadoo on Twitter. Eric collected $11.56 after fees today. Thanks, Mr. Market. And I'm glad he said after fees because we have been getting some comments on fees, and so you always have to be aware of it. We talk about it. Look at it. Look at your fees when you're putting on the trade and pushing the trade out, and then when you're closing the trade, and be mindful of them. Be aware of them, right? You don't want to be trading, and barely making enough after fees. So it's something to be aware of.
It's 100% something to be aware of, and they're everywhere. It's not Tasty isn't the only place with fees.
And I forgot what the rule of thumb was, and I remember, like at the end of the year, you know, maybe fees would be like 10% of your profits or something like that. Does that ring a bell?
Sounds about right.
Does that ring a bell? I don't know. That's almost exactly how my account is right now. My fees are probably 10% of my profits on the year.
I would argue, though, you and I are we're very active traders. So we're very active traders. So I'm willing to have my fees be up a little bit more because I would prefer to be active with it instead of just set it and forget it.
Right. But I
so
think
some more passive, even if you're just out there selling a put and you're closing at 50%, that should be lower than 10%, I think, don't you?
Oh, well, yeah. If you're like selling a put for $100, make $50, costs $1 to get in and $0 out.
Yeah.
So just be aware of certain things, certain futures. You might just take a look when you're pressing that button. And so I like when Eric puts that in on Twitter, that it's when he's making after fees. And for people interested in what he's doing, you could scroll through.
Well, I just love the transparency that both Jack Tucker and Eric do. And us. Everything we do is pushed through.
Now, TP and I had this discussion last week, active trading versus over trading. And I said I overtrade when I'm, like, let's say I'm using the 0DTs to scalp. And I'm, buying a call spread and then taking, $50, $100 out of it, selling it. Then buying a put spread and then selling that. And buying this and keep getting in and out, in and out, in and out. And I do that until I hit one max loss. I was like, there I did it again. That is overtrading.
That's overtrading.
That's how I overtrade.
So do you think that did he give that definition of active trading or overtrading?
That would be overtrade. Well, yeah, because like, when do you stop? I feel like you need a plan. Like Eric probably has a plan. Jack Tucker definitely. They
well, I think they have a time frame, not
just like sit at my computer all afternoon and keep.
I'm going to keep playing until I can lose.
I'm going to keep playing until I don't win. At some point in time.
That's my plan at the casino at the slot machine. I go, if I'm donating this $500, I'm donating this $500.
Yeah, like what I walk in with, I don't plan on walking out with.
Yeah. Yeah.
Right.
All right, can you go jump back into Twitter? Because Hibachi, it's so true.
Oh, here's Hibachi. Liz's face anytime Jenny says,
I can't talk about it. I can't talk about it. We're never trading it again. It's the stock that shall never be named again.
Oh.
Yeah.
Hey,
okay.
You know what? Okay. He's having a great time.
It's okay.
He's having a great time at school.
It's okay. I'm okay. I'm just kidding.
All right, Frank is posting this. Frank the Great is on YouTube, and so you might be banned from YouTube, but Frank's not.
I'm back.
Oh, good.
I'm back. That's how I knew it was there, Hibachi. Thank you.
John Z. Often see very large size trade with one option leg and one stock leg, and the order is delta neutral. The option leg could be either long or short. Can Jenny and Liz shed some light on these trades?
Sure. So if you go back into the platform and pull up the delta.
One option leg and one stock.
Yeah, so if you are say you're buying a call and selling stock, you can you're buying the deltas that match the call to make it delta neutral. Do you see what I'm saying?
Yeah.
So like,
okay, so like what do we want to go into?
It doesn't matter. Go into SPY maybe, and just pull up the delta.
Sure. Now, some people might do, and Tom would, like, let's say someone wanted to put on a bullish trade in SPY, kind of. But
be delta. They just want to show how we are delta neutral.
So 100 shares of stock is 100 deltas. So he would go find a call for 30 deltas and sell 3 of them.
Yes.
So, hang on.
Wait,
no, that was just. Okay, so then sell 3 of them. So you can watch my delta here down at the bottom there go from 72 to 30 deltas. The one call took off 30. Now I'm going to sell 2. Now my delta's down to 40. I'll sell 3 calls. Now my delta's flat, but I have 3 short calls to 100 shares of stock.
And so that's a very old school mentality of trading, right?
Well, I think maybe like buy 100 shares, sell 1 call is more old school. I think
buy
100 shares, sell 3 calls is more newer, but I still just sell the 1.
And I still sell the 1 too. And you'll see also sometimes, and I know I'm jumping around here, but that's how you make a stock position delta neutral, exactly how she did. And you can do it bearish too. I mean, you can sell the stock and sell a put and get it to be delta neutral, but it is kind of bearish in that direction.
But what you have to realize is every call that you sell means that you're willing to get short 100 shares of stock at that price. price. At
The
that
deltas
level.
can move. It's not static.
Right.
Where 100 to 100 is static.
So if I have 100 shares of stock and I sell if I have 100 shares of stock, I sell 3 calls. If those calls are in the money, now I can be short 300 shares of stock. I only had 100, so now I'm walking in with 200 short shares of stock. And I didn't want that because I put on a bullish position to begin with. So you have to be careful. I never sell more calls than shares I have. Usually I'll do some ratio. Let's say I have 1,000 shares.
I'll actually sell less calls than stock I have.
Yeah, so like let's say I have 1,000 shares, maybe I'll sell 5 calls.
Yeah.
I'll always do some type of ratio, never even as many as I have.
Right. Or and then delta neutrality too, and you'll see sometimes they skew it in this direction where they'll do like 3 calls and 2 puts without the stock. So you're just still kind of you're selling premium, but you're leaning a little delta neutral, delta one way or another. I'm sorry, not neutral.
So thank you, John Z, for that question. Ahmed, can you ask tastylive team to do a research on how market makers hedging affects 0DT trading? Yeah, that is a good idea. And I felt like I was just talking to Alex, the kid's partner.
Oh, I thought it was this guy.
I was like, why are you winking at me? No, Alex, the kid's partner.
About hedging?
About when people hedge, when big firms are hedging against big positions.
The markets get crazy.
Yeah, and
the markets get crazy.
And what they're using to hedge, like they'll pay extra. They might be buying something to hedge a position, and they'll pay extra because they need to hedge something else.
Yeah, I mean that's when you will see wide markets and funny markets.
Funny markets.
Mm-hmm. And that is very, very true. That's something that we know that a lot of people don't. Now, if you're a small fry, things stay pretty liquid, right? So if you're the average retail investor, things are very, very liquid. We're trading in a very liquid environment.
Yeah.
But that is true when a big customer comes in and they need to. And we'll have the research team do it too. This isn't the
we'll ask
this
them.
isn't the research piece.
We're going straight to the office after this. We'll bring all of this to the team.
Yeah.
Yeah. All right. Okay, so let's see what else we have going on in Twitter. This came from Eats1966. Your programs are great. Please consider another discussion on the buffer trade. Okay, yeah, sure. We love the buffer trade.
We do love the buffer trade. And there's a lot, and I think this stems from, there's lots of things popping up about buffer ETFs. Where people are just doing the buffer trade, where Tasty Nation and people that have been following us for a long time know exactly how to create a buffer trade.
So,
and keep in mind, this is all Synthetics 101. So the buffer trade is essentially saying, I'm going to give you what they'll tell you in the buffer ETF.
Okay.
So here's the deal. We're going to give you 10% upside, or you're going to cap it at 10% upside, but your give up is that you're only going to lose 5 or 6%.
To the downside.
To the downside. So you're capping your gains. You're capping your gains to give yourself a lock-in loss.
So I'm going to pull up an example. I pulled up Coin only because it's something that I like to be in and I like to trade, and it had this big run up a couple days ago and now it's come back down. So if I wanted a bullish position in Coin but wanted to give myself room to the downside, what can I do? So I'm going to pull up a buffer here, go to October, and you
do the put spread first.
Yeah, you start with buying a put spread. So if it's trading 303, I know you were like throwing out numbers of giving myself room. If it's trading 303,
that's what they give you on the buffer ETFs will give you, and you can pick like certain percentage to the downside by giving up X amount to the upside. I'm not giving those percentages. That's what they do.
Right, and it's different. So if I'm thinking of those percentages and it's a $300 product, if I want 10% room before I would lose to the downside, that's $30 down. So if I bought a put spread, I would need to buy the 300, 270, giving me protection to the 270 level. That would give me 10% of room.
Yeah, so that's a 10% buffer, meaning that it can go down. This isn't the end of the trade. We're going to add something else in there. But this put spread means that from 300 to 270, you're not losing any money. You're buffering your losses. Your losses will start to pick up 1 for 1 at 270 level.
And if I want upside potential, but I'm willing to cap my upside potential and maybe make 10% of the underlying value between now and the next 52 days, that would get me up to 330. So then I would go up to the 330 level, cross over from the call, and sell that put.
350.
Yeah, you can. I'm just gonna. I'll look at a few scenarios. So here,
that's a butterfly.
No, because it's buy 111.
So traditionally, I'm going to say this right now. Traditionally, the buffer is a covered call, meaning own the stock, sell the call against it, and then put the put spread in. Jenny's using her vast synthetic knowledge, and she's using that 330 put as the synthetic covered call.
So you see, I just went 10% down, 10% up. Basically, you go 10% up and sell that in the money put, and then at the money you buy a put spread and make it the width you want, and then here's what you get. It's a $300 product. If it keeps going up to the upside, I can make
how much can you make?
$2,923.
You're capping it. So even if it goes up to $350, say, you're capped at making whatever $3,000.
So that's there's my 10%. $30 product. There's my 10%. Make $3,000 because everything is in options is 100 shares. So, $300 product. Well, it's 100 shares. So. To the downside, I'm giving myself 10% of room. I don't start really losing until 270. That's giving me, the coin could go down 10% before this position would start losing.
And you'll notice here, and I do like these buffer trades. They aren't bad, especially in something that you want to participate on the up move and you don't mind getting in if it does the pullback.
Right.
We've been trading, we do trade these. Now look at your capital. This is Coinbase. It's going to hold up quite a bit of capital.
Holds up a lot of money.
Because it's as if you were long 100 shares of stock. Now, you don't get long 100 shares of stock until 270 at expiration.
Right. So if someone's like, I feel like coin might go up, and I wouldn't mind getting in on a pullback. That's what you have to say. Like, I wouldn't mind getting in on a pullback.
Yes.
Because if I said, I don't want to buy 100 shares of coin, then I shouldn't
here.
do this trade.
I don't want to buy 100 shares of coin here.
Or
but I like 100 shares of coin at 270.
If I want. But if I don't want to buy 100 shares of coin at 270 because I can't afford it, then I shouldn't do this trade.
Don't do this trade.
I shouldn't do this trade.
And that's why I think the buffer ETFs on paper. So a lot of things on paper have a great resume where they're like, would you accept? Yeah. Would you accept you're gonna be long this at a 10% pullback, but you're capping your upside?
I want to look at Circle because that's something that has had look at Circle. So Circle IPO'd, had that crazy IPO'd around 80 or so, got up to 103, went all the way up to 298, almost 300.
Yeah.
And now it's back down to 126. So I personally, I think I might put in a buffer in Circle.
Check it out. Pop it in. Now I do like the buffers.
So
conceptually, I started doing them after earnings. Do you remember that?
Right.
And I was like, if something ran up, and we're going to see if it's going to continue its run. If not, you'd get in on a pullback.
Yeah.
So it's not a bad after earnings trade either.
But getting in on a pullback, I like the idea on a buffer of getting in on a pullback.
Yeah.
Because if it's already down, well, then you still have room for it to go down even further.
Even further.
So I don't know if I need to go through the math here or say, 126, 10% is $12. So I would need to make this put spread maybe $15 wide.
Sure.
That will give me even more than 10% room.
So, and no, when we're going backwards with the put spread, she's buying the 125, 110 put spread, knowing full well that she's going to cover the cost of that put spread with the extrinsic value on the call that she's going to sell.
So and it works out when you look at percentages. On SPY, or what were we just in? Coin, I did 10% to the downside, making 10% to the upside. So if I'm covering myself $15 to the downside in Circle, and I go $15 above where it's trading to the 140, and I sell that 140 put, it's going to be very similar to the trade in coin where I can make $1,500 to the upside, but I'm protected $15 down to the downside.
Right.
And I'll pull this up on the analysis page just so people can see. And I'm pretty sure, I know it's using $5,000 because Circle is, the margin's not great.
CoreWeave, you can do it in CoreWeave. That's the easy one, right?
Yeah, we could look at it in CoreWeave.
There you go.
And so here it is. We're trading right here where this green flag is. Circle goes up, I can make $1,670. Circle goes down, I don't lose until, below that 110 put.
You don't lose until below that 110 put. And these are, but I just want to be crystal clear with this.
Yes.
These are great trades, but this isn't, everything in my account is buffer.
No, it's one of.
Because you can go in there and sell the 110 put for, I think, $6. Is that what it is? And so you'd make that much money to the upside, you have room to the downside, you'll still make that much money there. There's for every gimme, there's a gotcha. You have to be willing to say, I want 100 shares of this, and I don't mind getting in if it's past here.
But these aren't, so let's talk about this. If I don't mind getting 100 shares of Circle around 110, then great. If it goes up, I can make $1,600. If it goes down, I get long Circle below 110. It'd be like 108, 108.30. Then if I look at that 110 put, and I was in October, I go to October, that 110 put $6. if it goes down, I'm still getting a long circle, maybe more towards 104. But if it goes up, I'm making $600. Where if it goes up,
you're not making $1,300.
I'm making $1,600. $1,600.
Yeah.
But you need it to go up to make $1,600. If it goes down to this 115, 120 level, this put still gives me $600, where that buffer doesn't give me much.
And that's why I say it's totally dependent. That's why I wanted to be clear. There is no. I don't want everything I have in the buffer. I don't want everything I have in short puts. I don't want everything I have in zebras.
Right.
Even though they all have, those are all three bullish trades. They all have their kind of time and their place. And I'll bob and weave a little bit depending on what they're doing.
Oh, yeah, with my strategies.
Yeah.
Of course, which is why I, like earlier I was saying, I may put them on, I may collar something when it's the very top of its range, but if it pulls back, I take that off and then throw in downside ratio spreads.
Yeah.
There's so much, I don't know why I say like finesse, or you could just continually work a position.
Well, yeah.
Depending on where it is.
Overactive traders will continue. Guilty as charged. Hi, my name is Liz, and I'm an overactive trader. Will continually work the position.
Okay, you mentioned CoreWeave. We have.
I just said CoreWeave only because I know those two came out around the same time, and one has good.
So each week we've been throwing in this downside broken butterfly just to, possibly if it goes down, we can make some extra money. And it has. We put this on when CoreWeave was 98. It's trading 93.
Take that off.
And I will. And again, if it were 94 at the end of the week, this trade would make $400. It's making $100. Do you want to hold out for the $400?
No.
Or do you want to take this off and throw in an October buffer?
I want to price out the October buffer. How about that?
All right.
Because even on paper, like if it doesn't work out, it doesn't work out. Sometimes they work, sometimes they don't.
And for the viewers who are concerned with fees, always be aware of them. This trade, 1, 2, 3, 4, cost us $4 to put on. We're taking off an $84 win, and it's going to cost us nothing to close. So we make $84, cost us $4 to put on, it's costing us nothing to close, so we made $80.
Yeah.
Just always be mindful of fees. Wait a second, is this just super wide market? What's mid market here?
55 cents at, yeah, it's
How do
wide
I get
market.
rid of this?
I don't know, but let's read the news.
I don't know. It just popped up, but let me try this.
Baby boomers are leaving their kids with a huge headache.
There, it's gone. Luckily I'm not a baby boomer.
Our parents are.
And we're the headache?
No, baby boomers are leaving their kids with a huge headache.
Oh.
Not the baby boomers' kids are a huge
I get that.
and I'm the problem.
All right. So let's take a look. When I see this market here, like 30-cent credit, 74-cent debit, something tells me it could be a wide market.
And it's probably your deep in the money one.
So if I were to make $97 here, I'm paying 32 cents for it. This is kind of bouncing around. I want to make. We sold it for $1.29. If we buy it back for
$1,
we're not going to get. It's not going to fill there. I don't think.
Buy it back for 29 cents.
No, I think we have to pay more like 40 cents. So if I pay 40 cents, we make $90. You'll see this market's crazy wide.
Hey, yeah.
I'll try.
Try 29.
25 is 29.
29, that's what we
Then we make $100.
Try it.
And we'll wait for
and
it.
Nothing.
Well, I think, we'll watch it. We'll watch it. It's 4 cents wide, 20 cents wide, 30 cents wide. It's a little bit wide markets, but we're still going to, that was going for a $90 win. I'm okay with an $80 win. No, that was a $100 win. Let's try for the $90 win and pay 39 cents for it.
Yeah,
that's a $90 win. I'm going to go for 85, which is what my original was. 2, 3, 4, 5. $85 win, and we're filled.
Done.
And price improved. 40 cents. We got out for 40 cents.
We did? It's pretty good.
Yeah.
Okay, pop that thing out.
Okay, so now we're
So
going
we
to look
can
at
push
the
something.
buffer in CoreWeave. Right?
Yeah.
October. I think you have to go to October.
Okay.
So, $93 product. I'm going to go make this $10 wide. 92 and a half, 82 and a half. And then you almost make it equidistant, I think. 92 and a half.
But you can go pretty far with that. You're getting 435. You can go all the way to the 110.
But I try to make sure
Yeah, there you go.
I try to.
Oh, 105. You want to make sure, especially for our intensive purposes. We understand the risk in it, but yeah.
All I'm doing,
That's not equal distance, though.
No, because there is no 112.
Yeah.
They didn't have the strike.
So this is still, you have a little bit more profit potential then.
All I'm doing when I'm looking at the in the money put I'm selling is kind of toggling this to see when my green bar goes here. I know if my green bar doesn't go to the 82.5, that if I sell the 110, on the curve view. So in this scenario, where we went with the short put at 110, look, we've got $1,657 in profit potential to the upside. $1,657 in profit potential to the upside.
Correct, and it's using $1,400. That's why I want to.
In this area here in red, I could lose $93. P&L at expiration down.
That's
90.
at expiration.
Yeah, so there is a little bit of loss there. And
But we understand the gimmies and gotchas. If you move that by a bit, it'll take away that like little bit of loss.
Yeah, if I go, instead of selling the 110 put, if I sell the, what was it? The 105 put, now.
And the pop on that trade goes up so much when you do that, the P50.
Well, and we know that's because then you make money, but here I make $22.
But you're still making a penny, so that's why the pop is up there.
But the upside is $1,270 instead of $1,600. I think I'll take my $90 in risk and move it to collect $1,670 in profit potential.
That's not bad for the buying power effect in this.
No. I'm going to go to the 110, have a little bit of risk.
It's so hard for me to move those. I know.
I know, it's not moving.
I have to go back into the table and do it sometimes.
I can't grab it.
Just hit table.
I can't grab it, Liz.
I can never. I've never been able to do it. Just go to the table. Watch this. You can do it now. There you go.
There we go. So
Okay.
now I'm going back to this one, which not bad. If I want to get into CoreWeave, I get in at 82. Buy 100 shares. I'd have to buy 100 shares at 82, which is
right there.
It's close, but you know what? Hey.
Yeah, and then we'll sell puts against it. It's fine. It's got a good buying power.
What do you think?
Ship it. We don't.
All right.
Ship it and push those two things out because I don't. Think
I'm going to ship it because that's what we need. We need more profit potential in this account. Don't you agree?
Yeah, we need more profit potential in this account.
Yeah. I was just testing you to see if you were listening.
And we need more profit potential in this account.
All right, 1635. And shipped. Let's go, CoreWeave. And then that totally changes our trade instead of the short-term downside broken butterflies. And we were using about $800, $900 in buying power in those.
And we wanted to make money if it went up.
Right. Yeah. All right, it's working. It's working.
Push out the closing order so I can at least push something out. It's so quiet again.
I know. But it's 10:55. We never even got to Kai's option jive.
I know. They did it yesterday, though, so I'm sure, like...
Yeah. No, and we appreciate it.
We
Kai's
appreciate Kai's the
back
best.
from his long vacation to Italy.
I know.
I hope they
were
had
calling
fun.
it a sabbatical. He's so sweet.
I
So
know.
we do
I
appreciate
know.
everything he does.
All right, what did you want me to do?
Push everything out.
Oh, to the follow page.
Yes, please.
Sure. And then I want to make sure we got to everyone on Twitter. Okay, Liz, here.
That's
all
it?
we've done, we looked at quite a few buffers, but we didn't put anything through. We closed our CoreWeave and we're working this new one.
Okay.
And you know, it says it's pending. We're gonna see what's going on with this because it says
What does
pending.
pending mean?
It says pending, not working. And I don't know if it's the way I put it in. 1, 2, 3, the 3 legs. I don't know if there's something going on with CoreWeave or it's our.
We'll leave that. We'll keep an eye on it.
Yeah.
Okay, but that was a good... I mean, I like talking about the buffer. I get the buffers are confusing. I get the buffers confusing. I get the collar versus the call spreads confusing. Those are all just kind of synthetics of trades
Right.
and how they're all kind of versions of the same trade.
Oh, so here, Madalena said, what about a trade in NNE?
What is NNE?
Have you ever looked at
I've
NNE?
never even looked at it.
NNE. Nano nuclear energy. Oh, another nuclear. Let's see. Does it look like the others?
Kind of.
Kind of, yeah. Nano nuclear. Let's see what the options look like.
So 6 rank, 135 million.
Oh, we're filled in CoreWeave. What did that say? I gotta see something.
We'll have to let's do that after the show.
Wait, I'm just going to the. Oh, okay, here it is. 1635. At first,
It said 25
something. I was like, did we get pricing for it with the $25?
It said 25 something.
It did.
It did. It 100% did.
It did. Anyway, it's right here. Filled orders. I'm going to see working canceled. No, this is all we have.
Okay, push out the 1635. That was not 25, but it did say 25 something.
That's what I thought.
100% it did.
Publish to follow feed. All right, so we're in core weave. I'm going to double check that our position looks good.
And then we'll take a look at NNE real quick.
Yeah, we sold the 110 put. It's almost like a synthetic covered call, right? And then we bought this put spread, and that is giving us some protection. So it's like you're doing a deep in the money short put, synthetic covered call, buy a put spread for some protection. That's the buffer.
That's the buffer we're in. We'll look at that again another day. Go NNE real
Go back
quick.
to NNE.
No,
Okay, yeah. This marking weird because look, it says like we just put this trade on. It says we're down 1650. It's almost like that's marking. Something's marking really bizarre.
it is marking weird. We'll look into this, but
Well,
it did mark funny.
It did mark funny when we put it on. Yeah, it's like we did it for 1650 or we did it for 25 and now it's working at 1650.
No, we did it for 16 and now it's marking 25.
Yeah, there's something strange going on, but I know who to call.
Hey, we're going straight to the office.
I'm going straight to the office.
We'll get this.
What was
we'll
it,
get this
NNE?
sorted out in no time. This is a nuclear stock. Let's take a look at the options. Go to...
All right, so the 25 put for $1.40 is using...
Ooh, too much capital.
It's using a lot of buying power. But, you can spread it off if you want to get in it. You could spread it off with the 19, 25 or 25.20, $5 wide for $1. Not bad.
It's not bad. You can
No,
spread
it's
it
not
off.
bad. Not bad.
Okay, well, thank you very much. We are done for the day.
Did I get to everybody's tweet?
I think so.
All right, I think I did.
Yeah, I think we did.
Okay, perfect. All right, everybody, thank you so much for tuning in. We'll be back here in the SPX bit tomorrow.
Yes, we will. Back tomorrow. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you tomorrow, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here.
Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Thomas. Thomas, good morning, sir. How are you?
Good morning. You know, the weeks are flying by here.
Yes.
The weather's cool, cold, and yeah.
I have to ask you, did you see the screw worm report?
I did, and I'm still long live cattle. It's been my
Did you
trade.
see the human case, though?
Yeah, it's in a human. So I'm not sure if the guy went to Mexico or something, or if it's...
This is what we were talking about.
the end of the world.
Genetically modified. We don't need to do this.
Yeah.
But they did.
But they did. Now we have humans getting screw worms.
This is how 28 days later starts.
Yeah.
You know, the screw worm debacle.
And I mean, live cattle making new highs. I mean, I'm going to stay in it to win it.
Why not? I mean, it's been working.
Mm-hmm.
I have to close mine. I'm deep in the money. But yeah, that was kind of when I saw that, I was like, oh my God. The fact that I even know about the screw worms, I attribute to you, Thomas. So
Yeah.
Thank you for that.
So we are
for
safe.
putting me on to the screw worms.
We're safe up here in Chicago. They don't like the colder weather.
Okay, that's good.
Yeah. The cows down there near Mexico, I'm sure all the ranchers are nervous. I'm sure this injects some more uncertainty, some more fear into the market. So
yeah,
it's going. We're going up. So I like it.
Nice, very nice.
Yeah, I closed my position 10 points lower, which is kind of crazy. But yeah, it's had green day after green day for the last 2 weeks straight. It's nuts.
I
It's
think
like
we
a
went
meme
over-
stock.
Did we go over 2 or 3 weeks ago, somewhere there? But yeah, it's doing really well.
Mm-hmm.
I mean, I think this is the thing where you'll eventually get a big pullback. All this will come out this year, and when that does happen, it happens fast. But for now, I don't think we're close to that because this is still a big problem if you're looking at what the USDA is saying and the monitoring and everything, and looks like it could get worse.
Oof.
Craziness.
Yeah. And you only get that info on this show on Tuesdays.
Yeah.
There's nobody else on the interwebs, on the CNBCs talking about the screw worms.
Before it's on.
Before you, yeah.
Right.
So there you go.
Yeah,
So we-
CNBC, the first time I saw them talk about screw worms and live cattle was this week. So
Okay. Which is even shocking that
right.
started.
They're even mentioning it now.
Yeah. So, there you go. Tasty is always early.
Indeed.
There you go.
Indeed. Just like the market. We are the market.
Yes.
We're live.
But the rest of the market's been another chop fest of a day. I mean, yesterday we had a little bit of movement into the close. They sold off like 20-ish handles into the close, but today has been an absolute nothing burger. We've got the E-minis down 3. They've had a 33-point intraday range, including the overnight session. Since the open, it's been like a 10-point range. It's really been nothing here. The NASDAQ up 35. Nothing really moving there. You have an NVIDIA up $1 and change. It's near highs here. It's one of the only ones really moving all that much. You've got the Dow down 19 and the Russell up 16. So the Russell actually bucking the trend here, which is a little surprising given that bonds have sold off. Bonds down to 113.31 here, giving up a lot of what they had in the rally on Friday, and rates obviously moving higher, which is kind of a surprise to see the Russell kind of bucking that trend here. Oil as well, moving lower, down $1.35, 63.45. Volatility futures basically unchanged. It's been the same MO for the last 2 sessions here. Opening. In the opening of the session, we've had volatility a little bit bid. It's continued to contract throughout the session, which is what we're seeing again today. Gold catching a little bit of a bounce. It was unchanged for most of the morning. It's now up $17. Silver as well catching a little bit of a bounce. It's basically unchanged. It was down like 30, 40 cents at one point. And Bitcoin continuing its weakness, down 1,100 on the futures, spot down to 82. Ethereum bouncing a little bit, but it too has been very weak as well. So it's been a very mixed bag, choppiness. I don't know if there's too much to glean from the overall market action. I know NVIDIA is kind of our event for the week, but other than that, it seems very much like a holiday week, which is what we have going into Labor Day here this coming weekend.
Yeah, NVIDIA is going to be interesting. I feel like NVIDIA is primed for the earnings dump.
Ooh.
Because we've seen so many stocks
Mikey the Bear?
that are just
Who is
trickling up, and then they just get hammered after earnings. Like how many? We can pull up. How many other charts that we can pull up that are exactly that same thing?
But if NVIDIA has a 10-point down move, it'd be back to where it was on Friday. That's which is the expected move. I think is about $10. It's not like we're taking months of price action away. It's days, hours, minutes of price action.
Yeah, but I think NVIDIA is interesting because even if it sells off, I think people are going to want to get into it. So
buying opportunity.
Yeah, does the sell-off even last more than a couple weeks?
Is that the prognosis here? Got a little bit of a buy.
There's a lot of moving parts with this earnings because the U.S. is, they're charging for the shipments to China. Now NVIDIA is saying it's going to make a new chip versus the H20. It's going to be more advanced. But now China is saying, they're putting backdoors or kill switches in it, that kind of thing. But they still need the chips, so they're going to take them either way, I think. So, it's the revenue stream to China is reopened. But we'll have to see. I mean, I'm looking to see what the CEO says about this concerns about pullback in the AI investment space with Meta doing their restructuring. They're saying they're not, investing less. They're saying it's restructuring. But if you're spending less money, even if it's restructuring, what's it matter? I mean, so we'll have to see how that goes. I think the commentary on the earnings call will be the big thing for earnings.
Yeah. And Thomas wrote a nice little piece in the news and insights tab. tastylive.com.
Yeah. little earnings preview there. I'll pop it in the YouTube chat. But yeah, if you like written content, we have plenty of written content on that news and insights tab, including all the earnings reports for the big tech stocks.
Yes.
Big name stocks. But yeah, I did do some stuff this morning.
Okay.
I got into, so yesterday on Overtime, we were talking about how we might see a sector rotation or we think it might make sense to play for one. So I got into a bearish put diagonal in the Qs.
Okay.
Long December.
Ooh.
560 and short the October 550 for $9.50.
Okay.
And then I bought the call calendar or diagonal, long December, IWM, 235 call, short the 245 in October. So both of those are 10 points wide. Both of them are around $9. I just feel like if you see cash outflow from the Qs, maybe it goes to something like IWM.
There you go.
And then I closed my LUV long call that was left over from a vertical spread for a scratch.
Nice.
Mm-hmm. And then yesterday, Circle and ETH A butterflies from the Tasty Crypto segment with Ryan.
Very nice. Yeah, we did some trades this morning as well. I put on an iron condor in the oil futures /CL. I also did another SPX trade. I don't want to toot my own horn, but it's 5 for 5. And I closed that intraday, within an hour. Took 80, 90 cents out of it, which means, as we've been saying, we're due for a rough one.
I don't know if we are.
I can't do 5 in a row.
We've been picking our spots pretty well.
Yeah.
But
We'll see. And then I got long some more IBIT call diagonals. I did a CrowdStrike short put spread into earnings. It has earnings after the close tomorrow as well. Did a little NVIDIA Iron Condor for earnings, playing for an inside/down move, and an XLV trade. Healthcare sector, one of the worst performing so far this year. Catching a little bit of a bid if you look at like Eli Lilly is up like 30 and change here today, and then UNH has had its Buffett bounce, but still kind of dead money right now. So maybe there's a little catch-up trade there.
It's coiling. It's coiling at 300.
Yes.
Ready for blast off mode. But yeah, big move in Eli Lilly for sure.
Yes, and those are trades. A little bit more will be analysis on them. Will be coming in the cherry picks, coming shortly in the next hour or two.
Mm-hmm.
So we're looking at a lot of sector performances. We're looking at volatility performance month to month. We've got some data on bond yields as well. So a little bit of everything coming at you.
Love it.
Yes.
Quick question from Andrew in the chat. How is the screwworm different than the botfly?
I'm not exactly sure. I mean, I know a botfly lays its eggs, I think, under the skin. I think the screwworm is just a little more catastrophic for the cattle.
Okay.
So maybe a little bit more prolific, and plus it's one thing that's been eliminated or technically eliminated from the U.S. and the botfly hasn't. So I think the screwworm just is more damaging as a pest.
The more you know.
These things sound like creatures from what's that book series with the 3 fingers?
I was gonna say the gorge. Oh, that's Lord of
They're in the dungeon zone. And they're just pestering you.
Yes.
You know what I'm talking about.
God, what is it?
I pledge.
No.
I pledge. No, it's we'll figure it out. Someone in the YouTube chat.
Yeah, somebody chat us.
Hunger Games.
Hunger Games. There we go.
Hunger Games. The botfly.
Yes, is like one of the
screwworm.
They summon it in.
Yeah.
I feel like that is isn't that one of the things that happens? They have the flies or bees or whatever.
That are 30 times bigger than they should be.
Yeah. Exactly. Mm-hmm. Good call out. Wow.
I mean, Google says the botfly doesn't require the host to die, so usually the cows are okay if a botfly gets it, but
the
screwworm just causes a lot of necrosis and tissue death and these big nasty wounds.
Ugh. Gross.
Not good.
I don't want any screwworms.
That'd be terrible.
Screw whatever. Yeah, I don't want any of that.
My screwworm defense systems will be up if they find their way up.
Yeah, is there a vitamin or something that we can take to fend them off?
Probably whiskey or something.
Ivermectin.
Yeah. Well,
there you go.
I mean, that kills parasites.
Yeah.
There you go. We'll see.
I wouldn't start taking it yet.
Yeah. No, I think we're okay for now.
Beautiful. We're streaming live on the YouTube channel. If you want to stream live there, we are live and ready for your questions. If you want to pop it into the YouTube chat along the right-hand side, just head over to the Tasty Live channel, and we'll get to them shortly. But first, we do have some slides, as it is Thomas Tuesday.
Yes.
Taco Tuesday as well. Natty Gas.
Here we're going to try it again.
Here we go.
We're going to try it again.
Well, I'm already long 2 contracts, so
there you go.
This is where we're going with this.
There you go. Yeah, I'm going to get long a micro contract.
There you go.
That's going to be my play here. I already have a short put spread at 3. But this is now the time where we're getting past the summer. So, the sell-off earlier this month, it was on the basis that the chances for hot weather into the end of the summer vanished. We sold off. Now we're at the lows. And, all of that is priced in. Now I think the market is going to start looking forward, going into this demand season, which technically starts in November. A lot of years it starts earlier, sometimes October, sometimes September. And we'll go to the first slide. We'll just take a look at exports. So right now, there's European prices, which are the Dutch TTF futures, which we don't have on the platform, but taking a look at them, they're at 11.42 when you compare it to the U.S. price. Or actually, I'm sorry, it's at 8.7 if you compare it to the U.S. price. So it's at, the highest we've been since June, since late June. It's gone up all the way from 7.5 to 8.7 over the last week. So this is an increased arbitrage opportunity. When European prices are this high, factoring in all the storage cost, the transportation cost, the boil off cost, there's that arbitrage. So you start shipping these U.S. products to Europe, and it creates pressure on the U.S. price because export capacity has to go up. So that's more demand essentially from overseas. So we're seeing this long-term trend, especially since COVID or the Ukraine war. Right after COVID, it's been going up, and this is expected to go up or continue to go up. So it's a good thing going into the winter. Europe has to make sure they buffer their inventories since, Russia, a lot of their gas, not all of it, is cut off from the European bloc. So it's a positive for the U.S. Let's go to the next slide. This is seasonality. So the way this seasonality chart works is you're comparing the average price for each month over the past, I think, 12 years, and you're seeing the premium compared to that 1 year average. So August, you're right near that yearly average. September, you start to go up 110%, so usually, twice the price. And then you go up all the way till November. Then you start to go down a little bit. But, the seasonality all the way into the winter months strengthens. So if we're taking a trade based on seasonality, especially with the lows we're seeing, and you're playing on, the view that winter is going to be pretty cold, Europe's going to need to import a lot of U.S. product, this is probably a pretty good time, given where prices are, to take a long position that, goes a month out, 2 months out, even 3 months out. So 45 to 60, 2 months, it's a good time to get all the way to that October seasonality where, compared to the yearly average, you're well above where you're usually at. So we'll go to the next slide, and this is just the green line here is the actual price based on the premium that Europe has versus the U.S. So this is kind of taking a different view of model if you're just doing U.S. prices. And the red line is based on a linear regression of where prices should be now compared to where they actually are. And we've seen, the green line, of course, has gone down, but this red line is right around 3.3.
Okay.
And we're at 2.8, 2.9. So, you got about 40 cents there of premium.
It's a lot, 15%-ish.
Yeah.
With the 15, 20% upside.
And, these models aren't perfect. You can look back in the past, see that they're not always correlated, but the correlation, I think, when I looked it up, it's 0.64. So a moderately or modestly strong correlation, not perfect. Few things are. But, it's another thing that shows us, the predicted value is higher. You take into account seasonality where this predicted value could increase even more. This gap you're getting between the actual and predicted prices, it only lasts for so long. So it always comes back, kind of a mean reverting nature, the actual versus predicted price. This is just one model. There's 100 ways you could do that. You look out there, there's probably 1,000 different ways people try to run these models, but it's just one way to look at it. It's a pretty simple one. It's not getting too fancy or too crazy. So yeah, natty gas trading, we're 2.72, somewhere around there.
It hasn't been below the predicted really for much time. Going back to October of 2024, that's kind of a year ago. But for the last year, it really hasn't been below that predicted price. Right.
And so this is really the first time that it is. And again, it's because, this summer, especially this August, and now, September, it's on the East Coast especially, the chances for that really warm weather to give us our little last demand boost, those cooling degree days as they call them, it's pretty low. And I think if you look over the past 20 years, we're in the top or the bottom 5 cooling degree days when you compare it to those past 20 years. So it's been a really bearish summer. The start of the summer, it was nice and hot, had the prices reflect that, and then those bullish tailwinds just faded away. So I think that's all priced in now. And usually in natty gas, when you get this low, you would see at least a day or two where you get these shorts capitulating, and you get a big ripper rally, 10%, 12, 15 even. You see that sometimes. We haven't seen that yet. We're still trading under the 9-day EMA. It's pinned prices since July 21st. We've attempted to clear that several times. But now we get, a little bit of this, somewhat of a doji candle right here on the bottom. So I'm going to take my shot long.
I like it.
I think, things are working up better than they were when we talked about this a few weeks ago. So, yeah.
I'm in as well. I had one in at 208.04. I did that on the 22nd. So I added another one of the micros just to, double down because why not?
Yeah. I also have
The why not is because I stink at trading natty gas, by the way. And I'm usually a contrarian indicator in this space. But this is the gambler's fallacy. It's time. It's due. I'm due.
Well, the U contract falls off tomorrow. That's the last day to trade it. So maybe you see some rotation from the U into the V, and if people were short, maybe they get long.
Yeah.
Maybe the next couple days here could be a big green candle.
Yeah, I think that's a good point. The contract expiration, sentiment could shift, people reposition. I'm long in the V contract, the micro.
Yeah.
So I just got long that, so in it to win it.
Love it.
I saw somebody mention UNG. So when you are trading these ETFs, UNG, I don't know the exact makeup of it, but it's usually, a basket of front contract expirations as well as the second contract expiration. So here, you're going to have some drag because you're selling out of, $2, 2.71, 2.8, and buying into 3.14. So there's a spread there that is a drag to UNG, and that's why UNG, when you look at UNG or volatility products, stuff like that, you have this kind of constant drag lower. If you look at this on a wider time frame, you have charts like this where, it was never really trading at these values. This is just all the splits that it has because of that drag.
Yep. Same with USO.
Yes.
Same story. If you have an ETF that tracks futures products, that ETF or whatever the product is subject to drag and drift based on contango and backwardation. So always got to check out the makeup of the ETF or ETN that you're trading so you have a full understanding of what it is.
Yeah, and if you want a product, if you can't get into the futures and you don't want that roll-off component that's affected by backwardation and contango, you can get into something like EQT.
Okay.
Just another way to play it. It's a producer, heavy nat gas stock, so you can do that too.
Okay. Let's see if I can get something on in there too.
But yeah, UNG is
it's a junky
You're
product.
pretty much, it's essentially you're buying the front month contracts, essentially.
Yeah, is it mostly in the front?
I think
or
it's
is
like
it-
80%.
Okay.
Like front month contracts, then at expiration or the day before they roll.
Yeah, and so it's rolling into the V contract, which
Yeah.
is probably like 9 ticks or 9 cents higher right now, 10
Right.
cents, whatever it is. So there is still that drag there. Makes sense.
Well, it's good to see we are aggressively long.
Yes.
Maybe we'll get that roll pump in the next couple of days. It'd be great.
Let's see it happen.
Sweet. Thank you for that. Love it. Yeah, couldn't be more happy to get to be long natty gas at these low lows.
Here we are.
Yeah. We caught that move in oil too. That was from last week. You pointed that out to us. I know, Mike, you had the micro contract. Did you get out of that?
Yep.
I had just a short put spread. Hit that on the head. Are we getting back in there? I did a iron condor here into this down move. Does that
Nice.
fit your thoughts?
Yeah, I'm in an iron condor as well. I have it between 60 and 67.5 for the 51 days out. So pretty happy with it right now, trading at 62 and 8. So, yeah. I think 60 is a good psychological support level. And
Round number.
Fox, Ukraine and stuff, they're not going as well as they could. So API stocks are out this afternoon as well. I think the consensus is a drop of 1.7 million. So we beat the EIA, we were way over the drop last week. So we'll have to see how this week does with the API numbers. Could give some support.
Yeah, if we get another day like this, if we get closer to 62, I'll just get back in with a micro long contract again. But yeah, good trade, good two-sided action in there. It's been a great trading vehicle for a long time, and it will probably be into the future.
Yeah.
All right. Popping over to the YouTube chat real quick. Ryan's got an Apple long put vertical. What to do? Long the 215, short the 200 in the 9/19, September 19th cycle.
215, 200?
220.
200.
Yeah, sorry. 215, 200. 215, 200.
Cheap shot.
Yeah.
Got the Apple event coming up.
Mm-hmm.
Bonetta was speculating on a folding phone. Is that something you would be interested in, Thomas?
No. I mean, it's one of those things where I don't think I'd like it at first, but maybe you get used to it. I've never thought I have to fold my phone. So
I'm out.
Yeah.
I'm out on the folded phone.
Yeah, I don't.
Unless
She
I
did
bring
make a
back
good.
T9. The Motorola flip phone with T9. That was my fastest texting speed ever.
She did make a good point. It gives you a bigger screen. You get
It also seems like it could be more breakable. Like the more complex something gets, the more it can break. How all our fridges have Bluetooth now and stuff. And I just want a fridge that keeps my food cold.
Yeah, you don't have to be keeping track of what I'm putting in there.
Yeah.
Soon it'll be you pull something out, it'll be oh, that's 500 calories.
Yeah. So are you sure you?
They already do that, I think. Some of them.
Do they?
Yeah, and they take pictures of your fridge.
They fat shame you?
Yeah, they have cameras inside the fridge. It tells your app what you're low on and stuff. So you don't have to look in your fridge when you're at the grocery store or something.
Yeah.
It's pretty wild.
Nestle is behind this innovation there.
Yeah.
Someone's behind it.
Yeah. Mondelez.
What a world.
Mondelez just trying to track everything we eat.
It's really interesting, the data implications, though, because that data is fed back, and you see what people are buying, what people are...
How much of it, how frequency, get everything.
Who buys what based on demographics. It's pretty crazy.
We need the Wonka food thing that just zaps the food onto the plate.
Oh, yeah, you put in there.
That would be sick.
Coming soon.
Bowl of ramen, bowl of ramen, bowl of ramen.
I mean, it'll be just overly processed.
Yeah.
Screw worm style.
Yeah.
Genetically modified.
Mm-hmm.
This trade, I mean, it's a downside shot. There's not much management that you can do with a long put spread that's out of the money. You got $125 left to lose on it.
Yeah.
I mean, I might just close out the 200 strike put and just lean short via the long put.
Yeah.
And if you get a $5-10 down move,
you're back in business.
Yeah, maybe you close it and move on to the next trade. But
that's what I did in LUV. I had a vertical spread, got a sell off, bought back the short call, left with the long call, and then you got the rally. If you don't have the counterpart, if you don't have the short option on that eats away at your value that you can get back in the long, if you get the move, you can get out much more quickly on a smaller move.
Yeah.
So you just have to be willing to take another 50 cents of risk, but that's basically the adjustment. I would not be rolling it from 200 to 210.
No.
That's how you kind of kill the trade. It would be too narrow in that sense where you have a 5-point wide, and if you do get a big sell-off, that short option is going to eat away at almost all of the profit potential in your long. So yeah, I would say either nothing or you buy back the short call.
Got any thoughts on gold and silver? I mean, you had rate cuts on the table, money printer go burr.
Yeah, I mean, I'm long silver. I have a call spread. It's still 63 days out. I took it 2 weeks ago. I joined a trade with Vecchio. It hasn't been doing much yet. I'm still waiting for this whole, rates come down, gold and silver go up. I'm not sure. I think the market's waiting for that first rate cut to actually
happen.
Yeah.
Because bonds are acting a little squirrely.
Yeah, they are.
I mean, it's almost like, okay, yeah, we see you, but no, not so fast. Like a little Dikembe kind of thing.
Yeah, I mean, I think we have PC data next week. We got some.
Friday.
Yeah. Oh, this Friday. Yep. We still have some stuff that could throw off the narrative. Inflation gets higher, maybe they pull back. Then you got this this independence thing with going with Lisa Cook being fired.
Yes.
Seeing a lot of things. People say they can't fire her. Some people are saying they can. So we'll have to see how that shakes out.
Well, that was the move in the dollar, because the dollar has had some big swings over the last couple days, but we've reversed a lot of the move that it had, from this morning. The euro is higher, but you've had some whippiness in currencies as well.
Oh yeah.
Yeah, I took off a bunch of those currency positions. The only one I have left is the CAD yen. The other ones I took off for small little profits, but
yeah, $20. I was talking about that with my dad. I was like, as long as you stay small with these and you just like kind of play for the ranges. There's so much leverage here that you can get, like the 20 or 30 or $40 that you get out of it. You're only using a couple $100 in buying power, and by buying power I mean like margin, and you kind of just scoopy out of those and the cool things. Been nice.
They are quite nice.
Yes.
Let's see. What do you do with debit butterflies at 21 days that are not quite at profit targets? There's not much to do with debit butterflies that are symmetrical. If they're out of the money and let's say your short options are losing a ton of value, maybe you buy one back. But, or if it's completely in the money, maybe you sell out of the debit spread portion of it. But butterflies are just a credit spread and a debit spread, and both of those strategies only have a max profit one way or another. So if you're reaching max value that you can get out of one of those spreads, you could close that to retain that value and then hope you get a reversal.
Yeah.
But that's basically it. Like these, my ETH A butterfly, 35, 40, 45.
I mean, there's nothing to do with.
There's nothing to do with this one, but yeah. If there was, let's say there's a big sell-off in ETH A, I could buy back that one of the spreads. So I could buy back that 40, 45 credit spread, and then just basically lean long with the debit spread. Or if it rips through this whole spread and I don't close it, I could sell out of the debit spread, the 35, 40, and then lean short with the credit spread. So that's what you can do with butterflies. You just have to be comfortable with the additional risk that you would add. What about adjusting the Apple trade by buying the 200 put and selling it into a broken wing butterfly? I think it's too late for that.
Yeah, because there's
no value here.
Yeah. With debit trades, like if you're just buying a call spread, buying a put spread, you got to have you have to be correct in some way on the direction of the stock. I mean, if you don't, like there's been time decay, the stock has gone up, you've just been kind of wrong. And so, the risk on the table at entry is you've hedged it a little bit because it's a spread. And that's really all you can do. I mean, at the end of the day, you got a long put spread and the stock goes up, not going to work.
Yeah. And turning this into a broken butterfly or butterfly, it's just, the trade is done ultimately.
Yeah. You got $100 and change. You either take the money and run or buy back the put, the short put, lean a little bit more short.
Yeah.
Into highs or into higher prices because the stock has gone higher. So buying back that put synthetically gets you, a couple deltas shorter.
Indeed. Put credit spread on IBM, September 19th.
Div earnings, no earnings.
No earnings.
All super, super low. It's so sad.
I mean, you could do something like that if you want. 235 or 230, 240, 235. I'd just keep it real small, but it's still not great. I mean, you're selling an at the money spread and you're collecting 1/3 the width. Not great. That just goes to show how low implied volatility is. I'd rather just buy a call spread.
Yeah.
Fabricate more max profit with the debit spread versus the credit spread.
You do a little diagonal spread here. 250, 255. $3 and just under $4. October SEP, cheap shot.
Goldman Sachs, short a covered strangle, 727.30. Net credit $3,600.
SEP.
720, 730. Cost basis is at 728. Would you close the 720 put?
I mean, you're up a couple bucks on the trade, right? They said 36.
Yeah. If the basis is at 728, if you buy back the 720, your basis would now be at 738. And
no, the $36 is the credit, and then they bought the stock at 728. Is what it sounds like. That's what I'm thinking.
Yeah. Well, the stock cost basis is 728, which I assume includes the $3,600. If that's the case, if you buy back the 720, I don't think you can profit on this trade unless you wait all the way to expiration to get all the extrinsic value out of there. But either way, there's still plenty of value in the 720. I don't think you need to do anything here.
Yeah.
But yeah, it's a nice trade into this rally. But yeah, because you have no upside risk, I wouldn't be making any super adjustments here.
Yeah, you've got a lot of extrinsic value left in that position. $2,000 worth or more.
Yeah.
Yeah, you got $2,500.
Yeah. And so it doesn't include the stock basis does not include the credit.
No, so they're long stock at 728, and then they did the strangle on top of it.
Yeah. So your basis is at 690 or something, but still, the 720 still has a lot of premium there, and it's going to hedge your downside break even if you keep it on. But yeah.
Yeah, this is what you want.
It's a good position.
Yeah.
Is selling the guts better than selling a strangle? I mean, when we talk about buying the guts, selling the wings, you are basically buying the near-term cycle, moving it out of the money, and we like to do that when we're moving it out in time, so that we're not paying a big debit to do so. But yeah, that's what you're doing. You're going from like a straddle to a strangle when you move out in time. Meta. Problem child. Ooh. Ironfly, 770 shorts. September. 10 points on the call side and 15 points on the put side.
So slightly skewed to the upside.
Yeah. Net credit is
Probably
726.
so you probably had an iron condor rolled up to this.
Yeah.
Got a little, got a little aggressive and made the put spread a little bit wider. This trade, I mean, it's not going to move all that much until expiration. So I would hold it. I mean, it's a 50-50-ish shot here.
Yeah.
Because you have a lot less risk to the upside above 780. You only have like $2 in change of risk.
Yeah.
Whereas you have $7 of risk on the downside. So I hold.
Yeah. You need a rally here regardless, but not much to do if you've converted to this situation. For a stock with good options markets, you can buy a zebra with 100 delta for 10 to 20% of the underlying. Why not convert all of the long stock holdings to zebras and roll every 21 days?
Miss out on dividends.
Yeah.
Long-term taxation if you're holding these stocks for a long period of time, but
other than that, if you're trading
them
in and out of stocks, then yeah.
Yeah.
The zebra is going to prevent you from getting blown out to the downside when that happens.
yeah, it goes to what we talked about earlier in the morning when we were looking at like the swings in the market based on volatility and just sizing down positions. Going to a zebra is going to use a lot less capital, but give you that same sort of upside exposure. So it's a way to, if you're trading covered calls month to month, using a zebra is going to be, is going to give you a little bit of added leverage with the same sort of position.
Mm-hmm. When a trade's going against you, how much time is enough time to wait it out versus knowing you have no chance?
I wish I knew.
Yeah. It depends on the strategy, I would say.
Yeah. Yep.
So like the micro accrued contract, and it also depends on your size. Like if I'm long a static delta position, my intention is to hold that forever.
Mm-hmm.
So like micro natty gas, micro accrued, I'm not exiting these positions. I'm just holding them forever, regardless of what happens. But I'm trading it small enough to where I can do that. Defined risk positions are kind of similar. Like if you have a credit spread or debit spread that's near max loss, it doesn't really make sense to close it because you can get all that value back if you get the reversal.
Mm-hmm.
The tricky one is like strangles. I think the trickiest one is strangles with risk to the upside. That's the hardest one to do. Like with risk to the downside, if you've traded small enough, you can just take the stock or roll the put.
Yeah.
But if you're taking upside heat on a strangle, that's the most difficult mental problem to figure out.
Yeah.
So that's for me, like I would rather just do my best to not have a lot of upside risk. Because that's like, even if you're bearish or neutral, like still, that's the hardest one to answer because stocks can just continue ripping higher where there's a lot fewer stocks that drop and then don't recover ever.
You just reduce a little bit of delta.
Yeah.
Roll the put up, roll the call down, reduce delta slightly.
So are you saying when you're long or short a future straight out, you'll just roll it until it comes back to a profit for you?
I'm almost never short a future.
Okay.
So, but yes, a long futures contract.
As long as you're size.
Size correct. Yeah.
We've gotten into some pickles.
Yeah.
In the past.
Yeah. But it's all size based.
Yeah.
Like my biggest pickle was Facebook.
Mm-hmm.
When I sold a strangle for earnings and it went from 220 to 130. $6,000 loss in a $25,000 account. Closed it, watched it go from 130 back to 220 a year later. So if I was sized correctly, I wouldn't have been in that strangle, first of all. But if I had a large enough account to hold that position, I would have just held it and it would have been fine. So that's my painful example of sizing was not correct there. But yeah, I think the hardest question to answer is upside risk. Short, undefined risk, upside risk. Downside risk is like For me, it's like, okay, if I've traded small enough, I can just hold this forever. Sometimes it doesn't work though. I've had Under Armour shares for 600 years.
That's why you should just get rid of them.
I'm just gonna keep
let
it
the
now.
bag fly free.
Well, now it's a call option. It's $5, but
True.
that's an example of something that has not worked out over the last couple of years. But, you know,
So that's the real risk, is you're just tying up capital.
Yes.
You know.
Opportunity risk.
Right.
But yeah,
Opportunity cost.
Yeah, totally.
Yeah. Like you
But
have this opportunity cost of literally anything else but Under Armour.
Yeah. But I think I think the IBIT year-long trade has been somewhat eye-opening to me because I've had a strangle on. I've had risk on both sides in this product the whole year, and it's gone up and to the right this year, but I've just been shifting it. So like if IBIT goes up and tests my call side, instead of just rolling the put up, I'm rolling both the put and the call up.
Yeah.
So that's something you could do if you're fearful of upside risk, but you want to have a strangle on to hedge your downside. You could do something like that, where you can just roll the whole thing up and do whatever you can to shift your upside risk to downside risk. That's been a powerful mental thing for me. Amazon. 919, 200 short call, 225. 200 short put, 225 short call. Also have the Jan 2026 195 long call.
Nice.
Plus I own 100 shares.
So it's long, but you test on a call. Roll the call.
Yeah.
It's an easy one. Close out of the put. You close the whole position. You roll out to the 230, 210, 215 if you want to lean a little bit, more neutral here. But yeah, you hit a home run. Or take some of the position off. Close the. If you want to keep the shares, you close the long call and roll the strangle and, roll up the put. If you take the long call off and you roll the strangle and you go to something like the 230, 220, you're buying in 7 or 8 points lower because you have it's a covered strangle now because you're long the stock, and you're collecting another $4 or $5 and you're moving your call $3 or $4 out of the money. So you have $8 or $9 more of upside, and then collecting more, $4 or $5 more of extrinsic value. If you rode this, you rode it any time in the last couple months.
Yeah.
Put this one on. So, a nice trade. I wish I had some of that.
Maybe you could get long. What are you doing? What are you waiting for?
I know. I have some long delta in the Johnny Trader account. I should get some here, but it's all right. What's the deal in our grains?
Grains, I'm still long corn and soybeans, and I mean they've come back here, so it's looking like, I mean they're down today, but over the past 2 weeks since that WASD, we've gone up. So
yeah, I'm still long wheat. I've got the 560, 595 diagonal spread. Long November, short September. So we'll see. But I could roll from the September to the October cycle since it's in the same Z contract. So I've got that going for me. But definitely need some more rally out of this thing. Yeah, what is this trading for? The 595. Huh. Pick up $150 rolling to October. I'll do that in the next week or so, especially if we continue to rally here.
Right.
Rally.
yeah, I mean I have a call spread in soybeans. I'm at 60% of profit, so I'll probably take that off or even roll it 31 days out. So I might roll that one to stay long, and then corn I'm up on, but I'm gonna hold it just a little bit longer for this one.
Just a little tiny little bounce.
Just a tiny bounce. We just need that big green Shrek candle.
There you go.
Anything else you got your eye on, futures wise?
Futures wise, I mean, I'm iron condor for oil. I'm long live cattle, long natty gas, long silver, long the corn, long the soybeans. Other than that, I'm not in any futures positions. I'm long Nvidia. I'm gonna hold it through the earnings. I'm not expecting them to drop that Mikey expects, but
that's why there's a market.
Works. Yeah.
What about copper? We had on this morning on Daily Dose. Apparently, copper is going to be, put as one of the precious metals or something like that in the U.S. Despite the tariff situation that we have, it kind of contradicting in my mind. So I'm not sure how to position this. But do you have any thoughts on copper? I know we've had this insane move. I got caught with an iron condor. Thought I was getting cute into the high implied volatility. That's what happens in things like this. But maybe we're kind of near the lower end of where it's been trading. Is this of any interest to you?
Yeah, I mean, I'm not trading it yet. Every time I've tried to take a trade over the past 2 weeks, the volume at the strikes I want and stuff just isn't there.
Okay.
So I haven't done it. But I mean, we've been making higher lows. It looks like, it's in a decent spot. I think we talked about this a while ago where I said you need a few weeks for price to establish a new range after one of these humongous drops before I really want to get directional. So if I did take a trade, I'd probably do it to the long side right now.
Okay.
But yeah, I'm just not in it yet.
We have a micro copper HG.
Yeah. MHG. I think we traded this.
Yeah, we did, but it's still a big contract.
Yeah, I mean 1/10, but your copper's a huge contract.
Yeah. Yeah.
Oh yeah, we did the call vertical spread. 605 back in the day. Yeah, it could be interesting. Maybe a short put spread.
Take it away.
Damn, these are big.
Yeah.
A 445, 443 is still a $500 spread. 2 100ths is $500. Crazy.
Mm-hmm.
The 445. I think I'll get into this.
Yeah, I mean, the IV rank, you could look at like CPER for a proxy on that. It's like 23.3 right now.
I'm going to get into the 445, 441.
Could look at FCX too.
MLAS, those are all calls, no puts. Same story though. Just roll it out if you want to keep it. You could even roll the 200 out for a couple shekels, but the 195 200 trade is basically done. Your 100 shares against the 225 short call has the most roll credit.
Yeah, if you got them. Okay, so they're calls. So you gotta. So I would. 225. So I'm assuming you want to keep your January calls.
Yeah.
Yeah, you just got to roll up and out, or up and closer at the money. I mean, you got to buy in some of the risk.
Yeah.
If you want to keep it.
Yeah. Yeah, the 200 is preventative.
Yeah, it's
yeah,
30 points in the money.
Yeah. Going forward, if you're trying to keep offense on, you got to roll out and up before it goes deep in the money. Once it goes deep in the money, it's done. Because now you're trying to buy back $3,000 in value, and you can't replace it with extrinsic value.
Yeah.
Recommendations and ETFs to trade oil instead of the futures.
I mean, there's USO.
Yeah.
If you're trying to avoid the drag and drift, maybe you just go to the primary companies like Chevron, BP.
Yeah.
I mean,
Exxon.
XLE.
Yeah. XLE. You could go to like miners. You can do the adjacent products, but straight up oil is going to be difficult.
Yeah.
What's your profit target for a crab trade? For the crab trade? Did you put a new crab trade on?
I don't think I did one today. But just generally speaking, I mean, it's one of those where there's a lot of things that go into it, right? You have time decay, you have exposure to volatility, you have that gamma as well. If you're doing them into earnings, it's going to be a lot more volatile from a P&L perspective. If you're doing them like 60-30, further out in time, they're going to be a lot slower. So I don't put a specific percentage on it, but if I'm doing a 10-point wide, like if it's a $10 wide long spread relative to the short spread being $10 wide, and I'm doing it at $5 or $6 or $7, it trading at $10 is probably the best case scenario, right? Like pinning the short strikes, you have a fully in the money long spread, it's going to trade for somewhere around $10. If I'm buying it at 6 or 7, I'm not looking for the best case. I'd probably look for $100 or $200, but there's a lot of subjectivity to it.
Mm-hmm. Last one here from Harsha. KSS Coles. Long 500 shares, cost basis of 9, earnings tomorrow. Want to protect downside, but also the chance that stock could moon a bit. Well, what you could do is you could do a collar, straight up collar for 3 days, like buy the 13, sell the 15.5 for a 10-cent debit.
Yeah.
That'll cost you $50, but this gives you 80 cents. You have 80 cents of risk to the downside, and you have 2 points of upside profit potential. You could also do something like buying the 13 put and then routing the 14, 15.5 call ratio for 60 cents per contract. But this basically doubles your long stock potential from 14 to 15.5.
Mm-hmm.
So there's things you can do here if you're willing to pay a small debit, but you can also do a straight up collar for a small tiny credit if you do the 12.5, 15.5.
Yeah.
But yeah, that's pretty much it.
Very nice.
Yeah. That's it for us. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader. We're all long micro natty gas, for better or for worse. But guess what? What's the worst going to happen? It goes to 0?
Yeah, I mean.
You think it's not possible, but we've seen it in oil.
We've seen negative oil. That is true. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. I've got Thomas's NVIDIA earnings preview in the YouTube chat. Also have the cherry picks pinned to the top of the YouTube chat if you want to sign up for that for free. It's coming out today. But yeah, stay tuned. We got plenty more content. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
It's option. Jive.
Nicky, we are back, my son, and you know what that means? Sorry, I didn't swallow well. Option jive.
I thought you were holding in a sneeze. Mikey is very obsessed with not holding in sneezes.
Really?
Yeah.
Because your heart stops or something like that? Is that what or is that an urban myth?
I think that's an urban myth, but selling that? No, Katie holds in her sneezes, and mine's like.
I think it's true. I'm gonna give you 100.
I don't think so. I think you just got it, but you got to get it out. I don't know if you hold it in. It's like, don't you feel like unfulfilled? You got to just.
Son, I felt unfulfilled my total life. Are you kidding me?
Oh, I'm so sad. That's horrible.
Does your heart stop when you...
Option jive. Should we do the option jive? We got 10 minutes. We got to get to the opening bell. Come on.
No, the heart does not stop when you sneeze. No. Son of a...
No.
Option jive. Go ahead.
So...
the things you learned here. You learn a lot of things.
I know. Mm-hmm. Increasing exposure, widening wings versus extra contracts. You know the story. What do you think?
I mean, come on. We all know that extra contracts, bad.
Yes.
Yeah.
Yes.
Widen wings, good.
Yes.
But let's go through it.
Cool.
Oof.
No, lots of words. Option trading offers powerful and flexible tools for precisely managing risk. So selling narrow iron condors involves no directional assumptions and offers limited downside risk per trade, making this an appealing starting point on an option selling journey. What a story we're building on that slide. As traders gain confidence in capital, the natural progression is to seek increased exposure to enhance potential returns. There are several ways to increase exposure, including increasing the contract volume or widening the wings. How have these compared? So we're going to be taking a look at a study looking at iron condors in SPY, and we're going to just answer the question of should you up the contracts or widen the wings. It's a question that we get asked multiple times a day, every single day. A very common beginner question. So on the next slide here, we're going to look at the study. So we're looking at using 12 years of volatility data in the SPY options, looking to sell iron condors 45 days before each monthly expiration with shorts at the 20 delta. Let's jump to the next slide here, guys. Sorry about that. So we're looking at pretty typical entry points here. So we're looking at the 20 delta, 45 days out. For every sold contract, we're going to look at the 10 delta and the 15 delta for the wings. So this is kind of going to what we talked about with our SPX trade from Confirm and Send this morning. But this is a pretty typical setup. 2010, 2015 for the deltas on each side. All the positions were closed at 21 days till expiration, and all the trades were assumed to exercise at the mid price. So we examined the results from the course of the study, as well as some of the most extreme years. So we looked at some of the outlier risk as well. What do you think you're going to see here?
Well, I mean, I think you're gonna find that the optimal, and I guess that's the key word to do it, is optimal is going to be going a lot wider with your wings than adding contracts. If that's not the case, then I'm gonna have to get up off this chair and leave, and everything.
We'll have to relearn everything that you've been taught
that's
over
correct.
the last 15 years.
That's correct. Not only the last 15 years, probably the last 40 years, son. I mean, I'm 63. I started trading when I was 21. Yeah, so 42 years. Contracts kills. Now, I did make my bones going big or going home. I mean, that was the way that we always thought, but we didn't realize that the way that we were trading, even with the large size and being so leveraged that we were looking for smaller profits than bigger profits.
Now look at you. One lot Johnny.
It's a schnook.
Yeah,
could have been somebody.
You used to be able to work one day a
now
month.
Look at me, I'm eating egg noodles and ketchup.
Yeah.
Like Keenan.
Oh, God. Oh, man.
Bad.
Ooh, all right. Well,
next one, please.
Let's get to it. So overall, wider trades made more money while enjoying a higher percentage of winners. So you're looking at the SPY Iron Condors, 20 delta and 10 delta, one contract, 20 delta and 15 delta. We're doing two contracts here. You can see the win percentage is going to be higher for the wider wings. You have a higher probability anytime you widen out the spreads. You can see the mean P&L obviously higher, but the one that you have to keep in mind is your CVAR, which is your covariance of risk, is actually lesser than the two contract tighter spread. So the wider spread is going to have a lesser tail risk than your tighter spread. And it's all relative. And we talked about this a little bit yesterday too. It all goes to the fact that where your max risk is going to be much closer at the money with the tighter spreads, multiple contracts, versus the wider spread one time.
Yeah, 100%. I mean, look at the win rate. I mean, I know 4% is significantly different, but let's just make them the same and just go to the P&L. I mean, that's how I judge everything. I mean, you can only be judged by your P&L because when you lose money, nobody helps you pay that bill, and when you make money, everybody's in your pocket looking to spend it. So, $9 versus $8, rounding down and rounding
Didn't
up.
hold it in.
Don't hold it. I got a lot
Don't
of
hold
people
it.
saying
Let
it's
it go.
really bad for you.
Yeah, you got to get it out.
That's the difference there.
Yes.
And the conditional value of risk, obviously.
Yes.
Next slide, please.
So Yes. So the most painful years, so this is looking at like your kind of outlier risk. The most painful years for these positions was in 2022, where the narrow iron condors were able to do
less badly. We don't
less badly.
English is not our first language.
Yes.
When we do here.
I don't know if that's correct. So we're looking at the spy iron condors again. You can see, obviously, this was a tough period of time, but you had bigger tail risk, so you realized a lot of those bigger losses.
Yes, and look at the win rate here. Now you're under 50%. I mean, it's okay when you're managing winners in that 60 some odd percent time of win percentage, but when you're under 50% and the majority of the times, although it might be 60-40 against you, the majority of times you're always behind. It's just a horrible way to trade.
And the reason your CVAR is higher on this one versus the other is because the premium is not linear. So when you have a $5 wide for let's say $2, a $10 wide doesn't trade for exactly $4. You have a distribution of premium that gets lesser as you get further out of the money. So the $1 wide, or the one contract 20-10 delta is going to be wider and have more risk, total risk, than the 2015. So when you're having in the 2015 with two contracts. So when you're seeing tail risk realized, you'll end up having more risk, total risk, on the wider spread, but the probability of realizing that risk is going to be much lesser. So we're looking at kind of the worst period of time. When you take it as a whole, you have less risk on the trade as a whole over a longer period of time.
Very good. Next one, please.
So, and then similarly, in the best years, more contracts made more money. Again, this is if we're isolating the worst and the best, which is obviously very hard to do in real trading, you kind of have to take the whole batch together. You can't. We knew when the best and worst times were coming, it would be a lot easier to trade around those markets. Sure. But when you look at the best time, for the same reason as we outlined with the wider spreads having a higher max loss in the worst times, because there was more max loss possible. Here, you have more potential max profit because, again, you're collecting more premium for those two contract at the money spreads. It's not, or closer at the money spreads. It's not a huge amount, but it is a small amount here, which you could see. But you can see, even in the best times, you have more risk on these tighter spreads, more contracts.
Right, you're looking at the CVAR, the win rate. But now let's go to the P&L, which is what I went to on when it worked for us, and now it's not working for you here. So I would give you this food for thought. When you know it's going to be the best year, do more contracts. So I mean, I don't mind managing 75% winners. I can do that and come out positive. I'm going to be okay. Yeah. When you know it's going to be the best year, that's when you do more contracts. Yeah. If you can't tell when it's going to be the best year, go back to the default and go a little bit wider with your strikes, and that is my takeaway. Sorry.
As Dr. Jim would say, there's always a gimme and a gotcha.
Yes, there is. So, there is. Unfortunately, there always is. Yeah. So I always think that was true in life, but there is. And one more thing, and I think I've said this to you many times when you were a kid. I don't know if you remember or not, but it's the same people on the way up. It's the same people on the way down. So be nice to everybody on the way up, because you're going to meet those same SOBs on the way down. So be nice to everybody on the way up. Be nice to everybody on the way down, because you're going to see them again.
Very nice. That is a takeaway, but we'll get to the takeaways from this segment. When looking to increase exposure, the flexibility of the option market gives us a wide range of choices. In general, widening the wings will increase the percentage of winning trades, and over the past 12 years, using wider trades has been more profitable than simply increasing the quantity of narrow trades, is something that we've always known. In both the best and worst years, however, sticking to narrow iron condors performed better despite the lower win rate. Of course, the caveat there is that you have to know the best and worst years, which we can only do when we start back testing.
That's
right?
correct. That's correct. You can only see it when you look back, or the left
you
side.
say that one was good, this one was bad. We're going to isolate those two. So in an efficient market, there's no such thing as the best trade. As you look to expand your exposure, pick the approach that has performed consistently well with your trading style and aligns with your risk tolerance and strategic goals. Generally speaking, widening out the wings instead of upping the number of contracts, especially when you're dealing with relatively high delta options, 15, 10 delta options. When you're looking at 2 delta options or 5 delta options, then you up the contracts because those are, tail options.
They're tail options to reduce buying power.
You're synthetically naked, so now you can up the contract. You're looking at 15 delta wings, you'll probably widen them to 10.
Exactly. I think you said everything perfect. Then nothing for me to add. You did really well there. Good job out of the team too on a study that looking at a subject we've done before. But you know what? I remember when I first started trading that I couldn't get put call parity for when I first started trading the box. If a call spread.
But you're simple.
I am simple. So using the same strike, if a call spread $5 wide is trading for $2, the put is going to be same strike is going to be called $3. Put call parity, the box has to equal $5. I didn't understand why that was for the longest time, and it took one gentleman to explain it to me in a different way, and then I ended up making my living trading the box for the next 25 years of my trading. So sometimes you have to hear things a little bit differently before you get it. You hear the same thing different ways. It finally clicks. Let's take a quick 90-second break and come back. I hope that clicked for you. Widen those wings. We'll be back in 90 seconds. The opening bell is next. This is Tasty Live. You mean the S&P is down 475. We are back, my son, and even the S&Ps are up $1, Nasdaq's up 3, Russell's up 14, Dow's down 2. Much to do about nothing with volatility, almost unchanged, 17.05 here. So far, holding pattern. I mean, after yesterday's kind of complacent move in the market, although there was a little bit of downside movement to the market, we've really witnessed nothing here today. A lot more action overnight than anything that we've had so far today. What are you thinking?
More chop.
More chop. More chop. Okay.
I think it's going to be like that all day.
$2. Apple's trying to save the market yesterday. That's your lagger. I don't know. I would key on Apple and volatility today and see if we can get a little bit of a run here in the market, one direction or the other. A ding. I heard a ding. What'd you do?
I just closed out some cheapy calls and I hit.
I thought you were going to take your profit in SPX.
No, I routed in order to take $100 out of it. So
you left something.
I put a GTC in.
Yep, you left a resting order.
Yeah, so I put a resting order in at 205. It'd be $100.
Gotcha. So, all right.
It's marked at 235, 240 ish.
Okay.
It's coming about 65 cents.
Okay.
If you want your 10, 15, 20%, you take it right now.
Perfect. That becomes a personal decision, right?
Yes.
All we can do is lead you to water, can't make you drink.
Hey, as long as you stay small, you can take some risk. It's okay.
That's 100% correct. As long as you stay small, you can take some risk, you can take some profits. You're 100% correct. Very good. Let's go to the market measure. Not too much to talk about in this market so far. Not giving us a lot of content.
We've had including
$4
the overnight
range in the E-mini S&Ps?
Yeah, for the E-minis, we opened, around 60. We're at 64.55 close. We opened at 64.60 is what we got here. So up a couple points. We've been between 64.55 and 64.45. It's been 10-point range. Nothing to talk about.
Yep. You're right.
I wish there was.
Tradable 4 or 5 point range, right? You're not going to catch the top. You're not going to catch the bottom. That's really what we've just been chopping around.
I don't know. I talk about it with the team out there. I'm like, nothing. It was worse than when Vol was at 12, 2017-ish time frame, 2016, 2017. Like, I don't want that coming back here. Give us a little.
I don't want it coming back here either.
Ever. So, give me a little pullback, pop some vol, and that's what I want for the market. But
hey, can we talk about just one upcoming event, please?
Sure.
We've got a nice. Well, I think it's probably one of the best shows. I know you might be partial
yes,
to
yes,
something
the
else,
best.
your own, but at work by 11, everybody. We're hitting San Francisco, California. That is correct. Friday, September 5th. The doors open at 8 a.m. We'll go from 8 to 9, where Tom and I will just meet and greet you, and love to hear from you, and talk trading and talk strategies, and talk whatever's on your mind. Love that. The show starts at 9. We trade for about an hour and a half or so, and then we go to a break again, where we come right into the audience and take more questions and everything else like that from you. And we'd love to see you. It's great to, press the flesh and meet people and see how they take to some of the strategies that we'll trade about 40-ish different strategies with different products, which is great. So come out. tastylive.com is where you can sign up. /events is where you can get your tickets. Still room for you. I'd love to see you. Sound
Very
good?
nice. Is it retro Tom trading? Like, is Tom like slinging them? Or is it like current Tom where he's like,
No. It's not about the size of a trade. It's not even
Not
really
the
about
size,
the
but
P&L of the trade.
the risk? That's what I'm talking about. Is he on the tails? Is he like 10 delta this? Like,
No, he's doing them. He's doing them right. He's doing them right. We usually make a couple $100 throughout the show. It's not about the monetary gain. It's really just showing how you can put on a full portfolio in about an hour and a half while you're talking to people with your back to the screen, and maybe make yourself a couple of $1,000s in theta decay per day. It's an interesting show. So come out and see us. We'd love to see you. Anyway, market's unchanged, son.
Yes.
Now volatility down 4 cents, sitting right at 17.
Can you get my SPX here? We're at 225. Do I take it? Do I take the money?
I do. Yep.
I'll try 220.
Good luck to you. Good luck to everybody out
I
there.
got it in at 225. We'll see if we hear a ding throughout this.
I'll be on the lookout.
Cool.
When daily ranges drop.
Market measure sponsored by the CBOE.
This is true, by the CBOE.
Yes.
When daily ranges drop 15-30%, how to adapt. And what they're talking about is volatility contracting here, right? Is that what they mean?
Yeah, I mean, we're looking at ranges in markets as a whole. So when we talk about like getting these big outlier moves, that volatility contracts and things start to not move as much.
Mm-hmm.
So that's what we're going to be looking at.
How to adapt. This is probably one of the hardest pieces, or one of the hardest things to teach somebody is to adapt to market conditions.
I know there's nothing. That's what I'm talking about with volatility. It's like you don't know how great having high implied volatility is until it's gone.
That's right.
And you get those emails. I can't find any trades. Like what are you looking at? There's nothing, out there, and that's because volatility contracts and things don't look as juicy. It doesn't look as interesting to trade them.
Correct. Kind of like when I left you as a football coach and you went on to your high school coach, you didn't realize how great I was until I wasn't there.
Totally. Exactly what I thought. Exactly.
Bada bing, bada bing, bada bing. Put it on the board. Good job out of you.
Yeah, it took a couple bucks.
Very nice.
Nice little lunch money.
Lunch money.
Yeah.
There you go. You're supposed to say, Bat, you can eat today. Now you don't know who you're talking about, though.
No, I can't afford. Hey, $75-$80. That's barely enough for one now. Come on.
You're not kidding.
Yeah, that's like the per diem when you go to these live events. $80.
That's right.
You watch. You keep tally.
So I'm told.
Let's get to it. So daily ranges, what to do when they drop. So with current market volatility conditions, we're noticing the daily ranges in nearly all assets are declining, as seen in today's market, with absolutely no movement in the market as a whole. So let's compare the current average intraday ranges for a variety of products and compare them to the averages earlier this year when markets were much more volatile. So, you have this kind of period of high volatility is what we're going to be looking at versus periods of low volatility, and just see how big that changes is really, kind of the story that we're going to tell here. Obviously, you're going to see a lot tighter ranges currently than we did in the past. So
very good.
So the study, getting to the next slide here, we're looking at the S&P 500, the NASDAQ, the Russell, crude oil, 10-year notes, and the euro. So
So we recorded the daily intraday ranges since January 1st of 2025. So we were looking at just this year's data. I like these kind of studies because they're looking at what we're currently trading in, right? When you look at these longer duration studies, there's a lot that's baked into that. I like to see what we're looking at right now. So this is one that will be pretty interesting. So we're comparing the average intraday ranges from January 1st to August 1st to the average ranges since August 1st. So we're looking at, the last month or so, a little bit less than that versus the rest of the year and just kind of what those average ranges have been. So looking at the S&P 500 first, and we're going to be using the E-mini S&P 500 as the benchmark here. So, that the range for the S&P 500 in totality has been just under 650 points. So average intraday ranges from January to August, 96 points. That's a lot. That's about a little under 1% in either direction for pretty much day to day. That's kind of what your average has been. When we started the year, just below 6,000, I think we were. What were we at?
Yeah, I mean, you're looking at SPX?
No, E-minis.
/ES, which are obviously going to be around the same, but cost to carry.
Yeah, we were at 62-ish, and then we sold off through the beginning of the year.
Correct.
Yeah, we were
say
6,000 started around there.
6,050, whatever, sure.
96-point range, 50 in either direction. It's roughly 1% either direction. That's some volatility. Since then, that's come in about 33%. It's only a 64-point intraday range, which is, today we've got a 33-point intraday range.
That is,
and that includes
not over, but yes,
that includes the overnight session. So
that's right.
You are seeing that that's a lot. You're talking about a lot of a lot tighter of a range. In the market, there's a lot less opportunity.
Sure, the way I look at it,
volatility is opportunity. So you can see it in the chart. Much less movement.
Now, remember, you're looking at the S&P 500 in its totality as opposed to individual stocks. I think the last year you've had a lot more opportunity in individual stocks than you have had. I just mean magnitude of the move than you had in the S&P 500. Go ahead.
Very nice. Next one, NASDAQ. Obviously going to be a much wider range here. 2,600 points has been a range. January to August, 434 points is our average intraday range. This includes the high and low. So this is if you go 200 points to the downside and then finish 200 points to the upside, that would be 400-point range. So you're looking at high to low. It's not necessarily in one direction.
Yeah, if you were looking at a daily chart of the NASDAQ or the S&P,
it's the whole candle.
Yeah, you would see big candles, the first couple of months.
Yeah.
And then the last 3 or 4 months, those candles become a lot tighter, and that's what you've seen really all to the upside. I mean, since April, we've just, stair-stepped our way, higher in the market.
Yes. So that has contracted significantly as well. So 27% is our change in terms of the range that we've had in the NASDAQ, which we use the NASDAQ futures here for this as well. So again, the last month has been a grind. Is really what the story tells you.
Yep.
It's been a grind to the upside. It vol's contracting. It continues to contract. It's been a grind. So that's what we've seen here.
100%.
So getting on to the next one. So we are looking at the Russell. The Russell with a little bit more volatility at periods of time. You can see kind of the spikes here are a lot wider than in the NASDAQ and the E-minis. But you can see the average intraday range. January to August, 48 points. Since the start of August, it's only been 41. So that's come in about 15%. So you can see where the bigger volatility has been is in the NASDAQ and the Russell, which is no surprise. We've watched it, over that last month.
Yeah, no surprise here.
Yep.
No surprise at all. But again, they all kind of mirror each other, right?
Sure.
I mean,
they're all contracting.
They're all
Again,
contracting.
correlations go to 1. So when volatility contracts, everything contracts. All the products, they have less volatility. It's across the board.
Well said.
So getting into crude, so it was a 12-point move in crude. That was our range. and that was in June. That was the biggest, widest range that we had there. So January to August, we had a 2-point move, average intraday range, which is a lot in oil futures. Since then, it's been 1.62 or $1.62. It's come in about 24%. So again, volatility even in crude oil. We've had some craziness recently in crude, has still been, and by craziness, I mean geopolitically, there's been events. And so it's certainly had some volatility, but even so, it's been far less volatile than earlier this year.
So far, my takeaways on all of this is, now's not the time to ramp up. You know what I mean? When volatility is low, now's the time to keep your trading even tighter or smaller than you would have in times of high implied volatility. Again, another study just piggybacking a lot of what we talk about on Tasty Live for the last decade plus.
Yes. Getting on to the next one here. So we've got, or the last one, I should say, the euro. Oh, no, I'm sorry. We're on notes. Oops, my bad. So notes, $2.80 move, 2.8 points here on the 10-year note. Again, even note volatility. Bonds, notes, contracting.
This is going to be a recurring event.
You think the euro is also contracting?
I would say so, son. I mean, fool me once, shame on me. Fool me once, shame on you. Fool me twice, shame on me. So, I mean, I think it's going to be the same. I don't think you're going to find anything that's going to be a little bit different here. I think there's been a kind of a theme throughout today's option.
You get some high volatility, and then you get
This is why we talk about selling implied volatility. I mean, that's another takeaway. You're making a great point here. This is why another reason why we talk about ramping up and selling implied volatility when it gets higher. When it's the scariest is when it's the.
And those opportunities are typically much lesser.
Yeah, you're more. We talk about this, Tom, a lot. I mean, you're more in the
just
doldrum.
call me Tom.
We talk about this a lot when Tom's been on the
Oh,
show.
I thought you said we talk about. Okay.
No.
You do that to me again.
Never. I would never. Volatility is usually in this range bound more than it is. 67% of the time it's in that range bound doing nothing kind of thing. So when you see the opportunity, it's hardest to act, and that's when you have to act. And that's what we've been trying to drill into people's minds for a long time.
Yes. Last one, please.
All four indices are green for I think the second time today. So we'll see what's
going on. E-mini's up 2.
Yes, ever so slightly, yes. The Russell, again, going to this, the Russell being a lot more volatile, up 19, which is almost a 1% move in the market.
It's kind of surprising with bonds so weak.
Yeah, bonds 113.25 continue to sell off. Yep.
Last one, the euro, of course, contracted as well. So we're looking at the biggest ranges in the euro, 34 ticks here, which was in April. We've seen some volatility in the currency space recently. So, that range is a lot closer to what our extremes have been. So not as much vol contraction there, but certainly have seen some of that, throughout.
That's why you hit on currencies yesterday by saying, they have some of the better implied volatilities on the board. And you're seeing it right here. Yes, lower, but not as low relative to the rest of the overall market. So, if you are a commodity trader, you can go that way. I mean, this is your time to shine, I think.
Yes.
That's why the FX guys have been so popular lately, too, which we're going to see on the show again today.
I've been trading the TCFX products nicely.
Nice.
What I love about it is you can get super, super small. The leverage, you get tons of leverage.
Right.
But as long as you stay small, you can hold them. And I just kind of let them go. And
give yourself time to be right.
Yes.
Because the amount of money that you're investing is minimal. I think that's the way you trade currencies.
Yes. And you're taking, like I'm controlling.
It's a boring trade.
It's a boring trade. But you can, if you stay small enough because of the leverage you get, you
could be like a little ATM machine, give you a couple of bucks to get you.
$20, $25, $50. Like I'm not trading my FX positions to make, hundreds, thousands. We're talking about like 50, 20, $25, $50
True
wins.
lunch money.
Lunch money. And then you put them on, you trade them when, currencies get to an extreme, whether it's high or low. Currencies, have that sort of chop to them. There's not like you don't have there's no like, obviously you have risks of currencies, but when you're trading the euro, I don't think the euro is going away.
it's going to be there. So
you bring up a great point, and I think it's been my problem with commodity trading. I think you could say this about FX. You could say this about oil. You could say this about gold. You can say this about just about even bonds. You can say just about any product. Position sizing has to be extremely small and give yourself time to be right in these basically 50-50 shots under.
Yes.
Good point. I think it's been my problem.
You got lots of problems. You just add it to the list. It's all right. So wait, can we go back to the last slide? I forgot about that one. Sorry.
Sure.
So daily ranges are down 15 to 33% across the board. Your position sizing should drop by that same percentage. Is exactly what my dad was saying in terms of right now you're being a little bit more selective with your trades, sizing down. We talked about yesterday buying the wings. That's a way to kind of mitigate that long vol potential, realize vol potential. So, it's exactly what we were just talking about here too, of sizing up or at least allocating more towards trades when volatility is high, reducing size when volatility is low. So the example of position sizing math, keeping it simple. So the old range divided by the new range equals your multiplier. Then try to use the inverse. So we're actually we're quantifying this. So, in terms of the current range, and this is obviously if you're a one lot Johnny, you can only get so small. But if you're trading a little bit in size, trade 2/3 your normal size now versus what we were looking at. And that's just looking at the difference in the range that we've seen. So there's less volatility. Now we're going to do 2/3 of our size in the S&P 500. In NASDAQ, again, 3/4 of your size. In the Russell, 85% of the normal size. So, 0.8%. 3/4 of your size in crude oil, and so on and so forth. And you can kind of look at this as a way to quantify how much smaller you're getting when volatility contracts. And when it contracts, you reduce position sizing proportionally to the risk that you're taking. So just reduce size. Whether it's, and when you guys are talking about reducing size, we don't do this, we're not trying to stick to this as like a hard and fast rule. But, things are less opportunities right now. Maybe you cut contracts by 10, 20, 30%. Take less risk on certain positions that you normally have more risk on. You don't have to, have a perfect exact number.
No.
Do something and change what you're doing.
You're 100%. You have to look at it and do something different. Yes. Otherwise, you're destined to have aggravation. Yes. Nobody wants aggravation. Yep. Good job.
Takeaways, last slide here. So smaller moves require smaller trades, tighter management, and smarter product selection. The percentage still work. The absolute dollars just get smaller. So, you're still and this goes to kind of our SPX discussion, higher volatility, you're wider, you're further away from the stock price, lower volatility, you're closer at the money. The spreads and the trades are relatively the same. It's just relative to where you are on the distribution. With volatility compressed, far out of the money strikes lose value quickly, move strikes closer to capture meaningful premiums, but expect smaller credits overall. Smaller ranges equals hidden leverage. You don't scale down, so prioritize percentage returns, not absolute dollars. And then this kind of goes to what we talked about sizing down some of your positions by some percentage relative to your normal sizing. So not all assets compress equally. As you can see, everything does tend to contract together, not in the same amount, but volatility is low, so volatility in everything is low. When volatility is high, volatility in everything is high. Just kind of the way it goes.
Very correlated. Yes. We had a lot of uncorrelation. We'll show you correlation. Even the S&P is finally catching a little bit of a bid here, and Vanetta PLTR is actually up $1 and change. Now my spread's making money, so.
Oh, wow.
To you. Even the S&P is up $5.50. NASDAQ up 44. Russell up 19, and the Dow up 15. Volatility in by 9 cents, and bonds down 18. Bonds, they're the canary in the coal mine right now, down 17 17 ticks, not really catching a bid here, actually getting a little bit soft.
Down to kind of the lows that we had on Friday. They've basically taken out, or at least taken out the rate cut speculation here.
Yep.
And have kind of gone back to where they were trading at. That's pretty interesting.
Again, that whole 48-hour move. Now, the market hasn't done it yet, but the bonds really have.
Pull back. I mean, you're going to have a full reversal, but you got your little.
Understood. I'm with you. Bitcoin 111.1 also catching a little bit of a bid here after trading under 110,000, 111 and change back over where they kind of closed yesterday on the cash. Let's take a quick 90-second break and come back. What do we got coming up next?
I don't know what to call it. It's kind of a special. It's a special. We're going to have Quinn from the trade desk.
He's very special.
He's a good one. He's a good one. Former research. He was our research intern. Do you remember that?
He was of course. I know his dad too. Sure. His dad was just a customer. Became very into supporting Tasty Trade and Tasty Live, and
gave us his firstborn son. I don't know if Quinn's the firstborn, but gave us
one of his sons.
One of the sons.
Doesn't matter where he was.
So we got that. So we're gonna have Quinn come on for the trade desk. So live from the trade desk. We're also gonna have Glenn, aka G Money, come in from Tasty FX, the money man. We're gonna have Dan from Tasty Crypto, or maybe Ryan. Ryan, is it Ryan?
It's Ryan.
It's Ryan. We're gonna have Ryan again from Tasty Crypto to give us some news in the crypto space. So we are covering everything you can trade on the platform. We're gonna have a little bit of a little sprinkle of that just coming up here in our Tasty Extra.
I love it. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the boys.
It's option.
Nikki, we are back, son. You know what I'm seeing a little bit today? Well, I think is kind of the obvious. You got volatility up slightly. Usually you have volatility a lot lower right after the opening because that's just the way we've been going with the market a little bit higher. You got volatility staying bid. You got even the S&P is really doing nothing. Obviously, the whole market really doing nothing across the board here. Could we have one of those inside days where we have volatility expand a little bit? I'm looking at my own SPY position. And I have pretty much, maybe a flat, maybe even a little bit of short delta in the overall portfolio. And SPY is basically unchanged, and I'm actually down a couple of dollars, meaning that volatility is getting a little bit bid, at least in the indexes from yesterday. So I don't know. Let's see what's going on.
The question is, what quantify vol bid? Are we talking 1%? We talking like 25 ticks, 30? Yeah, I know half a percent. Now I'm saying, what does getting bid mean?
Right.
To us? Not like you're getting to have high volatility.
No.
But maybe it stays where it is.
Maybe it stopped going down for a little bit. No matter what the market does, if the market goes a little bit higher, maybe volatility doesn't go down. If the market goes lower, obviously volatility is going to go a little bit higher. That's what I mean by volatility kind of being bid.
We'll
see what happens. All right, son. Option jive. Let's see what the next research piece looks like.
2 option jives.
Ooh,
is this normal?
Ooh,
we usually have 2 a day.
Only when I was younger. Now I have to take a nap. Gold versus stocks and bonds. The correlation. You'll get that.
Had a lot of Omahas today. This is why they don't let us do this all that.
NASDAQ up 17, catching a little bit of a bid.
All right, so for months now, gold has maintained its position near record highs. Meanwhile, the broader market continues its own upward path, reaching new peaks along the way. So we've seen quite the move in gold. It's been chopping around recently. We're going to look at kind of correlations here of all these products. Everything goes up and to the right over that period of time. You're looking at 20 years here. This is, come on.
Except volatility.
Volatility goes the exact opposite way. You flip this one over, and that's the way volatility.
But you are right. Looking at this from a 20-year bias is a little misleading. But you can see in 2012, I guess, if you wanted to, in that time frame from 08 to 16, where there was a big gap in the market. So there are some times when it gets uncorrelated. And I guess, you know, if you have a longer term view, the way to look at that is there's probably nothing to do now with this correlation, and maybe something to do when it widens out, unless you want to play for that widen out now.
Yep. Let's get to the next slide here. So this raises the question for portfolio management. Is gold still serving its traditional role as a hedge against market downturns, or should we now view it as an equity-like asset with growth potential? Rates coming down, money printer go burr. Is gold
continues to go burr? I mean,
continues to
would
go?
not be a new thing.
I mean, this is America's pastime, printing those dollars. Come on.
Yes.
To answer these questions, we analyzed the relationship between gold and the S&P 500, tracking how their correlation changes through different market conditions. What do you think correlation is going to look like?
I think it's going to be completely random. And unfortunately, through my years of trading, you know, I've looked at bonds versus the market, and you know, we used to look at bonds having an inverse relationship. Now they have basically no relationship to the market, and I think you're going to see the same thing with gold and SPY. Now you will get your gold bugs, you know, that just love it as an asset, and it's worked obviously.
Shout out Slimmy.
Yeah, and Frankie.
Frankie in the chat, he's got, you know, something buried in his backyard.
I've sold gold to Frankie.
Have you?
Yes, like, you know, coins and stuff like that through the years.
You shaved the side of it?
Teeth, like gold.
Gold teeth. You took those from somebody?
Anything. He's a gold bug. So yes. I think you're going to see it being an asset like anything else. The correlation is going to be indifferent, but we'll see.
All right, so let's take a look then. So next slide here. Since the pandemic, we've noticed a new pattern. Gold and the S&P 500 show positive correlation more often than they did before. Not a shock because we've had such high volatility since the pandemic that, you know, everything, you kind of get the correlations go to one sort of fact here that, you know, everything kind of moves in you know, correlated when you have volatility. So yet the actual numbers tell a different story. Currently at a negative 0.25, which is basically uncorrelated for the most part. We talk about high correlations being somewhere above 0.4. This kind of like, you know, a hard story to tell in terms of correlation. With a 5-year average of 0.13, which is basically no correlation, and a trailing 12-month average of 0.12. Again, there's not much correlation here. You can even see it from the correlation chart. You know, sometimes it's positive, sometimes it's negative. If you took this all in a basket, you know, 0.12 basically tells you that there isn't much of a correlation here, which does tell you something, right? Correlation of not having a correlation tells you that you can't rely on gold going up when markets go down or vice versa. So this figure points to minimal correlation between the two assets, which, you know, as we talked about, is, you know, fairly self-explanatory when you look at this.
Well said, and it does tell you something that that there is no correlation. That is a point to take back. You know what's the biggest kind of phenomenon that I'm seeing on this slide is that the team was able to make 5 more slides after this non-correlation to come up with some more information on this option jive. Because if I was the researcher looking at this, I would quit right here.
The boys are good. They
go for another one.
They got good spin.
So let's see how they look at this. Yes.
So the 20-year perspective reveals something interesting, a correlation of exactly 0. And when you go back 20 years, there's going to be so much.
No, I think when you go back 20 years, you'll either see a high correlation or it'll be inversely correlated. Or
it's going to be 0.
Or it's going to be 0. So like I think when you look back, you really get what the correlation is in this product. Like here, you go to volatility. You're going to see times, you know, in a short period of time when volatility is, you know, correlated with the market, meaning it doesn't go down as much as the market when the market goes higher because it reaches a point of no return where, you know, you're going to pay for risk. There's a time when you're going to pay for risk. I mean, I remember when volatility was 9 or 10, it stayed there forever, no matter what the market really did. But when you look at 20 years of volatility always goes lower when the market goes higher. And I think that's what you're finding here in gold and the market. There really is no correlation. Go ahead, I'm sorry.
So we isolated the two, biggest kind of crises here in the last, 20 years or so. We're looking at the 2008 financial crisis, 2020 pandemic. We even saw very low correlations during those times. So it's kind of, short term, maybe you see that sort of flight to quality, but on longer time horizons, the correlation of gold being a safe haven isn't really, there isn't much correlation to that on a long period of time.
Yep, you're definitely right.
So getting on to the next slide here. So these findings challenge common beliefs about gold's hedging capabilities. While it won't reliably move in opposite directions during drawdowns, its independence makes it an excellent diversification tool. So let's jump to the next slide here. So we've identified that there's basically not much of a correlation in gold. Next one we're going to be looking at is bonds. So we're going to look at gold and bonds and see if there's a stronger relationship there than versus, the S&P 500 down 9.
Yeah, you mean the S&P down 9, NASDAQ down 62. Russell's still hanging in there, up 8, and the Dow down 30, but yep.
So jumping over to the next slide here. So in the past 10 years, gold and bonds began moving together more often. This makes sense as investors often group these assets as safe havens during uncertain times. So still with correlations rarely above 0.5, we're looking at weak to moderate relationship at best. Again, in the short term, you might be able to build the story more that, on a big move over a 5 or 10 day time frame, you might have a much higher correlation. But when you widen out this data set, it becomes much more, random.
Yes.
The correlation isn't as
it certainly does. But if you're going to have to pick one of the two, you probably would go to bonds to look for that diversification in your portfolio.
Sure.
I mean, you have a lot more green here than you do in last.
But this is correlation of bonds and gold.
Bond and gold, yes.
Bond and gold usually go in have a stronger correlation than you would think would be a higher negative. You would think that the negative correlation in gold and the S&P 500 would be much higher than it is.
Right.
This correlation is relatively high, but you would also think this would be much higher than what it is. You would think that bonds and gold would have a high, that those are the safe side. S&P 500, NASDAQ, IWM would be the risky side.
Now, you're 100% right. You're right. You're looking at bond and gold here, not bonds in the market.
Yeah.
So I take it back. Yeah, you're 100% correct. So you've got no correlation either one. So where do you hide? Where do you get diversification?
Well, the whole point is that
size is your only diversification, and then strategy, because you could put on positive and negative delta trades with your strategies to diversify your portfolio, which is what we've always talked about since the beginning of Tasty Live, has always been you diversify through strategy. It's so hard to diversify any other way because everything typically moves in the same directions. When they sell assets, and when they buy assets, they buy assets, whatever those are.
Yes, exactly.
Right. Yep. Next slide.
Yes. So across multiple timelines.
And who is the they, by the way?
The shadow hand of the Fed.
That's correct.
The insiders, the Illuminati,
That's right.
Bigfoot. That is they.
That is the they.
That is the they.
And they are powerful.
Yeah.
Go ahead.
Across multiple times. That's a joke.
Yes.
They is just the market. All of us, everybody.
We're all
the things. All the things. Yes, right. We're all taking in the same sort of information and figuring out how to deal with the unknown information that everybody
else knows, that they know.
That they know.
That they know.
They don't know that either.
Right.
Okay? It's always unknown. There's always an unknown. Right. So across multiple time frames, the story remains consistent. Minimal positive correlation. So there's been no huge correlation in either direction. Even the 20-year average sits around sits below 0.20, which is still relatively uncorrelated for the most part. What this shows is clear. Gold moves independently, largely disconnected from major market movements, despite occasional periods of strong alignment. Again, it goes to volatility. Volatility is when you have high volatility, everything tends to go in the same direction. It's going to be in both directions, down, up. You have upside tail volatility as well. You see that in April
when you have the VIX at 30 and the market's ripping, 2, 3, 4%. That's upside volatility, but everything moves in that direction. And same way to the downside. Everything moves to the downside when you have downside volatility. When you have realized volatility that comes inside implied, so like today where nothing's happening, it's all random. Today, markets are down, gold is slightly up, silver's down.
What market you're looking at, right? The Russell and the Dow are up small.
Yeah, the one's up, one's down.
Again, it's uncorrelated.
Gold's up, silver's down, bonds are down, Bitcoin's down. It's a mixed bag. This is an example of, 90% of the time when implied volatility is way higher than realized volatility, which is what we trade for. Some is up, some is down, some is sideways, some is up more than others, some is down more than others.
They start calling it a stock picker's market, son. And then when volatility is low, they say it's a stock picker's market.
Of course.
That's just the way it works.
Yes.
Right?
So, when things are going crazy, it's all kind of one way in both directions. When nothing's really happening, it's all random.
Right.
That's why we do what we do here.
Well said. Well said.
Couple takeaways other than that one. So gold operates independently, with virtually zero correlation to equities, won't protect against market drops reliably, but that independence creates true portfolio diversification. It is something that, has very little correlation, so it has a use, as we talked about.
Yep.
Its correlation with bonds is surprisingly weak during 2008's turmoil. Gold and bonds showed just 0.07 correlation, undermining the idea that gold provides bond-like protection in crisis periods. I think, again, when you zoom out, like in the short term, things you can kind of play into that sort of correlation. In the longer term, it's it's all kind of random.
Absolutely.
When you look at day-to-day stuff.
Good job out of you. Let's take a quick look at the market before we take a break to get to our market measure. Even the S&Ps are down 50 cents. It really has been a nothing burger all day. How is your SPX trade? What is it looking at?
It's come in about 30 cents, marked at like 270, 275.
So
Sosnoff would take this off right now.
So you've got your
himself on the bat, but
so you've got your 10% and you're electing not to take it.
Yeah. Well, like we said, we got a little
bad boy.
Yeah.
NASDAQ down 25 cents, Russell up 11, Dow up 14, volatility up a nickel, and the bonds are down 15. Bitcoin still continues to be weak, 110.5, down a little over 1,000. Some of the market movers to the upside is still Lilly to the upside. APP up 8 and change, Intuit up 8 and change. Boeing, which was only up around 2 or 3 on the opening, is up closer to 4 now. You mentioned AVGO a moment ago. It is up $3 and change. Tesla's up around $1.50 or so. Lulu up $1 and change. On the downside, you're looking at Costco down about $6 and Coin down 4 and change. Robinhood with IBKR going into the S&P 500. Hood is down $2. Let's see what IBKR is doing. Interactive Brokers down 25 cents after being higher this morning pre-market. Let's take a quick choppy market. Even S&P's down 3.5. We'll be back in 90 seconds. We got more Tasty Live with a market measure next. Back in 90 seconds. Tasty Live. Volatility up 10 cents.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
What's one macro risk that people aren't talking about enough right now?
I think we kind of saw it with the tariff sell-off. There's just huge concentration in Mag 7 stocks, all the big tech names. If something happens with those products, you're going to see a massive move to the downside. So I think if you're in products that are, if you're in ETFs that are highly concentrated around a handful of names, and that could be a number of different ETFs, it's always important to check the actual makeup of the ETF you're trading. If you're looking for that kind of concentration, that's fine. But if you're looking for more balance, I would just double check that you're not in one that's super concentrated.
You know, that's a hard question. My answer to something like that is always the unknown. I don't necessarily think that most of the stuff that we pay attention to is stuff that's going to explode the way that we think it is half the time. A lot of it I feel like is kind of unfounded worries. So I don't know, it's a cop-out answer, but I'm just going to say whatever it is, we're not talking about it right now.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Schultz, and this is From Theory to Practice. Welcome to the show today, man. Welcome to the broadcast. Welcome to the Tuesday edition of what it is that we are trying to do. Welcome to the NVIDIA Earnings Eve edition of what it is that we are trying to do. Of course, because we're with Errol for today's assignment on Wednesdays, we are going to be trading earnings today in NVIDIA. So if you would like to light a stack of cash on fire with me on the show today live, then man, you are in the right spot. So thank you guys for being here and being a part of what it is that we do, because it is only because of you all that we can do what we do. So thank you guys so much. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion and communicate with your fellow stacking cash, lighting on fire brethren who are also watching the program, and of course hop into the YouTube chat and communicate with each other. You can ask me questions, and it is indeed a good time had by most. But John, bring us into the market, man. So we got a little something cooking, you know, not too much, but a little something. AMI S&P is up 2. Risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, up 9 on the day. You got the boomers are unched, and you've got the Russell 2000 futures index leading the pack, up 22. It's It's a pretty big move for the rest of the market being essentially unchanged. You've got the Russell actually up 1%. That is a pretty big move indeed. You got bonds down a little bit. You got notes up a little bit. You got oil down to $1.48. You got UB40 down 12. Man, you got the shifties are celebrating, not unlike the Swifties who are celebrating today. I heard that Travis and Taylor got engaged today. I honestly couldn't care less, but I did hear about that through the grapevine because I do not live under a rock. But the Swifties are excited. The shifties are excited with gold up 12 points. And you've got bonds up. Not bonds. British pound up a little bit. Euro up a little bit. You've got volatility futures are down ever so slightly. And then you've got, hold on a second. We've got VIX. If I go to spot volatility, it's actually up 25 cents on the day. And so you've got current volatilities up, future volatility slightly down. They do tend to follow each other. And again, they're different products too. You've got, /VX is a futures product, whereas VIX is kind of, it's whatever the VIX interns want it to be frank with you all. It's an esoteric calculation, a bit of an archaic calculation back from the 40s or the 50s or the 60s or, the 2000s, which is basically the 40s now. That is 2025. And so the VIX calculation, it's a little bit outdated in my humble professional opinion. But nevertheless, we keep coming back to it. If for no other reason, the nostalgia of my first PhD research project being on the VIX, as I've talked about before on the show. And so, all right, so there's your market commentary. It's not too much, but it's a very quiet week this week. Not much going on in the financial world. I mean, we've got, obviously the Labor Day is going to be this weekend, and so we have an extra long weekend. And then next week is going to be, I think, pretty crazy because next week we've got a whole bunch of stuff that hits the tape. I know we have the jobs number that's going to be on the final day of next week. And so before that, I think we even have some other things that might be coming out, like some jolts, and some bolts, right? Some Colts for all my, Indianapolis Colts fans, my Peyton Manning fans. What's really funny? So I saw, I guarantee most of you have already seen this, but I just saw this come through my Twitter feed last night, and it just had me dying laughing. Like every time this comes up, I have to stop and watch it. Do you guys remember? It's so funny. Do you guys remember that Peyton Manning skit on SNL? This was a long time ago, maybe 15 years ago, when he was playing football with those kids out in the yard, right? And it starts off, if you've never seen it, I'm not going to ruin it for you. Google it. I'm sure every single one of you have seen this, but it starts off like it's all wholesome. It's Peyton Manning. It's like it's just playing catch with kids in the yard. And then it takes a completely unexpected turn, and it is downright hilarious. So if you haven't seen this before, give it a Google. Even if you have seen it before, give it a Google anyway, because it'll definitely put a smile on your face. It's just some good funny stuff. But anyway, we've got some numbers coming out after Labor Day, so we'll see if that stuff will potentially shake up the market. And so what I want to do though today is again, we've got a big earnings slate. I believe they're all going to be tomorrow after the bell. Actually, wait. So we've got NVIDIA tomorrow after the bell. We've got CrowdStrike. Right. Obviously, I'm a big CrowdStrike trader. If you've been following the show, you've seen I've never traded CrowdStrike before. So I'm like, hey, today needs to be day number one. So tomorrow after the bell, we've got CrowdStrike. And then Thursday morning before the bell, we have our beloved Best Buy. So we're going to do a little something in each one of those stocks. And then, man, I got to see where you guys are going to take me today in the YouTube chat. Man, look at you guys. I see Andy B's in the house. Ash Finn in the house. Man, Jared Kramer's in the house. Man, look at Emmett, look at Daniel Perkins, Sam L. Man, David Martinez, Scramble. Everything is even in the house. Man, Colonel's in the house. Man, look at you guys. I appreciate you guys so much. MP's in the house. MP saying the Mannings are funny. Yes, Manning cast is great. Yes, I agree with that too. Scramble everything. I saw those comments come in there at the very end. And so, yes, very, very funny stuff. And so, all right, let's go ahead though. So there's not too much going on in the portfolio that needs our attention right now. I mean, everything is pretty much in kind of a, wait and see, kind of set it and forget it type of mode. I mean, Best Buy is looking fine. We're going to do a little bit more in that for earnings on Thursday morning. Obviously we'll do a quick little Chipotle check, and there she blows again, man. Look at that. Chipotle is still in the portfolio. Like it's still there, right? Man, it's almost like we might know what's going on. Like we don't know all that's going on. We may only know about 30% of it, but we know a little something. We know about a B- amount of stuff that's going on in the market. And one of those apparently is this relationship between DTE and assignment. Right now, again, if you're short options, I'll say this now for the 29th time over the course of the last few weeks. Whenever you are short an option, there's always some positive probability that you will take assignment on every single day. Like every single day, there is a positive probability. There is a non-zero probability that you could be assigned on that position. You have to be aware of that. You have to understand what you've signed up for. There it is, only 5 minutes into the show. Right, that is, of course, one of our calling cards. And so you have to understand that, but still also be aware that most of the time that number is very, very small. That probability is actually just barely above zero. And that's essentially what we've seen here with Chipotle. I mean, it's been, just to kind of get the official scorecard, let's bring up the Allison chains here really quick. It's been a while that we've had this trade on, right? I mean, if you look at the chains here, you can see we did this trade on 7/22, right? So Chipotle had earnings on 7/22. We did this trade. Today is 8/26. So we've had this trade for what, 5 weeks? 5 weeks? And it's shot deep in the money, basically on 7/22, right? So, I mean, after the market closes on 7/22, Chipotle crash, boom, bangs, whatever. 7/23, we all come to work, we all open up our platforms, and Chipotle's down 8 points or 10 points or whatever it ended up being. And it essentially hasn't really recovered from that point. So we've been holding this deep in the money short put since then. So for 5 weeks, we've held this position. And I've basically come on the show every day since then. We've done our daily Chipotle check, and I've just said, hey, listen, the likelihood that we get assigned here is very, very low. Again, it's not zero. We could get assigned, and if we are, then we'll go ahead and adjust the protocol from that point. But the likelihood that we are assigned is not a high number. And so it's kind of, it's a bit rewarding, I guess you could say, that we haven't been assigned, because that was the chalk. That was the most likely outcome, and that is indeed what has happened thus far. Now, again, our luck's going to run out at some point. I mean, the crystals in the hourglass are going to dissipate and essentially be gone at some point. I think we can probably make it through this week. I think that given that it's already Tuesday. I mean, the week's basically over now at this point. And so assuming we get through this week, are we going to be so lucky to get through next week? I don't know. I mean, you're getting inside of 21 days now at that point. I think it's a little bit different. It's a little bit of a, kind of different shakeup there on the scene with Chipotle and the deep in the money short put. But I'm not surprised that we've made it this far. I also wouldn't be surprised if we do take assignment this week, because again, we are getting closer and closer to expiration. But there's the daily Chipotle check. And man, I'm super excited too. By the way, I'm getting a new mouse. So I've been complaining about my mouse now for the last few weeks. I mean, it barely works. Like, it only works like 30-40% of the time. It's got about the same track record as my earnings trades, I would say. But I've got a brand new mouse that it's probably here now. Like, it said it was going to arrive between 2 and 6, and it's 2 o'clock now here, at least in Florida. And so it's probably here, or it's going to be here very soon. So I'm very, very excited at this new mouse. And so, man, we're going to have to pour one out for this old mouse here in just a couple of minutes. But Chipotle, there's your check. The rest of the trades, I don't know, man. There's not really anything going on that requires our attention, I don't think. I think we can go ahead and divert our energies now to some earnings trades. We got HIMS, you got IWM, you got Meta, you've got, well, Meta's kind of funny. I will mention Meta really quick. I've gotten a few emails about Meta, because Meta, if you look at, let's see, if I go to, let me go to the chart here of Meta. So this is what, a 2-minute chart? No. Let's do like a daily chart. Let's go back like a few months, like 3 months. Yeah, so you can see that, I mean, so Meta, obviously this was from earnings. So this little gap right here is from earnings. And so it shot up, but then it shot right back down, and it was hanging out right about here, which is, almost, it didn't get quite to 720. I want to say it was maybe 730 on the low or so. And so it looked like, man, our short call spread is going to be potentially in a good spot here. And then, of course, Meta just rallied right back, and now it's 20 points higher. Well, that's a bit of a bummer, of course. That's not what we want to have happen. But a couple of things. So number one, it's not that far away still from where we need it to be. I mean, we're one more, tweet away from this thing being down 30, 40, 50 points. And it ain't going to take much. Like, I mean, we've got the administration trying to do things that I'm pretty sure they're not supposed to do. I'm pretty sure they're not allowed to do it. But, man, they're trying. They're giving it the old college try as of, last night with the Fed governor stuff and all that stuff. Like, I'm pretty sure they can't do that. But, man, he's going to give it a go, and he is going to give it a try. Will we get a couple more like that? Man, Meta's going to be 600. Meta's going to be 625. Like, we are so close we can taste it. But then secondly, it is a defined risk strategy. So don't forget, if it doesn't work, like, it's just not that big of a deal. Like, of course, it's not what we want to have happen. It's not a desirable outcome. But at the same time, this is why you control your size on order entry. This is why it's so important to make sure that your position sizing is in check so that if it doesn't work out, it doesn't completely upset the apple cart and you have to, just totally abandon what it is that you're trying to accomplish. So for Meta here, it's very much a sit tight, do nothing type of scenario, and then we move forward. So, all right, so there's Meta. All right, yeah, let's get into. Let's see here. Let's do some earnings. Okay, so we're gonna do Nvidia, we're gonna do Best Buy, and we're gonna do CrowdStrike. So let's start with Nvidia. So I've been thinking about this a lot. I've been thinking about this a whole lot. So if you've seen the show for any length of time, you know that my current earnings streak, it's basically the opposite of Roman Anthony, right? So like if you watch Roman Anthony play baseball, right, the rookie for the Red Sox and arguably the best player in all of baseball already at 21 years old, he's essentially the greatest baseball player that's ever lived. He does everything well. He does everything well, right? For our earnings trades, we essentially do nothing well. We are a zero tool player when it comes to earnings trades. And so I thought the time has come. If you can't beat them, join them, right? That's what I've been saying now for the last couple of weeks. I feel like that's, a safe play. I feel like that's where my body wants to take me. I feel like that just makes a lot of sense. So of course, that would be playing Nvidia to the upside. You can't beat them, join them. It's the momentum bros. It's the breakout bros. It's all-time highs bros. It's all that stuff. If you can't beat them, join them. You play it to the upside and nobody gets hurt. Okay, but that's what I want to do, right? That's where my body is taking me. So what are we going to do? The time has come, everybody. We are going to fade ourselves. So even though if you can't beat them, join them is the chalk in my view. Even though that is how I want to play this, we got to play it to the downside. The time has come for us to fade ourselves, and the time has come for us to apply the tried, tested, and true George Costanza strategy on our own earnings trades. Now, where does that leave you? I have no idea, right? But in the spirit of survival, right, in the spirit of jungle rules at this point, it's every man, it's every woman for himself. And so we are going to fade our natural instincts, and we're going to play Nvidia to the downside. So let's go in here. Let's go to the trade page. So what I want to do here is I want to do this thing. I want to do this thing. I see people are trolling me on how you say this stock's name. You guys are all getting it all wrong. You're getting it all wrong, right? I don't care what Jensen Huang says. I don't care whatever. It's NVIDIA. It's NUH-video. Oh, you guys want to hear something funny? So here's another little tangent. This is actually going to happen today. So we are going to oh, wait a minute. Can I say this? I don't think I can say this. Actually, I don't think I can say that. So I'll have to wait. But there's a really fun. I gotta put that one in my back pocket, right? But there's a really, really funny thing that you guys are gonna get a big kick out of. Remind me in like 9 weeks or 15 weeks when I can let you guys know more about that. But there's some things happening potentially with me personally that you guys are gonna find to be quite humorous when they see the light of day. But anyway, we'll have to. I didn't mean to tease you guys like that, but I'm glad I stopped myself because I was like, I don't know if I'm supposed to let that one out of the bag. So okay, but. For the time being, it's NVIDIA, right? You guys, I'm trusting you guys to correct the world. I'm trusting you guys. If, you need to be the change you want to see in the world, right? Like you see people doing stuff wrong, you got to do it the right way. Like you see people out there saying NVIDIA, that's not right. It's 100% not right. It's got to be NVIDIA. And you got to emphasize it. Like don't hide behind it. Don't like say it real quick so nobody hears you like NVIDIA. Like they're like, did he just say NVIDIA? Or did he say NVIDIA? No, you got to say it loud and you got to say it proud. It is NVIDIA. So anyway, we're going into NVIDIA here, and I'm thinking, man, I don't think we fade ourselves. We don't have to overthink this. We're going to start with, so this is going to be a two-pronged approach. So I think what we're going to do, we are, of course, going to do an expected move butterfly in the front week. I think that's, the tried and true. I think that's the oatmeal and peanut butter. Like there's no reason to not do that. But I also think that I feel so good about this new George Costanza strategy. And we break this out usually once or twice a year, like when we hit a cold streak that is very similar to this one. But I think that, hold on a second. Man, I even got production trolling me. I got production saying it wrong. Man, you guys got to back me up on this. Everybody's getting it wrong. Everybody's getting it wrong. You guys ever seen that little, like, I don't know if it's a meme or like that photo that's like, you know, you got everybody in line going one way and then you got like the one person in line going the other way. And when you see that photo, like, you know which way you should go. Like, you know which side you should be on, right? The whole world is on the NVIDIA side. You think they're right? They're dead wrong, right? It is NVIDIA. I'm going to put this on my tombstone. I'm going to put it phonetically on my tombstone. It is NUH video. But I appreciate you there, Tasty Live Production, trolling me while I'm trying to do the show. I appreciate that. So, all right, let's see. Let's go into the trade page here. So we're going to do two things. We're going to sell a call spread in the 24-day cycle. This is going to be something that's going to have a slightly higher probability than a butterfly. It can still be a directional trade. I mean, ours is going to be a little bit bearish, but it does give us a little bit more of a strategic edge, let's say, than maybe an expecting move butterfly does. Expecting move butterflies, I think they've been good to us. I think they've, I think we've held our own with the expecting move butterflies. I mean, with SPXs and even some earnings trades here and there, whatever. And so it's been okay. Like, it's been good to us. But I think, the real, bread and butter, again, assuming the bread is gluten-free and the butter is made from oat milk, the real bread and butter is, of course, going to be being strategic. It is going to be, selling premium. It's going to be selling time, selling volatility, playing volatility contraction, like things like that. So I don't really think that we're going to overthink this too much from the standpoint of the base of this strategy is going to be a short call spread in this 24-day cycle. Now, if you wanted to, you could go to October. You could go a little further out if you wanted to. That would be totally fine. But I'm going to choose 24 days to go. It's kind of a middle of the road choice between kind of something closer to 45 days, like a normal trade, and something in maybe like the front week or like the overnight cycle that we sometimes will utilize for, an earnings announcement. So let's see. I want to do, this is what Amelia has for us. She, of course, is my assistant for the show. She does all of my trading analysis. 185, 190. Man, I really like that because just in case we're wrong, which I don't know how we could be, given the fact that we are doing the opposite of what we really want to do. 185, 190 short call spread. We're selling a 185. We're buying a 190. I've got the stock at 181, almost 182. Now, again, I'm doing these today, and the reason I'm doing them today is because, there is no From Theory to Practice on Wednesdays, and so I want to get these on the books, with you all live on the show so we can work through the analysis. You guys can see my strike selection. You guys have time to troll me in real time, which is a very important part of the puzzle, of course. And so if you're gonna do a NVIDIA trade, I would do it tomorrow. I would not do it today. Wait until tomorrow. Wait till just before the close, like anytime between 3 o'clock and 4 o'clock Eastern. So 2 o'clock and 3 o'clock Central. Like, that's going to be fine. That's going to be close enough to the close. You don't have to wait till like the last moment, right before the close. Anytime within the last hour, I think is totally fine. And so I'm going to sell the 185, 190 call spread. And that's going to be the beginning of this strategy. So this will be part number 1 of 2. We're going to risk 3 to make 2, basically. Which is a pretty standard short premium setup here. There's nothing really too surprising about this, like nothing too outrageous about this. Okay, so we got filled for $2. So now what I'm going to do is I'm going to go back into NVIDIA and I'm going to go to the front week. And now we're going to layer on a downside expected move butterfly. So we have essentially sold a call spread in, I don't know, I guess you could call it the back month, but it's really kind of the front month. We've sold a call spread in September, let's just say, for $2. We're going to use those proceeds to help finance the purchase of this butterfly to the downside. And so we are doubling up on the downside. Like, this is a bearish play. This is a bearish times 2 play. And so you have to understand, again, what you're signing up for. There it is for the second time. And we're not even halfway through the show. That's crazy. Or actually, we are about halfway through the show, which is actually even crazier. Man, it goes so fast. You guys have no idea. We're doubling up on the downside. So if the stock does rip, if this thing does go higher, we are potentially going to be, in the hurt locker for an extra day. So you have to understand, like, we are potentially going to be, kind of in the pain cave for an extra minute or 2. And so let's go in here, though. I'm thinking, man, we just buy a 180, sell a couple of 170s, and then buy a 160. Is that about $2? Wow, $1.95. Man, I mean, how much more feng shui can you possibly get We sold the call spread for $2. We're going to buy a butterfly for $2, a little bit less than $2. Man, that's perfect. Like, that is absolutely unequivocally perfect. Not to mention, like, the strikes we're choosing. It's a 180, 170, 160. Like, it's clean. There's no janky strikes. There's no, like, 162 and a halves and things like that. Like, man, this is just clean, and it's nice and tidy. So I like this strategy a lot. 180, 170, 160. So let me delete that circle. Let me push this guy out for, it looks like, $1.95. Because I want to get to Best Buy, and I do want to get to CrowdStrike too, because I was taking a look at that earlier, and I'm like, yeah, that could be an interesting little stock to trade. Well, let's try $2. Oh, filled at $2, man. Look how perfect that is. Look at how perfect this is, guys. So there it is. I mean, take a look at this. We bought the, oh, hold on. I lost my drawing tools. There. And my mouse is ticking. Oh, man, this thing is brutal. Speaking of being in the pain cave. Man, all right. So we sold the call spread for $2. We bought the butterfly for $2. It's perfect, man. It's perfect, right? I mean, yeah, it's just an absolutely perfect fit. So, okay, so there's the video. Let's go to Best Buy real quick, because Best Buy, this is gonna be real quick. So we are gonna keep our 100 shares. We're not gonna do anything with the shares. I'm not gonna sell a call against it. I'm gonna keep the shares. We are going for the P&L Open Bros. We're gonna take them down. We're going to take them down together. We are going to turn this position green. We are not stopping until this thing is green, right? Famous last words. Best Buy still owes us a ton of money, and we are coming for it. So that means we're going to play Best Buy to the upside too, along with our long shares. Now, I'm thinking here, let's just go into, man, this mouse. It is brutal. Let's just go. You got Best Buy at 73, almost 74. Let's just do an at the money vertical. I'm not going to risk a ton, but I wouldn't mind a little something to grease the wheels to the upside in the event that we do get a Best Buy move higher. Like, that would be really, really nice. And so now, of course, if it crash boom bangs and it goes lower, then we're going to be in a really, really bad spot. And the tricky part here is, I mean, my natural inclination is wanting to play this thing higher. So I'm already fading my strategy to fade myself. And so I don't know where that leaves us, but it's probably not good. And so Best Buy at just under 74, let's buy a 72. Let's sell a 76. We're going to pay $1.94. It's an at the money vertical, very, very straight up, very plain vanilla. I was going to go for very Betty Crocker. That seems a bit more comfortable to say here. 72, 76. We buy a 72, we sell a 76, and then that is going to be that. So let's do this for $1.94. I want to move through this kind of quickly just because I want to get this on. I want to get CrowdStrike on, and then I want to get to you all, man. I see you guys in the chats. It looks like you guys might have some B or B plus trolls today. And so you guys are really, I mean, NVIDIA's just getting everybody fired up, man. It's good, though. It's good because I see all the comments, man. I see all the comments. Man, look at you guys. I see the comments. Look at this. Man, I just see it. I mean, man, YouTube's going to think this is quality programming. Again, we know that's not true, but that's what YouTube's going to think. Like, that, how would they think otherwise? They're seeing all the engagement. They're seeing all the activity. They're seeing you guys smash the like button. They're seeing you guys smash the subscribe button if you haven't done it already. And it's like all this smashing. They have no choice but to just push it out to more people. And so that's some good stuff. Let's go to CrowdStrike. So now that we've successfully lit 2 stacks of cash on fire, let's go for 3. So you got CrowdStrike. Although I don't know, the first one we faded ourselves. The second one we followed our natural instincts. And so for this third one, I take no ownership of this at all. This is 100% Amelia's trade. So she gets all the credit if this thing works. Actually, I'll take all the credit if it works. But if it doesn't work, she can have all the blame. So let's go into the 3-day cycle. The thing that's nice about CrowdStrike, it's a $400 stock, right? So again, we're going to do another expecting move butterfly. Again, you got to dance with who brung you. It's like you just got to keep, sticking with what's been working for you. I like the fact that, expecting move butterflies fit so nicely with really high price stocks because you can get nice wide ranges. I mean, you guys saw what happened with SPX, last week, with the Uncle J stuff on Friday. It was really, really nice. We had a pretty wide butterfly. I think it was maybe 30 or maybe 35 points or so. And so that's really, really nice. I see you guys trolling me in the chat, man. I see the Tasty Live crew. I mean, they're on it, man. Like, they are 100% on it. And so, man, it's coming from all angles. Like, Autumn's going to come in here and say, are you talking about NVIDIA? Like, you're not even saying it right. And I'm like, well, shouldn't you be homeschooling our children? Like, shouldn't you be like teaching Penelope or practicing her times tables and stuff? Woman? No, I would never. I would never say that to my wife. Just for the record, I mean, again, it's a zero delta. She sees this or hears this or watches the show. It couldn't be more zero. Like when you look at a trade board, like here, let me show you guys really. I want to do this crowd strike trade, but just look at all these deltas, right? Like you see, like if I go up on the crowd strike chain, like you've got 550 strikes and you've got 600 strikes and you're looking at all this stuff and you're like, man, those are zero delta. Not like this. Those are still some positive number delta. I assure you, the delta that Autumn sees this show or any show over the course of the last 9.5 years is zero. It is zero to the pieth decimal. I promise you. And so anyway, I digress. So let's go ahead and let's get this cross strike trade out. All right. So I'm gonna do it quick. We're gonna play this thing to the is it upside or downside? I think we're playing to the upside. Yeah, Amelia wants to do this guy to the upside. So we're going to 425, 455, 485, bullish expected move butterfly on CrowdStrike for about $6. It's gonna be about 620 or so. That's about 2% of the account. I typically like to lead the expected move butterflies. You know, that's kind of the higher end of the range, but it still is within reason, I should say. So let's push that guy out. All right, perfect. So we got filled. We even got improved to 606. And so I appreciate you guys. I appreciate you guys so much. Let me get to these comments. Man, look at you guys. I see you guys in the chat. Man, for real. I mean, you guys are doing it today. Look at you guys, man. Wow, that's so funny. Miko says at the end, I'm not surprised and delight somebody at the very end that thought I would never get to him. But Miko says, I'm only sad Dr. Jim will never get far enough down the chat to see these comments. Oh, I scan them after the show. If I miss them during the show, because I want to see, I got to make sure you guys are still around the B- range. Like again, plus or minus 1 standard deviation, but I don't want anybody, we don't want any outliers on this show. We don't want any overachievers on the show. I don't even want any underachievers. I need you guys hitting that 80% mark pretty consistently. And so if you're not, then sadly, you're going to get blocked. Like I'm going to need you to kind of fall in line because we're a team, right? There is no I in team. We're all doing this together. But Mikos, I appreciate you so much. And so let me see here. Oh, it's so funny. You guys make me laugh so much. And so let me see here. Let me try to find somebody else to surprise and delight. Scramble Everything says the show is lengthened to 50 minutes. No, that's not it. Oh, what I almost let out of the bag earlier. No, that's not it. I mean, it could happen in the future, but that's not it. That's not it for now. And so, Small Trades Often says, NVIDIA to the moon. Thanks, Dr. Jim. Hey, you're welcome. You're welcome. But you, again, just to be very, very clear, my natural instinct is to play it higher. My natural instinct is to want to play this thing to the upside. So I don't know if that's necessarily good news for you. Like the way I played it right now, like I had a difficult time clicking those buttons. I mean, it's very, very hard. Right? It took me like an extra couple milliseconds to get this thing done. I did not want to play it to the downside. I wanted to go, if you can't beat them, join them. But we did fade ourselves. And so we'll see how it works out. But let me go back to the beginning now. Let's see. Yeah, let's see here. Let me see here. Oh, well, Andrew Cortado in the middle. This is interesting. Hey, Dr. Jim, wondering if doing a synthetic zebra is doable on the VIX. I'd have to really think about that, honestly. I don't know. And so I picked that question out. You would think I would pick questions that I actually know the answer to, but that's not always the case. I picked that out because that's a really interesting question. I don't know the answer. And honestly, I actually don't trade like the straight volatility products. I don't really trade VIX. I don't trade like UVXY or VXX. I don't even really trade like /VX that much. And so I don't trade the direct volatility products. I like to trade volatility indirectly through equity options, futures options, things like that, right? Even outright futures themselves in kind of a weird indirect type of way. And so I don't actually have a lot of experience trading the actual volatility products. I know that the pricing of those products can be, you know, there's some odd things that are happening that you have to really make sure you understand well before you kind of mix it up with those products. Now, it may only be a couple of YouTube videos. It may only be a little bit of Googling. I mean, you can stay in the network. Like you could stay in-house. I mean, I know Mike, Nick, and Katie do some things with Volatility products. And let me think. I think Jamal might even do some things with Volatility products. Obviously, Tom and Tony doing things with Volatility products before. And so you can find resources, inside the network, in-house. But I'm actually not your guy when it comes to Volatility products because it would just kind of be the blind leading the blind in that scenario. And so, but let me go to the beginning now. Wow, the show's almost over, man. That's crazy. That's crazy. We do need to get some more time. We really, really do. Yeah, I don't know if 50 minutes will help us. We need like an hour and a half, man. We need something. And so let's see. Oh, Rancher says, I'll see everyone at Dr. Jim's show. What's going on there, Rancher? I appreciate you, my friend. Ash Finn's in the house. What's going on there, Ash Finn? Thank you, my friend. Thank you for being a part of what it is that we are doing or trying to do. I'm very, very thankful for you, my friend. Thank you. Let's see. Finn West in the house. What's going on there, Finn West? Thank you, too, for being a part of what it is that we're trying to do. Sam L's in the house. So some Taco Tuesday gains, man. Let's go. Extra guac, extra gains. That's right. Especially when you're in full dad bod mode, it's like extra guac is 100% extra gains. Like that's a 1-for-1 relationship. Like the correlation coefficient on those two things, it's +1. It is +1.0. They will move together in lockstep every single time. And so Sam L says, because macros matter even when P&L doesn't. That's right. But I'm telling you, man, we are planting our flag in the ground. We are going for the P&L open bros right there. We're going for them. Right. And so that is why we played Best Buy. We'll see what happens. It's not going to be till Thursday morning. And so, of course, you're not going to want to miss Thursday's show. I mean, you don't want to miss any of our shows, of course. But if you could only see one more show this week, I would watch Thursdays because Friday's a throwaway. Friday's just we're off the reservation. We're doing crazy stuff. And, you could probably get by with not seeing that show. But let's see. David Martinez, I made a put credit spread in IBM, a small one, of course. In your opinion, what should I have done instead? Man, this is a really good question there, David. Let's go to IBM. I mean, potentially nothing different. I mean, the IV rank is only 11, 10.9, so we'll just say 11. That's definitely on the lower end of the range, but right now volatility is low. Like volatility is low, and so there's not as much, to do. Like there's just not as much to do as a premium seller. And so we want to see high volatility. We want to see, elevated implied volatility ranks, which gives us essentially, a little bit of maybe stacking the odds in our favor when it comes to, selling premium, waiting for volatility contraction, things like that. And so 11, it's not my favorite, but I respect the fact that, you want to have your capital working for you. You want to have some things kind of, in motion that are moving you forward towards your, your goals and your objectives. And so I have no issue with, keeping some short premium out there pretty much all the time when it comes to what it is that you're trying to do here. And the thing I like about what you did is you sold a put spread, right? And I talked about this with Tony and Nick yesterday morning with, defined risk hedging. We talked about defined risk strategies as hedging vehicles. But not only that, when you have volatility at essentially not all-time low, but it's very low on the, in its historical range, now's not probably the best time to sell premium with undefined risk. Now, you still might want to do some. It depends on experience level, depends on account size. Like, again, I respect the fact that you might want to have some short puts working for you. You might want to have some short strangles working for you and things like that. But I think right now is probably the time for more defined risk strategies. Even though, if you guys have seen the show, you know that I definitely lean more towards undefined risk being the unlock that that we could all use to get us closer to our financial goals. I think for the average trader, undefined risk is going to be the thing that's going to get them where they're trying to go. I mean, I've said this so many times on the show before. I've spoken with thousands of traders, tens of thousands of traders now. And I would say for 99.999% of them, right? Some are bullish, some are bearish, some are neutral, some are, big account, small, whatever. There's been so many different variables and parameters. The one thing that has connected 99.99% of them has been undefined risk. A heavy emphasis on undefined risk. And that can mean a couple of different things. That can mean they only do undefined risk. I've seen that a lot. I've seen that a ton. That could be either 80-20 undefined risk to defined risk. I've seen that a lot too. Like there's a number of ways that you can slice this guy up. And so David Martinez, I would be, I don't know where you're at when it comes to, outside of this question, but just generally speaking, I think moving, more towards that end objective of being heavier emphasis on undefined risk is a pathway forward through the forest that it would make sense for you to want to be on, in my humble opinion. But now is not necessarily the time to start running down that path, if that makes sense, right? You've got the VIX at 14, whatever. I think defined risk strategies make a lot of sense. So I actually like what you did in IBM, even without kind of knowing, the strikes and things like that. Scramble Everything says, hey, Dr. Jim, I heard you like to trade tickers like Wolf and Wolf. Yes, Wolf with an O and Wolf with a U. Yes, love me some Wolf. How about putting on an earnings trade in Wolf to add to your repertoire? That's crazy. There's a stock called Wolf. Are you being serious? Wolf. It's Petco? Really? Huh. Do they have earnings today? They have earnings tomorrow, which of course for us would be today because there is no show tomorrow. Wow. Okay. Oh, it's a $3 stock. Oh, you almost got me, man. You guys are just leading me into the dumpster again. Like, yeah, I'm not doing it, man. You guys got me with Wolf with an O. But no, man, I only trade Wolf with a U. That's a $9 stock. That thing is a blue chip, right? That it just got added to the Dow, I think, this morning. I saw that come across the wire. I think that was right behind that Manning clip I saw earlier this morning. And so Wolf a $3 stock. Yeah, I'm gonna pass Scramble Everything. I'm gonna let you mix it up with that guy there in the dumpster. And so, but I appreciate you, Scramble Everything. I hope that you know that I do. Daniel Perkins says, as foretold, we still have the CMG put. We do. The short put in Chipotle lives on. The Chipotle check has been passed yet again for now the 30th consecutive day. And so we'll see what tomorrow brings. Samuel says, Doc, NVIDIA earnings, are we printing AI money or just training the model to wreck our P&L? I think we're doing both somehow. I think we're actually doing both of those things. Emmett says, it's time to see the doctor. What's going on there, Emmett? I appreciate you, my friend. I hope that you know that I do. Emmett goes on to say, what's the NVIDIA prescription, Dr. Jim? Again, I want to play to the upside. I'm fading myself, so I'm playing it to the downside. And so what do you do with that? I can't help you, man. Again, this is every man for himself. This is every woman for himself, herself, itself. This is every bot for itself, whatever it is, right? We are all on our own today. Unless, of course, it goes down in flames, then we're all going to have to lament the position together. And so, Rancher, good afternoon, Dr. Jim. And the Gimme Gotcha gang, that's correct. Soul Train's in the house. What's up, Soul Train? Jared says, Dr. Jim, I need that inverse Dr. J play on the video. You got it, man. Like, you got it. I gave you my own inverse. So what you should probably be inversing the inverse. So that puts you back to the upside, which is my original intent on the strategy. There's no way that's going to work. I mean, that's probably how you got to do it, but there's just no way that's going to work. Joe's in the house. What's up there, Joe? Brian Dowdy's in the house. What's up there, Brian? I appreciate you. Andy B's in the house. What's up, Andy B? Ash Finn says, how does a Detroit guy not like the Tigers or the Lions? This is a longer story, but I'll give you guys the synthesized version. I was never really a Tigers fan as a kid. I just never really got into them. I mean, Cecil Fielder, Rob Deere. I mean, I remember all those guys. Lou Whitaker, of course, when I was a kid, but I never really got into them. And so then when I was in college, Pedro was in his prime. I loved watching him pitch, became a Red Sox fan, and that's all that. When I was a kid, though, I was a huge Lions fan. Huge Lions fan. I mean, Barry Sanders, like, the whole city was captivated by Barry Sanders, obviously. Well, then when I was like, I don't know, like 11 or 10, like right in like the prime of my, my little boyhood, right? Barry retired. He just up and left. He just up and left. And so that like shook the whole city. It shook me too. And I'm like, man, I'm done with this team. And a lot of my friends stuck with him, but I'm like, I can't do it anymore. And so I was also a huge Dan Marino fan. And so if I have to pick a football team, my team would be the Dolphins. But again, I mean, check back with me in like week 4 because I'm going to jump on the bandwagon. I'm going to jump on the bandwagon to, whoever's taking us down to Titletown. And so let's see, small trades offering, Dr. Jim, to save us from the boredom of this market. It is pretty boring. I agree. It has been, man, today's been brutal. Today's been a brutal one. Not a ton. I mean, last night was exciting. When the news dropped about the Trump, like Cook stuff, I was like, wow, the market's really moving. Like I had no idea what was going on. And then I kind of backed into it later and said, oh, okay, so that's what's going on. All those kinds of things. So I assumed that today was going to be quite active. I assumed that today was going to be, all right, this might be a little crazy here this morning. And it's been super quiet. Like very, very quiet. Like maybe a little bit of back and forth, but really nothing to write home about. And so Joel James says, Dr. Jim, please play no video. My man's got it. Like he's clear with the concept. to the downside because I want to play it bullish. Well, there you go. I played it to the downside, which is a fade of myself. And so I don't know what you should do. Andrew Cortado in the house. Sergio's in the house. Dr. Jim, our daily vitamin dose. Yes, there you go. I don't know about all that, but I'll take it, man. Samuel says, Doc, Williams Sonoma earnings tomorrow. Are we flipping profits like pancakes or getting sauteed? Williams Sonoma? I don't even know what the ticker is for Williams Sonoma. Williams WSM? Williams Sonoma. Man, you know you have fallen on hard times when you're like, what's going on in Williams Sonoma? Let me do a little something in a little WSL. Yeah, I'm going to pass on Williams Sonoma. Are they tomorrow morning, though? Wow, they're in the morning. Oh, that would be fun. Hang on. Maybe I'm not going to pass. I don't know there, Sam L. You really came through with Palo Alto. I think we still have that on, but it's doing pretty well. Interesting. Wait a minute. This is so weird. Are you guys seeing what I'm seeing? I've never seen this before. Hold on. Look at this. Is that expected move asymmetric to you guys? Look at that. Are my eyes just, I mean, my eyes have been definitely playing tricks on me. That looks super asymmetric. Now, we have to kind of scale it, of course, because the strike differential, but look at that. So you've got the stock at 196, right? The expected move on the downside takes me down to about 175. Oh, no, it's the scaling on the strikes. No, it's symmetric. It's symmetric. So it looks off. Like if you look at the copper strip, you can see that it's clear. It clearly looks like there's a greater chance to the downside than the upside, but that's just because the strikes change when you get above 200. So, man, I thought we had something there. I thought we found a glitch in the matrix that we were going to be able to exploit. But it looks like, man, is the universe trying to tell us something here? That we should play this thing to the downside? Because there's a greater expected move to the downside? I mean, there isn't. It's just a strike change that's really happening. But I don't know. I think we should not necessarily look a gift horse, i.e. Trojan horse, in the mouth. And let's go ahead and let's play this thing to the downside. Yeah, I don't know. Maybe we buy a 200, sell a 195, or even buy a 200, sell a 190. Yeah, I think maybe, well, let's buy. So I'm going to buy a 195 and sell a 190. So let's play this thing to the downside. This is Sam L's trade. Let me write this down. Williams Sonoma. I didn't even know they were still in business. Sam L. All right, got it. So 195, 190, just nothing crazy. Just something a little fun for the morning. There you go. Got filled for 245. So thank you there, Sam L. And let's see, where am I at? Andrew Cortado, synthetic zebra. I saw that earlier. Are there any gotchas with doing that? Yeah, I don't know. I'm not sure. Probably because there's gotchas with everything. But I'm not well versed enough in the volatility product specifically to be able to comment on that one way or another. And then Colonel says, Dr. Jim, is it time to take Chipotle off of life support? No, it is not time yet. We have to see this thing through to the end. And so remember, we're okay taking the shares. At least I'm okay taking the shares. You've got to do whatever you feel is best. But I'm going to take the shares if that's what it comes to. And I'm actually just kind of curious now to see how long we can run this thing. Since, the end objective here, the end game is just taking the shares anyway. I don't really feel like I'm in a huge hurry to take this guy off right now. Oh, but I see you guys talking about the Manning thing, talking about how it's it was so funny. Yes, I totally agree. But guys, it's time to go. I'm totally out of time. I got to get you guys to Jamal, but I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, shape, or form, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Hey, what's going on, everybody? Apple is at risk of becoming outdated, at least the Siri part is. And so they need a little AI component, and they're looking around a little bit. We'll talk about what the deal is there. Another thing about Apple is they have set a date for a new products release, September 9th. Is it going to be anything interesting, or is it just the same old, same old? We'll talk about it. Finally, NVIDIA has earnings tomorrow. It's not coming up yet. There's a lot of other things that you can play besides NVIDIA. As a matter of fact, those might be a little bit more interesting, but we'll talk about what expected move is looking like and what other plays you can make on NVIDIA earnings, which is sure to probably be a big moment in market. So we'll talk about those three things and more. Look around at a couple of other trades. I got a couple of things I'm eyeing up. I wonder what you guys think about it. So I'll discuss that with you. And take a look at my portfolio as usual. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade, and I'm your host, Jamal Chandler. My youngest son's birthday is coming up on Saturday. And you know what he asked for? He asked for two things that he really cares about. One, it's really three, but he's already knows he's getting that. He's getting a phone. Like he's had a phone for a while, but not like an iPhone. So we may look. I got three kids. We probably made a mistake with the first two, giving them phones a little bit early. Most parents will tell you usually they're getting their kid a phone to kind of give their kid a little bit of freedom and the parent a little bit of freedom, right? Because you want to be able to contact them on the times that they're not at the house. So with our oldest, we gave it to him when he was 10 years old. That was 5th grade for him. I will say, in my defense, at the time, social media was not what it is now. Like Instagram and things like that. I mean, you hear all these things now about kids and Instagram and all of that, and it was not what it was now. And so we had to deal with, that and DMs and just all of these different things that, is kind of commonplace now. It was happening at the time with our oldest too. So with our youngest, we deliberately did not get him a phone with social media and things like that. For the longest time, he had like a watch. It wasn't even an Apple Watch. It was like a Gab. If you ever heard of the Gab watches and phones, we went with that line of products. So he had a Gab watch. We got him a Gab phone about a year ago, I think. And he's had that. But now we're about to get him an iPhone. So that's one of the things he's getting. But he's already known about that one for a while. The other thing he asked about recently was a video game, of course. If he's my kid, if he's going to be into video games. He wants the NBA 2K26. So we're going to get that. That actually comes out this week, I think, within the next week here. And then the other thing was shoes, which again, he's my kid. He wants some Jordan 4s. Cool, we got you, bro. Like I got you on the Jordan 4s. He's going to get some Jordan 4s. I will say those things have gone up in price. Look, are shoes like houses or something? I mean, the same shoes that I'm getting him cost at least $50 more than they did when I got them like a year ago. I mean, it's crazy. And that was just a year, let alone like 5 years ago. These Jordans, it's like you really can buy them and just keep them in a box probably forever, and they're probably going to cost more. How do they continue to appreciate in value? And the truth is, look, I like Jordans as much as anybody. As a matter of fact, I'm wearing some today. I'm wearing the Jordan Force. Actually, yeah, I am. But I tell you, I don't know how they just continue to go up in price over time. It's kind of crazy. I mean, it really is an appreciating asset somehow or another. So those are the things we're getting him for his birthday. It's going to be cool. He's turning 13. You only turn 13 once, right? It's cool. Let's go to the slides. Let's talk a little bit about what we're seeing in today's market. It's still kind of quiet in these markets, but there seems to be things trading, and that's the difference in a quiet market sometimes. At least there's a different things trading and a few things to do here. I do want to say, I as much as I'm interested in a few trades, I don't want to get caught up and sort of, last week I did a couple of trades that I probably shouldn't have done, and it certainly hurt me come Friday. I basically ended up flat on a day when the market was up 100 points, and I have long deltas. That's not where you want to be. But, no, trust me, half unlit. I'm using StockX. That's what I'm saying. That's how I know from where I bought them a year ago, they are even more expensive. It's ridiculous. It's ridiculous. Anyway, yeah. So Apple is trying to get an AI component to go along with Siri. I mean, they're basically being being left in the dust, basically. And I think that's one of the reasons why the stock has been kind of stagnant, right? So there's talks of them buying AI startup Mistral and possibly Perplexity. Remember, Perplexity was the one that made this. I think it's worth $18 billion, but they made this $35 billion bid recently for Google Chrome. So Perplexity has been out there. A lot of people know about it. It's one to keep an eye on. But if they do this, maybe this is one of the things that's going to take them to the next step. It almost seems like Apple is being left in the dust a little bit on the whole AI thing. They I don't know. I think they're still trying to figure out how they want to participate in it. But this could be one of those things once they get that into Siri. And again, in a way, it seems as though we're all starting to sort of use a lot more AI stuff, right? From day to day, whether you're writing emails or all these other different things. It really does help. It makes you not look like an idiot, too, at times. But they definitely have some wood to chop here. This is something that they're going to do. And if these are going to be the things, this might be one of the reasons maybe it's worthwhile getting long Apple once again. I really haven't had it in a while, but I've been looking at it. And look, you guys know I play things for moves, not only just for sale. When there's vol for sale, I'm certainly down to sell vol. When there's things when vol is low, I'm certainly looking at opportunities, maybe directionally. This might be one of them. It might be one of those times. So we'll see. They're also holding their product event again. I think this around the same time last year. On September 9th, they're going to announce new products. iPhone 17, I think, is already the current. No, that's not the current version. I think they're coming out with a newer iPhone, right? I mean, what are we on? We're on 16. Yeah, we're on 16. So that's going to be their date to release 17, and then probably, I'm sure there's going to be. Maybe they announce this idea with what they're going to do with this new Siri. They've always had the Apple Intelligence, right? Like that's been the thing on the last phone. It wasn't as good as we all learned about. And so now I think they're going to try to figure out maybe how to integrate some of these new AI things along with it. Of course, they're going to have more headphones. You know that. Probably a couple of iPads as well. Maybe a newer iPad, I'm sure. But it's something to pay attention to vol-wise. I think it's I haven't seen really much of a change in the vol. There's a little bit of a bid to that vol for that week of the products. You know how it goes, though. Usually they kind of run into the event and then sort of fade after that. So we might just end up playing it long, heading into the event, and then get rid of it maybe before the event, kind of buy the rumor, sell the news. You know what I mean? Finally, speaking of news, NVIDIA has earnings coming up on Wednesday after the close. It's the largest stock in the stock market right now, right? It's one of the biggest names being mentioned, of course, because its connections to AI and the chips that it's using. It's also in the crosshairs of the U.S. and China kind of tariff war, if you will, going on right now. Not long ago, we heard how they were willing to give up 15% of their revenue, NVIDIA that is. They're willing to give up 15% of their China revenue to the U.S. in exchange for being able to sell their H2O chips there, right? But then China backed off and said, well, we don't necessarily know if we want those chips. They're a little bit worried about security. By the way, China is like 13% of NVIDIA's sales. So now you have a standoff. Does China want the chips that they're going to create? Because they're going to create some new chips for China specifically. Does China even want those chips? And if so, then when they do, they're going to have to sort of give some of that back to the U.S. And is there tariffs on it? We just really don't know. So I think that's something that's going to be discussed in their earnings. You notice that it's not exactly bid as far as earnings, the vol that is. And matter of fact, the option implied move is about 6%, and that's lower than the long-term average, at least over the last 12 quarters. The average is 7.7% move, along with, and that's, I'm sorry, there is right now the option implied move is 6%. That is lower than the average option implied move over the last 12 quarters of 7.7%. And juxtapose that to what it's actually moved on average over the last 12 quarters, which is about 7%. So 7% seems to be that number. What are we going to get? What direction? Of course, nobody really knows. But I'm already long. I mean, I'm long the NASDAQ. I have a long call spread in the NASDAQ /NQ actually for the end of October. So I'm not playing it per se, but there's a lot of other ways we can play it, and we'll look at it when we get to the platform. Leftovers. Where are cars that are sold in America manufactured at? Let's move to the next slide. Andrew Cortado, that's right. Buy gold and buy Jordans. Buy gold Jordans if possible. Brandon's on it. You know what I mean? Buy some gold Jordans. That probably ends up working, somehow or another, I guess. Store your gold bars in your Jordan collection. Yeah, exactly, Brandon. Is that going to be a foldable one, the 17? I hope not. Do we really need foldable phones again? I will say I did like the Motorola StarTech. That was a good foldable phone. I never had that one. I always wanted it. But yeah, I did. I was always interested in that. This is a slide showing where cars that are sold in the U.S., where are they manufactured, right? Tesla, believe it or not, is 100% manufactured in the U.S. Fords are about 75% are manufactured in the U.S. Canada and Mexico actually have always done a lot of auto stuff, and I don't know how many people know that, particularly Mexico too. There's a lot of manufacturing for U.S. autos in Canada and Mexico facilities, and that's what was one of the big things early on. You noticed how those currencies reacted to the tariff stuff, Canada and Mexico, because of this business. We do a lot of business with them, I mean, for sure, over there, particularly on the car side. Stellantis looks like about 52% of their production is done in the U.S., and looks like about, what is that, 52 to about 40%, it looks like, done in Canada and Mexico. Nissan, close to a little more than 50% is done in the U.S. You would imagine that Canada and Mexico is looks like about maybe 30%, and then the other might be Japan. I'm not really sure. GM, same as GM and Nissan, looks like it's just about the same, if you will. Toyota, U.S. is less than 50%, and more than 50% is other and Canada and Mexico. Again, probably some Japan stuff going on there. Hyundai and Kia, most of their production is done in other places. I'm guessing that's Asia. I'm not really sure. Not much is done in the U.S. at all. Matter of fact, looks like maybe 30%. And Volkswagen, of course, there's a decent amount done in Canada and Mexico, and then there's other, which is likely Germany, not really sure. But again, not a whole lot of production for Volkswagen is done in the U.S. So kind of fascinating, if you will. Yeah, I mean, 1/4 of Ford's and 1/3 of GM's cars are sold in the U.S., and they were imported from America's neighbors in 2024, something else. Let's move to the next slide. quick look at volatility. We've been in contango for many weeks now. I need to start pulling out some numbers to see how long we've been. I think we were in, I don't remember when we were backwardation. Was it the beginning of July? I forget now. It's been a minute. Let me look at the VIX chart. But we've been in a very calm market for quite some time now here, I would say. And you know what? It's been a good thing. It's been a good thing. Actually, it's been a very good thing. I think sometime maybe. I don't think it was May. It must have been sometime in like late April. Might have been the last time we were in backwardation. So things have been quiet for a while. We are the bottom line here, so we are really in contango. Things are very quiet. And they seem to be quiet for a while. Now, everybody's gotten used to the idea of tariffs. Market doesn't freak out when we mention it. Even rates, right? We have, for a while there, for the last couple of years, 10-year yield goes above 4.5%. Markets freak out. It's come off of 4.5% over the last few months here, and so markets are staying calm with regard to that too. When you look at the difference between September VIX and October VIX, it is a full 2.2 points. That's wild. I mean, VIX has really just kind of collapsed here more recently. Matter of fact, I saw something today. It's the 20. It is the. This is one of the top 20 collapses in VIX over a 20-week period. Something else. That's a very finite period, but whatever. Let's move to the next slide. So speaking of rates, this is the Fed's funds forward curve for the next year. And you saw what happened on Friday. Basically, at Jackson Hole, Powell essentially capitulated on the idea of holding rates steady. So it looks like we're probably going to get a rate cut at the very next meeting, and who knows, maybe we get two by the end of the year. I'm not sure yet. Markets seem to possibly think so. Right now, the effective rate is 4.33, right? Basically, 4.25 to 4.5. You could say that there's a rate cut coming in September, so it's expecting by the time we get to October, that will be one rate cut. You figure 50 basis points gets us. I mean, this is what, August, September, October, November, December. I mean, by December, it's expecting basically two rate cuts. That's what the market is pricing in currently. So I guess we'll just have to wait and see, won't we? But that's essentially what it's saying. And maybe by next February, we get another cut. We'll see, though. And maybe by a year from now, we are basically a full 100 basis points of cuts. Maybe 125, but definitely possibly 4 by a year from now. So that's what's being priced in right now. Who knows what actually happens? Let's move to the next slide. So hold off on the big purchases, I guess, is really the moral of the story here. If you're looking to buy a car, maybe wait till the end of the year. Rates might just be lower. Might be a good time. This is the ratio of tech to financials. That just was kind of weird. We all do tech. We all talk about tech. We haven't talked about financials a whole lot. I don't know the last time I've traded financials. But, yeah, this ratio is really kind of out of whack when you look at it, right? January 2000, we know what was going on then. .com, things have calmed down a whole lot. Even in 2008, this ratio jumped back up, which is interesting to me because tech was not a large part. It was really the financials, but what really happened is the financials eventually tanked, right? And that's why this ratio jumped above 2. And it's basically held above 2 since then and has not let up and has only even gotten crazier since the pandemic started because obviously the pandemic brought forth a lot of tech things that we wouldn't have normally probably done so quickly. How has it changed? That's what you really got to look back. When you look at this tech boom, this AI boom, all this stuff, really kind of started with the pandemic. Let's move to the last slide. So for earnings, we got Okta, we got MDB. What is that MDB? Where is that stock? I think they had a bad earnings not too long ago, right? Or something happened. I don't remember what was the news. Something happened in March. We got Box, we got PVH, we got a few more retail names and Kohl's and Abercrombie. Abercrombie just became like the official something partner of the NFL. Williams-Sonoma, you got RY, and you got Smuckers. Additional 25% tariffs on India begin on Wednesday. That's going to bring the total levy up to 50%. We also got GDP on Thursday. for the most part, it's like, who cares about GDP? I'm just curious to know how much it affects consumers. Consumer spending is 2/3 of it. The de minimis exception ends on Friday. There was no tariffs on things that were under $800. That is going to kick in starting on Friday, and then we got core PCE on Friday. How about it? More tariff stuff coming at a time when we got an inflation report. So it's almost like you can just kick out this PCE report. Who cares? It is what it is. I mean, essentially, number of SP 500 stocks above the 50-day moving average, 327, same as yesterday. Let's move to the platform. Essentially, Powell capitulated because they're worried about the job market. I mean, that's essentially what happens, right? So, it's not even so much about inflation anymore, right? Who owns Jaguar? I don't know. I thought Ford used to own it at one point in time. They must have moved that thing around. Yeah, looks like Tata Motors owns it. So, looking around here, let's look at the couple of earnings. Like I said, I have no desire really to play NVIDIA since I'm already long. Like I said, I'm long an NQ call spread. And out here, October 31, 25K, 25,500. I'm along that. NVIDIA, like we said, is I don't know. Is it going to 200 from here? I feel like a lot of times when stocks are already on their highs, it's tough to sort of play them for a directional move to the upside, right? It's tough. And certainly I want it to go up because I'm long NASDAQ. Going down wouldn't be good for me. But here's some of the other things. I was looking at this. SMH, of course, and it looks just like it, as you can see, 80% correlation to NVIDIA. XLK looks the same also, 72% correlation to NVIDIA. Both of these, vol is low because vol is low in NVIDIA. When the vol is low in ETF because the components vol is low, and so most of these aren't high. AMD, obviously, high correlation as well, 65% correlation. Lam Research, LRCX, pretty high correlation, about 60%, right? 62% correlation on that one. All of these are sitting on highs as of right now, though. It's hard to do anything with that. Qs, of course, high correlation, and AMAT, high correlation. So my point is you can play these. AMAT has a 52% correlation. You can play these if you want. If you're looking for a move, you don't necessarily have to play NVIDIA because there is going to be somewhat of a vol crush, right? It's not, again, it's a 20 IVR. So, for example, September vol might come into 47. Well, right now it's 47. It could come into 38, maybe 39. I'm not even sure what flat vol is in NVIDIA. Let's see. Let's go out to here. I think flat vol is about a 40, 39, 40, something like that. Going further out, 43 and 37. I don't know why these don't line up. It's so weird. This almost looks like what something would be if it was hard to borrow, where the calls bid are a lot more. It's the opposite of hard to borrow. Usually when hard to borrow names, the puts vol is a lot more bid than the call vol, but it doesn't seem to be the case here. It's just kind of weird. But anyway, you can look at a lot of those names. SMH, like I said, 80% correlation. XLK, 72% correlation. AMD, 65% correlation. Obviously Qs, you can play those well. Or if you do have NVIDIA names on, NVIDIA plays on, you can use it, those things to hedge, if you will. You could do other things with it, other side, take the other side of it if you want. These earnings I mentioned that we have, who did I say? Okta is one. This is one where I don't really know what they do in the they're like an IT, I think, company. Big move here. That was last earnings. Not good. Is it not going to be good again? Maybe. Maybe not. What do we got for expected moves here? Wow, that's an expected move and a half. $10, huh? I'm going to play this one to the downside. Let's do the 80 strike. Let's see if it moves $10 and change. Very cheap to put that on. Let's so cheap. I'm going to do 2 of those. Why not? 35. I was going to pay 35. And then we'll do down to the 75s too. How about that? Matter of fact, can I do, you know what? Hold on. Activity, cancel. Sometimes it's good to go a little bit further. Let's see, let's go with regular September, and delete that. Regular September, did I say the 80 strike? 80, yeah, let's do that. I'm gonna still do 2. Well, no. Let's do 2 of these on the regular 80 strike. Yeah, why not? Try and get 2 of those off. And then I'm gonna try and do the 75s as well. We're gonna go out to regular September because it's actually cheap enough to do. 2 of these for 70. Watch these get filled and the others don't. Okay, so we're waiting on those. We're gonna do some downside in Okta. I don't know, it didn't look good on the last earnings. It's one of the few times we're gonna play to the opposite direction. MDB, you like it when you're about to play earnings and there's like these big gaps to fill. I don't even remember what this company does. Usually I don't care, but I feel like, you know, some of these now, it's interesting to know if they're AI related, that could possibly lead to what goes on with them. Software company that develops and provides commercial support for the, more software stuff, huh? Let's see. I feel like software has been struggling more recently in their earnings plays. You know what I mean? This is another one that I would probably play to the downside. I don't think these are quite as cheap though. What's the expected move here? $34. That gets you down to like 180. Let's see if this is. See, this one I wouldn't go regular SEP because I imagine those 180s. Yeah, $3, $6. That would be a $3 trade. Let's see, the 180 kind here. Buy that. Sell that. Is that really right? 97 cents? Okay, we like that. We can do that. Yeah, I'll do that. Whoa, it's all over the place. 95. Let's just pay $1. Give it to me. We're set to go there. And, you know, for good measure, I will do a 175. Again, I always do multiple strikes because if this thing really makes a big move, it's going to blow through my strikes, and there's not much I can do about that. So, follow feed, yes. Push the follow feed, yes. All right. These are earnings plays. We're in there. Let's see, what else? There was, you know, not that I'm gonna play any of these other ones. I know there's been a lot of earnings that I've been playing recently, but it's so cheap to play them and just play sort of this, you know, these calendars that I don't feel like I'm, you know, losing a whole lot when I do, even if some of them don't work and go my way. Those are probably all the ones I'm gonna play in that situation. I did see CrowdStrike has earnings. I think it has earnings tomorrow after the close. There's no engineering the trade on Wednesdays, so this is an early look. I typically don't play things that's early, but this is probably one I would be interested in playing. This does have a gap to fill. I'm gonna play this to the upside. CrowdStrike is a defense name, right? Crowd. Oh, you know also too, what's also going to be fascinating for NVIDIA earnings is CoreWeave. That is a name that has a lot to gain and lose based on how NVIDIA does on earnings, so you got to keep an eye on that one. So AI native secure. I am going to play CrowdStrike for short, $33 move. Look, maybe it gets up to 500, so maybe we play for the 500 print. I think I'm going to play like maybe the 450 kind and maybe the 500, and I will put them in the follow trader page. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. See you later.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hey everybody, Tim Knight here, and it is the time for the wonderful world of charts. Okay, well, 25 hours to go, I guess, till we get the NVIDIA news. Hopefully it's not going to be an anticlimax, that it barely budges or something like that. I hate to make too much of it, but it seems like a big deal. At the moment, the market's fairly green today. A little bit of a bounce back from yesterday. ES, NQ, RTY, YM, all green. Around 0.5% or so, except the RTY is up almost a full percent. My own shorts are down pretty much, and I've got some charts ready to go. I hope you'll find interesting. My own disposition, as you know, is really simple. Bullish precious metals, and to a lesser degree, bonds, and bearish equities. So I've got two, and only two long positions, both pretty big. GLD, which I've talked about for months, and IEF, which is that 7 to 10 year treasury bond fund. So there's the only two longs in this first short. So I've got 20 of them, I think. 21, lucky 21. So yeah, bit of a mixed bag there. So let's hop into the charts and see what is what on this final pre-NVIDIA day here. The spider is just hanging out pretty much in the range it was yesterday. We're kind of a mirror image of yesterday. We opened, we're going to close strong. So these little two guys side by side, boring. Friday, of course, was a huge up day, and we've been just kind of hanging out ever since. The diamonds exploded higher Friday, eased back some yesterday, have recaptured a portion of that drop from yesterday. But again, I think everyone's just kind of waiting for NVIDIA because there's no other, well, I was about to say there's no other market moving news. There, of course, is the attempt at firing, I believe it is at Lisa Cook of the Fed by Trump. It remains to be seen if he can do that. On the surface, he can't, but he's certainly trying to, and that really rattled the markets yesterday and sent the dollar lower, gold higher. So that is happening, but it hasn't been that catastrophic. It wiggled things up last night a little bit. As I said, the small caps are relatively strong compared to its compatriots. It's near where we closed on Friday. We've undone the damage from yesterday, and the lifetime highs are up here where this red dashed line is. And China, FXI, I'll give this another go. I haven't been in China for a little while. I've shorted them again today. That's one of the aforementioned 21 shorts. Very tight stop on this, just above yesterday's high. Pretty big position. And as always, it's all about this blue broken trend line, which goes back 4 decades. And in my estimation, these peaks here, 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 and here, and here it suggests to me that it's more likely they go down than up in the weeks to come. The cubes, like the spider, like the Dow, is up about 1/5%. Not much going on. This was the peak back on the 13th. We slipped hard, recaptured a chunk of that, and have been doing not a heck of a lot since then. We're just kind of lingering around roughly where we were near Friday's close. It certainly helps that the mega caps, the biggest of the big, the Mag 7, have been pretty much holding their gains. Tesla's pretty big laggard, but things like Alphabet, for example, have been at or near lifetime highs. Yesterday, a new record high on Alphabet, just a teeny bit below that today, but that's Alphabet, aka Google. And Microsoft, this blasted to a lifetime high back on the end of last month, and we've been burning that off. But on the whole, the big boys, the multi-trillion-dollar companies, have been holding their values up all right. And not to belabor it, but NVIDIA is the biggest of the big. They're a Dow 30 component. They are just foundational to. I just said we got another pop in the cubes there. Don't know why, but it's a pretty big deal. If the market receives NVIDIA's results Wednesday warmly, then lifetime highs Thursday are foregone conclusion. If for whatever reason, and I can't imagine why, but if for whatever reason people react poorly to the projections or the report, it could really shake things up badly on Thursday morning. The only real disappointment for me would be as if it just does nothing, because there's so little else going on. I've taken a somewhat cautious approach. I went ahead, I felt a little burned by Friday, so I took profits on my new diamond puts, and also covered my cube short position, which is why I'm not that bothered. The cubes are blasting off at the moment. So I've really stuck with a bunch of little equity shorts. What else is going on? Well, as I said, metals, gold in particular, I'm very enamored and have been for a long time with them, palladium, silver, gold. I'm kind of focused on gold right now. It's up over $20 an ounce right now. It is all about this triangle. We peaked on this on April 22, and that was 3485.60. Let's just make the math easy, make the memory easy. Let's call it 3,500. If we can get above 3,500, I think that's going to set off a lot of buying excitement. $3,700 could be days away if that happens. I think there's a lot of pent-up energy in this triangle, because in the past, and they've gotten shorter, we had kind of this consolidation zone, and then this one, then this one, then this one. They have these like couple of months, in this case 5 months, of grinding around within a pattern, and then finally it gets its act together and goes bursting forth. And so that's what I'm hoping for. Let's just put down as a marker this gap right there as sort of a do not cross below this line level. Pretty conservative, but GLD, which is what my actual position is, there's a couple of stops that might work here. A pretty tight one would be 306.43. Little more kind would be this price gap down like so, which would be 304.61. But we'll be a little more tight-fisted about it. Keep the line right there, and just keep our fingers crossed that we do ultimately cross above, in this case, 317.63. That is to say GLD, as opposed to what I was just looking at, which is the GC, the long-term continuous contract on gold. Miners, lifetime high. Gold miners just continuing to blast higher. Tremendous time this year. An individual one I've mentioned from time to time, another good day here, DBD, 1, 2, 3, 4, 5 nice green bars in a row. Not bad. And yeah, so that's going well. As I said, I don't have any large short positions anymore. I went ahead and covered those early today because I'm NVIDIA phobic tomorrow. But some of the littler fellows I'm keeping, there's Accenture. This is a new one I don't think we've talked about. Big head and shoulders on this one. There's the price gap, which I believe represents the neckline for this, or at least the relevant stop loss level. Salesforce, CRM, another nice topping pattern on that one. Then there is Dollar General, DG. And even though we're green across the board, retail continues to be weak, so DG is down over 1.5%. There's Geo Group, which is one of the private prison companies. Core Civic is the other one. I don't know if they're still called that, but there's a stop on that one, 22.20. That's GEO. And one other short here to share. This would be ConocoPhillips COP, also down about 1.5%. And the stop on that one being anchored to yesterday's high. Now, I also mentioned, besides being long gold by way of GLD, I'm also long bonds, really IEF specifically. Bonds, 30-year Treasury. The 10-year T-note futures, it hasn't made up its mind yet. It's been consolidating within this beautiful egg shape here. It hasn't broken out yet. And when it does break out, I think the move will be powerful. It's just a matter of which direction, which is kind of an important question. But my view, if you look at IEF, is that it looks much more likely for it to burst to the upside than the downside. That's a very nicely formed pattern. It isn't quite complete yet, but it's getting close. And I would say an appropriate goal in this one would be anchored to April 4th peak, 96.26, which is only 40 cents away or so. If we can get above that, that'll finish that pattern. I think that'll spell good things for IEF. Amongst all this green, there is one red item which agrees nicely with what we were talking about yesterday, crude oil. Yesterday, crude oil was bursting higher, and I made the point that I think that's probably about it, that it's pushing up against this big triangle. That's just what happened. We lost all of yesterday's gains, and all of Friday's gains for that matter. We're pushing into where we were back here last Thursday. It's not the absolute move that's relevant. I think it's the pattern I want to point out. And so that held nicely, this resistance line. And so crude oil's down at the moment, 2.36%. And in turn, XOP, which I have this lingering fascination with, is down not that much, but it's down about 0.75% and is still banging around within that pink reversal pattern. But you'll hear all about NVIDIA tomorrow endlessly through the trading day, and I'm sure into Thursday morning. People will be hyper-focused on it. SMH, which is the semiconductor ETF, is anticipating good news, it seems. We are near lifetime highs. Those lifetime highs were set back on the 13th of August. We were quite close to them, this red line up here. So there's nothing bearish or bullish really about this. It's just been really ever since, for 2 solid months almost, just kind of lingering around here. It doesn't quite know what to do with itself. It needs direction, and NVIDIA is going to provide that direction. There's NVIDIA itself, which is up more than 1%, quite close to lifetime highs itself. We'll just put a line like so, bang, right there. So that will be key to watch shortly after the close on Wednesday, and that's going to drive SOX here, the semiconductor index, whose peak still remains back in July of last year, 13 months ago. And it's going to be an exciting evening, that's for sure. Okay, it's the bottom of the hour, and that is it for me. When I see you tomorrow, the NVIDIA news will be minutes away, but we still won't know what's next. So I'll see you then. We can look at some more stuff together in anticipation of that big event. So thanks, and I'll see you tomorrow. Bye-bye.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the.
You went to the pool at the Soho House?
Yeah. And you didn't go to my pool? Yeah.
Do you think he wore his Crocs?
100%. 100%.
You can't.
100%.
You wear your jorts? You wear your booty jorts with like your ass hangs out just a little bit in the back? I'll gross myself out.
I just threw up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We are back, son, and just the opposite of yesterday. Even the S&P is closing down around 20, 25. They were down around 15 when we came on the show yesterday. This time, they're up 20, taking back everything from yesterday. I think they're calling this the Travis Kelsey and Taylor Swift. Yeah. Was it engagement rally? I think NASDAQ up 74, Russell up 18, Dow up 81, and volatility in by 13 cents. Only 13 cents. It is just under a 1% move, but 13 cents to 16.92. Bonds down 4. They staged a little bit of a rally. If you remember, we were on the show last time. They were down under 114. They won 14.07. Bitcoin, it too caught a little bit of a rally. It was closer to 109.5. It's 111.5 right now. Bitcoin catching a rally up 200. Ethereum was strong all day. It continues its rally up 128. Oil down $1.50. Decent size range in oil of about $1.50 all day long, trading near its lows, weak all day long, taking back all the gains from yesterday. Gold up $19. Gold in a pretty tight channel or wedge or whatever you want to call it. And nat gas looks like it's going to be up just a skosh. Even the S&Ps 795,000, son. That's just about the same amount of volume we had yesterday. A quiet-ish day on the volume front. Would you agree?
Most certainly. Another chop fest. I mean, we didn't go anywhere until the last hour or so where we had this little bit of a rally. It's been a chop fest all day, exactly as we thought. Volatility came in, same MO as yesterday. You bid volatility a little bit in the morning. Throughout the day, we have a chop fest. It gets crushed into what we're looking at right now. So yeah, it played exactly into our hands. I want to go back to the Taylor Swift Kelsey situation. We have some people in the chat talking about, Vanetta will be insufferable tomorrow. That is for sure.
Tomorrow, but that'll be Tom's problem because he'll be back.
Yes, I won't have to deal with that. The big question is Kelsey the first football player to have to sign a prenup? Professional football player. It's got to be, right?
I would think so. I can't think of another. Yeah, I think you're right about that. Yeah. What a mega bundle that becomes for the two of them. Yeah, totally true. Totally true. And you don't go out tonight partying and stuff like that, because I just spoke to Tom, and he actually was early for his flight from Guadalajara back to the States, but he didn't have a stamp or something on his passport.
That was the situation. They made him go. Is he going to claim that this was like their fault? Because it's most certainly his fault.
No, it was his fault.
Okay.
I guess they gave him. When you go in there, they give you this piece of paper. If you have like global entry or something like that, they don't stamp your passport. They give you like a piece of paper. When you just got to keep that piece of paper with you. That's like, hi, I'm here, and now I'm going to give you this piece of paper, and I'm coming home, kind of thing. And he threw out that piece of paper, so he had to run back and get it, stamped. And then by the time he got back, he missed his flight. But there's another flight about 90 minutes later, which he's gonna catch, and then hopefully he'll make his connection. If he misses his connection, he's already got a seat for another flight. So
it's good to be king.
He should be here, but don't sleep in. Call up. We might need to call in the lefty and bring you back.
We'll see if I'm available.
Let's take a look at some of the buckers here today. Microsoft down $5 and change, hurting the NASDAQ, even though the NASDAQ is up by about 60 handles. PDD down around $4, CRM down around $4, UNH down 3 and change. That would be the Dow, and a few others here small. On the upside, you got some big numbers here. Lilly up 36, APP up almost 18 or 19, Carvana up 9, Netflix up 8 and change, Boeing, which was only up around $2 or so, now up over $7, AVGO up $3. PLTR with a big range from down to 154 up to 161. It's 160 and change right now, up $3. So you did have some individual stock movement here today, not quite movement in the equity ETFs though, that's for sure.
Yes, and speaking of, we had that SPX trade that ended up being a good close given where we are right now. We're right on the dance floor here. I had the put spread would have been out of the money or fully out of the money here, but I would have had the 64.55, 64.65 call spread, which is right at the money here. Somebody asking in the chat about what that would be marked at right now. It would be about it's trading at like 270 here with the move that we just had. The E-minis just sold off about five handles here.
What was it, the 55.65, right?
The 55.65 on the call side.
Right.
So
it's 270 right now, and you sold the whole spread for I think
$3, 305
$3 or so. So even right now it would be a small winner, but you'd be saying, I held this thing all day long. I got 20 minutes left to go in the day.
Yeah.
What do I
But you
wanna
wouldn't
do?
have held it an hour ago. An hour ago it was marked at nothing. When the E-minis were basically unchanged, it was marked at 10, 20 cents. I mean, like, it's another reason why we're always looking to manage positions, because, you get all of a sudden we hit 2 p.m. and the market rallies 25 handles after not moving, the whole time, the whole day. There's
Which
no
could
way.
be which could be another good future 0-day back test. I mean, I guess that's what it really is, right? When we do the research on this, when we're let's say at 2 o'clock in the afternoon, we're basically unchanged or inside the expected move for the day. If buying the wings at say the original expected move for the day is a profitable trade, you know what I mean? Like, playing to what you just said a moment ago, buying that spread would have been, 20-30 cents to buy both sides again, and now it's trading, 240 or 270.
Yeah. So you wouldn't have held.
What's that?
You wouldn't have held it. You wouldn't have nobody's holding out for the 10 or 20 cents. At least you shouldn't.
No. I'm saying buy it to open.
Oh.
I'm saying buy it to open. Like let's say we do the spread that you did this morning, we sell it.
Yeah.
And you make some sort of profit because we stay inside the expected move, whether it's 10%, 20%, 50%, 70%. I don't care what it is. It's now 2 o'clock in the afternoon. We're still inside the expected move. Is it beneficial to buy the original expected move, which would be your 255 strike and your whatever your put strike was on the other side? Would it be worth it to buy those, and how many times do they come into the money or are able to manage a winner, that kind of thing?
Got it.
Because you're not going to, I mean, at 2 o'clock, you're not going to sell them for 20 cents, right? I mean,
yeah.
Or is it advantageous to buy the guts? I mean, I don't know, something that maybe can play for the home run shot for somebody.
Got it.
Yeah. It might be, and listen, the spread just lost $1 with the E-mini S&Ps going down 5. Now, it could have easily gained $1 too. You know what I mean? So it's trading back at $2 or something like that. Anyway, interesting stuff for the future, possibly. How was your trading for today? I was very, very quiet. I actually did an IBIT trade because you talked about it earlier today on the show. I did it for my option trades today, my podcast. I actually did it in October. I believe I sold the 60 60 puts. And I also did a Jade Lizard. I sold the 65-68 call spread. It's trading right about where I sold it. That was a trade I did early this morning. Kind of an upside play on volatility, upside play on Bitcoin. But again, in October, it's going to be a slow moving trade.
Yeah. I didn't do a ton today. I mean, I had the SPX trade this morning. That was a nice little scoopy, as the great one would say. I did some upside IBIT plays, which are working, at the moment. We'll see if this continues. I'd like to see this bounce a little bit more here. I also did a CrowdStrike short put spread. So I sold the put spread into earnings. It has earnings after the close tomorrow, along with Snowflake and NVIDIA. We actually do have a couple earnings today, Okta and MongoDB after the close today, and then tomorrow more. I know they're fringe, and it's not really that interesting. In the morning tomorrow, we have Abercrombie and Fitch, ANF, which I actually did an upside call diagonal there, playing into the move that it's had. It's near the lows, so I figure I get a little bit of long delta there. I also did an XLV position. That was part of the cherry picks, which we can go to after this, but playing the healthcare stocks have just been killed. I got long IBM, another stock that's been killed. I mean, I'm just kind of looking for little opportunities here. The IBM trade, somebody from my YouTube chat from Option Trading Concepts Lives today was looking at that. I mean, it's not the sexiest trade to do a $5 wide call diagonal spread October SEP for $3 or $4, but when volatility is so low, you gotta kind of look outside the box.
You're a drowning man reaching for a straw, right? I mean, you're looking for something to do, right?
Yeah.
Let's show that cherry picks if we could put that up there real quick. I know you and Dr. Data work feverishly on this, so tell me what you got here.
Yeah, it was a good one today. So we looked at the change in treasury yields over the last year or so here, going back to December of last year, or I guess 8 months that we've had, just to show you where rates have gone over the last 8 months or so. And then we took a look at like a bunch of the sectors. So in the next screenshot or image that we have, we give you a breakdown of all the sector performances over the last breaking it down over the last day, week, month, 2 months, 3 months, and then year to date. So you can get an idea of like, where is there opportunity? If there's a catch-up trade, maybe if you think the market's going higher, you might be interested in some of the healthcare, energy, staples, that stuff on the lower end of the range versus, industrials and tech that has been, ripping to the upside. We talked about some of the specific stocks themselves. So, we obviously know UNH has been kind of a headline over the last, couple months here. So a lot of these stocks are near 52-week lows or even more than that. So, and they're huge companies, big time companies. Yeah. So maybe you kind of play for a catch-up trade there. Volatility in XLV at 36 IV rank, I believe it was this morning. It's now 26. It's been pretty high. And then we also give you VIX. So we looked at the VIX and just showing, some of the moves in the VIX, the median move there as well. So just showing you volatility and just kind of, how that has moved through the last 30 years or so of VIX data that we have. And then 2 trade ideas. I did a XLV call diagonal spread, playing off of the content that we put together of just getting along, some of the healthcare names that have been beaten up in a sort of diversified way. And then I did an iron condor, a pretty neutral iron condor in NVIDIA into earnings end of the week. I know it's tomorrow after the close, but Cherry Picks comes out on Tuesday. So I got to put my trade in now, get it a little early, just doing a pretty cookie cutter. It leans slightly short delta, but, around a 1 standard deviation on either side here. 1/3 the width of the strikes, pretty cookie cutter trade there. So
Cherry Picks doesn't wait for NVIDIA. NVIDIA waits for Cherry Picks.
That's right. So, of course, you can sign up, tastylive.com/newsletters. Pretty quick. Get your Cherry Picks every Tuesday. And then Tom and TP write the Cherry Bomb, which comes every Monday through Friday. So Monday.
Yeah, click them both. They cost you nothing.
Cost you nothing. Supports me. Supports Dr. Data. Every year when they come to do our reviews, they say, you didn't get enough this year.
What have you done for us lately?
Yeah, what have you done for us? It's just a little something here to help the gang out. So, and it's always good info, always current, always based on whatever's happening in the markets at that time. So, good stuff.
Very good. And you got What's Your Assumption also for tomorrow. Sadnov hasn't been clicking the button lately, so I know he's got a lot of fingers on the buttons for tomorrow. So please send your assumptions. Nick gave you a couple just now in the Cherry Picks. Why don't you give us a couple? Just go to tastylive.com/assumption. And we'd love to hear from you. I think maybe tomorrow we'll even take some phone calls. If you'd like to call in, you can do that too. But please, what's your assumption? tastylive.com/assumption. Last public service announcement here. If you want to, come see Tom and myself in San Francisco, which would be great. Get to work by 11. Which would be awesome. Love to have you there too. The Regency Ballroom in San Francisco. Doors open at 8 a.m. Show starts at 9. So we talk with you guys for about an hour before, an hour after. It does say limited seating, but you know what? Sign up, reserve your ticket, tastylive.com/events. There's no tickets available. Send me an email. I'll put the chairs out myself for you. Make sure there's room for you. Hell with the fire marshal. We're all friends. We'll be fine. So get your ticket at tastylive.com/events. That's it for the house cleaning, son. We're good. Can we go back to the Cherry Picks for just a quick second that you did? And if you can scroll to VIX, it was near the middle end of what Nick was talking about there. Yeah, you got it right there. No, go up just a little bit. Perfect, right there. Perfect. And go down to our hours so we can just see this year. It's a couple of question mark right there. Stop right there. That's beautiful. Thank you so much. Glad you were able to do that on the fly. I appreciate it. You'll look at the average volatility so far of 18.2. That's the number all the way on the right. And if you just scan with your eyes pretty quickly, you can notice it's not the highest. Obviously, the green bars help you really easily there, but it's certainly not the lowest. It's really kind of, right in the mid, that 18, 19% that we talk about on average, maybe mid to a little bit higher. So as volatility goes, I know we had that one spike in April and the rest of it was pretty mediocre, but you can't cherry pick, by no pun intended, taking out the high and taking out the low and just going for the mean there. But I don't know how the next 4 months are going to go. I'm going to say they're going to be a little bit complacent because everybody's looking for that volatility that we saw back in, '08 or even 2011 when we had, some 30 volatility. What do you think, son?
I hear you. I mean,
yes, nobody knows. I
yeah,
mean,
of course. The other story here is if you look at like just the median for this time period. So 18 and a half is August, which is what we're in right now. You can see that volatility through the next couple months is relatively high compared to, the rest of the year. You have 18 and a half, 19 and a half, 18.7% on the VIX. So it's really the beginning of the year, and then this part of the year are kind of the most volatile times: August, September, October, and then January and February to start the year, and then you have the summer doldrum.
Unless it becomes a 2016 or a 2019 or something like that, when volatility was a little bit low. 2019 is another one that was kind of
Of course,
low.
there's some that go lower, but on average, the median is a little bit higher at this time. So we'll see what happens.
Yeah. So what do you think? I'm thinking it's not going to be that way this year. What do you?
I don't know. I will say I think it will be because I hope it is. I don't want low vol to sit around all day and do nothing, in the market. So I'm going to hope for higher volatility. If I had a crystal ball, I'd give you a better guess. But all I know is if we do get some volatility, I'll certainly be taking advantage of the opportunities that I see at that point.
That was a good answer. Very good answer.
Yeah, should be a politician.
Yes, yeah. I got a lot of emails today about NVIDIA. It's up $2.50 today. Ivy rank is only 20. That $10.50, $11 expected move over the next 3 days has been staying pretty steady. A lot of people in the emails, at least, are saying that it was kind of low and figuring it was low implied volatility for NVIDIA. And I would say it is low implied volatility for an earnings play in NVIDIA. I know I spoke to Tom a little moment ago, and you know what he wants to do, right?
Well, he'll be back tomorrow to do it. But what's he want to do?
He will, but he wants to get short NVIDIA. This is the type of stock for him that has, I want to get a little bit bigger in size and get short NVIDIA. I don't know.
I figure by short he'll do like a 15 delta call to a 10 delta put, or maybe he'll do 2 of the 10 delta calls against 1 of the 10 delta puts. That's the perfect trade for him. Look, you could do, for only about $7,500 in buying power, you could sell.
Don't be mean.
You could sell 1 of the 160 puts and 2 of the 200 calls. Twice the expected move on either side. Come on.
Don't be mean. Don't be mean. Be nice.
16 deltas. Big mocker.
I think NVIDIA has a relatively low. Obviously, I mean, you can look at it yourself. The Ivy rank is 20. That's not subjective. That's just math. Even the S&P just quoted bid. They're up 24. That's just math. I mean, for me, I think the way you were looking to play it with a diagonal spread is the proper way to play it. I think that's the soup du jour, whether it be AUG SEP or even SEP ACH if you really wanted to. You've still got a 5 vol differential between September, which has a 50 implied volatility, and October, which has a 45. Obviously, AUG with 3 days to go versus SEP is going to have a much larger, almost 40 vol point differential between the two. But you won't get as much room as that volatility would dictate. You're going to be a lot tighter if you go AUG SEP than you would SEP ACH. So maybe SEP ACH is the play, son. What do you think?
That's how I set it up for my trade. So I am with you on that. Gives you a little more time to be right. Still have some short volatility in the near-term options. Yeah, I mean, buying delta in either direction is relatively cheap in NVIDIA. And so that's what I'm going to do.
Yeah, we talked a little bit about Apple this morning. Remember, Apple was trading as low as 224 when the market was lower, and I made a little bit of a statement saying, you know what, key on Apple. If Apple catches a bid, the rest of the market will catch a bid with it. And Apple did climb for the rest of the day. I don't know if you were watching it at all, but it got pretty strong there after around 12 o'clock or so, and that's when the market started catching a little bit of a bid. I mean, listen, it's one stock that's in a lot of indices, so it does kind of sometimes move the needle for the market. Nvidia with its $10 range. I know we're jumping the gun here a little bit because we have till tomorrow to place a trade in there. I had some friends do a little bit of research in there on what the move, a $10 move in Nvidia would do to the overall market, and they're looking at around 25 handles or so on the E-mini S&Ps. So if it's around its expected move, because it's just such a big part of all the indices, that would be a 50-point move or so, or a little bit more in the NASDAQ.
And you get all the sympathy moves.
And you get all the sympathy moves. That is correct.
I mean, you have a 10, 15-point face ripper in NVIDIA to the upside, and you probably have a big day in the market.
Yeah, you do. On top
that.
of recent new highs, which I don't know, tough call. I said this morning I was a little bit surprised with the way the market was behaving, about how strong it was. It really stayed strong all day long. If you ever sold into this market, you never got a chance to buy it back. You did get a chance to sell premium like you did early this morning, but it was quick and you had to take your profits pretty quickly too.
Yes, I also wanted to do just a quick PSA because for us Johnnies on the Eli Lilly trade, Tom poo-pooed earlier this month, took a little heat. I just closed it out for about 60 cents.
Maybe I can
short put spread. So we took that one off the table.
I love it. I love it. Maybe I can talk to you Johnnies and you could tell me about my GDX trade, what I should do with that. I rolled all the way to October 58 straddle now. The stock has done nothing but go straight up, as you can see here. Every day I was rolling puts. If I get another up day tomorrow, this spread now has around 40-ish deltas. I don't like to have over 30-ish deltas. So if it rallies again tomorrow, I'll be looking to do something in October to mitigate some of that long delta risk. I might sell another put just to add a little bit of long delta. That is, again, another 58 put would pick me up around 30 deltas, and that would reduce my delta by 50% or more. If GDX is higher, that's what I'll look to do.
Little squeeze here into the close. E-mini's up 28.
He's up 27, yeah.
Big move.
Yeah. Again, I don't think it means anything for future direction the same way it didn't mean anything yesterday when market sold off, 10, 15 handles right on the close.
Yeah, I mean, we closed yesterday, or we opened yesterday 64.60. We're at 64.82. It's been a chop fest for the week.
It has been a chop fest so far, and it's really been I don't know. We talked about it yesterday being a stock picker's market. Seems to be that way again today.
Yeah, 64.93 was the E-minis open on Monday, which was in the overnight session. So we're right there, right back to where we were. Just a skosh off all-time highs for my peeps.
Firing Fed, doing decentralizing this, tokenizing that, and we're right where we're supposed. War on, war off. We're right where we're supposed to be. Nothing's changed.
Nothing ever happens, Dad. Nothing ever happens.
Nothing ever happens until it does.
Yes, exactly. And you can't really play for that. Nothing ever happens.
No, you can't. That's exactly why we talk about finding high probability trades and high premium scenarios as best you can, and let the market try to beat you. This would be one of those examples where the market really has not been able to beat anyone. It's had its moments, but not beat up anyone. All right, we're kind of I don't know,
squeezing into the close.
Squeezing into the close. That's fair.
Gotta have them into tomorrow. That's what they are saying. I got everybody saying, Tony, who's they? Well, they need to have them before the close today.
And they did. Even the S&Ps are going to be on the closer up 26 and change. NASDAQ up near the high, by the way. NASDAQ near its high also up 90. Russell strong all day long up near its high, and the Dow up 132. We'll take a quick 90-second break and come back. We got more Tasty Live. What comes up next, son?
Got overtime with the Overtime Boys.
Beautiful. Stay tuned. Immediately following these messages. Peace.
Peace.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
If you have any questions, feel free to toss them in the chat.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? SPOOS is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
And we are back. And no, your eyes do not deceive you. This is a whole other kind of panel except for yours truly. I'm Ilya Spivak here in San Francisco. And those are Mr. Jamal Chandler and Mr. Thomas Westwater in Chicago. Gentlemen, welcome to Overtime.
Good to be here. Yeah, whole new crew, almost.
Heck yeah, I'm here to mess it up, man. I'm definitely here to mess it up. We're going to have fun. You know what I'm saying? You know how
I love it.
You know how it goes.
I love it. It's the perfect day, actually, for you guys to take over the show because the macro part of this story has gone to sleep. There's nothing going on here. It's quiet. Everybody heard from the great man on Friday. Nobody seems to want to make anything of it. We got NVIDIA tomorrow. Thomas, you want to start us off here? You wrote the piece on NVIDIA earnings yesterday. Enlighten the folks. What are we looking for here?
Yeah, I think there's really, besides for the EPS and revenue numbers that you're looking for to obviously beat, which NVIDIA has a good track record with beating estimates. The last 4 earnings, it's being on EPS, it's being on revenue, so it's done well in those metrics. What the market wants to hear is probably commentary from the CEO. Number one, on China, they're developing a new chip from the H20 that's going to be technically more advanced, but also raising concerns from some Chinese authorities that the U.S. government has their hands a little bit too much in the cookie jar of NVIDIA, and they are maybe putting in kill switches, backdoors, stuff like that. So you'll see the CEO reassure markets that they're not doing that. He's already done so. And he'll want to, solidify this revenue stream to China and guide expectations there. Another thing is with the Meta news recently that they're restructuring, which is coming alongside less spending for now at least. There might be some questions to him about, the broader AI investment theme. Is spending in data centers on AI going to keep pace? Do they expect it to drop off at all? If they, hinted at that even a little bit, I think the markets would latch on to it and perhaps create a negative reaction. So I think I think an EPS and a revenue beat are pretty well forecasted based on their recent performance. So it's going to come down to those comments.
Okay. A question for both of you, and Jamal, maybe you can start us off in the world of the practical. So obviously we get a sense of what we're looking at here as far as sort of the moving parts. Here we are at the top of the range that this thing has been in basically all month long. What are they going to tell us here that's going to mean anything? And does the risk reward make any sense to actually do anything with this?
Well, it's fascinating. I mean, the options front, you see there's about a 6% option implied expected move, right? And that's actually a little bit lower than what we've seen historically, like over the last 12 quarters. I think it's been about 7.7%. I mean, it's interesting at a time where, God, I mean, the whole zeitgeist is about AI, right? Like, I don't know about you guys, but I don't know that there's many conversations that I have these days where somebody doesn't mention AI or somebody doesn't mention ChatGPT or something along those lines.
Sure.
And I mean, hell, I was at a baseball game this weekend with my grandmother, my mother-in-law. I shouldn't confuse them. God, I'm really in trouble. She
You got
mentioned
caught up
it
there real quick. Well,
Yeah.
Let's hope nobody's watching.
She mentioned it like 3 different times, right? And so, I mean, it's my kid's grandmother. That's why, grandmother for mother-in-law. Yeah, sorry. It's mentioned a lot. And obviously, this is priority number one. This is the main stock in which we express that opinion for AI more recently. But it's interesting that there's not this huge expected move given where we are right now, right? You're hearing things like Sam Altman say that AI is a bubble. Well, that's interesting rhetoric coming from a guy like that. But in the sense of how much is talked about, might be a bubble. But in the sense of our stock market that we know and we live in, I don't think so. Because, I was having a discussion today about what times were like during the dot-com bubble. And for what and again, I wasn't trading at that time. I chose to go to grad school. I think I was a dumb idea. But what I remember about that time is stocks used to move anywhere from 5 to 20% on any given day in either direction. And we're not seeing that at all from names like this, from names like Apple, from names like Amazon. We're not seeing from Meta. We're not seeing those type of moves. So I don't think it's a bubble, but I think it's also, I think the big thing about this stock for earnings is going to be the China situation. I mean, essentially they're having to deal, they're in the middle in the crosshairs between the two of them, like you said, with the H2O chip, and China is not necessarily possibly accepting those chips because they're worried about the tech in it. And the U.S. wants to give, is down to give more, but are they going to continue to give them more? Like that's the area where we are right now. And then how many tariffs are going to be attached to that overall? And again, NVIDIA said that they're willing to give up 15% of their revenue to any sales in China. But it would seem at some point the government is trying to take some type of investment from this, as they seem to be doing with a bunch of different stocks these days. So I don't know. I personally am not playing it. I already have a NASDAQ call spread. I think that's exposure enough. I mean, obviously, NVIDIA is not only the biggest stock, but it's a large part of the NASDAQ. I think there's a lot of other ways you can play it. There's the SMHs of the world that you can play. You can play AMD. Again, you're not playing it for vol crush because there's really not a whole lot of vol bid to it right now. So why would you be selling any vol in NVIDIA? More than anything, if you're playing it, you're going to be playing it for the move. And I think it's probably a little easier to express those opinions than some of the offshoots. I think CoreWeave is another one of those names that you could play against it. Obviously, that's going to probably have an effect from it. But, this is one of those times where I think this is, obviously, it's an important earnings. But I don't really have much of an opinion on the move that I expect. I usually do. Like, I typically play names for moves for earnings, and I usually play, upside for the most part. It's not that I don't think this has more upside. It's just that I don't know. I don't see it being a big move. I think it could end up being kind of quiet. But I also thought Friday was going to be quiet, so who's going to listen to me?
So this is actually, I was doing this sort of macro tourist in Stocksland thing today as I was looking at what this might be, and thought it was really interesting. I mean, obviously, when we just looked at NVIDIA, it was kind of near the top of its range. The NASDAQ, as a kind of broader benchmark, still very much inside of where we had first, oh, good, rate cuts. That was the CPI report, but not enough there to convince everyone. So for a few days there, we drift. We go down into Powell. Powell gives everybody or at least what they read as a green light. We're at 89% chance for a September rate cut on Fed funds futures here. So, okay, la-di-da, concerns diffused. We still can't attack them. And if we look at the S&P, it's even stronger here, although, of course, we're still stuck. But for all of the past couple of days, tech seems kind of heavy. And when you look at the reporting here, so we start with the MAG's reporting on the 23rd of July, if I recall correctly. So that's right around here. So there it is. We see it, but then it's kind of quiet. We get Meta and Microsoft here. It's kind of a letdown. We get, and all of these companies are beating estimates. We get Apple and Amazon the following day. Not a whole lot here going on. And if we remember, Meta especially beat by a mile here and had a huge 12% day. Still can't make hay of it in the overall markets. And it makes me think that, I mean, at this point, all of the MAGs but NVIDIA has reported. All of them have beat except Tesla, which met on EPS but beat on revenue. And we haven't really gone anywhere in the immediate sort of reaction function. I mean, even if we look at this MAG's ETF here, here is those days where we start the MAG's reporting cycle with Alphabet and Tesla. That's the 23rd. Markets powered higher there, but it wasn't for these reasons. These names were stuck. There's the next batch of earnings. It's a fizzle. So I look at this almost from a kind of macro lens and go, well, these are obviously huge names. They hold tremendous amount of market cap. They're going to move the indexes. That's going to be an indicator on overall risk sentiment, but they haven't really been anything that's moved the needle, even when they beat and even when the individual stocks surge. So if the AI story is tired here from a sentiment perspective, like, okay, cool, we know the great and powerful future is coming, lots of capex is being spent, grandmothers at baseball games are talking about it, it's the hotness, got it. Okay, the Fed's gonna cut rates. We heard from Powell. Cool, it's on. There's a, at least right up front. Okay, it's coming. Those chances have only increased. Are these markets just tired? Have we hit a sentiment extreme? Because it seems like we're running out of good news. And the market is getting everything it wants to get, and it really isn't going anywhere. The last major moves we've had here for the S&P, here's that CPI report, here's Powell. We haven't really gone anywhere since basically the beginning of the month. We're kind of stuck at these extremes. What's the possibility that NVIDIA comes out, has a perfectly decent report, $1 a share is expected on EPS, right on the line. Let's say they deliver a little bit over. They beat by 9% last time. They've been beating in the single digits, but in the high single digits. It's not like the days when they were beating by 18%, 25%. They're beating by 4, 5, 9%. They'll beat, and then the market goes, okay, well, that's all the event risk in front of me. I don't have anything else to stand on, and we just fade because we're out of juice. Are we at an extreme here?
I think what you said is like, yeah, the market has everything it wants, and we have made a higher low here, but yet we're unable to clear into new highs right now.
Mm-hmm. Yeah.
And that's despite, getting some clarity on rate cuts coming in September. That's what the market has been focusing on alongside this AI narrative. So yeah, after NVIDIA, you'd want to see them do well. Perhaps it could give us the next leg up. But like you said, it's also an event out of the way. If it doesn't generate enough enthusiasm, maybe all this long positioning over the past couple months, some of it gets unwound, some profit taking, and maybe we have to go on to test the lows from early August. I mean, that's something that's certainly possible. I'm kind of looking at playing, tech has, kind of lagged. You've seen some rotation into things like financials and stuff like that. XLF has went on to make, I think it closed at a record high today. But things like what I'm looking at playing is catch-up trades and things that have been lagging now. Because the enthusiasm in a lot of these leaders has waned, but the market is still, broadly speaking, it's still bullish. So maybe something like regional banks are a thing to play on the catch-up trade, among other things. So I've been looking at trying to gain exposure to some of these segments that have kind of underperformed tech for the first half of the year.
Should have known.
There's definitely something here in the regional banks. To your point, Thomas.
I should have known. It took a little longer than I thought, but 20 minutes in before you came with the bearish thesis, I should have known that it was coming. I mean, I knew it was going to come. I just didn't know exactly when.
It sneaks up on you. You know it's coming, but you don't know the angle.
I agree with you to the degree that the AI story is a little exhausted. I think that's why the volatility isn't real crazy heading into the earnings. That's probably a good thing. I mean, it's not going to have some 50-point move. At least that's not what's expected. Who knows what they say, right? But just from just looking at it and looking at the options, like it's not predicting any crazy move. And I think there's something to be said. The story is probably a little bit exhausted. Everything is mentioning it right now. Everything has it. MDB just came out with earnings. Apparently they mentioned AI. I swung and missed on that one. I did a put calendar instead of a call calendar, which I almost always do. That's the thing, I think, is the story's a little tired. Does that potentially mean some pullback? I think it's possible. But again, I think pullback is different than correction, right? And so I think you bring up a good point about financials. I actually was looking at that recently, kind of the ratio to financials to tech, and it's bigger than we've seen in the past 20 years. And it probably is, maybe some time for some financials to sort of lead a little bit. If you want a healthy market, that's what we need, right? Like you can't have all tech. It can't be the top 5 names always being the main drivers of the market. It's got to be some other stuff, the Goldmans and the JP Morgans. Quite frankly, they're just not that interesting, though. I mean,
trading wise, they're not.
I mean, they're not. And even in what they're doing, like they're still doing the same old stuff. I don't think they're not reinventing the wheel. They're not doing anything that much different. They're still, those banks that I mentioned. I mean, they still have bond desks. They still have these other areas that they make money. They still rely on consumers, et cetera. Like, this is the interesting thing. When people come to the markets and they want to buy something that's new and interesting and moving the needle, this is where they go. They go to the AMDs of the world. Look at how NVIDIAs of the world. Look how AMD has kind of reinvented itself, and it's up there. Intel is playing catch up amongst everybody somehow or another. I think the government's going to find a way to make that work somehow. They always seem to. So this is the area, I guess, for now. But sure, there's probably a little bit too many people in there. It's a little crowded trade for sure.
Yeah, I mean, just looking at the performance for XLF versus XLK, I mean, this is a one-way bet here. So very clearly going all the way back, I mean, essentially, let's call it early April, financials underperform with the appearance of, and this is going to be a technical term, a sinking rock. So as we look at that, I think, I mean, if there was going to be some rotation, this would be sort of a reasonable thing to look at, if only because it looks like whatever the slope of this was seems to have started to even out a little. And maybe we're getting a little bit of anchoring here, essentially since the beginning of August. I'm sort of taken to the idea that this is a very macro kind of landscape and that it's going to come down to something that basically moves the needle on everything or doesn't. We've been talking a lot about essentially where we are in the sort of positioning space, and we see that shorts in the futures market, just looking at the Commitment of Traders report, they've been building when you look at ES futures and Q futures, and you look at this and you go, okay, well, is this speculative or is it hedging against a cash position? Because obviously the market is massively long the cash equities, or we wouldn't be where we are on these indexes. So are people opportunistically hedging in the futures, or is the build in this exposure just speculative bets that this top is going to be the top or it's not? In my mind, it while it wouldn't qualify as hedging in the sense that it's not literally hedging underlying exposure to the index, it's hedging in the sense that obviously the market is really short the futures, probably because they're really long the individual names, just across portfolios. And so that they're starting to hedge then at such a massive level. I mean, we're, just to give you guys a sense, as of the latest numbers here, we're hovering at the most net short for, let's say, the S&P 500 since the beginning of 2024. Now, back then, did that kind of build coincide with a pullback? A little bit. Not anything that ultimately derailed anything. A little bit of a wiggle lower. It starts around April of that year, and we get a little growth scare as we go into this idea that maybe we'll have another round of rate cuts, and of course the Fed doesn't end up delivering on it until September. But it is interesting to see kind of the professional investing realm look at this and go, we need to be hedging here. This is looking like it's frothy. And so as we sort of go down the list, it makes me think, okay, maybe we don't have anything earth-shattering, but it does look like there is maybe now less ammunition to give these markets fodder for a rally, or even if there is ammunition, the markets seem less responsive to it. They're kind of yawning at the Fed. They're kind of yawning at these earnings. It makes me wonder if you don't just get a regular NVIDIA report, a regular set of PCE numbers for inflation at the end of the week, and the market goes, okay, what have you done for me lately? Which part of this haven't I baked in already? And then we really see what the wherewithal here is. Let's take a look at, while we're on the subject here, what's going on with some of these cross assets. Looking at the bonds, this is like, I guess this is what one should want out of a bonds position, I suppose, because it's moving slowly, but in a direction. Do you guys have any interest here? I have been sort of stubbornly long and looking at this very painful creep higher and saying, well, these are bonds. They're not supposed to be fast. This is how this is supposed to work, an inch at a time. Do you guys have any exposure here or looking at this at all?
I don't have exposure. I took my ZN long off last week. I've been out of ZB for 2 weeks. I mean, we're kind of holding this loose trend line since May. You know, I do expect us to gradually creep higher, you know, through the next couple months. But like you said, it's not going to be all at once. And then we get, you know, these curveballs like the Lisa Cook thing, you know. So it's, you know, and then another possible wild card is the job numbers next week. Are the markets going to have confidence? What kind of number is going to come out? Is it going to be drastically different from the trend of the past few months? If it is, is the market more skeptical of that now with the new MBS statistician? I mean, I don't know, but it'll be interesting to see how those numbers play out next Friday and how the market digests it.
No ZB exposure for me. I mean, look, I get it. I mean, like you said, it's this is what bonds are supposed to do. This is not what we have seen over the last 2 years, right? Like bonds were actually pretty active. Things were happening. The will they, won't they on whether cuts are coming, right? Like it's really leading to a lot more movement in bonds. And that's why I was playing it. And I did fairly well. I mean, more recently, not like the last 2 years. Like most times it was just like not really working well. The only trades that really did well on were the selling vol ones if they popped a little bit. And even that is a tough one because, you know, again, a bond vol pop, you guys know, is like 13 versus like 10, right? Like that's just kind of how it goes. 3 ticks versus something, you know, on the order of a tech name or something like that. So I kind of stopped with bonds it looks like my last position was on the 31st. I have eyed it up a couple of times when it's gotten to 113 ZB. And I'm like, yeah, this is it. Let's bounce. It's going to bounce to 116. And then I just caught myself because exactly what Ilya said, like it is a slow trade. It has been really slow more recently, and it seems to have slowed down. And for that reason, I'm just kind of, you know, I feel like one of the hallmarks of this year has been things move adversely. They move down to a level where everybody gets scared. That's probably the good level to buy. And then they bounce back, and then you're able to sort of, that's been the trade. And that's actually how I made the most money in bonds this year at one point when they went down to 112s, almost 111s, basically 111s. That's when I made the most money, and it bounced, and I've been out since. And I think that's what I'm waiting for again. Unless it does that, I'm just not going to be as interested. You know, I got to preserve my sanity, like you said.
I've got a ton of duration in this thing, so I'm doing this via a TLT call vertical because obviously the vol got so ridiculously cheap when you got to 111, 112. Just, I mean, you might as well just buy calls because that's where you're going to get the best risk reward. Vol is so cheap, you can lock in easy 2-to-1 risk reward with your risk defined. So what I've been doing is essentially saying, okay, you know what, I need to put a bunch more duration in these positions, and on the one hand, dilute my exposure to the delta because you never know. The president says something, the markets don't like a Fed speaker. Suddenly, everybody's concerned about rate cuts, even though the September move has had a likelihood of, let's say, over 60% for months. So suddenly, oh no, let's get cold feet. So I've just wanted to let the markets be choppy and give them time to be a bond market, and attempt to kind of look at it that way. So I've been sitting in these positions for ages. At this point, I think I've been sitting in this TLT position for 48 days, and I've still got just a little under a month to expiry. So I'm just sitting and waiting because eventually this clawing higher, one would think, is going to continue.
Do you guys think that this Lisa Cook thing is some kite flying to test the waters on if he could do this, then maybe there's enough capital, political capital, to move it through to where he can do it to Powell, because he seems to not have let go of the Powell thing, even though he's gone through phases of backing off and then putting pressure on again. Is the Lisa Cook thing kite flying?
Yeah,
I sort
mean,
of get the sense.
I think so.
Yeah.
I think so for sure. I think it's one of those situations where he's trying to get a majority, right, to eventually be able to influence rates in any way that he wants. Look, politics aside, just the man, there's plenty of data. If you look back, if you look at documentaries, he's operated this way. He owned the USFL at one point in time, similar type of things that have happened. So this is just kind of, how he operates. And I think this is definitely a situation where he's trying to get a majority to influence and do what he wants. Hell, I wish I could do that. I wish I could fire somebody to get a majority of the things that I want. It doesn't work that way for me, but I think that's exactly what's happening.
Yeah, I mean, you sort of get to this thought process here, like, okay, let's say you have cause, or you think you have cause, and this is why I think everybody's resisting Lisa Cook resigning. If she resigns, well, then maybe there's fire where there is alleged smoke, and then you get to turn around and go, well, hey there, Jay, aren't you supposed to be her boss? Aren't you supposed to be in charge of this? How did you let this slip through? And it opens up a line of attack. So I think they're trying to resist having her resign, and trying to say, like, look, this is baseless, and we'll see if they can bat that away. But if she goes, then it becomes, at least rhetorically, something to turn around and go, Jay, this happened on your watch and you're supposed to be in charge. So did you mean to overlook this? And then you start to have a conversation about all kinds of things. I mean, we certainly know the president is not one to shy away from lobbying allegations. So I think, are looking at something that's, part dress rehearsal, part a preamble, even just to sort of get the screws turned. But you sort of wonder if this is like Zelensky in the White House, take one, take two. So we do have this September rate cut coming. So if we manage to drag the Lisa Cook story long enough for the rate cut to occur, it's like, oh, well, he wore a suit this time and said thank you, so now we're friends. You sort of wonder if you get that kind of dynamic here, where Powell cuts, the president's like, oh, well, I'm happy with him now, it's about time. Yeah, and then the whole thing just goes away because the shiny ball is a different bogey.
Yeah, I mean, I see several possible outcomes to this. I mean, there's probably numerous, but at what point trading it do we consider that it could really impact the market? I mean, you've seen it, the Lisa Cook thing, a little bit in the dollar, but you haven't seen it implicate in financial markets, equities, or anything else really to any extent. And it makes sense to me, but as a trader, do you even consider this, or this possible path we're going down? Because there's more, interference, I guess you could say, like the BLS commissioner, things like that. At what point do the markets start to look at it more?
I think you've just hit the nail on the head, actually. Probably the biggest thing in my mind, and Jamal, jump in here and tell me I'm a disgruntled bear and I'm doomed to be disappointed by the power of the AI supernova, as Dylan might say. But I look at this and I say, well, the dollar hasn't fallen since the beginning of July. It's obviously had an absolutely awful first half of the year for all the reasons you might imagine. There was a growth scare initially around the tariffs, so the market started to bake in more easing. There was the Liberation Day, the U.S. will cut off its nose to spite its face moment, where it looked for a second like the U.S. forgot that the dollar as a global trading currency is a huge advantage, because then we get basically borrower of perfect FICO everywhere, because nobody has an interest in us defaulting because we're the global currency of commerce. So if we default, there is no global currency of commerce, and that commerce stops. And of course, nobody has a vested interest in that, not even North Korea. So when you look at something like this and you go, okay, wait, are they really going to so clamp down on trade that demand for dollars so diminishes that they're going to knock themselves off their own perch at the top of the global financial system? And then once the markets got quote unquote yippee, and bonds, stocks, and the dollar were falling in tandem, everybody kind of backed off. And suddenly we got 90-day pauses and whoa, take it easy. No, we're not replacing Powell. Everybody relax. Once we saw that it was sort of that the administration was responsive to market discipline in a sense, we see the dollar stall, and it stopped falling even as we get this confirmation of rate cuts, which you think would be dollar bearish. All of this increasing sort of repositioning there. So I look at this and I go, okay, so if the dollar has stopped falling, then we're no longer worried that it's going to cede its status, that it's going to not be the cash of last resort if there is risk aversion, all of these things. So do we care that the president might make an inroad at the Fed? Or have we decided that actually, if the president were to do something that smelled like interference, the bond markets would get yippy again, and everybody would get put back in a box? So this dollar stabilizing here seems to suggest to me that the markets are kind of over this. That they've kind of decided, you know what, if they do something wacky, we'll just sink the bond market. And they'll go, wait a minute, but we want lower rates. It was like, well, yeah, but the rates are surging here because you keep putting term premium into the market because you're being erratic. Oh, okay, sorry. And back up. So I get the sense that maybe we're, again, at some sort of an inflection here.
I think you're right. I think inflection is definitely the word to use, especially the way that the dollar has been selling off for most of the year, like you said. And we've heard so much about all the different shorts of the dollar, which honestly which got really appealing to me at the beginning of July. I was like, this is a little bit too much.
I had a great time shorting it. Dude, the first 6 months
I bet you did. Yeah.
I mean, for all my fighting of the stock market, this is the trade that papered over those sins.
I think this is setting up to be another interesting trade. And again, I was getting long the dollar until Friday happened, and I closed out. I was short, long a put spread, short delta, long a put spread in the euro, and I closed it out because again, that just seemed like it was the death knell for any possible chance of the dollar bouncing. But like you said, it seems to have stabilized, and I feel like we could be in for another narrative shift at some point with the dollar here. And maybe at some point, those who've been short the dollar for all this time, riding it into the ground, eventually squeeze. That's just kind of the market that we've always been in, right? You can only, be long something for long enough, i.e. the NVIDIAs of the world, or you could be short something for short enough. As soon as everybody's kind of crowded in the trade, there's going to be some movement at some point in time. So it might be worth examining the idea of a long dollar again, because I could just possibly see it happening.
Yeah, and to your point, Thomas, I mean, obviously, it's not good when fiscal authorities meddle and attempt to put themselves at the levers for monetary policy. It doesn't take a very deep Googling to go, well, every single time since the beginning of time, going back to ancient China, that humanity has attempted a fiat currency system, it's failed every time but this recent iteration. And the reason is independent central banks. the printing of money has been taken away from politicians or kings or whoever happens to be interested in cheap credit at any given moment in time and can execute that by decree. So when we took away that power from those authorities is how we found ourselves now in a world where fiat is relatively stable, it works, and it's enabled, obviously, a tremendous surge of economic growth and economic prosperity for decades because credit has become so much more fungible and easy to pass around, easy to deploy, less risky to manage, et cetera, et cetera, et cetera. I mean, all of this has been a tremendously good thing. And obviously, when you threaten that, that's a tremendously bad thing. But the stabilizing of the dollar here seems to tell me maybe the market has kind of looked at the administration and said, yeah, we could tighten the screws on them to disabuse them of any kind of notions like that if push came to shove. And they're responsive. So I don't think it's that we shouldn't care about the Lisa Cook thing. I think the markets are telling us, yeah, but. And it makes me think that in this kind of an environment, especially if we have stocks stalling a little bit here and the dollar refuses to fall, even when the Fed ostensibly gives them something dovish. I mean, we saw, the euro is a great example here. Here's Powell. Here's the day after. Didn't exactly stick. So, and I mean, if you go currency by currency, in some places it's stuck more than others. But I mean, even just the yen here, there's Powell, and we're back. And this is probably the most kind of nakedly yields sensitive one of all of them. So in my mind, you sort of start to get to a place, well, if stocks were to be exhausted, if there were to be some kind of a sentiment shift, one of the key beneficiaries might well be the dollar, just because you would get a risk-on, risk-off dynamic. And if the dollar doesn't have the baggage of, oh my God, 50-year, 60-year regime change, because the U.S. has decided it no longer wants the global reserve currency, then that money goes there. And the dollar has a rally not because of yields, but just because of a risk-off sweep.
Yeah, and I think, I was thinking how to get long the dollar. I think shorting the euro is probably the thing to do. And if the euro was only based on yields, you'd probably expect the euro to continue to drift higher. But like you said, it's going to be likely on a safe haven, risk-on type event that you're going to get some price action back into the dollar. Mm-hmm. So I think that's a long dollar position is probably one of the ways I would hedge against, potential downfall in the equity market right now. And I think doing it through the euro, and I also don't like this euro chart that much right now. So I think shorting the euro is probably the thing to do here if you expect some turmoil or volatility to come into the equity market.
Yeah, I'm a little annoyed that it shook me out of the trade on Friday, honestly, but I'm going to revisit it. And you're right. This chart doesn't really look that good. It's kind of like floating. It's hanging in there. It's just needs a little push. We'll see what happens.
Yeah, it seems like we have this like ugly looking series of lower highs and lower lows, but they are lower highs and lower lows. So you get this sense that there is a kind of regime change here from that explosive rally that we saw, even just with the naked eye, without being any kind of a technician, just looking at it with a crayon and going, seems to be rounding out something here. So let's get to the hands-on and the practical. Jamal, how are you putting this on if you're putting it on? I mean, we have IV rank of 37, so it's not like vol is cheap.
Yeah. It's not cheap, but I don't mind taking directional swings, even if I was a little bit high in the currencies, because again, overall the implied vol is on a relative basis, it's fairly low, right? Like, I mean, it's 7 implied vol right now. Like, if it does come in, it might come into what, 5.5? You know what I mean? So I'm not going to get killed like that. I really just want, I'm really looking for the convexity trade and looking for the moves to the downside. So I would go out to Nove. I'd buy the 117, 115 put spread. That seems to be fine. I like that risk reward. It's a little like, it's about 1 to make, 1.5 or so, right? Like, I can live with that. And again, I think the way I get beat the most is if I'm just wrong and the dollar continues to fall. And I feel like there's more problems with that, with the dollar continuing to fall overall. To Thomas's point, I mean, that's one of the ways that we have hedged the market, but it's been really weird at times this year, right? We've seen big up days in the dollar and big up days in the market. But generally, over time, we've mostly seen that inverse relationship. And so if the dollar does, continue to fall, I'm long equities, I'll be fine with that. But this is definitely one of the plays I got to revisit. I allowed the market to shake me out of it on Friday. It looked like it was about to be on, man. I mean, seriously, you guys saw that. Like, it looked like not only were we going to have another big day up on Monday, but it seemed like this is it. We're headed for rate cuts and just price them in. And honestly, we really haven't seen that follow through in the dollar nor in bonds.
No. And that's sort of my spider sense is tingling for this reason. Like, I look at it and I go, okay, so you got CPI and then a flat line. Now you got Powell and then a flat line. It's almost like we're getting told things we already know. So all we're really taking away is the uncertainty. So there's a little one day, ooh, yay, it's the good outcome and not the bad outcome. So Powell didn't rug pull the markets, woo-ha. And then the uncertainty comes out of the market. It's good for a day. And then it's like, well, but what didn't we know about that? That was already priced in. We just needed to be told that speculation is reality. Okay, cool. Next. And it feels like you're kind of running on fumes. The 6E contract is, in all fairness, a little large for me. So what I've been doing is just using the futures, the micro futures, outright. And of course, spot as well. So when I've been looking at this, I've just been looking at M6E and just holding outright shorts. In fact, you can actually see him on the screen.
Yeah, it's pretty cheap.
Yeah, so I basically started getting in right at the top of this thing, right as it started, and I've been sitting on it this whole time. I've probably been sitting on it for almost a month now, just basically saying, okay, this thing, whatever it's doing, the risk reward has become better to be short. If you're wrong fast because you take out these near-term highs. If you're right, you're asymmetrically right because you just had a horrible 6 months for the dollar to start. And my boat's loaded. I'm short the pound, the euro, the Aussie, the yen, the Swiss franc, the Canadian dollar. I'm short it all.
Thai baht.
And
yeah, right. He's short every currency in the world.
I haven't quite become so confident as to have an opinion on the Thai.
I just thought about this. I know I said November, but actually I might go out to January. It's actually a similar risk reward. And I think I'm going to end up going out to January because I need some duration on this. Honestly.
Yeah, I think duration makes sense. And that's the nice thing about just taking outright position in a micro contract because you could just roll it if you need to and you can wait because eventually, as long as you're not any crazy length, tying up your capital, that makes sense. And, there is like the long-term plays for the dollar going down with people saying it's getting dethroned right now and this is the early phase. But for that to happen right now, there would need to be a replacement for the dollar. The euro can't do it. There's not a unified fiscal landscape in the EU.
For sure.
The yen can't do it. The economy of Japan is just not big enough. So it's the dollar, even if you think it's going to get dethroned, it's going to happen over decades and not even over years. That would be far too short.
Absolutely. I think that's spot on. Like, show me a currency with the liquidity and the market depth that can replace the dollar. I'll wait. I'll probably grow a beard down to my knees while I'm waiting because there's just not an alternative. It doesn't exist. But the only kind of gnawing thing at the back of my head, and I think that's why the markets kind of freaked out in April and they were happy to see the administration responsive, is, well, is there an orderly replacement? No. But is chaos, uncertainty, and mayhem always an option? Yes. And so there's been instances, obviously, in human history where we've done things in spite of our best interest and defaulted not to an orderly transition from one regime to another, but to death, pain, and mayhem, both literally and financially. So I thought the markets were very concerned in April when, you know, the president came out with the foam board. I think everything was cool until the foam board came out. when he came out and said, look, okay, there's going to be a baseline tariff, there's a floor of 10%, and everybody said, a flat number, we can work with that. And then the foam board came out and everybody freaked out.
It was a wrap.
So soon as that foam board was out and there was all kinds of different rates on it, everybody said, oh my God, okay. They want to kill their own golden goose. And everything went crazy. So I think the markets needed to know that's not what's going on. They needed to know that that the administration is willing to learn, willing to put the foam board down, and willing to understand you don't kill the dollar. That would be just completely counterproductive to everything they want to achieve. For one thing, rates would surge, and that's not what they want at all. So it seems like now that we've kind of gotten back to a sort of uneasy status quo, if there is risk aversion, if there is some kind of a shift in thinking here on risk, probably the most interesting trade on the board is the dollar, rather than attempting to fight a stock market which sort of preternaturally hates going down. FX market is a two-way market. And I'd be remiss not to mention that if you really want to get flexible with the management of size in these positions, there is always spot. And here, you can take a trade on all of the same sort of futures that you would be looking at. Obviously, there's futures equivalents to all of these. I've been, for example, doing the yen on the spot side because there are no options for a micro 6J contract that's liquid and usable. And 6J is big. The recent futures we've added on the franc, on the kiwi, we don't have micros of that, and they're not liquid. But if you wanted to take those bets, sometimes they're more attractive than elsewhere. Spot is your friend, and you can manage your exposure the same way as you would being outright long or short the futures, only you don't have to worry about expiration because it rolls automatically, and the size is much more manageable. You can get it down to something really small as a part of your overall exposure.
Yeah, I mean, the size component for spot is the biggest advantage. I think you can tailor nearly any size you want, so that's a big plus, especially if you have small account.
I thought I was clever at the beginning of last year. I thought I had a yen turn on my hands and got just absolutely shredded in 6J futures. Macro is terrible at timing. So my approach is always take a small position, risk defined, needle the market a little bit. If the move's wrong, take it off. Maybe do that 5-6 times before the move actually goes. But when it's a macro move, it's big. So that one winner washes 3-4 small losers, and you end up in the right side of the P&L column. But if you can't take those small positions, if they can't be risk defined, if they're going to be big 6J contracts, they'll crack your skull in. if you're not careful. So I've definitely moved in places where you don't have liquid micro futures. I live in spot land.
That is a good T-shirt. Macro is terrible at timing. Put it on T-shirt.
Terrible at timing. Terrible at timing. I will be the first to tell you. With that, gentlemen, overtime is out of time. I might get that tattooed on my forehead one of these days. Thank you, gentlemen, for joining us. That was awesome. Perfect vibes before these NVIDIA earnings. Don't go anywhere, everyone. I'll be right back with macro money just after a short break. And of course, overtime is back tomorrow with another new and interesting cast of characters. So definitely come and join us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
My most controversial market opinion is it's probably more political.
What's your most controversial market opinion right now?
My most controversial market opinion is that I shouldn't be following Mike and Nick. Just kidding. Love you guys so much.
The hottest take of this market? I gotta think about that. I don't know. I do like to trade the leverage, but that's not controversial. I don't know what controversy means these days. Like, I don't know. I'm sitting on cash. Like, I'm still sitting on a lot of cash, and I think that's generally seen as like frowned upon, but like I'm still doing it. I know market's been bouncing back up. I know things have been looking clear, but no, trust issues.
I honestly don't know if I have one. I'll say the fact that I like to trade earnings for direction as opposed to vol.
My most controversial market opinion is it's probably more political than it is anything else. So, I would say that, unlike others, I think the current political environment in this country is dangerous for the long term.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Where is the follow-through? That's the question that we're asking after explosive lead-in for sentiment at the end of last week from Fed Chair Powell. We don't have as much on the calendar this week, but you'd think with that kind of vigor, the markets would have a built-in desire to keep the good times rolling, but that is not where we are. And so after another quiet day, we look ahead to consider here. As ever, this is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is take a look at what the price action has suggested as we move through this week and consider what we might look at next to get a little motion, because we certainly don't have that here. So let's first just remind ourselves briefly, this was how the markets behaved in the wake of Fed Chair Powell's speech at the Jackson Hole Symposium, where he ostensibly gave the green light to an interest rate cut in September and some variety of rate cut cycle to follow. S&P surges, NASDAQ surges, yields are down across the board, gold is up, the dollar gets whacked. We see the euro here up almost 1%. The yen does get up a full percentage point. Bitcoin, the risk sentiment on steroids of assets, that's up 4% here, a little bit more. So very, very clear cut. This is good for sentiment, the markets say. This is going to be rate cuts, the markets say. How lovely that Powell didn't rug pull the markets. There was certainly concern going in, as we discussed on the show yesterday, between August 12th, when the markets got that CPI report that they decided that they would like, despite some mixed cues, and decided this would be good enough for the Fed to start cutting rates, and the Powell speech. Everything else in between was either sideways or down, so there was some concern there. This was a good bit of relief for markets, clearly. Then we look at how we've been performing so far this week. Now, I took this snapshot of yesterday and today just a little bit before the close, so we've wiggled around a tad on these readouts since then, but only a little bit, but there's not been any major moves to change the landscape here into the close in a material way. So as we look at this, consider we're soggy on stocks in the best of cases. NASDAQ lower, but basically flat. S&P down a little bit. The situation in yields a little bit soggier, the 10 year, so the long end of the curve stable. The front end still coming in a little bit, but that doesn't seem to be influencing anything from a macro sense. Gold is up a touch, perhaps mirroring what we're seeing in the 2-year, but perhaps most eye-catching, Bitcoin is down sharply, so sentiment is weakened clearly, and the dollar is launching a spirited recovery against its major counterparts. It's almost fully erased its Powell Day loss against the euro. Euro down just about 0.7, if we round it off, of a percent so far this week. The yen down almost 0.4%, and that's probably the most nakedly rates sensitive of the major currencies against the dollar. So this is not a market that's willing to say that we're going to run with Friday's narrative, risk on, dovish speculation on maximum, ride up stocks, ride up gold in earnest, sell the dollar. That is not the dynamic that's emerging here, and certainly we can see gold is a little bit up. The 2-year rate that is the most sensitive to immediate policy expectations, that's a little bit lower this week, so we're seeing a little bit of continuation there, but sentiment is clearly struggling. The dollar is clearly holding, and this is not for lack of conviction after Powell's speech in this rate cut narrative. This is comparing the probabilities of that cut. The current rate, of course, the current rate range, 425 to 450 basis points. That's this right here. And we can see now we're hovering right around 89% chance that we're going to take a step lower from this range by 25 basis points and have a rate cut. So let's consider how this has behaved recently. So a week ago, we were north of 80, but a little bit lighter. Yesterday, we were a little bit lighter than that, and we've only seen more conviction. So it's not as if there's been a meaningful change in the likelihood that September will see a cut. We were in the upper 80s just after a CPI and even approaching 100% probability there. The readout that we have here doesn't have those data points. The furthest back we have is a month ago, and that's giving us still north of 60% on the likelihood of a cut. And we can see that over the course of that month, the likelihood has only increased and has been relatively stable before Powell. This is the 19th here, and after. That's just the beginning of this week and today. So looking at all of this together, clearly it seems like the markets have the dovish directionality that they want. In fact, they've had it relatively convincingly before the Fed chair spoke, and they haven't really gone very far thereafter. But the follow-through on what this might have been, an extrapolation of the good vibes for risk sentiment, that's clearly not occurring. Moreover, the actual outlook for the view through the rest of this year and for next year has been shifting in familiar patterns. We still are locked in to the 50 basis points that we've been circling around for this year, going all the way back to May. And that lines up with the Fed's own outlook that they've been holding on to since December of last year. So pretty baseline there. As for next year, we can see that view has only grown increasingly dovish. And so now we're looking at 5 cuts between now and the end of next year. We're looking at least 2 of them here. We're looking at least 3 now fully discounted for next year. This is where perhaps the disparity is, and perhaps why the markets are not following through immediately, because what we're seeing is that the markets would have to have the Fed adjust a good long way in terms of its forecasting to line up with this much more dovish view. In June, the Fed had only 1 cut on the menu for 2026. And of course, when they meet on September 17th, not only are we going to get now the widely expected reduction, we're also going to get a new summary of economic projections, where the Fed is going to say how many more rate cuts it intends to do thereafter. Now, it's running out of calendar to do that second cut. There are meetings left after September in October and December. So if the Fed sticks with the 50 basis points for this year, then as widely expected, one of those meetings is going to give you that second cut. But the real question will be 2026, where there is a big disconnect. And that hasn't changed. So it doesn't seem like there is an easy path for dovish sentiment to extrapolate here, because the markets have already gone where this year is benchmarked and are already way ahead of the Fed as far as next year is concerned. And so this then shifts our focus, absent any kind of major U.S. economic data until the incoming PCE report later in the week, which we will tackle here tomorrow. The thing that's left on the calendar are earnings from NVIDIA. And because there is so much market cap locked up in these Magnificent Seven names after tech's heroic outperformance and the tremendous power of this AI narrative that we've witnessed around the markets, this becomes not just one company reporting earnings. This becomes something that can have an impact on overall sentiment just because of its weight in driving the indexes. And if there is a shift in sentiment, well, then that might extrapolate across the major markets and the major asset classes outside of equities as well, and start to impact gold and the dollar and interest rates and so forth. And so I thought that it would be helpful, outside of sort of the usual stock perspective on the financials and the company's prospects and its narrative, to look at this as a kind of macro tourist in stocks land and consider it from the perspective of a macro catalyst for sentiment writ large. And there's an interesting sort of considerations that starts to line up. So obviously here we have the earnings for these Magnificent Seven companies that are at the center of this tech-driven story. 6 of them have already reported. We see positive surprises all around, but for Tesla's EPS, which hits right on the nose here. Otherwise, Alphabet, Meta, Microsoft, Apple, Amazon, they all report better than expected results. Meta kind of famously beats by a long mile here. And of course, on the day of, this was a 12% odd rally for the stock itself. We can see the other ones are relatively close, pretty decent beat for Amazon, but otherwise we're pretty close to forecasts, and just enough that the company can pat itself on the back and say, well, we did a good job of under-promising and over-delivering. We gave the markets guidance that we could then top. So all's well that ends well. Next report. And of course, here's NVIDIA. The expectation is we're going to come in at $1 EPS per share on revenue of $45.81 billion. And that'll be coming at us after the close tomorrow and give us a sense for where we're going for the rest of the week. Maybe if this ends up having the gravitational pull of a company that is as large as it is. Of course, just look at market cap and you very easily see of this giant bunch, this is the largest. And so the weight of a big move here on the indexes would be significant. But let's consider how these have gone so far. This is the MAGS ETF that tracks the collective performance of the MAG 7 here. And we can see that while we've had these beats, even when they've been big beats, the overall response function here has been soggy at best. So here's Google and Tesla that start us off. Here's Meta and Microsoft. And they report after the close here. This is that big Meta beat. So you get this giant gap. But ultimately, the market's faded. And then when Apple and Amazon report, they keep fading. So we get these better than expected results, but they're not really giving the market anything to rally on. But wait, you might say, well, maybe the market was just waiting for all of these things to come out and then rallied thereafter. Well, not so fast. Here's the performance of that MAG 7 ETF relative to the NASDAQ and the S&P. And I've used the ETFs here, the Qs and SPY, to give us the most sort of comparable set of things to evaluate. And we can see that indeed SPY has outperformed a little bit recently. The NASDAQ was outperforming essentially until we got into the last few sessions here, going back into the middle of last week. And here we can see TEGs starting to lag a little bit, but on the whole, comparable performance here, up or down, give or take 1.5%. The MAGs are outperforming with a gain of almost 4.5%. But we can see that the view here seems to be less so MAG 7 specific and more so beta. So the underlying sentiment with a little bit of a kicker, because of course we don't have the dilution of an index in these names. These are just 7 stocks and their volatility is going to be relatively higher than the indexes. And we can see where these moves begin. So again, going back here, we get through the earnings, then we get this move higher. That's this move here, which nicely coincides with the beginnings of repricing for Fed rate cuts in earnest. This right here is the implied rate into December's Fed funds futures contract, so essentially where rates are by the end of the year. And we can see here that we go and get more dovish exactly in the period that we get this upswing. So we get a level shift in rate cut expectations. We can see that an extra rate cut appears here. We go from 4.05 to about 3.85 here by the end of the year. So you get this dovish shift. And that's what seems to be propelling markets here. We can see we reach a crescendo on that, tellingly, on the 12th. Right here, that's where that CPI report comes out. So we get all this dovish speculation into CPI. Then the market gets soggy into Powell. We get Powell right here. Sentiment pops again, and we've stalled. So it doesn't appear like it's these names that are powering the move in MAGs. It's that stocks are up in general and that they're up on Fed policy speculation, and when it runs out, they fizzle. So this, of course, starts raising an important question. Now, it is certainly compelling to look at the recent performance from NVIDIA and say, well, chances are they'll beat on the upside. They seem to be good at guiding accordingly. And while we're probably not going to get these heady beats like we had toward the end of 2023, the beginning of 2024, I mean, especially we can see here in 23, we get these fat double-digit beats and some even larger earlier in the year. We seem to have benchmarked these down to something more reasonable into the single digits, but the first quarter was by no means soggy at 9.89%. So maybe we get a smaller size beat as the markets re-benchmark this a little bit and end up somewhere in the vicinity of these 5% moves. But to expect this to beat would be the baseline, and indeed, if it beats by, let's say, only 2%, 3%, that might be in the realm of the disappointing. The bar is, let's say, somewhere between 5 and 10% of a beat would be sort of relative baseline, which is already something of a bar to clear. Moreover, if we look at these numbers from FactSet for how this second quarter reporting period has worked out so far, we can see an interesting sentiment shift. It would appear that when companies have positive earnings surprises, historically, they get a lift of 1%. In this cycle, only 0.4%. This is the 5-year average here in the gray. For negative surprises, we have an almost a more than doubling, as a matter of fact, of the historical sell-off that you'd get. And we can see here, of course, markets are even historically more responsive to downside surprises than upside surprises because stock markets are biased long. And so their status quo that's priced in is that things will be generally good and or better. Markets obviously know to expect companies to try to guide lower than beat relative to those expectations. And so, or guide on the soft side, we should say, not necessarily lower as in earnings going down, but guide modestly so they can beat. And so the response to that sort of baseline, considering it's essentially in the stew for how people look at stock markets, is relatively more modest than if the algorithm breaks and you do get a downside surprise and there's a larger move on the downside, 2.4%. But in this current cycle, we can see the punishment is more than double historical norms, down 5.5% on misses. Moreover, this entire ride up from April's Liberation Day panic lows has been met with increasingly negative speculative positioning in benchmark futures. In fact, we're at this point the most net short speculators net of hedgers since the beginning of 2024. Now, when we had a similar build out, only a small blip lower followed on the S&P. So this is not a thing unto itself. But what it does illustrate is that as we get back up into the highs here, and the higher we go, the more it seems like market participants want to hedge their cash exposure to equities through futures. So ostensibly, we couldn't be at these highs if the market was not massively long cash equities. But increasingly, as you go higher, the markets are seeking to defend that position by becoming increasingly net short in the futures market. So you put all this together and you get the sense, well, the market is punishing disappointments disproportionately hard relative to rewarding things that are optimistic. We haven't really had these positive results from the Mag 7s move the needle. Where the needle has moved, it has moved for Fed reasons, it would seem. here, and Fed reasons appear to be static and out of juice. And so the question then seems to necessarily appear, are we at some sort of a sentiment extreme? Have we run out of good news to impress the markets? Is everything priced in? And in that sense, you might be looking at the NVIDIA earnings as a buy the rumor, sell the fact, or even just a wait for the rumor, sell the fact sort of a situation where the market gets on the other side of event risk and says, well, this doesn't change anything for us this way or that. It's time to perhaps divest a bit and let these markets have a respite. And so these NVIDIA earnings may be more an inflection point for a sentiment extreme than anything of substance for the AI story or certainly NVIDIA itself as such. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and what may follow. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
My most controversial market opinion is it's probably more political.
What's your most controversial market opinion right now?
My most controversial market opinion is that I shouldn't be following Mike and Nick. Just kidding. Love you guys so much.
The hottest take of this market? I gotta think about that. I don't know. I do like to trade the leverage, but that's not controversial. I don't know what controversy means these days. Like, I don't know. I'm sitting on cash. Like, I'm still sitting on a lot of cash, and I think that's generally seen as like frowned upon, but like I'm still doing it. I know market's been bouncing back up. I know things have been looking clear, but no, trust issues.
I honestly don't know if I have one. I'll say the fact that I like to trade earnings for direction as opposed to vol.
My most controversial market opinion is it's probably more political than it is anything else. So, I would say that, unlike others, I think the current political environment in this country is dangerous for the long term.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
What is going on, everybody, and welcome back to Risk of the Week. You're back with Gus and E. We got a couple risks of the week to put on, get caught up in all the craziness going on in the market over here. But before we do that, what's going on, everybody? Hope everybody's doing well. And Gus, how we feeling today?
Yeah, feeling good today. It was kind of a strange day. I mean, for me and for anybody in the market, we were down off open, and then we kind of gradually recovered through the rest of the day.
I know you got a couple solid earnings in there too that we're going to get
just
into.
think anytime we go red to green, it's a little bit strange, you know, or the other way. It's like, you know, we usually like to use open as a resistance, not a, you know.
I feel you on that.
It's interesting. So
I like that.
Anyway, yeah. So when I first opened my brokerage platform this morning, I thought it wasn't going to be a great day in the markets, and by the time it closed, I was up large.
I know.
So feeling good.
I know your risk of the week is an interesting one. I'm curious to see what the audience is going to think about it. I like it. It's going pretty well so far too, but we'll get into that here in a little bit. Today is Tuesday. It's the beginning of the week. We have some more risks of the week that we want to put on. So we'll go ahead and just get into the slides for today and talk about some of these underlines because it's a little different.
Yeah, you guys are about to hear about my incredibly meticulously researched trade that I've been putting together for 2 weeks here. We can go slides.
Yeah.
Okay. Risk of the week. For those unfamiliar, every week on Tuesdays, Errol and I both put on one high-risk, ideally short-dated position. Sometimes they're not so short-dated, but ideally it would be short-dated position.
Yeah.
So let's dive right in. My risk of the week this week is Okta. This trade has pretty much already come to fruition. I was playing the earnings call after market closed today. And yes, I was being sarcastic with my comments earlier. I put no effort into finding this trade, and it has just worked. Okta... Okay, here's my due diligence for real.
Okay.
They've beaten earnings.
It's a real stock.
Yeah, they've beaten earnings like the last 6 earnings calls in a row. 6, I don't know if it was 6 or 7. A lot of earnings calls in a row.
Right.
But perfectly, every single one, it goes gap up, gap down, gap up, gap down. It's been alternating regardless of what the actual numbers are relative to EPS and revenue estimates.
Mm-hmm.
The last time they took a gap down, they're kind of close to their lows of the year. And so I just took a chance that this time it would be a gap back up. And that's what we've gotten. I forgot to put my trade itself on here. I have a bullish put spread wherein I have the 93.94. So I needed Okta over 94 by the end of the week. 3 DTE, which does fit the short dated constraint that we usually try to put on these. And it looks like it's going to work out for him. I'm not sure if I'll exit tomorrow morning or exactly how I'm going to choose to play it. But there'll be a lot of theta that eats into those overnight now. So we'll see.
I feel like this is like the epitome of some trades. Like sometimes the risk reward is in your favor. You're placing yourself in an environment where we're about to see some volatility. And you pretty much 100% capitalize on it. I mean, I already saw the position. It's working out really well. And it's just funny, those last couple bullet points, perhaps the most brain dead trade ever, and then about 50 seconds of due diligence. I mean, if that's not a trader, I don't know what is.
No,
but
yeah.
Risk reward was in the favor. It was a trade that made sense.
It was a trade that made sense. And I'm happy you bring up the risk to reward angle because that was another part of this is with the way that I structured this spread, I had to post up very little BP, slightly less than a 1-to-1 ratio of BP posted up to premium that I'm set to collect. That was a factor as well, is that it was it was a way to get cheaper exposure. My initial thought process was I was just going to grab the 94 calls and be naked because it's risk of the week after all.
Directional, maybe.
Yeah, directional. But those were like $500, and I managed to find a good spot where I was able to get in on this trade, which I posted on the follow page earlier today, by the way. Real fans saw this trade at the time I took it. At the time I took this trade, it was, I think, $55 of BP for $60 of premium or something like that. Just a better way to get some more direct exposure. Took a few.
Love it. If anybody just joined us, Gus's risk of the week is OKTA today. It did have earnings and it popped to the upside. He had some long delta on, so it's working out pretty well so far.
Indeed. We'll hop over and look at a chart after we're done here. But first, we got to get into Errol's risk of the week. Tell us about it.
By no surprise. What's going on, Lone? What's going on, Emmett? What's going on, guys? By no surprise. We can go ahead and jump to the next slide. Drum roll, please. If we had a little, what's it called? The thing with the drum roll. Or whatever.
That just is a drum roll.
The noises.
Like a soundboard?
It's like a soundboard. It's so
I've been saying I want the soundboard, but I can't be trusted with it. I would do too many stupid things.
Oh my gosh, you with the soundboard might be perfect.
You'd be like, I made 4% on this trade, and I'd be like, car crash noise.
All right. My risk of the week this week is going to be MNQ, the NASDAQ market. No surprise here, but I have a little bit of a short thesis that I wrote up for everybody just to give a little bit more of my 2 cents. Not that it matters, but this is what I'm looking for. So we got a couple primary levels. We got the 23,616 level, which is a price level we're almost trading at the close, and then we got 23,804. So there's a couple levels I'm going to be looking at for a potential short. 23,616, that one, maybe sometime tomorrow if we get a lot of, I hate saying selling pressure, all that. We'll wrap back around to this trade if we take it. But tomorrow, for trading at around the 23,616 level like we are today, I will look for a potential short position. But there's that little yellow line like above that high, and I think that one says 26,650 it is. So my short bias for this first level is intact until we continue to trade above 23,650. A little bit of the justification for that is because there's a lot of thin volume above those price levels. So the logic behind that is if I'm getting short, I don't really want to be getting short to the upside if we keep pushing to those thin volume price levels, because then it's going to be a lot easier for price to rip through those thin volume, low volume node areas is what they're really called. So I'm going to be looking for a short until then. The way that I like to look at it is it's like, okay, I call it the IP, like the invalidation point. It's like, all right, where's the level when I'm trading directionally, especially with these futures so I can protect myself? Where's the level that I want to get out? Like, I don't even want to be in this trade. My trade thesis is invalidated, no ifs, ands, or buts, and that's like that 23,650 level. So in my eyes, if I can snag an entry at 23,000, let's say 620, that's what, 30 points of risk? And if you're using the micros, 30 points times 2, that's about $60 per contract of risk that you have on the trade. So I'm going to try and structure the risk management on that trade that way. But that 23,650, if we keep shooting beyond that point, I'm going to be looking to reposition and be a little bit patient for the second level. But clearly, you can just see my natural short bias. Like, I'm waiting for short opportunities instead of just getting long. And that's really shining through in my personality. It's like, just waiting for the short opportunities, like rip to these levels so I can position to get to the downside.
Yeah,
we
man.
gotta rip there.
Stop doing that. Stop doing that. Just get long and wait. It's the greatest strategy in the world. I've been deploying it for years now.
Yeah,
just get long and
just
wait.
Get long, bro.
With shorting, I don't inherently think this is a bad trade at all. I think that this is a great TA and that you absolutely could catch this move for the record. But yeah, I mean, just with shorting as a whole, I've gravitated toward being so bullish in general and tending to be long delta in most situations, just because, again, brain dead logic here, but it's just true. Stocks want to go up. They want to go up a whole lot more than they want to go down holistically across the market. And you can't, a stock can only go to zero. It can theoretically rip upward to infinity. It can only come down to zero. So I don't know. Those have kind of been my two lines of logic as to being long a little bit more.
I mean, OKTA was beaten down a little bit.
Yeah,
I mean, it was kind of like a pot, not really like a pot.
I'm just consistently doing the opposite. I find that my most prominent strategy is just looking for sell-offs that I think are too big and unjustified, and trying to get in those spots and let the recovery happen. But yeah, I like this trade.
Risk of the week. We'll see how it pans out, and we'll circle back on Thursday and we'll give a little recap how these.
Yeah, we always mean to, and we kind of never do.
We'll circle back around to it if it was interesting enough.
Yeah, that's true. That's true. But anyway, that's what we got there. I'm seeing in chat, did anyone sign the petition to return Uncle Herschel the Cracker Barrel logo? I have not seen that petition, but if somebody could send that my way, I will happily sign it, because I am long Cracker Barrel, as we have established, and part of my TA in being long Cracker Barrel is that if they revert back to that old logo, I think this thing is going to fly. So yeah, please plug me in.
Imagine what a marketing scheme that would be.
Yeah, it's true.
Go back to the old logo. Like, at that point though, that could work and would make sense from a marketing standpoint.
Yeah, Trump had a very funny Truth Social post today regarding Cracker Barrel, just in his typical Trump speak, and he was encouraging them to revert to the old logo. But he did say one thing in there that I thought was very apt, which is that you have a multi-billion-dollar marketing opportunity here now. Now that you have made this blunder,
they have the attention.
Yeah, you have all the attention in the world on you, and you could play your cards right here to come out at even higher highs if you so choose. So yeah, but that Cracker Barrel trade, that's been working really well for me.
I'm just so curious. It's all hindsight, but I wonder if some of these marketing teams, like, this worked out way better than we expected in our favor, so let's see what we can do with it. Like, I wonder if that's the thing, like, get a reaction and then figure out how to maneuver that extra attention that you just got.
Yeah.
Like, I wonder if that is a mindset they go into it with. Let's just see what reaction we could get and lean on our skills to see what we do with it.
Well, yeah, it's true. I certainly couldn't tell you the last time, if ever, that Cracker Barrel was discussed this heavily on the national stage. I mean, this has been This has been amazing for brand awareness. I mean, like last Thursday when we covered Cracker Barrel, there were people in the chat that said, "What's Cracker Barrel? I've never even heard of it before."
Right.
And that's because Cracker Barrel did something so heinous that we feel compelled to talk about it, and then suddenly their brand recognition goes through the roof, and that perpetuates, all across any social media that you look at, whatever. Everybody's talking about Cracker Barrel right now. So yeah, I think that they do have an opportunity, and like I thought that this sell-off was a bit too much for a logo change. I think that if they change the logo back, the recovery will be far too much, and then I will be looking to short Cracker Barrel after I take my 15x profits on these calls. So yeah, it's an interesting situation, but yeah. Also, is it insider trading? If I sign a Cracker Barrel petition, like there's an ethical dilemma here.
There might be an ethical dilemma, but what does this petition look like? Is it like if we get X amount of signatures, do we have anything to? Let me see what we got.
Yeah, I don't know.
I'll let you know on that.
I don't even really know what that entails. But I mean, I guess if it got enough signatures, I mean, is Cracker Barrel? That's the thing. Is like inside Cracker Barrel right now, internally, are they gaslighting themselves into thinking that this was a good call somehow? I mean, I know that the CEO has said before that consumers prefer the new restaurants over the old restaurants, which does not seem to be the opinion that is widespread everywhere right now.
Yeah.
So yeah, are they delusional, or do they think that this is working?
I have a quick take on a little bit of that. I kind of think people care a little bit more now. I think it's a little bit of both. I think people care a little bit more. This should have gone with the Cracker Barrel segment. But I think people care a little bit more now because of the fact that people care. Like, oh, I used to go to Cracker. Now I'm upset. Yeah, actually, yeah. Even though I forgot Cracker Barrel was sitting down the road and I haven't been there in the last 5 years. I feel like there's a little bit of that element at play.
Well, certainly, I think everybody always wants to jump on hate bandwagons whenever they present themselves.
I agree. I think that's the human nature again in it.
Well, yeah. I mean, I think that in internet culture, and I mean, it's pervasive and kind of a problem that this happens often. It's like, who do we hate this week? Mm-hmm. And like often it means nothing.
Right.
And I will say too, and I don't know that this necessarily applies in the case of Cracker Barrel. If you're not, well, I should say. Okay, here's my statement. Here it comes, guys. The best thing you can do on the internet when you're the person that the internet hates for the week is nothing. You absolutely nothing.
Do you ever see people just shooting themselves in the foot and you're like, what are you doing?
Yeah, no apology video.
What are you doing?
No tweet. Don't get in Twitter beef with anybody. Do nothing and wait until the next people are hated, because it will always turn over. I mean, Mr. Beast did that. I don't even remember what the thing was, but I remember there was like a cancel Mr. Beast push.
Whenever he did success, you forgot what it was.
Yeah, exactly. I don't remember what it was. I never really looked into it too much in the first place because I don't really. Yeah. I try not to spend too much of my life worrying about people's lives that will never know I exist. But but like it was perfectly handled. He never ever touched it, and then the internet just moved on to hating the next person the next week. Yeah. I think the same thing is liable to happen with Sydney Sweeney in her situation. So. Really applies in the case of Cracker Barrel because, like I said, and then this is why I tripped up at the beginning. If Cracker Barrel is not going to change this logo back, they should do nothing. The only reason they should do something is if it is to say we are changing the logo back. But yeah, I don't think Cracker Barrel should be trying to get crafty or apologize for this or whatever. I mean, yeah, you just got to own it and move forward if that's what they're going to do. So we'll see. Yeah. But yeah, I got Cracker Barrel like almost perfectly to the cent at the bottom here. I was like mid-50s was my buy.
Yeah. What was that ticker for Cracker Barrel again?
CRBL.
CRBL. That's what
yeah. I have the chart up over here. But yeah, I have what do I even have? I have a naked 70 call. It's 143 DTE. Then I also took this bullish put spread, which expires in December, 115 DTE. Just needed above 55 by that time. But yeah, that's what I'm looking at. This, I believe these cost me like 60 or something. I 5 or 6x'd on these calls by now. And then yeah, this is going swimmingly as well. It's just yeah. In the age of instant information and 24-hour news cycle, it just is becoming increasingly common.
24-hour news cycle is crazy. We get 24-hour news cycle though, for real.
Yeah, it's true, and it's just in that age and in this age of social media and where people just love to jump on these bandwagons. I just often think that these sell-offs and these run-ups become too parabolic. People care a little bit too much.
What was the? What were we mad at? What were we mad at M&M's again about? Guys, what were we mad about? No, for real though, what were we mad about M&M's? Do you know?
M&Ms?
Or let us know, chat. Yeah, Grumpy Mike brought up M&Ms. I was like, oh, was there a little commotion about M&Ms that they did a while ago? Before I paid too much attention to the marketing that these big companies are doing.
That green M&M in the commercials was hot. They took her out.
Green? I'm colorblind, so I'd never seen a green one.
Oh, you know, it's the hot female M&M, man.
Oh, that one.
Yeah. She was a baddie, but they took her out.
I think I know exactly what you're talking about, though. Actually. Yeah.
Yeah. Sally from Cars is kind of a baddie too.
I could have swore that M&M's name was Sally.
Non-human baddies.
I could have swore that M&M's the female M&M her name was Sally, I think.
Is this gonna yield?
I could have swore, unless Sally's just like one of those names that
Green M&M
right off
character name,
right off the bat.
Miss Green.
Miss Green, of course.
They're really creative.
Miss Green was my 6th grade teacher's language art.
Yeah, we're talking
English
M&Ms.
teacher. Miss Green. Shout out to Miss Green.
Let's pull up Hershey while we're talking M&Ms, man. What are they doing? Whole bunch of
Miss
nothing.
Green was the best English teacher.
Miss Green was the best English teacher.
She was. No One with a Brain hates Sydney Sweeney. Yeah, I almost already feel like the whole hype is already, or the buzz is cooling a little bit.
Yeah, did they ever come back down? I guess not. No, the move happened and we've kept it.
Yeah. I mean, like, the buzz online is kind of cooling a little bit. Like, I wonder what's going to be next. I don't think there's anything in the headlines that surprised us this week yet.
We are mad at M&M's because they used red dye number 5, which is a no-no for some reason.
Oh, that's valid. That sounds bad. Red dye sound bad.
I mean, I'm an artificial coloring hater, I guess. I mean,
is it good for you?
I try to avoid them where I can.
Is it good for you? Is red dye good?
I mean, like, that's the thing. It's like with a lot of this stuff, food dyes, sucralose, aspartame, you name it. It's like, I think at most it's zero sum.
Yeah.
and at worst it's, way worse or a little bit worse. I guess at worst it's way worse. But yeah, I mean, I think at most of these things are zero sum. I try to stick to what grows from the ground or has a mother.
Well, whoever is running the red dye companies, I know they're mad right now.
Yes.
In lobbying.
The food dye companies are getting killed, and can somebody tell me the ticker of that giant high fructose corn syrup manufacturer? If anybody knows that offhand, I know there's a high fructose corn syrup manufacturer that's getting hit. Of course it's not good.
Thanks for the confirmation there, Lone.
Yeah, we appreciate that. Of course it's not good. That's such a good response. I mean, they make, I don't know which red it is, maybe red 40. They make one of them from beetles. Mm-hmm. That's how they do it. I remember, here, I'll go on a soapbox. This is not market related at all, and I'll keep it short. When I was young, I tried to tell my friends, like, this is like 2nd, 3rd grade, and I tried to tell my friends that gelatin is made with horse hooves, like, because it is.
Why you gonna come up on this live and tell that to all of us? None of us are eating gelatin.
It's an empirical fact. They put ground up horse hooves in there. They have forever. It's how you make gelatin. It's not Jell-O the brand. It's what goes into gelatin. Right. And I tried to tell my friends that, and they clowned me. The whole lunch table laughed at me. Good. One of my friends was like, "This guy said Jell-O's made with horse hooves." Will Hummel. I remember that.
Will.
And
Will.
but he the whole table clowned me for it, and I was like, "No, guys, I'm telling you the truth." Yeah. And this is 2nd grade. We don't just have phones like these kids these days. We could just whip something out and Google it.
Right. Fact check.
But yeah, I was so right.
Oh.
And so I'm vindicated in my adult life now, knowing that I'm right. And I hope that everybody at that table at some different point stumbles across the fact that it's made out of horse hooves, and they're like, "Damn, he tried to tell us."
I'm a fax that right over to Will. But just wow, that was when the public laughter got the confirmation on what was true before we could fact check.
Yeah.
With our devices. A little bit of off bar growing up, my brother and sister, they thought I was, or just didn't know my colors growing up as a kid. So blue and purple was like the first one where they were like, "Yo, you just called that blue, you just called that purple. Ha 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 ha. Errol doesn't know his colors. Little do I know I'm colorblind." I find out in middle school I'm actually colorblind as to why I didn't know my colors and I got mixed up with them.
Yeah, it's always hard to kind of figure those things out in early childhood.
It was one of those things too. Well, I remember I had went to my mom and I had said, I don't know if anybody has done those colorblind tests where you can see the dots.
The numbers.
Some of those are for real. Like, a lot of those I can't see what's in those, even if you can. And I had went home and I told my mom, I was like, "Yo, I actually did a colorblind test. Like, it's pretty consistent. Like 90. Like, I actually am colorblind. I knew it." And she was like, "Honey, I know. I'm like, what do you mean you know? You never told me? So I guess they already had signs from when I was little about being colorblind.
Yeah,
They just never told me, so I don't go around like, I'm colorblind and I have a disability.
Maybe they didn't want you. They didn't want it to limit you. Maybe
Exactly.
Yeah,
I think that's what it was.
Yeah, I know that that's a thing, experience that people with dyslexia will share a lot too. Is that like when you're in kindergarten, everybody's just like, oh, like this kid can't read. Like, why is he so behind on reading? And then at some point, you're like able to actually articulate, like, no, that doesn't look like an M. It looks like a W.
Right.
And people, and then you
W's in the chat.
W's in the chat. M's in the chat.
It looks like a W.
W's in the shot. Anita Maxween. You guys don't know about that.
No.
What's up, Luis? Good to see you. Hope you enjoyed your time with Tom.
Yeah, Luis, what's going on, brother?
It looked like it was a blast. Allergies were a recognized thing back then. That's true. The allergies. I will say this. All right, I'm not one of these. Oh, all these kids got autism these days. What's going on, people? Okay, that's diagnosis bias. We weren't looking for it, and now we are, and we're spotting it at higher clips. I understand that. These allergies, though, man, how is every kid in the world allergic to peanuts now?
Yeah.
I don't understand.
Yeah, like grow up allergic to peanut butter.
I'm saying they're fugazi.
Is that a thing though?
But like,
I thought that allergy was started to slowly go away. I haven't been around a lot of kids.
I don't know if it's starting to go away. I think someone will figure out a vaccination or something, right? Like, surely we can do this. Is it
by this
just
point,
not high on the medical tier list? I don't know. But yeah, somebody tell me in chat if there was a bunch of kids with food allergies when you were a kid in school, because I know that when I was a kid in school there were certainly the peanut-free table in the lunchroom, and it'd be full. I mean,
but rightfully so. Yeah.
Microplastics in your blood? Where did that even come from? This is some unnamed person.
It's on you. Lobbying. We got the lobbying.
What the heck is that?
It's funny.
Oh, when it says natural flavors on the label, the juice or drink generally has beavers like you talking like cojones, like beaver cojones. I think. Okay, look, I don't want to do the horse hooves thing to other people, but I think you just made that up. I think you just made that up, Devin. What is that? How are you guys?
Have you ever seen those comments where it's a long comment and then the last 3 words is like, and I just made all this stuff?
Yes. Yeah, I see that all the time. Yeah, and I don't know what I'm talking about. I'm spreading misinformation. Yeah, I have this happen to me all the time.
Setting up NVIDIA. Let's touch on that before we wrap for the day.
Yeah, NVIDIA. What's not to say about NVIDIA? Can somebody enlighten me to what the hell happened on this candle on the left? I don't recall what could have given NVIDIA this price action.
So we have earnings after the bell for NVIDIA. So what is that, Luis? August 27th after the bell. You're not looking at any NVIDIA earnings, are you? I'll look at the options chain.
I probably won't. That's one, like these Mag 7 super high profile earnings, like that's one that I'll be looking to play at open the next day in the other direction after the move. Like, because I think that just with NVIDIA, whatever we wind up trying to price in is going to get overly priced in, and there will probably be some kind of snapback to averages, whatever that even may entail. So yeah, I'm looking forward to it and seeing how this moves the market and the implications, but I don't think that I'm going to personally make a play.
Yeah. AKA don't know, don't care. I'm in the same boat. But Luis, I'm not going to be trading earnings for NVIDIA, but I'll take a look at it once it drops. And then maybe if it's a little bit of an overreaction to one side, then maybe we take a look at it.
No, swear, look it up. I couldn't believe it. Okay, Devin, I'm going to Google this right now, live on air. Natural flavors and beavers. It auto-filled. Natural flavors may contain castorium, a yellowish, waxy substance secreted by the castor sacs of beavers.
So it's true.
Vanilla extract especially, apparently, but also raspberry and strawberry. It is recognized as safe by the FDA. Okay. I horse-hooved somebody. I eat my words, Devin. You are correct. What the hell? What?
I horse-hooved somebody. I horse-hooved somebody.
Literally right after. I've passed my trauma on out into the world.
Ayo.
Literally right after.
Literally, that's how it happens.
Nobody believed me about this crazy food fact, and I was like, shut the hell up. That's not true.
Literally.
Oh man, they're poisoning us. I think that might be part of the calculus here. Oh, that's hilarious.
Bob Sala got a short call spread on in NVIDIA, feeling a little bearish this week.
I think that that's a reasonable take. I mean, anytime something is extended this far upward and running, it feels like it's going to be hard for their earnings to kind of keep up with that.
Right.
You see those little breathing phases a lot. We just got it with Palantir. And it doesn't mean anything. It doesn't have any broader implications. But yeah, I mean, if you put a gun to my head, I might have to get short.
Yeah.
Just because, like,
that takes a lot for you to get short.
It does. It does.
Right.
You know how much it does. It's just, I don't know. NVIDIA, it's like, NVIDIA's like LeBron. You know, everybody's going to talk about LeBron. Everybody's going to play LeBron in their fantasy lineup, but
because it makes sense.
Somebody's got to fade.
It makes
LeBron.
sense.
LeBron has bad games.
Right. I'm not stepping in front of that train. Yeah.
Yeah.
On occasion.
I don't have to physically step in front of him. If I had to physically,
well, it's like that pun fit the reality. And
if I had to play big bank, take little bank with NVIDIA, I probably would keep my wallet in my pocket.
Yeah. I'm not taking the charge. I'm not taking the charge on NVIDIA. I'm not stepping in the lane. I'm not doing it. Anything else to add on before we start to wrap for the day?
Nothing else. Excited to see how these NVIDIA earnings move the market. Bob with the 190, 195 bear spread. Okay. That's an interesting one. I like it. Yeah, giving yourself a little bit of breathing room there too, so that's good.
We got OKTA, and then we have NASDAQ for risk of the week. We will be back Thursday to touch on how we're managing these positions and what's going on with them. We'll see how NVIDIA performs after the bell this Wednesday. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.